behind presentations and claims. Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert
Very good morning. You're watching India Market Open, and before we get to the business of the day, just want to take a minute to talk about these very sad and disturbing developments in Bengaluru. After the victory of RCB, that 11 people die in a stampede is truly sorrowful.
Yeah, no doubt.
Yeah, hopefully it's a one-off, because remember, guys, a similar crowd or maybe a larger magnitude crowd happened when India won the T20 World Cup.
Yes.
And scenes in Mumbai, Marine Drive, Wankhede, etc. Thankfully, no incident happened.
Yeah.
Hopefully, this is a one-off and not a.
Completely. Coming to the day's trade today, expect range-bound volatile trade as well, because the big Q is going to come tomorrow from the RBI governor. Ahead of that, it's just been a bit quiet and silent, and that's what we could see today as well. Having said that, let me get the global setup going for you very quickly. A mixed day of trade in the US markets as well, as Dow has snapped its winning streak. And you saw indices pretty much all over the place, flat for the S&P 500 and the Nasdaq, the Dow Jones down by about less than even 100 points. Now, what's really concerning as far as the US markets is concerned is the private sector payroll data which has come in. This data set is different from what the US government puts out, but it is equally important. It was expected to rise by 110,000 in the month of May. It's come in only at 37,000, even a downtick from what it was in April, which was about 60,000. So this is going to give rise to what's happening with jobs, what's happening with the recession and the US economy. All eyes now, of course, on the weekly jobs data due Friday. Meanwhile, Trump has brought back a travel ban preventing people from 12 countries entering the United States, including Afghanistan, Laos, a whole host of countries. So that's back on the table from his first term. Treasury yields have stumbled in response to that poor private sector jobs data. The 10-year was at 4.36%. Oil prices dipping as OPEC Plus increased output, the Brent below the $65 mark. Meanwhile, for Asian markets, a bit of a mixed start as well. On the basis of that poor jobs data, as in the Nikkei in Shanghai, flat pretty much in the red for the Nikkei, the Hang Seng nearly 1% up at this point. Implied open for the Nifty is also showing a street which is hunting for direction, completely flat right now on the Nifty implied open. I think everyone's waiting for Governor Malhotra to come in and give a bumper rate cut. I saw one assessment at 50 basis points.
Yeah, I mean, I would reckon that will be the case, right? But
50 basis
50
points,
basis
you
No,
think?
no, no. I'm saying I would reckon that ahead of the MPC meet, it's very unlikely the market will really have a directional move in light of the fact that even the world markets have been very, very quiet, right?
Yeah, but on that point, we've already over the course of the last couple of days, Neeraj Tamanna, gotten different views on the extent of the rate cut from
25,
here.
35, 50.
And culminating in 5% repo or 5.5%. It's pretty wide a margin, right?
By
Let's
the way,
see.
Neeraj, I think you've missed the memo on the uniform today. Me and Alex, we realized when we got on set, have come appropriately dressed.
I'm in the grey zone, huh?
Yeah, well, at least we're wearing green. Let's hope that bodes well for the equity markets today. Let's talk about what happened in trade yesterday. It ended on a positive note. Let's talk about the flows data as well. And about 1,076 crore rupees of buying after a bit of a break, a bit of a sojourn by the foreign institutional investors. They came back and bought on a net basis. Domestic institutions buying to the extent of 2,566 crore rupees or thereabouts. What happened in the benchmark? It traded in a very tight range, and tighter than usual actually, because it was a 115-point range. Just that much. And considering that the Nifty is at 24,620 right now, it's even smaller if you think about it. It ended near the high point of the day though, and above the 24,600 mark. We told you yesterday there was a large amount of call writing building up to yesterday's session, so that level was very keenly watched. The heavyweights HDFC Bank as well as Reliance Industries lifted the benchmark and proved to be the anchors for the benchmark's move. And incidentally, 32 Nifty 50 constituents gained ground in trade yesterday. Once again, you had the broader markets outperforming the benchmark, and what an outperformance by the mid-cap index. It gained about 0.8%, again ended at the high point of the day, and the strength was built in the second half of the session. The small cap index gaining by about 0.5% or thereabouts. The market breadth tilted in favor of the advances, and it remained pretty much constant for a large part of the session, closed just a tad bit towards the end of the session. Most major indices gained, led once again by the Nifty Defense. Metals also outperformed well, but the defense has now gained in 8 out of the last 9 sessions, and over the last 1 month, the Nifty Defense Index is up 26%. Incidentally, if you had one of those index funds, then you would have done particularly well. Realty underperformed as a sector, and it reversed Tuesday's gains. One last point, and we're seeing so many large trades, the reactions dominated yesterday. So something like an ABFRL, something like an Indegene losing about 5%, and Alchem Lab, there would have been a couple more, but these stood out to me. And several large trades in the offing from here on out as well.
Yeah, I mean, if bankers are to be believed, there is a bevy of new trades coming up in the next 4 or 5 or 7 sessions. So you got to keep an eye out for that. In fact, at both the MS and the BOFA conference, a lot of talk of erstwhile postponed IPOs coming back as well. So it's going to be an interesting fundraising trend. I think we're doing something special on this extent of fundraise and stake sales by promoters later on in the show as well. So that should be interesting. Just before we get to trade setup though, guys, I thought this particular excerpt from the City Note was interesting because we're all talking about early monsoon, right? And viewers, we're going to be doing a fairly special coverage on what early monsoon means for your portfolios. But Citi says, as a macro number, Citi says that the macro trends around the early onset of monsoon, they've identified 5 episodes of early onset monsoon over the past 25 years. It's happened 5 times. Interestingly, the full season rainfall was deficient and food inflation rose in 4 of the 5 episodes. So that is interesting. And the Kharif crop production was down YOI twice. So it's interesting to see what happens if history is to repeat itself. The only thing is that we know from the 11 years of experience with this government that they have an eagle eye and a hawk eye on inflation. They will do whatever it takes to make sure that inflation doesn't rise. So that might be different. Anyways, so that's the monsoon piece, and we'll, like I said, we'll do a lot more about it on the shows ahead as well. But the trade setup for the day today, I think both Tamanna and Alex said it, and I'm doing nothing different, that indices may stay range bound until the MPC policy is done. It's almost a no-brainer of sorts. I don't think there'll be a rara move either direction ahead of the policy. The broader market activity though is very solid, and a lot of investor interest in newer listings. You pick up a call, talk to some smart money, and everybody's talking about whether these new listings could do well. And guys, the reason why I think this might be happening, it's just a personal assessment, that unlike 2024, when IPOs got subscribed 25, 30, 40, 50 times.
Pricing.
Right? Pricing and appetite. Nowadays, that is not happening. IPOs are getting priced 1, 2, 3, 4 times, right? And therefore, we are not seeing very dramatic listing gains. And therefore, people are getting time to assess the IPOs even after the listing, and maybe which is why the action is very solid, as we saw in Aegis Vopak, in Skoda, but more importantly even in Bell Rise yesterday. So I think that may be one factor that might be leading to activity in
and more money
listings.
left on the table for the investor also, I guess. That's what I was getting at. When
Maybe that
IPOs
too.
are getting subscribed 25 times, the incentive to leave some money on the table is less, I would say, from a guy
said
who's
that,
selling.
There is a major quick delivery giant who's reportedly pushed their IPO to 2026.
But I think that
maybe they don't like this, lukewarm kind of IPO market. So I think the reverse will also happen. Maybe some of the marquee IPOs will get pushed because this is not the market that they want to come in on. There are long promises that are waiting.
Entirely possible. So that may happen too, but just that this promoter activity smacks of maybe just some bit of IPO market activity reviving relative to Feb, March, April.
And it's great news for the secondary markets because you need depth.
Yeah, maybe
Which is
too.
great.
Just one last point on the trade setup today. The Class 8 truck sales month-on-month lift may just help select auto ancillaries, but the trending move is very, very unlikely, because if you look at the Morgan Stanley note, which has highlighted this Class 8 truck sales picture, they are saying that the May Class 8 truck sales was down 44% YOY, even though it was up 60% on a month-on-month basis. But they say that with the summer slowdown ahead, data may remain weak. So maybe people look at the month-on-month data and think, okay, let's trade Bharat Forge, Forgings, etc. It may be a day's move, not necessarily a trending move.
So for those who are not familiar with auto, Class 8 is in the US,
In the
right?
US.
And heavy-duty trucks.
Heavy-duty trucks, which is what these forging companies supply to, and hence they move a lot on this data.
Yeah, their factors are slightly different. All right, some more factors to watch from my end. I think that sharp slowdown in US hiring could spell trouble for the economic outlook, which is why watch out for pressure on some of those US-facing companies, including IT companies today. The next big positive news flow, the real trigger, could come in for Indian markets from the US, India finally inking a trade deal. That's in the making for some time now. Watch out also for interest rate sensitive stocks like autos, realty, banks ahead of that monetary policy announcement. In fact, an SBI report, no less, has projected the possibility of a jumbo rate cut tomorrow up to 50 basis points. Nevertheless, what everyone is pretty much agreeing on, that you will see a third consecutive rate cut from the Reserve Bank of India. Now, will it be 25 basis points, 35 basis points, or 50 basis points, of course, remains to be seen. As far as the Nifty is concerned, it's taken support from 24,500 above the 30-day EMA and closes near the 21-day EMA. For the upcoming session, 24,700 to 24,850 zone will be critical resistance for Nifty. Zone of 24,460 to 24,350 provides near-term support for Nifty. So the resistance, just to recap, is 24,700. Support is 24,450. For the Bank Nifty, you've seen a marginal gain after snapping a 4-day gaining streak the day before. It's taken support from the 14-day EMA intraday, closing above key supports, resistance at 55,920 and support at 55,350. But what's the FNO setup looking like? Let me go across to Puneet for more.
Well, thank you for that. So definitely the banking pack will be in focus for tomorrow as well as today, on the basis of what RBI does tomorrow. And we've seen that kind of resilience, as you rightly mentioned, key levels for the Nifty Bank as well. And that will be one to watch out for. In terms of, the Nifty futures, we've seen a slight dip in open interest, but largely maintaining the 24,700 view. And it's been trading in that range between 24,600 and 800 as well. The Nifty Bank as well, looking quite, in terms of very close to the 56,000 mark as well, maintaining that performance and that support at 55,500. When you look at the FI as well as the DI data, and we've been in terms of the fund flow, let's get that first out. The index option as well as the Nifty options have been largely, in terms of FI, maintaining a very short position So that's visible in trade, and in terms of net shorts, that's been increasing as well. When you look at the long short ratio as well, and let's move on to the index long position as well, because that's been a very key negative. It's fallen from 34% 2 weeks ago, as we mentioned yesterday, hit an all-time low of 16%. Slight jump from there, just about a percentage point, but largely FI is maintaining larger shorts compared to long positions as well. Finally, when you look at the open interest distribution for both calls and puts, we've seen 24,600 as one of the key levels for the puts and for put writing essentially, and that becomes one of the key supports as well for the Nifty on the lower side. While we've seen an increased interest on calls at 25,000 levels as well as 25,200. Finally, in terms of stocks, both on open interest distribution gainers and losers, we've seen some short build up in ABFRL, likely because of the the block deals yesterday that got into effect. While some long build ups have been seen in stocks like Keynes Tech, and Keynes Tech as well saw another block deal yesterday in trade. In terms of open interest losers, we've seen short covering across stocks. Paytm, Eternal, Torrent Power to say some of them, while Manappuram has largely seen long unwinding as well. So again, a day where the gift Nifty is not indicating too much in terms of movement, but yes, tomorrow's RBI's policy move is one of the key things to watch out for.
Definitely, the policy move is one to watch out for. This is a market hunting for direction. So let's get to the specific stocks. That's the only play here. Stock pickers market. The first one, unfortunately, is not one that is pickable. It's a thumbs down for me. Overnight developments and post-market hour developments for Gland Pharma. Its subsidiary, Cenexi, has received 11 observations. It's a key subsidiary that has got a final report from the French regulator, ANSM. The report cites 11 observations for the company's Fontenay facility. So it's a facility in France of a subsidiary that Gland Pharma had acquired. The inspection was conducted from December 9th to 19th, 2024. Now, the company has submitted a CAPA plan outlining measures to address these observations within 3 to 12 months. What's a CAPA plan? It's a corrective and preventive action plan. The company expects no disruption to manufacturing operations at the facility. This is something they put out on an exchange note last evening. Cenexi contributes 25% to overall revenue, which is why the thumbs down. You are going to see some pain point there. Fontenay contributes 40% to Cenexi's revenue. So Cenexi is a CDMO organization acquired by Gland Pharma. Hindustan Aeronautics, though, is getting a thumbs up on a denial. They've denied an article in a newspaper regarding stalled GE 414 engine deal. What the report said is that negotiations with General Electric for local production of GE 414 engines were stalled. The company has reiterated that negotiations are on track and progressing well. They're saying they're not in talks with any other company regarding engines for the LCA Mk2. So this denial of that report might see some improvement for HAL. The stock was down mildly yesterday, just about 0.5%. Wellspun Living is the third one that I've picked on the watch list today. Basis a Jefferies report, and the report is definitely quite excited about Wellspun, so a thumbs up there. They've initiated a buy with a target price of 185 rupees. That's nearly a 40% upside. They say it's a play on India's growing attractiveness for manufacturing. It's a key beneficiary of India's potential trade deals with the United States and European Union. Earlier today, I talked about how the next big trigger for the market could be the finalization of a BTA. That's a bilateral trade agreement between India and the US. Wellspun is a good indicator of how that would move, or a good play on that from an equity perspective. They say that Wellspun has incubated future growth pillars, including a portfolio of its own brands, has strong manufacturing capability with one of the largest home textile facilities globally, and they expect a subdued first half of 2026. That's the financial year 2026 on both top line and margins because of lower operational leverage due to tariff uncertainty, but are well placed to see a recovery in the second half of 2026 and beyond. They see a delivery of 12% EBITDA growth, 18% earnings per share growth over FY25 to 28 estimates. So Welspun is another stock that perhaps should be on your radar.
Absolutely. The first stock on my list is, I think, interesting, not because this is a very dramatic update, but it indicates what the company is doing. I'm talking about CESC rather. If you know about this company, it's a very, very old power utility company, manufacturer, or rather generator of power, traditional power, thermal power, but it is moving to renewable power. So its arm Purva Green Power has signed a deal for the supply of 1 gigawatts of wind turbine generators, and that order has been given to Envision Energy India. The order includes the operation, maintenance and servicing of turbine generators for a period of 10 years. Why is this important? This is part of the plan that the company has to set up renewable capacity of 3.2 gigawatts by FY29 in the first phase, that is, and it will add a further 10 or it'll increase it to 10 gigawatt in the second phase. But how does this plan work? It will initially commission renewable projects worth about 1.4 gigawatts by FY27, of which wind power is going to account for about 800 megawatts of that mix. Now, Purva Green Power has 1.2 gigawatts of projects under implementation, and the first project will be a solar project, a 300 megawatt solar project, which will be commissioned in Rajasthan by the fourth quarter of FY26, and then the rest of that will be implemented and commissioned by the end of FY27. So it's an interesting pivot for a company that has generated power through thermal power plants that is moving towards renewable, and really, as you know, that is the future. Escorts Kubota is an interesting update as well, because it has launched a BLX 75 vehicle, which is in the construction equipment segment. Often you talk about passenger vehicles that are launched with a lot of fanfare, not so much in the commercial vehicle category, but this could be a significant development for this company. It is a backhoe loader, and in that construction segment, that only accounts for about 17% of the revenue contribution for Escorts Kubota in FY25. Could that go higher? Well, that is the question, because ultimately tractors account for a large part or share of the overall revenues, and any change in that mix could influence the margins for the company going forward as well. But having said that, in the construction equipment segment, their volumes have actually degrown as much as 9% in FY25, while the industry managed to stay flat. So they've lost market share over the course of the last financial year. Will this new addition aid the recovery of market share is the question. Newgen Software is the last stock on my list, and it has won an order for enterprise workflow and content management system, and the order is only worth $2.5 million, or about 21.5 crore, but that includes the license implementation and support of that service. It will be executed over a period of 5 years. It is not the largest order, but it bodes well for both the company, which is relatively small in the larger scheme of things, but also for the system as a whole, if orders are getting signed.
Interesting. An interesting set of names as well. So we will have a lot of reactions, if you will, on stocks. I wonder if Diamond Power will have some reactions, because promoter Monarch Infra Parks and GSEC are going to sell up to 5.9% stake via OFS. The floor price is set at 95 rupees per share, which is an 11% discount. Remember, viewers, aside of maybe a Tata Technologies, all the others which came out with this OFS yesterday were down and stayed lower, so keep that in mind. So watch out for Diamond Power, something you should keep an eye out for. Inox Green Energy, promoter Devansh Trademart has further acquired 12,000 shares of the company via the open market operations, which is why some bit of leg up on the stock yesterday, and let's see if there is more today, because the promoter buying activity usually spurs the stock. Keep in mind, Inox Green had a forgetful quarter, terrible results, if you will, and hence the stock had corrected a little bit as well, mildly, if you will, and now we're seeing some promoter buying, so could be interesting to see what this one does today. I'll also keep an eye out for PB Fintech. Cities opened a 90-day positive catalyst watch with the target price of 2185. They say they expect strength in retail health insurance fresh business, which is clocking in at about 65% YY growth quarter to date, providing higher visibility to PB fintech, and there are a clutch of other factors, of course, but it's a positive catalyst watch. Some bit of the play had happened yesterday. Let's see if there is more in store. If PB fintech were to react, one of the reasons could be this positive catalyst watch from Citi. So keep an eye out for these three from my end. Just one last thing, guys. If IDP Education was listed in India, I would have said watch out for this one as well, because we're hearing all of this about the US universities, etc. So IDP Education is a player in international student placements. They have cited there is a 30-40% lower demand on placements across markets because of this uncertainty, and the stock has plummeted in the ASX market.
Oh, wow. Tough times to be in placement. But like we had said earlier, opportunity for Indian universities to retain
Most
talent.
certainly.
Now we need to live up to the expectations and give something to talented students, which makes it worth their while to stick around.
There are some, sorry, just off market, but there are some very interesting universities that have come off late that you hear about. So it'll be interesting to see if, aside of the IIMs and the IITs, the private universities, are they really perking up? So it could be interesting.
Could be interesting for sure. Well, this NDTV Profit exclusive is definitely interesting. It's going to be a big story going ahead. Now, we are learning that Indian automakers have just about a month until stocks of a crucial element used for electric vehicles. It's called rare earth magnets last. This is because China has curbed exports of these magnets. Tushar is joining in with those details.
Good morning, Tamanna. So, essentially, Indian automakers, that is both car makers, original equipment manufacturers, as well as component makers, have about 30 days to secure fresh supply from China, which actually has the monopoly as far as rare earth metals, magnets and elements is concerned. Now, let's talk about the timeline. Actually, when the ban actually came into effect on the 4th of April in response to the tariffs introduced by US President Donald Trump, that ban gave Indian OEMs about 90 days of supply. Now, what is happening is that car makers think that there will be minimal impact on them because they can work around with their product mix to bypass this particular shortfall. But the scenario will be more difficult for electric two-wheeler makers because rare earth magnets is a crucial component in the electric motor. Without that, the electric motor cannot function. Talking about the license process, it's actually a total of 60 days. Only 30 days are left till the supplies run out, but the application itself takes about 60 days. A supplier has to initiate a new license process now, which will go to the DGFT. DGFT will take this file to the MEA. From the MEA, it will go to the Chinese embassy. Then from the Chinese embassy to mainland China to the Chinese supplier of the rare earth magnets. From there, the file will be collated and sent to the Chinese Commerce Ministry. At the China level, in China, this process itself takes about 45 days. Add to it the amount of work that you have to do in India also to secure this license. So total of 60 days, but what the time left that they have is 30 days of supply. OEMs, SIAM, the industry body, as well as the auto components body, ACMA, are in discussions with the government to expedite the process, at least on an India level. For the China level, a 50-member delegation was supposed to go to China this week, but this has now been delayed further. We don't know what the new timeline is going to be for these companies to go there. Companies like Tata Motors and Maruti Suzuki have come out and said that the impact is not immediate. They can have a workaround it, but there will be some impact to vehicle production if this delay in supply actually extends beyond 30 days, that is in the first week of July. A more so to speak, alarming tone was taken by TVS Motor and Bajaj Auto. Remember, both these companies now make the best-selling electric scooters in India, that is the Chetak as well as the iQube. They both cited that if the supply is not restored by the end of this month, it will have a significant impact on their electric vehicle manufacturing operations. So essentially, a mixed picture for Indian auto space. But remember, this is a monopoly that China has, and this also shows that we need to break away from that monopoly and arrive at more solutions which may not require rare earth magnets and metals.
Okay, that's a very important story. And Tushar, thank you for bringing this to us, of course. And guys, we've heard a fair degree of corporate leaders in India talk about this as well. It is certainly very, very important and certainly something to track very, very closely. We'll
do more on this through the day. We also should talk about what some of the key players in the OEM space have said on this, and I believe we have those quotes if we can pull those up on what exactly they've said. And recently we spoke with Shailesh Chandra, who also said that as of now there's no big issue, but it's going to get painful going ahead. For example, TVS says while EV sales continue to grow steadily, disruption in the EV supply chain, particularly concerning magnet availability, are expected to pose challenges in the short to medium term. This is something Bajaj Auto has also said. Going forward, the rare earth situation is a difficult one. Supplies and stocks are depleting fast. If there's no relief, production will be seriously impaired. So, these are alarm bells that are ringing as far as industry is concerned. And we spoke to Tata Motors about it recently as well. But the question over here is not just about rare earths. It's coming from China. When we talk about quickly finding alternatives, this is one place which needs attention.
Brazil.
Brazil, maybe. Those supply chains have to be
move,
put
and they
into
can't
place.
move very fast, yeah?
Yep, yeah. We'll take a very short break, but we'll come right back with the watch list and what you should have on top of your agenda before the start of trade.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks,
Do I buy Ola?
Should I
or
hold
buy time to
ICICI
listen?
CDSL for the long term?
buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market mover.
Welcome back. You're watching India Market Open. That's the indicative open, flat as flat can be. But at least we're in the green. Let's talk about a stock that could be in focus today, Gland Pharma. We spoke about this in a little bit of detail, but let's get into the fine print here, because the subsidiary of Gland Pharma has received a final inspection report from France's drug regulator, ANSM, and there are 11 observations. What are they and why are they significant? Hiral joining in to tell you about that and the implications. Hiral?
Thank you, Alex, so much. Nexi, which is a subsidiary, has received a final report from the French regulator, which is ANSM, and this has 11 observations, and this is for the Fontenay facility. Now, the inspection was conducted between the 9th to the 19th of December, for which now the CAPA plan, which outlines the measures to address these observations, have been submitted, and they have to do this in the next 3 to 12 months. Apart from that, what the company though is indicating is that in spite of these 11 observations, there will be no disruption in terms of where manufacturing goes. So that is something that we need to take into consideration, because Cenexi contributes nearly 25% to Gland Pharma's revenues, and If you talk about the Fontenay facility, that contributes nearly 40% to Centenay's revenues as well. To be noted, this is the CDMO business that Gland Pharma had acquired as well. Overall, in the previously informed notifications, what they said is that the conclusion of ANSM inspection is something that is indicated from here on. Cenexi, what they've said is they're maintaining the target to achieve a positive EBITDA by Q3 FY26. Now, why this is interesting is because the expectation was that the company will start contributing to the business from the last quarter of FY25, but that has got delayed to the third quarter of FY26. So that is one of the key concerns. Apart from that, if you talk about the EBITDA loss, that has come in at around 48 odd crores, and this was on the back of the plant inspection itself. Double-digit EBITDA is what they are looking at in terms of FY27 as well. But the clear understanding from here is that the lower subsidiary contribution is something which is a concern. 19% in terms of margins in the first quarter of FY25 as compared to 29% was the base business. And from here on, analysts are also saying that the lack of Cenexi contributing probably will pose a concern for a Gland from here on.
Okay. All right. Thanks so much, Hiral, for laying that out for us. And certainly a stock to watch out for the start today, down about 11.4% in the last 6 months or so. We're joined this morning by Bhavin Mehta of Daulat Capital as well as Neerav Ashar, Latin Manharlal Securities. Thank you so much, gentlemen, for taking the time. Let me start with you, Bhavin. Would you say that today is a day, and despite it being the weekly expiry, that is going to be quiet in all probability ahead of the big event tomorrow? And how would you trade today?
Good morning. Yes, yesterday was even if you look at trade yesterday, it was largely on a flattish note. What we are indicating is that markets probably is anticipating some amount of cool off over last couple of trading session. Post open, we are not getting that momentum either side, either on the upside or the downside. Volatility index continues to move lower. That is a kind of positive for bulls per se. However, this also implies that your momentum seems to be drifting on the lower side. Second, we are trading at a very crucial juncture. Now, in the recent up move, Nifty has protected this 20-day exponential moving average almost twice. Yesterday also, it managed to move closer to that particular level. However, failure to hold this level would be kind of negative for market in a shorter run. So we are watching out for 24,600 as an important level. If market continues to sustain below that, that will be a problem. On contrary, on upside, we have multiple resistance, and over last couple of trading sessions, we have seen an extremely range trading from most of your heavyweight sectoral indices. That includes banking, FMCG, which is just stuck in a very narrow range. So as long as volatility continues to drift lower, PCR continues to remain at lower band, option data, the straddle or strangle costing suggests that markets are likely to witness a continuation of this sideways trend.
What would be the top stock picks this morning, Bhavin?
Yeah, so we are recommending 2 stocks at this point of time. In fact, we have been positive on these names even a couple of weeks back. First one is Exide. If you look at this stock, it has underwent a very nice consolidation pattern. Stock is trading close to about 389 kind of a range. One should look to buy with a stop loss of 374. It's a very tight stop loss for a stock for a possible price objective of 425 to 440 on upside. Second stock on radar is Bharat Forge. Now this stock is trading close to about 1270. We have seen a very strong consolidation from level of about 1225 to 1265. Recently it tested a high of close to about 1285. We anticipate stock to move beyond 1300 level on upside, possibly towards level of 1380. Stop loss for the same will be somewhere around 1220 on downside.
Okay. Let's talk to Neerav about what we've seen in the recent past. Neerav, some very large deals taking place, and as a result of which stocks taking a bit of a knock, not necessarily related to fundamentals per se, But if there are opportunities, for example, an ABFRL dropped 10% in trade yesterday, you had an Indegene that dropped 5% in trade yesterday. Are there any opportunities that are presenting themselves as a result of this move?
Good morning and thank you for the invite. Yes, as you rightly pointed out, I think we did some buying in ABFRL yesterday at around 77 levels. I think it's a good opportunity. The stock has been coming down consistently from the 105 levels to 77, 78 levels yesterday. And I think the business profile also looks quite exciting because here we have the ethnic side of the portfolio, we have the mass stage, we have the value retail, and all these businesses can pick up in the next 6 months, especially during the festival season. So we are keeping an eye on the festival season, and we have made purchases yesterday with a medium to long term horizon.
Nirav, a clutch of block deals that happened, was ABFRL the only one that you bought in the block deals, or did you buy something else as well?
Yesterday, of course, we bought only ABFRL.
Yesterday only this.
Yeah,
okay, fine. Okay, Nirav, sorry, the other thing, a lot of newer listings are finding some interest, right? I mean, we've seen significant buying in Aegis, Vopak, yesterday a Bell Rise, yesterday's listing Skoda as well. Any of the recent 1 month listings that you guys like fundamentally?
Well, yes, we've been very excited about 3 to 4 companies which have been listed just recently. And I think we see some sanity returning as far as the valuations are concerned. And I think there's been some sort of moderation also in the valuation. We found the valuations to be pretty attractive. So I think Aegis Vopak is something which we are looking at quite seriously. We also looking at Bell Rise because it's an auto ancillary company with very strong prospects. But I think we have been buying into Bell Rise with a medium to long term horizon. And yesterday's Skoda Tubes, which has listed, is also looking quite exciting.
It's actually a good thing if you get to pick new listing options with a cool head instead of having to jump into it. So that's important. Bhavin, just a quick question to you on a Welspun today. Of course, a big target there set by Jefferies. They've initiated a buy with a 41%, nearly 41% upside. On the charts, do you think Welspun has more steam left?
So, Welspun Living is that where we are looking at? Then
Living.
this stock.
Yes,
Okay.
Welspun Living.
Okay, so this stock has a very strong base around level of 100 to 120 initially. Then we have seen a move closer to 150 on upside. However, if you look at a longer term time frame, what we are looking at is a strong supply zone somewhere in the range of 140, 145. Over last 3-4 months, that area on the charts have acted as a strong resistance. If we talk on the delivery volumes or the volumes over last couple of trading session, we have generally seen good amount of volume and delivery on every rise. So overall, that seems definitely something to watch out for on the positive side. If we are able to take out this range close to about 145, sense is that we are moving closer to 170 on upside. At the same time, on downside, I will be in an immediate term, I will be keeping a very close watch at 128. If that level is broken, then one should be a kind of concern.
Okay. I do want to ask about a stock that moved very dramatically in trade yesterday. And Nirav, your opinion on this, because there was, of course, Morgan Stanley that came in and gave a buy rating on Swiggy. And there was commentary around that. There was buzz in the stock. The stock ran up 9%. It's still trading below its issue price. And so therefore the question to you is, in this market that is hyper competitive and we're seeing one player in the quick commerce space push its IPO, it's facing its own set of problems, would you still bet on a Swiggy or would you hold your horses?
Well, I think there's been a meaningful and sizable correction in the stock. So I think there seems to be some value buying which seems to be emerging in the stock at this point of time. I think this is the only reason which can be attributed at this point of time to the stock. But I think we would avoid the stock for the time being.
Sorry. No, continue.
No, please go ahead.
Avoid the stock for the time being. It is a belated reaction maybe to the conversation that happened on Morgan Stanley conference. But it's very interesting. I think Tamanna in the opening thing was referring to maybe, okay, I'm presuming here, the IPO of Zepto getting delayed.
Yes.
Right?
Ding, 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 ding. You guessed it right.
So the point is, if that is happening, and therefore in the listed space, there are still only two, which is Zomato and Swiggy, do both of them find appetite? Because maybe there was paper getting ready for the Zepto IPO because it was being marketed by a lot of brokerages, right? In the private markets, the activity is insane.
Yeah.
And if that activity is getting pushed to next year, I mean, is there secondary market appetite for Zomato and Swiggy at the margin, which could have gone into Zepto?
Well, that's an interesting perspective.
I mean, I don't know. I'm just shooting the breeze right now.
Yeah. Eternal has been doing pretty well as well. In fact, Nirav, I want to ask you, Swiggy, you're saying not so exciting, but what about Eternal?
Eternal looks better placed.
Yeah.
Yeah, at this point.
Between the two.
Yeah.
Bhavin, any view on basis charts?
Yeah, so if you talk about both the names, I mean, Swiggy has witnessed a very strong move on upside. However, look at the volumes. They were significantly lower compared to what we have seen earlier. So this is not a setup where one can get a very aggressive. However, I would definitely add the point here that Swiggy has seen a very strong consolidation in place. Even same is true for Eternal. So I will wait for volume build up to happen. So far, volume has been extremely low for Swiggy. Eternal, almost similar kind of a case. If the stock breaks out with a volume, then something I will watch out for on upside.
All right. So that's the view on Eternal as well as on Swiggy. Another set of stocks which is in focus is on the back of block deals. We've been speaking about some of those large deals. But in focus today, Inox Green as well as Diamond Power and Waaree Energies. Mahima joining in to tell you about all of the details that she's picked up since morning. Mahima?
Right, so I'll start with Inox Green Energy, where promoter Devansh Trademart further sets to acquire around 12,000 odd shares via open market. So this will be one of the stocks to watch out for. The second one is Diamond Power, where promoter Monarch Infra Park and GACC will sell up to 5.98% of this stake via offer sale, and the floor price is set at 95 rupees, which is at a 11% discount from its yesterday's closing price. The last one is Waaree Energies, where Waaree Energies has proposed to sell around 4.7 lakh shares of Indosolar via offer for sale. The floor price for this particular transaction is set at 10 rupees. The sale represents around 1.15% of the total equity paid up share capital, and Waaree currently holds around 96.15% post the resolution of Indosolar. The sale will bring down the overall stake of Waaree in Indosolar to around 95%. Indosolar basically manufactures solar photovoltaic cells, and market cap at 10 per share, that is the floor price, stands at around 400 odd crores, and this offer for sale will bring the free float overall of 5%, enabling Indosolar to basically be available to trade on the exchanges. So this is the main purpose as to why Waaree is doing the stake sale. So all of these three counters will be in focus on the back of these stake sales.
Just want to add Indegene in focus, because some details came in late last night on who are the buyers in that block deal. Eastbridge, Premji, Societe General have bought shares after Carlyle's exit from Indegene. In their affiliate CA Dawn Investment divested its entire 10.2% stake yesterday in Indegene for 1,447 crores. But some storied names have come in and picked up the spot. So I would say watch out for Indegene as well.
A Bacchus Emerging Opportunities Fund as well
It's
has
also
picked up.
what I'm
So Sunil
hearing.
Singhania has won.
Yeah.
So you're right, Tamanna. Good. It's a stock that could be in focus this morning.
Correct.
5% downtick yesterday.
Nirav, are you liking Indegene? Of course, the 5% downstick because there was a
pressure of selling.
10% block deal. But are you liking Indegene? Nirav, hi. Can you hear me?
Actually, from what you have pointed out, the pedigree of investors which have entered into the stock definitely inspires some confidence. So I think we'll wait for some time and then decide whether if we want to acquire the stock or not.
Wait for some time when it comes to Indegene on acquisition of the stock or not. In fact, Bhavin, just in that space, biopharmaceuticals, view on Indegene specifically or any other in that biopharma space that you like?
Yeah, coming to Indegene, we have seen very strong accumulation earlier. The stock price has witnessed a strong move from somewhere around 540 to high of around 640 odd levels. The recent price correction definitely offers an opportunity given that we have a very strong base around level of 575 to 580 range. So I will be keeping a stop loss around 575. Taking this as a very short-term tactical trade for a pullback rally towards level of 610 to 620, and if it crosses 610 620, that is where one should get aggressive. Specifically, the momentum will then possibly be on the higher side. So yes, that is what we are looking for this particular counter. Second, in the pharma space, we have been consistently positive on Divi's Lab. In fact, few of the counters on this side have been trading on a very stronger note. Divi's have seen good amount of accumulation at lower level along with OI built up. So sense is that as long as the stock holds above level of 6400 on downside, a potential move towards level of 6850 to 6900 is also very much likely on this count.
Okay. Gentlemen, stay on. More to talk about. Let's try and get in some more details about a particular piece. Now, after a continuous fall in the past 6 months, railway stocks are seemingly back on track, right? Because most of the stocks have recovered post the strong declines. Anushi joins in with a detailed note of why this would have happened and what could the way ahead be. Anushi, good morning.
Hey, good morning, Neeraj. So firstly, let's break down what's this rally happening in the railway stocks in the last 1 week or so. Now, firstly, the focus point is the order wins which have come for some of these counters which are there. So strong outlook for FY26 based on the kind of order wins that we're looking at. This includes the likes of Texmaco Rail, RVNL, Ircon International. We are seeing that sort of a performance coming back after a weak set of numbers in FY25. Although, also if you see what has happened in the last 6 months, we have seen strong declines for majority of these counters which are there. So investors are now more constructive about the overall growth picture for FY26 based on the management commentaries which is there and also on the rollout of Vande Bharat and metro trains. So RVNL and Titagarh did emphasize on this fact on what can happen. So in fact, if we just pull out the table and see the kind of gains that we are looking at, Ircon International, Texmaco Rail were up around 8% and 16% in these last few 5-day sessions, while in 6 months, Texmaco Rail, RVNL, in fact even Jupiter Wagons and Titagarh have seen declines of over 22%. So the investor confidence in these particular counters had declined on account of various reasons. So we are seeing some bit of that recovery coming back. But is it too early to cheer for these railway stocks now? That's the main question that we are looking out for, because despite having a strong order book, execution remains a key concern for most of these counters. And also, what we have seen is increase in competition as well. Now, railways are also aiming to diversify beyond the traditional railway business because of the increase in competition, which has resulted in margin pressure for some of these counters that are there. In fact, if we even take into account the railway capex that had come in the Union Budget 2025, that had been on the more muted side. So, order inflows for a lot of these counters remain a focal point on the growth trajectory going forward. So, if we take the order book, in particular, in the last 3 years in picture, Ircon International more or less has remained in the similar range. Texmaco Rail has reported again an order book in the range of 7,000 crore, while RVNL is steadfast in increasing its order book from 98,000 crore this year to around the levels of 1.2 to 1.5 lakh next year. RITES is another strong counter when it comes to the growth in the order book trajectory for the company. But it's the, of course, while there is strong order book that is there, it's the execution which has remained as a important point for these business, which can be reflected in the numbers also if we see for some of these counters. Texmaco being the outlier in this space. Otherwise, if we see across the counters, including the likes of Ircon International, RVNL or Titagarh, we have seen revenue declines for majority of these counters which are there. Even margins have been under pressure. This is because of higher competitive intensity taking into space. Rights and Titagarh, we are looking at margin declines of over 200 basis points to 300 basis points. Even profit growth has narrowed down for majority of these counters which are there. So that is one concern which remains for these businesses out there. But if we take the outlook forward for FY26, now shortage of wheel sets was something that had seen an impact in the third quarter and fourth quarter for Jupiter and Titagarh. So expectation of normalization is what we can see from the first and second quarter onwards for these two counters in terms of where the growth is concerned. Now large tenders are also expected in the second half of this year. So order inflows from H2 is something that we should keep an eye out for. Another factor is that counters like Ircon and RVNL are shifting their business from a traditional railway company to other areas. Now RVNL has also received areas in the telecom space. They are also in the infra space. They are bidding for higher orders. So this is due to the margins that they want to improve their margins going forward and have higher revenue growth that they are aiming for this. So management has overall remained optimistic on regaining this revenue growth, but margin recovery is set to be slower for some of these counters because of the higher competitive intensity in the space. So it is a mixed picture in terms of what we are looking for the railway counters in particular. While FY25 had been a disappointing year, FY26, the outlook though is positive on the side of order inflows. How the execution and subsequently the revenue growth is going to pan out remains a question.
Important points that you're raising. Of course, some aspect of government spending coming through from December of last year, and let's see how that pans out over the course of FY26. But Nirav, the question is, with some of these stocks, and pull up RVNL, pull up Ircon and look at the 1 month performance, they've run up very substantially. Of course, after that dip, the question is, are valuations justified at this point, and what looks attractive to you? What would you deploy in?
Well, if one were to take into account FY25 and FY26, then the railway budgets have been almost flat at around 2,62,000, 2,65,000 crores. And there is an expectation that from FY27 onwards that there might be a pickup in the railway budget allocation, and this is likely to go up by around 15% in FY27 to approximately 3 lakh crores. So this is, I think, what is enthusing the markets at this point of time. Another important factor is that the orders have been given out from the Q4. We have seen a meaningful pickup in the orders. So that is what has kind of enthused the prospects of all these EPC related companies like RVNL or an Ircon, etc. From a valuation perspective, you are right. Valuations are beginning to look a bit expensive. So I think our focus is more on the technology side. It's better to avoid those companies which are into the EPC space, because it will be very difficult for them to scale up their margins going forward. As you rightly pointed out, they're looking out for some other areas also where they can achieve better quality margins. Our view is to avoid the EPC companies, the wagon manufacturers, because the wagon manufacturers will be struggling in terms of execution, will be likely to struggle in terms of working capital related issues, cash flow related issues. That's what we feel. So it's better to be in certain quality companies like, say, an HBL Engineering or a Siemens, which have got a meaningful exposure to the railway side.
Just a follow up to that, are you looking at all at companies that are involved in this Kavach system, and is there potential there?
Yes, the company which I am referring to, HBL Engineering, okay, they've won a lot of orders for the Kavach anti-collision devices. This year, FY25 was a washout year for them, but they've received a lot of orders. At this point of time, they have orders to the tune of 3,500 crores plus. And they have given a guidance of around 3,000 crore revenue for FY26 going forward. Plus, they have exposure to many other areas. It's a niche company. So I think the trick will be to identify companies where there is a strong technological backbone. On the PSU side also, I think we've been looking at companies like a Railtel or a RITES, which is doing a lot of consultancy related work where the margin trajectory tends to be on the higher side.
Okay, and another set of stocks that we should look at, and I'm just going to quickly mention them before we head into the break. We spoke briefly about ABFRL simply because these are all of your block deal stocks from yesterday. Indegene we spoke about. Are you going to see a bit of a bounce back today? Now that the overhang of the block deal is out of the way, some details coming in on who the buyers are. In some cases, very interesting set of buyers. Tata Tech and Alchem Labs are the other two that we'll talk about after this very short break. We'll also get you top strategies as the pre-open session rolls out. Stay tuned.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind?
Back with India market open, the implied open suggesting a flat start. Independent of what the implied open is suggesting, frankly, I think you should expect a flat start, simply because ahead of the MPC meet, it's going to be very difficult to get some very remarkable action in the markets. But bottom-up activity will not be ruled out. Remember, I mean, we are 2 days ahead of the MPC meet. Yesterday, stocks like Quick Heal, for example, was up some 17%. So a clutch of stocks moving around. Nilesh Jain, head and AVP of Technical and Derivatives Research at Centrum, with us on the show as well. Nilesh, good morning to you. What's top of mind today? Let's start off with your ideas for the morning, because it seems like it's going to be very bottom-up. There might not be too many trades in the Nifty.
Morning, Neeraj. Morning, everyone. So yes, yesterday we did see some bit of recovery from the lower levels in the indices, specifically broader markets where we have seen a lot of outperformance in last few trading sessions. So stock-specific action is something that we believe that is likely to continue within sectoral space. If you look at chemicals, railway, and defense, so where we have seen some bit of momentum. So within chemical pack, Tata Chemical is something that is looking strong on the chart, given the kind of recovery that we have seen with the formation of higher top and higher bottom on the daily time frame chart. So we are expecting a follow-up move to continue in this particular stock towards 940. So that's the immediate target. One can keep a stop loss below 899. Another stock on the long side, that is JSW Energy. This particular stock is on the verge of a breakout from its falling trend line. It has already reclaimed its 50-day moving average. Yesterday we have seen a good volume participation. So looking at the overall setup, I think JSW Energy may touch the levels of 524 to 540 on the upside with a stop loss below 499. JSW Energy is a buy.
Very interesting. Okay. Interesting that there are energy companies coming in the realms of trading, because I think that pack has gone a bit quiet. Nirav, Asher, I mean, almost everybody talks about energy transitions. If you just look at the last 6 months, the power producers have largely been inactive, right? I mean, in some power grid lying at that 300 mark for like so many months now. At some point of time the cycle might break, but is this giving a chance to buy or invest into any of these, not power equipment, but power grid or the Tata Power, JW Energies of the world?
Well, I think the focus of the market has been fair and square on the power T&D space, transmission and distribution space. And thereafter, of course, we have seen the shift towards renewable energy makers, because renewable energy has seen a 35% increase in the capacity which has been generated. So I think markets are focusing over there, and a lot of action on the power generation side, that is the likes of an NTPC or a Tata Power or a JSW Energy. On and off, we tend to see some moves in these stocks, but largely I think these stocks have been quiet because a lot of generation capacity, upcoming generation capacity is already factored into the price at this point of time. So I think the valuations are muted at this point of time, are likely to stay that way at least in the foreseeable future.
Of power, Nirav, one of the updates that came through yesterday was REC's plan to raise 1.55 lakh crore rupees via non-convertible debentures. And okay, so this is par for the course. This is effectively raw material for the company because that's how it lends. But I find it interesting that it's a large amount of money to be raised, 1.55 lakh crore. Could it be that they're going to be using the 50 basis points of cuts and the further 25 that is expected tomorrow to reduce their cost of borrowing significantly by churning the debt that they have? And what are the implications, according to you, that will have on their margins?
Opportune time to raise the funds, because you have the benefit of lower interest rates. The liquidity is available in the system, and at the same time you're having best of both the worlds, because the execution is also picking up. As I pointed out, that in the renewable energy space we have achieved 25 gigawatt capacity addition as compared to 18.5 gigawatt capacity, and it's really picking up fast. And if one were to go by the numbers which we have seen of all the renewable energy makers, whether it is a Suzlon or an Inox Green or a Vari, most of these companies, their body language is very positive, their outlook is very, very confident. So I think this augurs extremely well for both the parties, the financier as well as the power generator.
Nirav, would you buy either REC or PFC at this current level?
Well, we've already invested into PFC as well as REC, so we continue to hold.
Okay. Okay, so let's talk about some big movers in trade, and let's actually talk first about the big companies and what's leading the list. You have, in fact, Power Grid incidentally up and about close to 2% at the start. Shriram Finance also leading. It has been one of the top gainers in the recent past. HDFC Bank, a solid move up about 1% or so. Is there a trade on HDFC Bank, Nilesh, would you say? And 1% up move yesterday also, it contributed in a healthy fashion?
All right, Alex, it's a buy because if you see the structure of HDFC Bank in last couple of weeks, we have seen consolidation in this stock, and it is trading in a kind of a triangle pattern, and if it breaks above 1955, it will be considered as a triangle pattern breakout. Then the target would come around 2050 to 2100. So it's a buy at current level, buy on decline with a stop loss below 1920. Immediate target would be somewhere around 1980 to 2000. Position target comes somewhere around 2100. So buy can be bought at current level and can be added on declines as well as a portfolio buy.
Okay, Newgen Soft is looking reasonably good at the start today. I wonder if that will hold, as it sometimes does. These moves dissipate. It's up about 4% or so. We told you about that order win earlier in the session, or rather earlier in the day. It's time for the big brokerage call of the day, and we've got one that we don't normally talk about. Ambit has sent out a note. Or has a note initiating coverage on Interarch building projects with a buy, and there's a considerable upside of 36%, if I'm not mistaken. Harsh, is that right? And quite a considerable upside. Why is that?
Yeah, 31%, Alex, to the current market price. What they're saying is it's just one of the three big players within the pre-engineered building industry in India, and therefore has a moat already in that sense. What's the edge? It's the track record of execution that Interarch holds at this point. They have long-standing relationships with 80% of the orders that they receive being repeat orders. So customers coming back, definitely a positive. They have been winning larger orders as well. The average size of the order has been growing. In fact, the average order size has gone up by over 2.5 times since pre-COVID levels. So you're seeing that play through. The order book currently is at 1.1 times FY25 revenue, and the near-term growth trajectory therefore and the visibility is therefore quite solid. You're also seeing traction driven by rising penetration, the JSPL tie-up that they have, and solutions across industries that they continue to introduce. Cost competitiveness and industry best margins further add to the comfort that Ambit has. They're expecting FY25 to 28 top line to grow 17% CAGR, EBITDA 23%, PAT 21%. They're also therefore suggesting a 1 year forward price to earnings multiple of around 25 times. So keep your eye out on this one. It's not looking too expensive in that sense.
Okay, pull up something like an IGI. I'm just wondering, Nilesh, would you trade this? Because in the last two sessions, the 3rd of June, 4th of June yesterday, it was up as much as 5%. In the pre-open today, it's up about 3%. I'm just wondering whether there's a trade here.
Looking at the structure of yesterday's move, in fact, we have seen a good breakout from its previous 3 months consolidation. So IGIL, yes, we may see a follow-up move towards 425 to 435, but it's not advisable to chase at high levels because the risk and reward is not favorable. If somebody is already holding, can stay put, keeping a stop loss below 401. But the structure from a very short-term perspective looks positive for 425 to 435.
Okay. Few others that are moving this morning. IGI we spoke about. There's a Morgan Stanley feedback note on it. That's moving. Wellspun Living we spoke about. That Jeffrey's call on it with a big upside. Let's see what's happening there. We spoke about Indegene, and that has been moving as well. Even as we know who are the buyers in some of those key stocks. I see another good day perhaps for some of the rail stocks. That rail move is not done yet from the likes of it and the looks of what we're seeing at 908 when the pre-open session is done. So look at an IRFC, for example, look at a Jupiter Wagons, look at a RITES. So you're seeing some movement in rail stocks as well. Nilesh, just we had a piece earlier in the day about railway stocks and what the fundamentals are looking like. But on the charts, is there anything that you would look at favorably from this space?
Right. So we have already covered 4 stocks on in our technical recommendation yesterday. We have suggested to our client. So JWL, Ircon, IRFC, TexRail, these are the few names that we have already covered. We still believe that this momentum is likely to extend further. Ircon has already rallied. So there is no point chasing this particular stock after a spurt of 14-15%. Better to wait for some meaningful dip. But yes, JWL is something that one can look at. For upside further move towards 420 to 435 can be seen from a short-term perspective. With a stop loss below 392, JWL is something that is looking positive on the chart. Apart from that, IRFC is another stock that is also looking positive for a further move towards 148 to 150 on the upside. So that's the immediate target. Stop loss can be placed at 141.
No, please carry on.
Yeah, I was spotting the defense pack once again, and of course some of this might dissipate, but if we can pull up the contributors or the constituents of the defense index, then everything from a Zentech to a Garden Reach to a Cochin Shipyard up and about in trade today as well. HAL, of course, that update came through and it's up 0.8% in the pre-open session. I'm just wondering, Nilesh, at this point, and I've been asking, unfortunately, I've been asking for the past, I think, 5 or 10 sessions. Should you call it? Should you book profits? If you manage to get it 1 month back, the defense index is up 28% or thereabouts, if I'm not mistaken, close to 30%. Would you book it?
See, Alex, the momentum is still looking strong, and we have seen a continuation of a higher top and higher bottom formation across all defense pack. The outperformers are GRFC, Mazgaon, Cochin Shipyard. In fact, looking at the structure now as well, I believe the momentum should extend further, but yes, it's advisable to keep booking profit in multiple tranches. So 50% kind of profit can be booked at current level, because if you see any further any meaningful dip on the back of profit taking, that can be again used as a buying opportunity. So from a trading perspective, yes, profit can be booked and can be bought again at lower levels, but positionally I think this momentum should extend further. As far as HL is concerned, the upside target comes around 5,250 to 5,400, and GRSC, this particular counter, in fact, yesterday has given a big breakout, and if at all you see any dip towards 3,200 to 3,150, use this dip to add GRSC on the long side. The target on the upside comes around 3,500 to 3,600.
Just take a quick look at what's happening to some of the big movers from yesterday. I wonder what's happening with Spark this morning after the pre-open session has ended. Okay, completely flat over there. Let's see what's happening with the Swiggy and an Eternal. That was a big theme of the day yesterday. Is that continuing? Not really. Swiggy seeing a pullback there, about 0.5% up. Eternal moving on. Interestingly, NTPC Green Energy, another one that is in focus, about 2% up this morning. So is a Honasa. Honasa showing some movement there as well. Nirav, I just wonder, on Honasa's numbers actually didn't turn out as bad as one would have penciled. It was a positive surprise for this quarter. If you're looking at that space, the BPC space going in, monsoon, consumption push, is this a company that you would look at all?
Well, the macros definitely are likely to improve, but that should trickle down to the micro level as well. So I think we'll wait for the quarterly numbers. We'll see the next quarter numbers and then only decide whether we want to enter the stock or not.
Okay, so not at these levels. BPC, beauty and personal care, is something that Nirav is not so excited about at all. In terms of platform companies, Nilesh, would you be looking at the favorites, Eternal and Swiggy, one way or the other?
See, Eternal, reason I'll tell you, the stock has constantly faced resistance in the zone of 240 to 245, and now today it is opening about 245 levels. That's 248, as I can see on the screen, is the opening for Eternal. That will be a breakout on the chart. So we can expect this particular counter to witness a follow-up move towards 255 to 260. So purely from a trading perspective, since the counter has given a good breakout from its previous 6 months consolidation, so yes, there should be some bit of momentum to continue in this particular stock towards 260 to 270 as well. So stop loss should be placed at 237, and I would buy at present Eternal.
Okay, so Eternal is another one that you're looking at this morning. As the pre-open session has paired out, let's talk about Nilesh, a Zentech, a HAL. If you would look at any of the defense plays this morning.
See, we have already discussed about defense, GRSC. We still believe that momentum should continue. HL is another stock. Yes, of course. Although the counter is trading in the over territory, but looking at the structure now, if at all it breaks above 5,000, then another 100 to 150 point move can be seen in HL as well. So stop loss should be placed at 4850, and defense pack, I think the momentum should continue.
Okay, Nilesh, is this? Sorry, I'm just revisiting. So this is your top call, I presume. Just one word on some of the other names that have really shown up in trade in the last few days, maybe a quick heel, Nilesh?
Right. So yesterday we have seen a good spurt in this particular stock. The major trend, no doubt, was looking weak, but after yesterday's move, looks like the counter has formed a short-term base formation. Good volume attraction was seen yesterday. Sort of a follow-up move can be seen towards 360.
Follow-up move can be seen. Nilesh, sorry, I'll have to cut you there because the markets are just starting. This is the penultimate day to the big RBI policy. Will we see some large action? For now, we're starting off maybe a tad bit better than what the implied open may have suggested. 0.25% on the banks is not a bad thing, by the way. IT is flat. Let's get the mid cap and the small caps. 0.4% for the mid caps. They are not phased. By the way, the small cap index 0.5%. So come pre-policy day or no, there is activity at the broader end of the spectrum. They, remember, outperformed the large caps in yesterday's trade too. Let's get the heat map up on the screen though. Let me mark the large caps first and show you what's happening and what's not. A fair degree of green, very little red on a day when the Nifty is just up 0.2%. Dr. Reddy's 2.5% higher. There is strength in Eternal. Power Grid we spoke about being stuck in a range, just about 0.75%. No news per se. Shriyam Finance keeps on bobbing in this list of greens. There is some strength for Cipla, Trent, TCS. It seems that IT is now starting to perk up a little bit. There is maybe Adani Ports, Adani Enterprises, BEL from amongst the industrial names which are doing okay. But clearly, the one name that is taking it, doing very well today, Tamanna, is Dr. Reddy's 2.5% or nearly 3% higher for this one today.
Yeah, so a bit of a defensive play. Eternal continues its up move, but let's just take a look at what the broader markets are doing very quickly before we move ahead. The Nifty mid-cap 150, barely 0.25% up. Frankly, it's the small cap 250 that's doing better this morning, about 0.5% up. Let's pull up the India VIX just for a second before we move ahead and get to the sectoral heat map, and then we'll see what bank and IT are also doing. India VIX actually looking pretty mellow. This is good. This is showing that there is not too much stress right here on the street, poised for a breakout perhaps. Bank Nifty completely flat. Let's pull up the sectoral heat map and see what's really winning today. We told you this morning that rate sensitives will be in focus. A 25 basis point is something that the street is anyway expecting to come. Could you see a 50 basis point tomorrow in terms of a rate cut from Governor Malhotra? So you're seeing realty stocks doing okay. Nifty Pharma being pulled up by Dr. Reddy's more than anything else, honestly, and small cap, the broader indices also doing okay. So this is a pretty healthy open at a time when there's not too much movement or news flow one way or the other. FMCG stocks sulking to some extent, but not too much to complain, just 0.25% down on that index. The game is stock specific. Let's look at what's been on our radar since this morning. Indegene, I want to pick up. Details came out late last night of the kind of key investors who've come in, include Sunil Singhania's Abacus, Premji Trust. A lot of those have come in and picked up the block deal. So that stock about 2% up in morning trade. PB Fintech has seen a positive view from Citi. You'll see brokerage notes push what's happening in the markets as well. So that's about 0.5% up. Newgen in focus was on our watch list. It's got a $2.5 million order win. That stock is possibly one contender for stock of the morning, about 7% up this morning. Force Motors has had a good set of sales numbers for the last month. Nearly 3% up on that stock. Gland Pharma, HAL, these are all newsmakers really. Gland Pharma, their subsidiary, has got adverse observations from the French regulator, although in its exchange filing, the company has said that it's not going to stop any of its work at that particular facility in France. Hindustan Aeronautic has issued a denial on a media report saying that its talks with GE were stalled. That stock is about 1.5% up this morning. Wellspun Living, huge upside coming in from Jefferies, 6% up on the stock. So that's doing well as well. Some of the railways are continuing to buzz. They were at least in the pre-open session, and you're seeing that right now. Rides, Jupiter Wagon, IRFC, some of them that are continuing to buzz. I just want to see what's happening with IGI. A positive view from Morgan Stanley that has maintained an overweight and a target price of 533 for IGI. That stock about 3.5% up. So some winners out there today, but a lot of it stock specific.
Absolutely. Newgen Software, by the way, now 8% higher. Wellspun Living 5.4%. But I want to focus on a couple of others. Fact, FACT, which is your fertilizer company, and incidentally, quite a few fertilizer companies as well as insecticide and pesticide companies doing particularly well. But will that thesis of an early onset of the monsoon boding well for agriculture as a whole continue? Because that city note pointing to the possibility that an early monsoon may not be such a good deal for the spatial distribution of the monsoon. There's also BSE, which I want to focus on today. It's up about 2.5% in trade today and building on gains from the recent past. So Nilesh, the question to you is, BSE and a couple of other capital market players are back in focus, something like a CDSL as well. Would you trade this right now? Would you enter at these levels?
Right, Alex. So we have seen a good momentum in exchange stocks and also a couple of broking stocks as well. Looking at the momentum in BSE, I think there is still some more room left on the upside. The momentum should extend further towards 2950 to 3000. But it's already up close to 8% this week, and this has been almost 9 consecutive weeks of gain for this particular stock. So not advisable to chase at high levels. The risk and reward is not favorable, but yes, in multiple tranches it can be added and accumulated as a positional bet. There is a possibility of counter to move beyond 3000 going forward. But at present, CDSL, yes, this stock is looking positive for further up move towards 1780 to 1800, can be added at current level, keeping a stop loss below 1680. So the structure of CDSL looks positive. Apart from that, within broking space, Angel One is something that is looking attractive given the kind of technical breakout that we can see. So this counter looks positive for 3250 kind of levels on the upside. Stop loss can be placed below 3100.
Okay. I just want to get a view on insecticides India, for example, which is not doing too much today, but let's pull up a Bayer Crop Science as well. It was up and about recently. It's up another 1/3%. We just spoke about fertilizers or rather FACT. Nirav, I'm just wondering, some of these agri plays, there's a seasonality associated with them, and they moved up quite substantially in the recent past. Are you keeping any of these on your radar? Do you own any of them?
Well, yes. In the fertilizer space, we have been quite active in Deepak Fertilizers and the phosphoric acid plays. And most of these companies have been backwardly integrated. They are working. They've done a lot of work on backward integration, crop nutrition business, water soluble fertilizers, specialty nutrients, etc. So in a way, I think the product mix of the companies has been changing, and they are moving from the more traditional form of fertilizers like the urea to diammonium phosphate to NPK. Interestingly, the share of NPK in the product mix has been improving with backward integration in place. There is the raw material pressures have also kind of subsided. The power costs have been going down. So there's a lot of focus which is there on cost control, cost reduction, operational efficiencies, etc. Deepak Fertilizers, for example, has set up one of the largest ammonia plants in the world, and that helps them in the strategy of risk mitigation and value capturing. So I think there is a lot of exciting things which are happening in the entire fertilizer space. There are a lot of companies which are working on expansion as well. For example, Chambal Fertilizers is there. They are working on specialty nutrients. They are working on a TAN-related project, technical grade ammonium nitrate. We have RCF, which is working on an expansion story. So it's just not the seasonality element. It's just not selling the fertilizers, but essentially doing a cost control exercise and improving the product mix.
Okay, we were talking about this and we haven't marked it, but it's moving very dramatically. Deccan Gold Mines, if we can pull up that stock, there is a significant update for the company in that the Jonagiri Gold project has received consent to operate from the Andhra Pradesh Pollution Control Board, and the stock is up as much as 12%. Not the largest stock. I'm not sure, Nirav, if you've looked at it at any point. This would be a significant development for them, wouldn't it?
Well, on and off, one does tend to hear some developments with respect to this company, but I think, frankly, not track this company.
Nilesh, any view on the charts, if at all, and give us an idea as to whether, see, there will always be the interest in a stock that has moved up 10% in one session in a few minutes. But would you ride that train?
See, Alex, first of all, it looks like it's only BSE listed stock, and technical structure, if you just pull up last 1.5 year chart, you can see the counter is forming a big rounding bottom formation. So structure as of now looking strong. I won't advise taking any fresh long end position at current market price, but yes, if somebody is holding, then I would advise to stay put, because the stock has the potential to move further towards 175 to 180 kind of levels, because the breakout looks very strong from a big rounding bottom formation. So stop loss for existing long position should be placed below 159. If at all you see any small dip towards 160, that can be used as a buying opportunity, but keep a stick stop loss below 158.
Okay, what else? I mean, remember, viewers, that the morning may be looking slightly flattish for the large caps, but the broader end of the spectrum is decent. Look at, for example, Lloyd's Metal. It's slowly but surely in the last few days and weeks crept up quite significantly. If you look at maybe the 30-day chart for Lloyd's Metal, there's serious up move there, right? 1 week 12%, 1 month about 26%. It's not a tiny toon company. Probably signifies what metal companies have gone through. Any thoughts here, Nirav Ashar, on a Lloyd's Metal? Has picked up significantly. Are the valuations rich now? Would you book money if you were long?
No, if one were to see the performance of Lloyd's Metal, we just had a chance to glance through the recent annual reports, and there's been phenomenal growth which the company has achieved in the last couple of years. As a matter of fact, the turnover has more than doubled during the last couple of years, and there has been a significant improvement in the bottom line as well. So I think much more exciting times are there in store as far as Lloyd's Metal is concerned. So one should stay invested in the stock.
Okay. Point well noted. We're just waiting for a telephonic interview with a management on a stock which is very, very active. But just one quick word, Nilesh, on the metals pack, whether it's Lloyd's, whether it's JSW Steel, what have you. Are you liking anything within the metal pack?
Frankly, the metal space, within this space, few selective names are only looking positive. Nifty metal index as a whole is witnessing some bit of consolidation. You have pointed out Lloyd's Metal. The structure, I was just looking at this particular counter, has given a good breakout on the chart. A new record high can be seen today as well. So breakout level was placed somewhere around 1480. So 1480 should be the stop loss for the long position, but target on the upside comes somewhere around 1600 to 1650. So big target can be seen in this particular stock. Structure looks very strong and setup is also looking positive. Apart from that, within metal pack, Steel Authority is something that is looking positive for short-term momentum to continue towards 135 to 138. Stop loss can be placed somewhere around 130.
All right. Gentlemen, thank you so much for joining in. You may stay on though if you wanted to hear Mr. Hanuma Prasad. He's the Managing Director of Deccan Gold Mines. And as Alex pointed out, they've got the Andhra Pradesh Pollution Control Board nod for the Jonagiri Gold Mines operations. Mr. Prasad, I hope I'm addressing you correctly, Mr. Prasad. But thank you so much for joining in. And congratulations on this development. What does this mean? I mean, you got a bunch of mines, right? Some in Karnataka, some in Andhra Pradesh, some somewhere else. So how important is this mine? What does this Pollution Control Board nod mean for that mine?
Yeah, good morning. Basically, this is the consent to operate, which means now we can go ahead and operate the mine and the processing plant. So this is granted to the Geomysore services, and this actually gives us the permission to operate both mine and the processing plant, for which we have been waiting for quite some time.
So now that is this the final permission, or is there some other permission needed, Mr. Prasad?
No, this is the final permission.
So you can go ahead and operate the mine starting tomorrow if you want.
Not exactly tomorrow. Obviously, we have to do trial runs and all those things. But it will take time. But this is the final permission. Yes.
Okay. So one more question from mine. By when do you expect to start the operations of this mine, Mr. Prasad?
I mean, that could take a little bit more time. I cannot give the exact dates. Maybe in a couple of months, hopefully. Because in any gold mining project, you need to do a lot of trial runs when you start the processing plant. So it could take some time.
Mr. Bodali, I just want to confirm, you said a couple of months, right?
Most likely. Most likely.
Okay.
Yeah.
So just a couple of answers that we're looking for so that investors understand how your business works. Can you help us understand the significance of this mine and you must have done some surveys to understand what the potential of the mine is in the larger scheme of things. When you compare it with the other mines that you operate, where does it stack up?
I mean, I would like to respond in a couple of ways for this. The first one is, after many years, I mean, almost 80 years, this is the first gold mine to be established in this country. So in itself, it's a big boost for the gold mining industry in India. And the second point is, yes, we did a lot of surveys last 10, 12 years. We have been doing drilling, exploration, feasibility. So this particular project we have completed the feasibility for the first 10 years. And in the 10 years, we will be producing close to around 4.5 tons of gold. So initially it will be low, but then at the peak stage, it will produce around 750 kilos per annum.
Okay. Now, from the perspective of pulling out this large amount of gold, and you're saying it will take time to ramp up. What about the processing of the gold and the sale of the gold? I'm asking because most of our gold, and as you've pointed out, this is the first mine in a long time, is imported. So where would you sell that gold, sir?
In India, private miners like us can sell the gold to any refinery. There are many refineries. There are a couple of them in Bangalore and Hyderabad, which are close to our project. Likely, we have been talking to them. So we will sell the Dore bar, what is called as the Dore bar. That is about 90% purity. We'll sell it to one of those refineries.
Now, help us understand also, because you're just going to start operations in the next couple of months, and so therefore it doesn't really make sense to look at your financials over the last several quarters, because you will have a significant improvement in revenue starting perhaps in the second half of this financial year. So the question that I have for you, sir, is what kind of margins can you expect in the start? And will that ramp up over a period of time? Just a ballpark figure if you can give us.
Sorry, and also Mr. Prasad, also the revenues from this. So margins is first, second, but also revenues. What is the revenue that you envisage in FY26?
Yeah, I mean, from the mine itself, somewhere around 300 to 350 crores in the first year.
In FY26?
If you pull out 400 kilos of gold, that's what very likely this mine is going to produce at an EBITDA margins of around 60 or 55 to 60.
Prasad, sorry. Mr. Prasad, just one clarity, please. I heard you say that 750 kilos is the peak production, right? So
peak production, yes.
So 400 kilos will happen in FY26 or will it happen later?
The 400 probably the next financial year. This year, because we will start a bit late. Exactly, I cannot give the timelines when we are going to start, subject to various other things.
Let's assume you do 400 kilos in FY26. Therefore, you will do what? What's the revenue run rate for that 400 kilos in FY27? Sorry.
At 27, probably we will go to almost like 600 kilos.
And what is the revenue run rate of that, sir?
In the sense, see the EBITDA margins, I can tell you it will be around 60% EBITDA. That's how we do.
And so therefore, the revenue recognition that you would have would depend on the prevailing gold price, right?
Yeah. Prevailing gold price. That is on the whatever the Indian Bullion Jewelers Association gold price. That's what we get.
Okay. And so therefore, that's why you were saying 400 crore in the first year, which is FY26. And additional over. So you're saying that, and what is the kind of ramp up that you would have, sir, over the next 10 years? You said that overall 4.5 tons, right?
No, that is from this mine. It is about a ton. That's what we are expecting in the next 10 years. But when I said 4 or 5 tons in our there's a Deccan Gold Mines. We have other mines. That one in Kyrgyzstan, which also get into operational very soon. Probably maybe September, October. So that is something which will come into the production. So next 10 years, I was talking about the multiple projects, not just this project.
Mr. Prasad, just one final question, sir. 400 kilos or 600 kilos, currently the pricing is about 10 lakh rupees per kilo. So if you do 400 kilos, suffice to say you will do about 40 crores of revenues from there?
The 400 kilos would give you almost 400 crores. Each kilo is close to 1 crore now.
Okay. Oh, yeah, of course, sorry.
That's the price.
No, it is, yeah, 96 lakh rupees, so close to 1 crore, yeah, you're right. So, okay, you might do about 400 crores of revenue in FY, in the next financial year, right?
Yeah.
Perfect, okay, at 60% EBITDA margin, okay. Well, wishing you all the best for that and more, Mr. Prasad. Thank you so much, congrats on this.
Yeah, thank you.
Well, that's 11% higher for this business. For a
climbing
business.
up, stock climbing up while we were having that conversation.
You're talking about the revenues, right? So 45 crore was the full year revenue for, and which is what he's talking about.
Because they don't have any mine operational, right, per se. So this won't happen. But when it happens, and just one small point here, is that they would have accumulated losses for all these years.
Yes.
Let's assume the last 7 years accumulated losses help them offset any tax benefits as well. So depends. Now, this company has been in the realms of gold mining conversation since 2006.
Yeah.
They've been talking about this. I'm not blaming them, I'm just saying they haven't gotten permissions. Finally, they have one. Let's see if the street buys it, because it's a very expensive stock based on current valuations.
So it's literally like the doors have opened. Sone ka pitara khul gaya hai.
From what they're saying,
gold.
They have struck gold. That's the other way to look at it. Okay, that's Deccan Gold, the buzzing stock exclusively on NDTV Profit. But the other company we're focusing on this morning is KYC International. They've bagged orders worth 2,211 crores across all their verticals and businesses. Before we speak to the management on their outlook for this quarter and of course the rest of the financial year, let's put the trends into perspective. Anushi joins in with more details.
Hey, morning Tamanna. As you've mentioned, the company is in focus on the back of this 2,200 crore plus of an order. This is across their T&D business, along with cable business and even the terminal station works in the international side that we are looking this order coming in for. If you take this year-to-date order intake with this, it stands at 4,200 crore, which represents a 40% of a growth. The order book at the end of March stood at almost at the levels of 33,398 crore, and this was an uptick from the FY22 levels of 23,000 crore that we are looking in. In the outlook forward, the company did mention that they have about 1.8 lakh crore of an order pipeline, of which 50% is from the transmission and distribution business. So that remains a continual focus segment for the business going forward. So it would be interesting to see how the growth trajectory is, considering the FY25 performance, in which they reported a 10% of a revenue jump and margin expansion to 6.88% as compared to 6.1%.
We're speaking now with Vimal Kejriwal, Managing Director and CEO of KYC International. Mr. Kejriwal, very good morning to you and great to have you with us on NDTV Profit. Thank you so much. Looking at your order book figure, 2,211 crores, robust number there. What's the execution target and the timeline?
So most of these orders are around 18 to 24 months. So the revenues would start, let's say, in around 3-4 months and then go over next 6 or 7 quarters.
So, if I look at FY26 starting off and almost closing, more than half of quarter one is done. And then I compare to FY25, which has been, a solid performance as well. Are you expecting revenues to flow in the same scale? What is the outlook that we can expect for FY26?
So FY26, what we have said is that we should grow at 15% plus. Okay, 15 would be the minimum if we expect to grow from the 10% what we grew last year. So FY25 we ended around 22,000. So we'll add 15% to that.
And in terms of margins, you had an uptick in margins at 6.88%. You're expecting that to continue. Is the focus going to be on, margins and upping the EBITDA? What is the strategic focus for this financial year?
So our margin calculates for around 7%. What we are expecting against that 7%, we should be doing around 8 to 8.5% next year. For the Q4, we were at 7.8%.
So how are you going to bump up to 8.5% in the next year? What is the plan there?
I think there are two ways of two reasons why it will happen. One is obviously the transmission pipeline order book is better than what it was. The quality of orders and the margin profile has improved. Secondly, we expect that our non-T&D business, where the margins are lower, at least in some of the businesses like civil, etc., we expect the margins to grow. So it would be a combination of both the percentage share of T&D growing up and the non-T&D margins are bumping up slightly.
Half of your order book is on the T&D side of things, if I'm not mistaken. What percentage do you expect that to go up to, Mr. Kejriwal?
So the order book is roughly around 60% for T&D.
Okay.
Okay. Revenue, I'll not give exact numbers, but I think it will go up by at least 4 to 5% from the current share between the T&D and non-T. I think right now it's 60-40. It may go up to 65-35 in terms of revenue.
Okay, and even in share of order book, you expect it to go further than 60%? Is that going to be the big focus?
We have an order book target, order intake target of around 30,000 crores, 30,000 crores for the year. We expect that T&D would be around 20,000 or so. So roughly, I'll say around 70%, 65 to 70% should be from the T&D business.
This is focusing on international assignments? I'm just trying to understand the mix because, of course, the big one in Saudi Arabia, and we'll talk about it in detail, but the focus is on external or international assignments as well?
Definitely. In fact, if you look at the today's order release of 2,200 crores, 92% is T&D, and it's all international.
Mr. Kejriwal, good morning. Neeraj here. So, is this in line with the order inflow guidance that you'd given, or have you made some early starts and you might eclipse the quote-unquote guidance?
Difficult to say. Okay, I think it's a bit early because these orders have come in from the L1s which we had. This does not actually add to my order book plus L1, but my order book, which your analyst was showing 33, is now roughly around 36,500, and L1 at 3,500. So right now the number remains at 40, but order book has gone up.
Got it. No, but still, I mean, order materializing is good thing. So good for you on that. The small other thing is what we kind of said we will kind of probe on a bit more, right? Mr. Kejriwal, if the mix between India and the global opportunity, considering that almost everybody who are in the power generation business are also saying that transmission and distribution looks a far better business right now as opposed to generation. So how are you kind of marrying a very strong India opportunity existing with what you are spare resources for on the global front?
So to me, Neeraj, I'll say their resources are different. People who want to go and work international are different from the people who want to work in India. So I don't see any conflict or challenge between the two. The other piece is that on international, the market is focused on a few territories, unlike earlier when it was a global market all over the place. Today, it's largely, I'll say, Middle East, Americas, and Australia. So the three large markets for the T&D sector. So it's India at one end and these three geographies at the other end.
Okay. The other thing, Mr. Kejriwal, the only reason why I kind of asked this, because now in two of the last three conversations, the one thing that you've told us is that getting the right quality manpower is becoming a much bigger challenge, right? So hence I was trying to probe the question on the resources, nothing else.
So when I talked about manpower, it is more the technicians, etc. Let's say fitters and carpenters and all those people, rather than managers, etc. And what also happens is manpower. You can also, although we would prefer to use local people, also when you are in Saudi and all that, you can hire different nationalities. For India, obviously, it is a local Indians whom we have to hire.
You know, I'm just want to understand more about the kind of orders we will be looking at, especially why I come back to the Saudi Arabia order. You have a lot of nations that want to scale up rapidly and have high-tech plans to improve their urbanization and outlook. This is a huge opportunity for companies in your space. Trying to understand how you plan to tap it and what are the space where you tap it, because some verticals have seen a bit of pain, whether it's transportation business for you, where revenues were down, oil and gas pipeline, execution of water projects. So is there going to be a rejig or a repositioning of where you will focus?
I think, Tamanna, clearly there has been a rejig or refocus, as you want to call it. 2 years back, my transportation business was at 3,800 crores. This year, it has been at 2,200. Civil growth has been.
Want to phase it out? Is that on purpose, or do you want to phase it out, or what is happening there?
No, I think we have deliberately slowed down the growth. I think we expect from this year onwards the order intake will improve. But what has changed is the composition. Earlier we were doing a lot of electrification, speed upgradation, where you needed to work on the tracks, live tracks. Okay, so now we have moved out from there. We have got, I think, Kavach orders of roughly 800 crores in our book right now. We are doing BLT. So a lot of work on the metros is happening, tunnel ventilation, where you're not working on live lines. I think that's the major thing. And the other piece on railways is that we have started quoting a lot in the international market. So when you talk about the international domestic mix, I expect international to grow because beyond T&D, we do expect some orders in civil and railways. And in today's order also, there's a small oil and gas order already in the international market.
Okay, so domestic is you're going to have a focus on international markets. What kind of markets are these? Can you just give us some sense which areas these are in?
So essentially, they'll be Middle East and for the civil piece, it would be Africa.
Okay, so MENA, Africa is something that you're going to focus on. What about some of the water projects that you have been looking at? Has there been an improvement in execution?
So we did get, I don't have the exact, I think 500 or 600 crores of cash in the last 2 quarters, Q4 and till now in Q1. So based on that, there has been some improvement happening on the execution because we need to finish those projects. So whatever cash is coming in, we are plowing it back into the execution of the projects. So there is some improvement as compared to Q3, Q4.
Okay. Mr. Kejriwal, one last question. I know we just spoke very, very recently, but I'm presuming in so many such these days, years are covered in weeks, and hence I was just thinking, is there any change in the landscape between the last time that we spoke and now, either in terms of demand or otherwise? Because the reason again I asked this to you is because at some point of time, an analyst was pointing out that in certain cases in the country, the pricing of power at the grid is going down to zero as well. So all forms of stories and theories floating around.
So to me, that's a good news because why it's going down to zero? Because you don't have transmission networks. In fact, we were talking with one of the larger utilities yesterday, service provider, and that's what he was after my blood, saying that why can we fast track some of the transmission projects because there are bottlenecks happening, which is why the power pricing is also not only because of demand, but also because the inability to transmit power. Okay, so I think it's to me it's a good news for people like us.
Okay, thank you so much, Vimal Kejriwal, for speaking with us. Fascinating business, KEC International, and that stock is always buzzing because you see order wins being talked about, so that's important as well. So KEC International in focus. But the other stock that has been moving today, a mover and shaker early this morning, is Newgen Software. Let's pull up the Newgen Software stock for you, about 6% up. So here's what's happening. The stock is up 70% since its April lows. Here's what's driving the rally. They've received an order worth $2.5 million. That's a fresh order, which was, those details were released to the exchanges yesterday. It's an order for procurement of enterprise workflow and content management systems. It includes a supply of Newgen's products and its implementation. It's for a period of 5 years. As is typical, they don't really release the details of who the clients are, etc. So a lot of other recent orders have been coming in for Newgen in the month of May as well. So on May 16, they had an order from Indian Patent Office that has granted them a patent for inventing the system and method for data compression. So sorry, it was not an order, it was a patent that they've got for one of their products. This will have a term of 20 years starting April 26, 2017. On May 12th, more news that they saw was a wholly owned subsidiary executed agreements with a customer in Saudi Arabia. Aggregate value of these agreements was $1.632 million. And of course, they continue to accelerate their AI first strategy. So that's why Newgen is in focus today. But another stock which is making headlines is IGI. Morgan Stanley has released a note on the stock. What are they saying, Mahima?
So they've maintained overweight with a target price of 533 for IGI. What they've said is that management has reiterated their guidance of 15 to 20% top line growth in calendar year 2025. They follow calendar year, that is why. IGI's endeavor to remain in terms of delivering 20% volume growth over the next 3 to 5 years has also been maintained. PAT margins will improve as compared to how they performed in calendar year 2024 and be in the range of anywhere between 57 to 64%. On acquisitions, the management has said that they're exploring opportunities as there are many niche players that cannot compete globally. And lastly, the company is also ramping up its capacity and has also hired 130 odd new gemologists to handle more volume in calendar year 2025 itself. So all of these pointers were discussed in the Morgan Stanley conference, and which is why the stock is seeing an uptick in trade today.
Well, smart uptick, maybe not as smart as some of the others, but still in the green is IGI. So interesting one. That's another business in focus today is Prestige Estates, right? The Q4 booking had a strong comeback after maybe a weakish set for the whole of FY25 at large. So the first 9 months were okay. Q4 seems strong. Before we get in Mr. Irfan Razak on the conversation, let's get in Anushi to tell us more about this. Anushi.
Right, so in Q4, we did see some of these booking numbers coming back for the business. They reported about a 48% of a growth here, while collections remain on the weaker side. They were down about 9%. But if you take the whole FY25 in consideration, they did miss their pre-sales guidance of which was given on account of deferred launches that had happened amid approval delays. But it's the outlook for FY26 which is important to keep a track of. Now, if you take the outlook for FY26 in consideration, they're expecting a 25 to 27,000 crore of bookings for this year. GDP pipeline, if we see, that has moderated to 42,000 crore, however. So how the overall pipeline is, the launches are expected to be, there are a big ticket launches which are expected in the Q1 only of this year, which would result in a 12,000 to 13,000 crore of bookings in the first quarter of FY26 itself. We did see the launch of Indirapuram project, which is one of the bigger launches that the company was expecting. So overall growth trajectory, if we see FY25 in terms of bookings was on the weaker side, but it's the outlook for FY26 which remains important to keep a track of.
Okay, Anushi, thanks for that. Thanks for joining in and thanks for giving us that update. Now, let's get in Mr. Irfan Razak, CMD of Prestige Group on the show. It's been a while that we have him. So, Mr. Razak, great talking to you. Good morning, Neeraj here. Thank you for joining in. Sir, before we get to business, right outside our office in BKC, there is some stuff that Prestige is doing. What is it that you're bringing here? Because we're fascinated with the buildings that are coming up.
BKC, we are doing a large office development.
Okay.
And the work is going on at breakneck speed, and things are going well because we have a deadline to meet that with FY28. We should be able to complete this project, at least one component of it, because we've split this. This project is known as BKC 101, and in that we have the X-axis and the Y-axis. But I'm happy to say, the third component, which is the rehab tower, which is already visible, that is like completed almost. We need to do the internal finishes, and those are 750 homes of 405 square feet carpet.
Right.
And we are most excited about that. Though there was a rehab, we believe that's a great contribution we are making to the society.
Okay.
And the people who are going to move in, they are pretty happy and they're mighty thrilled the way it has shaped up.
Yeah.
So that much more
No, sir, this was just personal curiosity because I was of the opinion, I was somehow under the opinion that maybe there is a hotel also coming, and I was wondering where is it that the hotel will come up in BKC from your end, which is
Hotel will come
in the same
there.
complex?
Yes, in the same complex.
Okay.
You see, because it's totally 4.5 million square feet. So we do have the Edition Hotel, which is again the first of the editions in India.
Okay.
Which is a Indian brand. And we'll definitely have a lot of food and beverage that's a support retail that is required for such a large office building.
Most certainly.
So that also will be there. So it will become a hub. And also we'll have the metro link. We'll have underground metro link straight into the property.
Wow, interesting. No, this was just personal curiosity, sir. So thank you so much for, attending to that, if you will. Can I ask you, Mr. Razak, you are doing, as a group, you're doing a bunch of joint development projects, a bunch of hotels, non-Bengaluru as well. Anushi spoke about the Indiranagar property and some other developments as well. How do you foresee FY26 to be versus what you achieved in FY23, 24 or 25, as the case may be?
I think the last 4 years have been pretty exciting. The growth has been phenomenal. And if there was a slight blip in the FY25, it was only because we didn't have any product to sell, in the sense that the material was there, but we didn't have the RERA and we could not launch. But I'm happy to say that NCR first project in NCR, which is the Prestige City, Indirapuram, which Anushi was talking about, has been a super hit. And the market has actually given us a great response, and that's given us courage to do much more. And it's this quarter, that's why will be a very big quarter for the company. We'll know how much it'll total up to by the end of this month. So that's a big launch for the NCR market. We did a launch in Bangalore, which is the Prestige Gardenia Estate. So it's a plotted development. Even that got sold out within a short span of few days. And then we are now trying to launch the Chennai project, which has been delayed for quite a bit. And that also is waiting the RERA approval, which should come this month, which is the Prestige Pallavaram Gardens. Once that comes in, even there's a good pent-up demand for that. It's a large project, which will give us a great top-line revenue, around 3,500 crores. So all in all, I believe there are a lot of exciting things happening in all the markets that we are in. And apart from residential, office, retail, and hospitality also are doing great business. So I think it's pretty healthy, the entire scenario.
Mr. Razak, very good morning. Tamanna here. And great to speak with you. Now, one problem area was, of course, approvals, which reflected in, the guidance not really coming through in FY25. I'm wondering if this has now been resolved. Are you expecting a spillover in this financial year? What is the status there?
See, the approval was a blip during the entire country was in election in year 23-24. So all the officials were deputed for various duties. Now that's behind us. It did cause us a few quarter delays. That's why certain targets could not be met. But the system is very transparent across the country. Now everything has gone online. It's all very, very open, and all the codes are all in order. As long as we have all our paperwork in place, I don't see any pain on the approval process. It's all how quickly people process the files. But otherwise, if you are within the framework of the rules and the law, I don't see any major concern on the approval part. Yes, we do have committees that have to get formed sometimes. Sometimes they get dissolved. So each state, each government has its own. That's where the timing difficulty comes. Because as a businessman, as for a real estate, what happens, it's like setting up an industry every quarter, every month. Unlike other industries where you have to go through the entire pain once and set up the entire thing, get the approval, and then you start production, and then it's all about product and packaging and marketing. Whereas for us, it's also setting up like one industry every quarter, every month, because once that project doesn't come through in terms of approval, whether it's approval for various NOCs that need to come in, and plus also the RERAs, only then we can sell anything.
So do you expect bookings, because you had marked improvement in bookings in quarter 4, for quarter 1, sir, do you expect that bookings trajectory to continue?
It will. In fact, I think this quarter will be the largest quarter the company has ever done. And I don't want to say any number just now. And the market will be quite surprised that we've done a large amount of top line sales in this quarter. It'll be one of the best quarters we've ever had.
Wow, no, let me reiterate that. This will be the largest quarter we've ever done, one of the best quarters we've ever done. I know you don't want to give us a number, but just give us a flavor of why you think that's happening and the kind of demand that's coming in.
Tamanna, it's because of the spillover. Because you see, there was a sort of a pent-up demand. What we wanted to bring to the market in the last quarter, we could not. Now we brought it in, and that's the flavor. And hopefully, this quarter and the next should do extremely well.
Got it, Mr. Razak. Just this whole, I mean, this a varied opinion, and I believe now India is a set of micro markets wherein each is doing very different. I mean, it's not like the country is a universal thing per se, but a lot of opinion around how luxury housing might be slowing down a little relative to the past 4 years. Maybe the equity markets have to play a role, maybe something else, or maybe just the base effect. Do you sense that, if not in the first couple of quarters, which will be strong for you, but later on there could be some slowing down in pre-sales or actual sales?
See, now this luxury market with mid-market with low income, our company has been always targeting the mid-market and also the top of the pyramid, which is the luxury market. Luxury market definitely is niche, and it has its own set of buyers. But as a company, we've been able to cater to all these segments of population. We enjoy doing the mid-market because that gives us huge volumes. And the luxury, of course, gives us that satisfaction that we've created some landmarks. Like case in point is we built the Kingfisher Tower in Bangalore, which is now the most expensive real estate home anybody can buy. But that's, again, it's a small niche market. It's not something that is can be replicated every day or every year. But yes, Mumbai has given us opportunity to do some top-line luxury. At the same time, we are looking at the mid-market, and in whichever market we are in, we balance ourselves, and we are very conscious that the top-line luxury will always have the number of takers will be that many less and not that much more. So we have to properly balance our entire portfolio correctly. It can't be totally skewed towards luxury, and it can't be completely in the mid-market. But if it's completely in the market, mid-market, still you are there. But then you have to have a balance. You have to have a mix of customers. And I believe that's how we've been doing work, and we will continue to do it that way. And as far as things are concerned, yes, in a particular quarter, you may have a little less softer demand, and in a quarter, you may have too much demand. But I think there is appetite all around. If you've got a great location, if you've got a great product, and if your price is right, there will always be demand. I don't see this happen because I've seen this last 4 decades, and I don't think there's any stress whatsoever.
Thank you so much, Mr. Razak, for speaking with us. Irfan Razak there, Prestige Group, talking about how this quarter is going to be the good one. The headwinds about approvals behind us. The spillover means that quarter one is going to be one of their best ever. And he says it, I'm not saying it. It's going to be their best ever quarter. So watch out for Prestige. Ahead of the monetary policy anyway, rate sensitives in focus, Neeraj, and the real estate index also doing pretty well.
Yeah, Tamanna, yesterday, I mean, for example, BOFA said, right, that their top list includes rate sensitives because they believe that if there is a 50 to 100 basis points cut, then sentimentally or otherwise there will be positives out there. And if Prestige is saying that they'll have the best ever quarter and an amazing first half, that's quite something.
That's quite something.
I'm excited about, on a personal basis, around stuff happening.
I saw that. I saw all of your questions about the hotel and the coffee shops in BKC. Neeraj is doing his own R&D on where we can go for coffee. All right, very short break. On the other side, big news lined up. We broke on NDTV Profit this morning at 8:20 that EV companies, EV makers in India have only 30 days of supply of rare earth. It's a problem that's spreading. Japan Suzuki has halted the production of its Swift model because they've run out of this rare earth magnet. What is this rare earth magnet? What is going to happen to EV makers? All of that after the break. Stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. The big story right here on NDTV Profit, and an exclusive that you heard it here first at 8:20 this morning. We're coming back with more details on it because the problem with the lack of rare earth magnets availability, because China essentially is the largest maker of it, they're blocking supply to the entire world. Japan's Suzuki has announced that they are halting the manufacture of their Swift model, the EV Swift model, because of no supply of rare earth. And we are learning that there's only a month's stock in India. Tushar joining us for more details.
Good morning, Tamanna. So yes, the fallout of the China rare earth magnet export ban is now reflecting in Japan, which has stopped, as you mentioned, that has stopped the production of the Suzuki Swift in that country. Our country, that is in India, where Maruti Suzuki is the largest car maker, is also going to feel the pain in 1 month if the supply is not restored. According to sources, we have about 30 days of supply left with us. We also have 30 days to apply for a fresh license. Yes, it will require Indian automakers, OEMs, suppliers, auto component makers, a new license to now import from China. It's an arduous process altogether. Essentially, it takes about 60 days to get this license. So 30 days of supply, 60 days of license, it just doesn't add up for the Indian auto space at this point of time. If you break down the process, first a supplier has to go through the DGFT with the Commerce Ministry to apply for that particular license. Then the DGFT will take this file to the Ministry of External Affairs, where it will again be vetted and then taken to the Chinese embassy in New Delhi. After that, the Chinese embassy will contact the Chinese supplier in mainland China, the supplier who actually makes or supplies the rare earth magnets. This Chinese supplier will then take this application process to the Commerce Ministry in the People's Republic of China. But then again, the approval is still not guaranteed. What we can say that about 30 such applications have been submitted by Indian companies. Not one have been approved so far. So essentially, now what Indian automakers, industry bodies like SIAM and ACMA are doing, they are petitioning or actually discussing with the government to reduce this time that is going to be taken to get this license, at least on an India level. In China itself, it takes about 45 days, but in India, they want to expedite this process here first. A 50-member delegation was also supposed to go to China this week, but that has not happened. A future timeline for this visit is not immediately available. But first reactions from companies have started coming in, specifically from the likes of Bajaj and TVS, which are the largest electric two-wheeler makers in India. They will be immediately impacted because their electric motors cannot do without rare earth magnets in them. So TVS Motor in its sales filing actually said, while EV sales continue to grow steadily, disruptions in the EV supply chain, particularly concerning magnet availability, are expected to pose challenges in the short to medium term. Bajaj Auto actually echoed the same comment, saying the rare earth situation is a difficult one. Supplies and stocks are depleting fast. If there's no relief, production will be seriously impaired in July. That's the current case for the automobile industry. The largest car maker, Maruti Suzuki, as we mentioned earlier, actually has applied for such a license. Applied for such a license with the Indian authorities. There is no such no development as such to report on it. It is not a restriction; it's an endorsement of end use. In case there's an issue, we will inform all our stakeholders, including the stock exchange, about the approval of a license if it comes. Tata Motors actually said that it's not going to be immediately impacted. There's dependency on rare earth both in the ICE and EV world. Shailesh Chandra, the managing director of the company, told us on the sidelines of the Harrier EV launch on the 3rd of June. As far as we are concerned, there is no immediate impact. We are getting all kinds of support from the government. Hope this gets resolved fast. That's what his take is. Tamanna.
In fact, we have that soundbite of when he spoke to you, Tushar. Let's just quickly play it out and then make that distinction that this is going to have a larger impact on two-wheeler makers rather than automakers, because as a proportion of their product mix, your passenger vehicle makers have less dependency on EVs in terms of how much they sell. But let's listen into what Shailesh Chandra said.
You know, there's dependency on the rare earth both in the ICE world as well as EV world. As far as we are concerned, I don't see an immediate impact. But SIAM and ACMA both are very closely working with the government. We are getting all kind of support. We are hoping that this gets resolved fast.
Okay. Will it impact vehicle production? Because we have seen some people saying that yes, July onwards their vehicle production can get affected because of the lack of the magnets. When do you see your production getting impacted or not getting impacted at all?
No, you know, it is not getting impacted at all currently.
Yeah.
But, you know, I have reviewed the situation. We have reasonable inventory with us. Beyond that, it will be unnecessarily causing too much of speculation. Let's hope that things get resolved.
Okay, Sridhar Kalani is joining in for more on this. He's an analyst for auto with Axis Securities. Sridhar, thank you so much for speaking with us today on this issue. Now, obviously, passenger vehicle makers will not have an immediate impact because they simply do not sell that many EVs as a proportion of total sales. But for two-wheelers, what size of impact do you see this lack of rare earth magnets? We are reporting on NDTV Profit that there's only a 30-day supply.
Yes, good morning, Tamanna. Yes, you're absolutely right. The Indian EV OEMs, specifically the two-wheeler segments who are highly dependent on rare earth magnet imports from China, which is essentially, you know, it's used for the BLDC and motors, critically for the EV propulsion. It will have a significant impact in the production supply, which might, you know, lead to some disruptions as early as July 2025.
Mr. Kalani, just wanted to ask and step in, Tushar here, which OEMs and component makers do you think would be the most at risk immediately when this supply goes away?
So immediately, if you see, it will be most likely the two-wheeler players, largely speaking Bajaj Auto, TVS, Ola, Ather, because these magnets are largely being imported from China. There are some auto component players who are entering into this field, but most likely it will be the EV OEMs who will be most likely impacted because India is highly dependent on China for these imports.
Okay, so is there a workaround that the OEMs can come up with in case this approvals, the license process gets delayed?
In the short term, there is no specific or strategic trade-offs right now, mainly because China is the largest player. Everyone knows that. Although there is some few other countries like Malaysia, Vietnam, or Australia, which modestly contribute to the refined output, but they lack the scale and pricing competitiveness to immediately replace Chinese suppliers. And to mine these from mining to say refining and then magnet production requires substantial investment and technical expertise. In the short run, we do not see any alternative. It might, however, we say in 2 to 3 years, diversification may be possible through joint ventures and government-backed initiatives. But no immediate solutions remain elusive currently.
So my last question to you is the vehicle production, if this supply actually stalls at the end of this month and there's no resolution of this particular situation, how much of the vehicle production do you think will get stalled, the percentage as far as both in the EV as well as in the PV segment as well? Because it's also a very important component for the ICE segment. Correct me if I'm wrong, sir.
Yes, so in the ICE segment, it is also important, but largely the EV players will be majorly impacted, because what happens is the Indian OEMs, they work on a just-in-time inventory models. And when such disruptions happen, what happens is their supply chain gets disrupted. As a result, OEMs might have to pass the burden to consumers. It might lead to potential price hikes of up to 8% for affected EV models. And also, since there is no clarity on the duration and severity of the supply constraints, we will have to await for further clarity on the same.
Thank you, Mr. Kalani, for all those inputs. Back to you, Tamanna.
Yeah. So I just want to see what's happening with some of those stocks now. Ola Electric, let's pull that up. Recently listed Ather Energies as well, because these are companies where their bread and butter are EV vehicles and two-wheeler EVs, and we have to see if they're getting hit. Bajaj Auto, just because of the kind of strides it's made in the electric vehicle space. So these are some of the companies that could be impacted. Tata Motors we talked about as well, who have just launched a Harrier electric vehicle piece, and Neeraj, the fact is that the push for all of them is EV.
Yeah. And so M&M firm and squarely EV, Hyundai EV, Creta EV is starting to make some inroads as well. And you are right, Tata the push is, I don't think the Tata company is necessarily doing very well, but the push is there, right? As you said. So two-wheelers and select four-wheelers. I think tough times ahead. Hopefully some deal is reached before that.
Yeah, the point is that deal will have to be reached at a diplomatic level.
Yes.
This is not something that individual
companies can do,
manufacturers can fill out forms which will go to the Chinese government, and Tushar explained that well, what that whole process is. So it's a bigger story than that. Thank you so much for that, Tushar. Now let's get to the big conversation this morning. Vaibhav Sanghvi with us. He is CEO at Ask Hedge Solutions. Vaibhav, great to have you on the show. Thank you, as always, for joining in. Let's just get your view on the markets and start with that first. Middling along, neither here, neither there, a lot of hesitancy coming in. What is the one factor required for a decisive move directionally?
See, I think rather than looking for an immediate catalyst, as a one factor which kind of pull the markets either ways, more importantly, I think let's look from last few months perspective when we had several headwinds, including your tariffs, your geopolitical risks, and to some extent that people were anticipating probably very subdued quarter of earnings as well. Now, as we look now at this point in time, with all respect to all these three events, we are looking at a time when the headwinds, which were earlier anticipated, are now kind of getting out of the way. One, that tariff issue more or less is not having an incremental impact on the market direction. Two, geopolitical risks are done and over with, except for one, Russia-Ukraine, which we might see something come about from there. And lastly, from a quarterly earnings perspective, where people were expecting subdued earnings, I think they have been marginally better than expected. So I guess from a market standpoint, from here onwards, I think when I look forward from a 12 to 15 month perspective, it is a time period when our economy is kind of doing pretty steady, in fact, well.
And we can probably see that because of the tax breaks and the loose monetary policy which we have, may probably give some good stimulus or incentive for increased consumption on an overall basis, which means that we may be probably positively surprised on the GDP growth going forward, at least for the next 12 to 24 months.
Vaibhav, a lot of this, good morning, and it's been a while, good having you. A lot of disruptions and a lot of positives happening, right? For defense, there is proof of concept because of the conflict, and suddenly this whole space looks like, could there be more export orders? Could there be higher domestic procurement because the government is upping the budget? At the same time, something that we just did all through the day today and yesterday, which is this China rare earth issue that has cropped up and what it could mean, for example, for electric vehicles. So it's almost a binary option in a lot of cases, right? What do you do with some of these? Because these are large buckets in which a lot of investors are invested as well.
No, of course, Neeraj. I think defense have become, one sector to, constantly have a lookout on. And as you rightly mentioned, there's no better proof of concept in that sense. My estimate is probably that, yes, of course, the Indian orders will be there on a continuous basis. But more importantly, I think all the friendly countries who would want to probably lay their hands on these kind of systems for their own defense, I would assume that the order books are going to swell multifold times even from here onwards as well. Now, if that's going to happen, then of course the PE multiples are not going to come down. At the same time, the margin profile, when we see all of these companies across in the last quarter, they have been way better than expected. So when we now then extrapolate your increased revenue, increased order books on these, then the earnings will surely surprise on the upside, which means that I think there is a lot more steam on an overall defense play still to come. Of course, on an optical basis, you may see that they've rallied, the P's kind of have expanded, but I think they will continue to remain expensive. And at every dip, this is a sector which will continue to be bought in. So that's the way we look at it. And in addition to that, lastly, as you rightly mentioned about the rare earths, I think it's a developing situation. We don't know where it is going. We will have to assess, how the progress is being made, because there are multiple industries kind of dependent on that. And if the production gets curtailed within those kind of industries, then probably a shorter term earnings impact can happen. But I think, rather than jumping the gun, we will probably wait and see how the, developments happen especially on this front.
Vaibhav, hi, good morning. Sorry, we spoke as well, but just wanted to know how you're looking at the monetary policy meet and outcome tomorrow. If there is a bonanza of 50 basis points or if there's 25 basis points, which is largely priced in, do you think that gives the market the momentum that's required? And what would you hope to see?
See, I think it's not about only this credit policy or monetary policy. I mean, if you see in the last two policies as well, the action has been pretty consistent in terms of first changing the stance from neutral to accommodative, reducing your rates, increasing your liquidity, reducing the risk weights in terms of the unsecured loan pieces. So all in all, I think the policy is going into the right direction of supporting growth on an overall basis. Now, whether they do 25 basis points or 50 basis points, in all probability, it will be any which ways in the right direction of what people are anticipating. Now, whether that kind of has an impact on the underlying sectors, of course, yes, I think banking sector to some extent will get impacted. Of course, the sentiment can be positive, but if you look from an NIM NIM perspective, then there would be some amount of pressure with a subdued credit growth, which has been happening. My sense is basically the earnings can possibly get cut into this segment. So for the banks, it may be negative. For the NBFCs, it may be positive purely because the cost of funding immediately kind of comes down in that sense. So it will be a tricky one to kind of manage, but in the extremely short term. But from a medium to long term, I think it is highly supportive of growth. And my sense is basically it will only help, over a period of time, companies to kind of, increase or probably get the momentum of earnings back in the second half of this year.
Would it bring the focus back on spaces like real estate, like autos, which, have been also struggling in a in-between sort of state, not really seeing any kind of a breakout or that much of excitement and interest? These need a spur, a consumption spur. Do you think a sizable or at least a clear direction to rate cuts would help here?
See, I would term that, in the combination of what the central government, state governments, from fiscal side, they are doing in terms of welfare expenditure, cutting the tax from an income tax perspective, and from monetary side, monetary policy being accommodative and reducing rates. All in all, it's going to boost consumption for the next 2 years. Now, within the consumption pocket, as you rightly mentioned, whether it flows into autos, whether it flows into other consumer discretionary, I think time will tell. But in my view, I would think that the first line of expenditure probably will happen to experiences in terms of, travel, tourism, spending on food, and so on and so forth. So, and then the next leg probably will to probably durables, and you will find that kind of chain continue. And last being the consumer staples in that sense. Of course, when you talk about real estate, you also have to take notice of that post-COVID. What we had seen is basically a tremendous surge of real estate kind of buying. Now, after 4 years of great growth in that sense, if the industry kind of consolidates at a higher level, I think it's actually a positive sign. Of course, that doesn't mean that the underlying real estate companies might give you extraordinary returns, but it's just that the sector is kind of consolidating at the higher levels, which in itself is a positive side from an economic standpoint.
Now, Vaibhav, you might not be naked long, naked short. You must be doing a lot of hedge strategies, as you've always done. I would just love to know, though, if you were doing a pure vanilla long only or a long short without hedges, where is it that you are most constructive on? Where is it that you're most bearish on?
See, what we are most constructive on, at least for the next 12 to 24 months, is the whole consumption sector. As I mentioned, starting from discretionary, flowing onto the staples, led by travel and tourism experiences, food marts, retailers. Those are the segments which we are, very keen on. Apart from that, what we also continue to like is basically the financial services. And at some point in time, we may like the IT services as well. These are sectors which are very, very constructive on.
Just one quick follow-up there, Vaibhav. IT services, I just like what somebody said in one of the papers today, that it's the old story of new technology. AI is coming for our jobs. I wonder what IT services do there. But I love the headline. But just one quick follow-up on financials. The overarching thought seems to be that go slightly low on the weightages on banks and up NBFCs because the cost of funding goes down, and that will give a big delta to NBFCs. Would you subscribe to that theory?
Absolutely. And in addition to that, the financial services like an AMCs or capital marketplace. Yeah.
Okay, Vaibhav. Sorry, I know you mentioned this. Maybe I missed it, so sorry for that. But okay, and just before we wrap up, did you speak about what you are not constructive on, where you might be short?
See, I think I would rather put it non-constructive. My view would be the banks on an overall basis is where I am not constructive at this point in time. Of course, I'm not saying that it is bearish. We are probably neutralish on that. In addition to the globally exposed sectors, apart from IT, is something which we are currently avoiding, from an overall sectoral standpoint. And lastly, cyclical sectors, and where the valuations have been extremely high, that is something also we are avoiding.
Okay, thank you so much, Vaibhav, for speaking with us. Always a pleasure to have you on. Vaibhav Sanghvi there, CEO of Ask Hedge Solutions, on what the outlook is, and the outlook is largely positive on the street as well. Look at the recovery that we have been seeing, about nearly 0.5% up on the Nifty, not quite near the day's high, but a solid uptick from where we started off in the markets. Bank Nifty is not really participating at all. Nifty IT is also middling. It's the broader markets that is showing action over here. So I want to pull up the small cap and mid cap for you, as well as the advanced decline before we wrap up on the show, if we quickly can, and give you a sense of what's working. Right, you have the mid cap 150, they're about 0.5% up. And you're seeing the advanced decline ratio also stacked up quite positively. Some buzzers at this point. PNC Infra, 11% uptick. Brainbees, that's First Cry is the brand that you may know it as, also seeing a good uptick. Both Wellspun Corp, Wellspun Living, really buzzing today, as is Indegene, Minda Corp, a whole host of them. So lots of stocks to pick from this morning. We'll take a very short break on the show, Neeraj, but we'll leave it to Ask Profit.
Yeah,
to tell
all your queries, including the one on Wellspun Living, by the way, which we've teased so fervently because the stock is really doing very well. But thanks so much for tuning in today.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind? Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vachharjani, and we'll take you through the next 1 hour of trade. This show is geared towards getting you answers to all of your stock-related questions, and so many stocks are buzzing despite the fact that you don't have a very large move at the benchmark level. Let's get you through what is happening in the markets as things stand right now. And there was anticipated to be a little bit of caution ahead of the monetary policy outcome, and that's tomorrow at 10 a.m. and that is panning out. Though we're trading with gains of about 0.4% for the benchmark Nifty 50. And through the week, you've seen an outperformance of the broader markets. That continues to be the case today as well, with the mid-cap index gaining about 0.5% or thereabouts, and you have the small cap index up about 0.75%. So this is something that panned out in trade yesterday as well. The mid cap index doing particularly well yesterday. Today the small cap index is outperforming, and overall I wouldn't be surprised to see the market breadth will be tilted
once again in favor of the advances, and quite significantly so. In fact, yesterday the gap was much narrower through most of the session. Let's see if that strength continues. Not too much in the way of big movers on the sectoral front though. In the Nifty Bank, just about 0.1% higher, but pharma is doing reasonably well today, up about 1% or so. You have metal that's up and about again, about 0.5% or so, and auto is just about languishing with gains of about 0.1%. We've been speaking about the story of rare earth availability after China has restricted exports of that, and that affects a lot of automakers, remember that. Let's kickstart things by introducing our experts for the day, and then Mahima will take us through the first question. We've got Kush Bora, who's the founder of kushbora.com, and Prashant Tapse, who is the Senior Vice President Research Analyst at Mehta Equities. Thank you so much to the both of you for taking the time, and good morning to you. Just a quick reminder before we start, if you're writing to us for the first time, you can write to us on the number on the top of the screen, or you can call us. We'd love to speak to you. We'd love to hear your voice. Do call us on the number at the bottom of the screen. That is the landline number. What's the first question today?
Right. So the first question today is from Dilip, who's writing in from Gandhidham, Kutch. And his question is on ITC. He's bought 500 odd shares at an average cost of 429 and wants to continue to hold and also acquire more from a longer term perspective, that is 3 years. Hi Prashant, good morning and welcome to Ask Profit. I'll take this question up with you. ITC is the counter. I was just looking at Bloomberg estimates for FY26 in terms of ITC. They're expecting roughly a 12% growth YOY basis. What's the outlook like? And also in terms of PE, if we look at FMCG staples, ITC is the cheapest available stock right now.
You rightly pointed out with respect to PE, but again, if you see the defensive stock, I think ITC is giving a lot of comfort level at this point of time in terms of valuations, even as per the expectations of the Bloomberg, as per as our research concern, again 10 to 12% of growth and 6 to 7% of volume growth can be expected quarter on quarter from ITC. And I think for a long-term perspective, 410, 420 is a good range to start accumulating ITC. Again, there are a lot of triggers again going forward in ITC with respect to their price hike. I think in next 1 or 2 months, there will be a big price hike coming into their products. So that would be the first trigger, and overall long-term very positive.
Okay, all right. And the dividend yield is nothing to scoff at either. So are you suggesting a fresh entry at this point?
Yes, very, very much. Again, I think Kush Bora can help us for a best entry.
Okay, Kush, that's my cue to go to you quickly on ITC. Would you suggest a buy at this point?
So, Alex, from a 3-year horizon, why not? I mean, the stock's actually consolidating in a good, in a good zone. Supports near 400, 410 marks. So, not a bad idea to start accumulating here, especially if your horizon is, as long as the one that's being discussed.
Okay, all right, 3 years. Kiran is calling us from Hyderabad, our first caller for the day. Kiran, very good morning to you. How can we help you today?
Sir, good morning. I'm holding Apollo Hospital shares.
Okay.
Actually, 51 shares of Apollo Hospitals at 6962 rupees.
Okay.
So, should I hold on for the next 1 month in the same counter? Or there is should I shift to something like Dr. Reddy's where LIC have increased their stake of about 1% or something like NTPC for a short term of 1 month trade? Should I stay with Apollo Hospitals or should I shift to something like NTPC or Dr. Reddy's is my query.
So you've identified a few stocks, but they're very disparate. There is Apollo Hospitals from the hospital space, there is NTPC, and the third stock was?
Sir, Dr. Reddy's.
Dr. Reddy's in the pharmaceutical space. Got it. Got it. Yeah. So, but you're only looking for a 1 month time frame. So, I'm guessing you want a view on the technical charts. Kush, you don't necessarily need to stick to the alternatives that he has suggested. What's the best play from a 1 month time frame? And Apollo Hospitals, would you venture in right now?
Alex, given that the stock is very close to his buying price, it might not be a bad idea to continue to hold. Now the stock is consolidating near the 200-day moving average, albeit with a negative bias. That's a bit of a concern. The volumes aren't anything to write home about. I mean, just yesterday, they were up, but other than that, on the downside, the volumes in fact have been stretching a little. So he could continue to hold on to this one with a stop loss around the 6,800 mark. Any pump up, towards the next resistance levels of 16,960 and about 7,030 will actually put him in profit. So why not continue to hold on? And since he's rolled in a couple more queries, Dr. Reddy seems much better placed in NTPC if he wants to consider for a month.
Okay, so that's with regards to where these pharma companies stand. Our next question is from Shivani, who's writing in from Mumbai. She's holding 443 shares of JK Paper at the price of 446, and this is from a 12-month perspective. But she wants to know now as to what should be her next target on this particular counter. Kush, I'll stick with you for this one. In terms of fundamentals in Q4 numbers, the stock tanked when the numbers came because net profit almost slipped around 75%. But where charts are concerned, there was some momentum a few weeks ago, but does the momentum still hold for this particular counter?
Mahima, very interesting setup on this one. For the last 4 weeks, this has been making higher highs. So, momentum definitely continuing. It's just that it's starting to flatten out a little, and that you can see in the volume traction as well. Maybe if you just club this with the kind of moves that the market has made over the week or so, I think this is still a very healthy sign. You'll continue to, stay put in JK Paper. Now, my concern is that the next levels of resistance for this one come at 400, and once that is taken out around the 435 mark, which I believe are still a little lower than her buying price. But nevertheless, with the kind of setup that the stock is seeing, it's not a bad idea to continue to hold on. 355 is the stop loss that you should look at. Maybe not in the profit in the next couple of months' time, but certainly in lesser loss that she's looking, she's staring at today. So with that view in mind, JK Paper is a hold.
Hold with a stop loss of 355 is the view coming in on JK Paper. All right, our next caller, Sampath, is calling in from Chennai. Sampath, a very good morning to you. How can we help you?
Good morning, Mahima. I hold 500 shares of Orient Pro. I bought at 148, okay?
Okay.
Can I add more at current levels? I'm sitting on a profit. Can I add more at current levels? I have some money to spare.
I see that you're sitting on a significant profit of 6 lakhs. So congratulations on that. Sampath, you want a fundamental view on this one?
Yeah.
Okay. I'll take this up with you, Prashant. Then Orion Pro is the counter. What's the outlook like?
Very wonderful profits the client is having right now, but I would like to advise him to have some kind of profit booking at this kind of time, not to add more at these levels again. I think valuations are again at the peak. 40p is not justified right now with the growth what the company is delivering. So I think the stock may see some kind of correction, some kind of valuation correction, and then that would be a good level to start accumulating. That would be again a good level would be around 1320 or 1300 levels.
Okay, all right, so that's the view on Orion Pro. Okay, so since you're saying book some profits, let me round that off. Kush, very quick view, what key levels would you watch out for to book those profits?
Alex, in fact, I would suggest a trailing stop loss strategy the way I do, in momentum trades or trades that have been, been profitable for the investor. So in this case, the stop loss is at, or rather the trailing stop loss in this case is at 1325. But my suggestion is to continue to hold on to this one. For the last year and a half, the stock's been in a bit of a slump, but it's been coming off a stellar run. It's already been a multi-bagger for him as well. So 1325 is the trailing stop loss. You might want to perhaps book some if it comes to that level, but otherwise continue to hold.
A story over the last 5 years, phenomenal, and kudos to you for having identified that and for holding with the gains that you have. We've got the next question from Vijayawada, and Ramana is writing in asking about KFintech, which has been bought at a price of 1,066. Again, this is a very, very substantial and healthy profit that Ramana is sitting on, 2 lakhs or thereabouts, because the buy price is 1066. The stock is currently at 1,168. The quantity is significant, 2,000 shares. What should your strategy be at this point? Kush, would you take some money off the table or would you hold for further upside? The stock is up, I believe, 7.5% over the last 1 month.
Alex, the very clear answer on this one is a hold, because not only on the daily time frame, even if you look at it from a weekly setup, you're seeing the tide turn a bit. Of course, this stock is prone to volatility, and hence, some wild swings are understandable for a stock like this. But other than that, if you see the medium-term trend, the near-term trend is starting to look up. So why not extend, those gains? So what I would suggest once again is a trailing stop loss. In this case, it would be at 1050 levels. There is a convergence of certain technical support zones at that level. So maybe that could act as a trailing stop loss. But as I said, the tide seems to be turning on the way up. In fact, I would suggest a target of 1275. Once that is taken out, the 1350 as well is on the card. So, a hold, and as the stock moves higher, continue to trail your stop losses also.
Trading flat today, but trail your stop losses is the view on KFintech. We've got our next caller from Hyderabad. Ravi Chandra is calling us. Ravi, very good morning to you. How can we help you today?
Good morning, Alex.
Good morning, sir. Please go ahead.
Yeah, my query is on Canara Bank.
Okay.
So since tomorrow RBI gonna announce their monetary policy.
Yes.
So just want to know whether the share price will go up or down so that I can initiate a buy.
Ravi, that's a very tough question that you're asking. And I think if people knew in advance whether a stock is going to go up or down tomorrow, they would make a lot of money. But having said that, what you're trying, and can I ask you a question? You're asking for the long-term outlook on Canara Bank, yes?
Yeah, I can hold for 1 to 2 years.
Say that again, you can hold for?
1 to 2 years.
1 to 2 years. Okay, so what you're trying to get is the best opportunity in the price to buy. So first, let me ask whether Canara Bank is the best option in the banking pack, and what you're trying to play is the fall in interest rates and the potential increase in loan growth. So let me ask first, Prashant, on the fundamentals. A lot of people have talked about the fact that banks are going to see their net interest margins come down, but then the counter argument to that is that because a repricing of deposit rates could take place, you could have a situation where banks can get through that cycle very quickly, and loan growth coming in would be perhaps a bigger positive. Alternatively, the NBFC story could also be played because their cost of funds would come down, and of course, not just your retail NBFCs, but even your power financiers, for example. You had REC announce that it's going to raise as much as 1.55 lakh crore rupees over the next 12 months through NCDs, and if they pick up that bulk at a lower price, and assuming that we have a rate cut tomorrow, 75 basis points already has been passed. So therefore, would you pick an NBFC or a bank for the next 1 to 3 years?
I think with respect to growth in the market, I think credit growth as well as the loan growth, I will pick NBFC against the PSU banks or the traditional banking system. But the question is on Canara Bank. I think on valuation terms, it is trading at 1 price to book value. I think it's the right time to start accumulating this stock. The way how RBI has given a lot of liquidity from last 2-3 meetings, I think that will bring a lot of credit growth for the companies, and even deposit growth is also coming into pictures. Recently, there was a news saying that Canara Bank is going to have a zero balance account for every thing. So that will bring some kind of pressure on the margins. But again, I think the loan book is growing faster than the deposit growth. So that will bring a lot of growth in the Canara Bank. But again, preferred would be NBFC. I think you rightly said with respect to lowering of the interest rates, will have a better NIM margins growth in the NBFC space.
Would be your pick in the NBFC space then, Prashant?
I think better go with Bajaj Finance, be the largest large cap player only.
Okay, and you're comfortable with the valuations at this point? What is a return potential for Bajaj Finance in your opinion?
I think 12 to 15% can be expected for next 12 months in Bajaj Finance.
Okay, 12 to 15%.
Okay, interesting. All right, the next question is from Rohit, who's writing in from Nagpur, and he wants to know if he can hold Eternal from a longer term perspective. His buying price is at 198. He's not given us the quantity, but Prashant, I'll come to you on this one. With Zepto filing its IPO, filing at least planning to file its IPO, and with an MS Swiggy note yesterday where they were bullish on Swiggy, and we saw the kind of uptick that the stock saw yesterday. Which one would you prefer right now? Would it be a Zomato or a Swiggy?
Portfolio stock, again, I think we should have both stocks in the portfolio because we know how the sector is moving faster than every sector right now. I think Eternal, again, we were lucky to catch the stocks very few days back, and I think my target would be anywhere between 65 to 70 to 65 to 70 on a trading basis. But again, as an investment, 300 can be a target for Eternal due to two things. One, the way they are expanding the dark rooms again, second, the industry is going very, very fast. Again, third would be Zepto, the third largest quick commerce company getting into market. So there will be some kind of higher valuation expected in the market. So obviously Swiggy as well as Eternal will try to match those valuations in the market. So overall, very bullish on the Eternal on long-term basis.
Okay, so that's with regards to where both of these food delivery company and of course quick commerce companies are concerned. Our next question is from Mansing, who's calling us from Andhra Pradesh. Mansing, a very good morning to you. How can we help you today?
I'm holding the 200 shares of Navbharat Limited.
Okay.
Average price 101 rupees.
Okay.
101 rupees, madam. Currently it is trading 533.
Okay.
The 200 shares are FOC, madam.
Okay.
Should I continue to invest in this? Should I sell? Where to park these money?
Sell to?
I want to sell 100 shares.
Okay.
If long-term prospect is not good,
okay,
I wish to sell 100 shares and that money, where should I park that?
Okay. Okay, got your question, Man. I'll take this up with Prashant again. Prashant, he's already invested in Nava and he's sitting on a profit of around 87,000 odd rupees. What he's saying is, out of the 200 shares, he wants to sell 100 shares and park it someplace else. What would you suggest?
I think wait for some more time. Again, I think there will be a lot of good momentum coming in the stock. At least 10 to 15% from the current levels, which can be a good level again, 600 plus. There he can think of selling 100 shares and then thinking of investing in any other stock. So second stock would be again, if you want an alternative stock, Eternal should be the second stock. Where he can park those extra money which he's getting from Nava Bharat.
Yeah, all right. So Eternal is something that you can look at. Wow, it's on a roll today. It's up as much as 5% in trade today, building up momentum through the session. Snigdha is calling us from Hyderabad. Snigdha, very good morning to you. How can we help you today?
Hi, hello everyone. So I just want to inquire about Havells.
Okay.
So I have 142 shares of Havells at 1501 rupees.
Right.
So I just want to, keep it for 1 month. So I just want to know if I would get any profits for this 1 month, or should I hold it or sell it? Now
Got it. I got your question. And I did you have a level in mind when you bought the stock?
So I just thought it would give a positive profit, so I just taken it randomly.
But did you define, for example, did you define that you wanted to grow maybe 5%, or did you say that you wanted to grow 10%? Is there something that you had in mind when you bought this stock?
Yes.
Which is what? Did you Okay, all right. So Kush, would you say that if you're buying for the short term, it's important to have a target in mind, and if so, how do you determine that target?
Alex, you put her in a KBC 7 crore question kind of a situation. So.
No, sorry, I've lost your audio.
Am I audible now?
Yeah, please go ahead.
Yeah, I was saying you've put her in a KBC kind of a situation. I have to appreciate the honesty with which Snigdha answered that question, and she said randomly, but let me be a little stringent here. Randomness is not a good strategy in the market. And now, as far as Havells goes, I would exit this one. This stock started falling way before the markets did last September, and hasn't really recovered. And in fact, it's a shorting candidate. While the buy price is very close to the current price, mildly lower than that, but the setup doesn't really look as encouraging. So maybe on a short covering account, the stock could go up, but the overall setup is not so encouraging, and hence it's not a good idea to be in a stock which is in a downward momentum in a bear clutch. So Havells for me is an exit. And as I said, randomness is not a good strategy. Maybe she can come up with something different, or maybe a structured way of picking stocks. That's the only other advice I would give.
Okay, so this was not aimed at you, Snigdha, and a lot of people do this. Of course, there are popular references. If you watched Friends, then you will know that in one episode, Monica decided to buy stocks based on her initials. And there is a certain amount of luck involved. You could end up buying a stock that could go up 10x. Who knows? But then it's better to have something in mind when you buy a stock, both fundamentally and technically.
Absolutely. Research is the utmost important thing to pick a stock.
Or you can call us on Ask Profit and you can ask us here.
Absolutely. All right. The next question is from Satya, who has a query on Zydus Life Science. He's holding 300 odd shares at an average price of 1080 and wants to know if this is the right counter in the pharma space to stay invested in from a 1 to 2 year perspective. Prashant, I'll come to you on this one. What do you think? Is Zydus Life Science the best bet in the pharma space?
In pharma, life science sector is the best sector one should focus more on, because again, there the margins are very much intact and a lot of negative pressures are not there in terms of business growth. I would like to go with Zydus Life Science and long-term investors, despite knowing the last quarter were not so as expected for the market. But again, valuations are giving me very much comfort with respect to forward P of 15 and price to book valuation of almost 3x. So I can consider it as the cheapest pharma stock for me to start accumulating at these levels. There may be some kind of short-term dips, but again, every dip has to be bought, and long-term is very positive.
Okay, so that's with regards to where Zydus Life Sciences stands. Our next question, in fact, our next caller, Srinivas is calling in from Chennai. Srinivas, a very good morning to you. I believe you have a query on MobiKwik.
Yes, ma'am. Good morning, ma'am.
Good morning.
And good morning, all. Actually, I bought the cost of 400, nearly 30 shares, ma'am, at 3 months back.
Okay.
Now it is around 270, 275.
Right.
So I have to keep it or not, or have to sell or buy or hold it.
Okay. Okay, I got your question, Srinivas. I'll take this up with Prashant again. Prashant, not sure if you have a view on this one. A fairly recent listing, MobiKwik. What's the view like?
See, I don't cover this stock on a fundamental basis, but again, with respect to the new age companies which are into financial services and all, I am having a very negative outlook on these kind of businesses. I think valuations are not justified. Even the growth is very much high in the industry, but again, I don't know how MobiKwik system will perform well in the short term or the long term. But again, if he has a guts to book losses and go back to some traditional good long term investments, then I would advise him to book here and go back to some traditional good long term stocks.
And what would those be?
Like SBIs or the HDFCs and all, because I think there the downside is very limited. Again, with 2 to 3 years view, you can earn 12 to 15% return decently.
Yeah, 15% is nothing to scoff at, by the way. 15% means that if you invest ₹1 lakh now, in about 5 years, you will double your money, which is not too bad, right? At 23%, you would be doubling in 3 years, which is, again, not too bad. Something that Warren Buffett has done over a period of time. So that's something to aspire to. All right. Surya Majumdar is writing in from West Bengal and asking Kush a question. He's specifically addressed this to you, Kush. Suzlon is the name of the counter that he's talking about. He's bought at levels of 70 rupees a share. He's got 450 shares. He's a long-term investor, but he's asking whether to hold or sell or even adding more at this price is being considered. And remember, Suzlon had a pretty decent fourth quarter on the fundamentals. The question is about valuation. So first, Kush on the charts, and then I'll very quickly come to Prashant on the valuations. Kush?
First, thank you for addressing that to me directly. Despite having a fundamental outlook on the question, I think he has heard our conversation, Alex. If you remember, earlier this week, you, me, Neeraj on the morning show, we were discussing how despite a good run up and a good result, these stocks might see some corrections. Suzlon and Inox Wind, included, if I have to put some of those together. So yes, that correction has come about, or maybe profit booking, if I can call it that, has come about. Now the stock seems to be finding its base. 65, 66 is a good support zone. Since his buy price is 70 and his outlook is long term, I would suggest continue to hold on to this one. I wouldn't suggest accumulating just yet because we want to see some momentum before you start accumulating. So maybe adding again close to the 70 mark is not a bad idea. Keep your stop losses near the 63 mark and continue to hold. I think there is a good upside still to be had on the stock. So from a long-term perspective, 12 months or out, I think 85, the recent swing high that the stock has made, once that is taken out, the 92 as well is on the cards. So Suzlon is very much a hold. As I said, the stop loss could be close to the 63, 64 support zone. And on the whole, this profit booking that has come about is healthy. So don't be too perturbed or too disturbed by the profit booking that Suzlon has seen in the last 2 weeks.
That's a view on the technicals on Suzlon, but very quickly on the fundamentals, on the valuations. Of course, the prospects for wind energy as a whole, everybody's talked about it, the fact that India is adding so much capacity and Suzlon stands to benefit. But is the valuation a little stretched at this point is the question, Prashant?
Yes, you rightly pointed out, valuations are a little bit stretched, and that is the one reason why the stock is looking at some kind of profit booking post the results. The results were really good, even if you consider Q3, Q4, both numbers, they have performed as per the market expectations. I think correction is the point where a lot of long-term investors will get a lot of opportunities to buy back this share in the market. But again, I agree with my colleague again with respect to the targets. 85-90 can be a very short-term to long-term target from 12 months perspective. But overall, the margins are improving. The margins have improved from last 4 quarters. Again, the ROCs and ROEs are also improving. So I think now the company is almost a debt-free company. So that will give a lot of comfort levels with respect to balance sheet. Again, the overall target would be more than that 90, but again, the horizon should be like 2 to 3 years, because renewable energy, green energy, this should be a story of portfolio investment for 2 to 3 years, not for less than 12 months.
And energy transition is the next big thing for sure to look out for. All right, with that, it's time to slip into a very short break, but viewers will be right back answering all your queries on the other side, so do stay tuned.
Markets move fast.
And so should your portfolio. Expert insights, Real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Welcome back. You're watching Ask Profit, and we've got a long distance caller. I'm not talking about New Delhi or beyond. I'm talking about Singapore. Vikas is calling us. Vikas, very good morning to you. How can we help you?
Yeah, I'm Vikas calling from Singapore.
Yes.
I've been a regular watcher of your program, and your voice is beautiful, basically.
Thank you,
the
sir.
way you ask the questions, very nice.
Thank you, sir.
Alex.
Thank you.
So I have a query regarding, I want to invest 5 lakhs.
Okay.
So I'm looking for diversified companies. So we would like to hear from you on this.
Got it. Okay. I got your question. And am I right in assuming that you've got a long-term outlook and so you can hold for a good 3+ years?
Yeah, correct.
Okay. All right.
Long-term investor.
Okay. I understood, Vikas. So let me go to Prashant. If you're looking to build a portfolio at this point with the valuations as they stand right now, where would you deploy that 5 lakh of rupees?
Something on in banking space, and I think something on the auto space. In the banking space, again, I like SBI and Bank of Baroda a lot at this valuations at this current point of time. In the auto space, again, Tata Motors would be one stock which I am tracking a lot from last many years. Due to this recent trouble with respect to the products which are making some problem, but I think due to the demerger story and due to the long-term EV story, and even I think there are some news saying that they are coming with some hybrid model also very soon. So I think long-term story is very much intact. There is a good discount from last all-time high of almost 30 to 40%. So I think Tata Motors and SBI as well as Bank of Baroda should be a portfolio stock for long.
Okay, so that's the view with regards to where I mean, how you can pick and choose the counters to invest 5 lakh rupees. All right, our next question is on Vari Renewables. Venkat Ramani from Bengaluru is writing in and holding around 250 odd shares at 900 a piece and wants to know if he can continue to hold for the next 18 odd months. Prashant, I'll stick with you for this one again. Vari Renewables, what's the outlook like? I mean, I know you mentioned that, renewable energy is the next big thing, but what's the outlook specifically for Vari Renewables?
I think continue to hold for at least 2 to 3 years from the current levels. As I said, again, energy, green energy, solar, and these things should not be looked at the short-term perspective because you will see a lot of ups and downs or any negative news from the global markets. But again, having said that, the all-time high was 2,300. Post that there was a heavy correction in the market, and I think that's an opportunity again. Considering the ROCs and ROEs, and again valuations, again I think comfortable to justify 1,000 rupees, 1,060, 1,070 as a price. Current levels, but again the view should be 2-3 years plus. short term you may see some kind of pressure, but again, buy on dip should be a strategy.
Buy on dips should be the strategy on Waaree Renewables. Now, what we do on this program, of course, is take you through a whole host of stocks, and we ask all of your questions regarding the technical and the fundamental outlook for the stocks that you want to invest in. But it's important as a fundamental investor to look at the depth of a company, and whether that's earnings, whether that's valuations, whether that's outlook for earnings going forward. All of that and more is covered on the next show, which starts at 11:30, and that is Know Your Company. Every day a stock is picked, and today the stock that is being picked is NCC, which is Nagarjuna Construction Company. The questions that are being asked are quite a few actually. How quickly can the cash tied up in working capital be realized? What are the plans to utilize the excess cash? There is a fact that the debt is increasing. Is that a concern? Can it be used to repay that debt? How is the competition shaping up in the space? And also the outlook on growth and margins, not least of which they will talk about the valuations as they stand. And remember, KYC also gives you a rating, our own NDTV Profit rating based on various metrics, so you can decide whether you want to invest in a company or whether you want to stay invested in a company that you're investing in. All right, the next question that we're taking today is all the way from France, and we've got Tamil Selvan who's writing in and asking about Mahindra and Mahindra. It's in focus today because it does manufacture electric vehicles, and as you know, we've been talking about the rare earth story. And this is a problem that automakers globally are facing because China is restricting its exports of rare earth. It is the largest base for rare earths in the world. There are a few other pockets, something like a Brazil or something like in Australia, but not as much as China. And supply chains cannot shift very quickly. So what is the outlook for Mahindra and Mahindra? Does this affect growth in the automotive sector? What is the outlook? He's invested 3,051 or he's bought at a price of 3,051. He's got 18 shares. Should he hold on, Prashant?
I think continue to hold on. I think this is a temporary hurdle for the stock as well as the sector. I think Government of India is trying hard to get this resolved. I think we have 30 days to 40 days of inventory as an average. I think Mahindra may have a better inventory level. But again, valuations are comfortable. And if you see the recent growth, recent earnings, as well as the new sales from the BE6, I think the numbers are coming out very good. Going forward, I think 1 or 2 months, there will be some kind of volatility coming out because of the global issues. But again, I think with respect to the long-term investment, hold it for at least 3,800 to 3,900 from the current levels.
That's a view on Mahindra and Mahindra. A lot that is panning out for the company, apart from that rare earth story, of course, is the automotive division, a lot of which is driven by its SUVs and also its tractor segment, which is not doing too badly either. Let's figure out how the monsoon season goes. Oh, we've got a caller. Venkat is calling us from Hyderabad. Good morning, Venkat. How can we help you today?
Yeah, hi.
Hi. Please go ahead.
I have Gravita 18 shares around 2,360 rupees.
Okay.
Average price.
Okay.
Around 9,000 last. So should I average? Actually, I am holding for long term only. Is it good bet for long term?
Is this a good? So it is a lead producer, and so therefore any big move in metal prices globally tends to affect this company as well. Let me go to Prashant on this one. He's incurring a small loss, bought at levels of 2,360, which is elevated levels, but he's got only 18 shares. So materially speaking, he's not incurring a terrible loss. Is this a good opportunity to double down, in your opinion? What are the fundamentals?
Fundamentals are good. I think if you see, company has delivered a good growth profits of almost 50% CAGR from last 5 years. See, the view should be long term, not for short term. Again, short term, there will be a lot of hurdles, as you rightly said, with respect to rise in the metal price will have impact on Gravita as well as HEG. But again, with respect to valuations and P, again, still at a very expensive level, trading at 40-45 P, and historically it was trading at 25-30 P. So I think for me, there can be some kind of consolidation in the price, consolidation in terms of earnings, but again, downside is limited, so recommended to hold it for long term, at least for a target of 2,000 from the current levels.
Okay, all right. By the way, just a small request to everybody tuning in. Mahima and myself are responding to queries as we see them. So we try and respond to as many as possible. We won't always get to you. Don't think that we're ignoring you on purpose. The next question we're taking is from Ashi, who's writing in from Hyderabad. IRFC is the counter that Ashi is invested in. 275 shares and making a healthy profit, if I'm not mistaken. I do not know the buy price, but they say that they've got gains of about 34,000 rupees. So bought quite a while back, I'm guessing. What's the outlook on the stock right now in terms of the technicals? Kush, what's the view on IRFC? Back in focus?
I think the entire lot is back in focus, and that's in a way a healthy sign for the entire pack. IRFC also has momentum broken above the 200-day moving average, continuing to do well. So he could book partially, at the current levels and hold the rest with a trailing stop loss near the 139 mark. Now, the reason I say that is because despite the kind of move that it has seen yesterday and the continuation, that you're seeing today, there is some negative RSI divergence setting up, which is suggesting that the momentum could now perhaps be fizzling out after the run that it's had over the last 3 to 4 sessions. So not a bad idea to maybe take some money off the table and then hold the rest with a stop loss or a trailing stop loss depending on his buy price around the 139 mark. While the overall sector is shaping up well, profit booking is par for the course along the way for at least something like the railway pack. So book partially, hold the rest.
Okay, all right. So the next question is from Vishal, who's writing in from Dubai, and he's got Nestle. Oh, actually, wait, let me read this properly. He's got shares in Nestle, and he's looking to book those shares or sell those shares, which he's bought at levels of 1694, and he's holding Trent, but he's looking to shift from Nestle to Trent and wondering whether he should do so at this point. He says he's a long-term investor. So basically, he's trying to consolidate his holding in Trent by shifting out of Nestle. Should he do so is a question, Prashant.
I think both are in different sectors, so difficult to say yes or no for those things. But again, I am very much bullish.
Yes, okay, so it's a fair question. Let me put it this way. Maybe he's looking at the growth prospects between the two, and we've been talking about the slowdown in FMCG for some time, and we're talking about grammage. And on the other end, Trent has had a phenomenal story. Of course, there are challenges that they're also facing, but who has the better growth prospects is the question.
I think Trent would be the better growth prospect, but with respect to valuations, again, the stock is trading at more than 100p, so that would be not comfortable for me to say to add at this point of time. Obviously, the story is good for quarter-on-quarter as well as for 12 months in the current levels. But again, any good correction in the stock by any reason, maybe because of profit booking or maybe because of some earnings or some news in the stock or the counter, that would be a great time to add Trent for current levels.
Okay, all right. Shankar is calling us from Bengaluru. Hi, Shankar. Good morning to you. How can we help you today?
Good morning, sir.
Yeah.
Good morning, sir. Sir, I would like to, I really appreciate both of you, Mahima as well as Alex, for your
so much,
encouraging and smooth way of handling things, and I'll appreciate it. And Kush is always smiling, and his technical views I really appreciate. And I wanted to know the view whether I can enter into Archean Chemical.
Okay.
ARCHEN, Archean Chemical Industry.
I have it.
It's a specialty chemical industry.
Yes.
Of course, its stock P is little higher than industry.
Yeah.
And book value is around 4.
Yeah.
And sales growth is negative for 3 years.
Yeah.
So fundamental and market cap to sales is also high.
Yeah.
So is it the right time to enter, or what can we do with this? I want a long-term investor.
Okay, I got your question. So, and you've done your research. You've looked at the numbers. The question is whether or not the growth prospects going forward would justify that slightly higher valuation than the peers. And as I look at the screen, you have a PAT number of 54 crore rupees in the quarter gone by, and they have actually managed to improve their okay, let me just pull this up. Their PAT, okay, so their PAT margin, their operating profit margin has actually declined. So maybe that is something that has had a bearing on the price as well in the recent past. Let's pull up the 1 month chart just to see how Archean has done in the recent past. Okay, it's not moved too much in the larger context, up about 3%. Do you have coverage, Prashant? And if so, would you enter this price for the long term?
No, we don't have any active coverage in this stock, but I think understanding the quarter 4 numbers, obviously that was the reason why the stock has come down a little bit and even consolidating at these levels. But again, if you see the products and the profile, they are doing really good. There is a good volume growth coming out with respect to the marine chemical, which is the largest supplier for marine chemical in India, and as well as industrial salt. So I think sector is good. I think there is something missing in the company which is giving a lot of pressure in terms of pressure in the EBITDA margin. So that should be a wait and watch for me, at least for 1 or 2 quarters. If the margins improve back to its 30% from the current 23%, so then I will be very much bullish on the stock. But time being a good level, I may not here to comment on that.
Okay, so that's it with regards to where Arkin Chemical stands. Our next caller, Hari, is calling in from Chennai. Hari, a very good morning to you. How can we help you?
Hi. Good morning. This is Hari here. First of all, thanks for accepting the call, and it is always very good talking to your team.
Our pleasure, Hari.
My question is regarding Natco Pharma. I have around 70 at the average price of like 1,470 or 460, 1,470. My question is now like whether I can average at this price. I know I'm sitting at a loss. I stopped buying after the last quarterly result. After that, I stopped averaging it out. Now I don't know like whether we can accumulate this, because this quarterly result is also not good, and not sure like what is the prospect or what is there in the store to go ahead with this one.
Okay, got your question, Hari. I'll take this up with Kush. Kush, do you think Natco Pharma, there's still some steam left where charts are concerned, or should he exit and book losses?
I'm afraid I'll have to be bearer of the bad news here. Despite the kind of stability that this stock is starting to show, there isn't any bit of momentum that is coming up. At all. In fact, all rise close to the 900 mark is being taken as an opportunity to sell, as has been the case about 2 to 3 times in this calendar year already. So doesn't look extremely exciting on the charts. My view on this one is an exit. I know he's in a bit of a loss, but that's what the charts are suggesting at the moment.
Chartically, it seems that the opinion is to sell, unfortunately. I just want to get a confirmation on this from the fundamental side as well, because sometimes you need a little bit of patience. Prashant, is it a case where for Natco Pharma you should have patience, or should you book out right now?
See, I would like to go and wait and watch for a Q1 earnings as well as Q2 earnings. See if there are some kind of improvement in the business dynamics, then only I think that would be a time to hold and then think of getting some kind of higher levels from the current level. But again, it's a time, correction of time, and in time there will be a value of time going forward for next 6 months. But downside is limited for me from the current levels. If you see the stock is doing the consolidation right now. So, but if he has a guts to wait, and I think one or two quarters should be a time period he has to give it to the stock.
Okay, I know that I've spent a lot of time on this, but let me ask you, Kush, one last question. I know you've said sell, but if he decides to hold, where would you place your stop loss?
Great question, Alex. It'll be close to the 800 mark. You could choose anything between 8 to 815. That supports.
Okay, all right. Hopefully that answers your question. I've spent a lot of time on this. I hope that it benefits you. All right, Borosil Renewable is a question. Venkateswaralu. Please apologize. I apologize for mangling your name. Mr. Pagadala is writing in and asking about Borosil Renewable, bought at price of 541, 50 shares. He can hold for up to 1 year. He's in the green right now, but profit of only about 839 rupees. He's got 50 shares. Should he hold on is the question on the charts. Push?
Yes, he should continue to hold on. The stock's actually witnessed a good consolidation for the last 2 weeks. Base around the 530 mark, support around the 530 mark. Multiple times it has rebounded from that level. It's attempting a breakout, but given the market structure plus the lack of volume that you're seeing right now, is preventing that. As you said, the good thing is that he's in the green right now. So with the stop loss around the 530 mark, you should continue to hold. Next resistance levels or next targets on the upside are 575, and once that is taken out, 605 as well is the next level to watch for. So a hold with a stop loss at 530.
Okay, hold with a stop loss at 530 is the view coming on Borosil Renewables. Our next caller, Kanan, is calling in from Kerala. A very good morning to you, Kanan. How can we help you today?
Yeah, hello, good morning.
Go ahead with the query, Kanan.
Yeah, my query is regarding Healthcare Global Enterprises.
Okay.
So I do not hold a stock currently. My query is if it is a good level to enter now, and I would also like to know a fundamental view for the next 2-3 years.
Okay, Kanan, I got your query. I'll take this up with Prashant. Prashant, Healthcare Global is the counter. Do you think this is the right time to enter, considering how fundamentals are playing out for the company right now?
Fundamentals, yes. I think giving a lot of comfort levels with respect to the business model, but not with respect to the PE valuation which the stock is currently trading at. Right level, I think my colleague can help him on that. But again, fundamentally, things are doing very good and they're managing their hospitals very well. EBITDA margins are improving, PATs are improving, even debt levels are decreasing. So I think fundamentally okay for me, but what level, I think my colleague can help.
Okay, all right. So that's the view on healthcare global. Let's take the next question to Kush. Kush, question to you. Harshit has got 5,000 shares of Reliance Power, bought at price of 59.27, and his expected target is 65 rupees. His stop loss is at 55. He's asking if this is the right trade. All right, so he's in the green, but he's wondering whether 65 is achievable. What's the view?
So Harshit, I think the question's brilliantly framed. I mean, he's got all the metrics very clear. Target, stop loss. All of that very very well defined. So kudos on that. What I would now suggest is to keep a trailing stop loss. Yes, with the kind of momentum the stock is witnessing, 65 is a very much a probable and achievable number. Despite the kind of run that the stock has seen, it's not gone into overheated territories. Any overheated territory that it had. It's seen that cool off and then sort of corrected itself and now resuming that up move. So very healthy setup on this one. I would in fact suggest continue to hold beyond 65 as well for targets of 68 and above. But the only addition that I would like to make in his entire setup is that of a trailing stop loss, something that I've discussed I think a couple of times already by now. 58, 59 thereabouts, good support zone. Weekly support also around those levels. So you should keep your trailing stop loss around that mark and continue to hold. If it hits 65, trail your stop losses to 62.
Okay, so that's with regards to where charts are concerned for Reliance Power. Our next caller, Jijo, is calling in from Kerala. A very good morning to you, Jijo. How can we help you?
I was holding
Sham Metallic?
250 stocks Sham Metallic. Yeah.
Okay. Okay.
So average was 400. So I just want to know there is some tariff concern related metal stocks. So whether I hold or sell.
Okay.
And stop loss and all.
Okay, I got your question. I'll take this up with Prashant. Prashant, what he's pointing at is with regards to the metal stocks, and he's holding Sham Metallics, but he's sitting on a profit of 1 lakh rupees right now. And this company has also decided to foray into wagon manufacturing very recently. What's the outlook like? Should he continue to hold or book some profits?
Very positive to hold for a short term to medium term. Again, I think long term would be a big story for the company with respect to the news which you said right now. But again, currently, I think the valuations are very much comfortable to advise him to hold at this point of time with at least 10-15% momentum from the current levels. As you know, the metal stocks are very volatile, but this company is doing really good and outperform the market recently. So continue to hold with a target of 1,000 rupees from the current levels.
All right. SJVN is the name of the counter, and Sujata is tuning in from Bengaluru. Thanks so much, Sujata, for writing in. You've got a holding of 518 shares in SJVN at the price of 71 rupees. Should she book profit is the question. She's holding with a decent amount of profit, 30% or thereabouts, right? What would you do, or more than 30% actually. So what would you do with this, Kush?
Alex, I'd continue to hold. Even in the correction that the stock witnessed recently, along with the rest of the markets, it didn't test those buying levels. Now you're seeing some sort of an uptick on this. The momentum is missing, and that is quite understandable. Sometimes it takes a while for the momentum to kick in. But on the whole, if you see the medium-term setup has turned positive, there will be a mild resistance around the 107, 106 mark where the 200-day moving average is. So some supply zone might come in. But on the whole, as I said, the tide seems to be turning on this one. But it could be a slow, gradual uptick. So with a stop loss around the 95 mark, which is a good support zone for this stock, continue to hold on to SJVN. On the upside, once this 107 level is taken out, you could see stock head to 112 and then about 120 levels.
All right, Siddharth is calling us from the home of chilies, Guntur. Siddharth, very good morning. How can we help you today?
Good morning, sir. I'm holding Deepak Nitrite, 40 shares.
Okay.
Average price 1,860 rupees, sir.
Right.
I'm holding from last 3 years, sir.
Okay.
Should I exit and where should I park my money?
Okay.
Should I continue to hold this? Every time it is a disappointing result, sir. And there is no much price momentum. And I want to shift to, I want to sell and shift to one company. Whether it is good or bad, please tell me, sir. Kirloskar Pneumatic.
Okay, Kirloskar Pneumatics is the company that you have identified. Why do you like Kirloskar Pneumatics?
Sir, Kirloskar Group was settling its queries and it is showing technically somewhat good strength and results are somewhat better. It is sustaining about 1300. So 1300 above technically it's showing good strength. So in 3 to 6 months, would I able to get a price movement up to 1700, 800? So I want to shift. So there is a good momentum compared to Deepak Nitrite.
Yes. Okay. So you got a well-researched question, Kush. The question is, does the strategy make sense? Book out of Deepak Nitrite. He's not booking a loss. He's booking a small profit. Is there potential to hit 1700 on a stock that has gained as much as, actually it's not gained. It's gained as much as 29% over the last 3 months. So it's done reasonably well for itself.
So it's a very good trade, Alex, that he's looking at. Deepak Nitrite has been consolidating with a negative bias, trying to find support, but hasn't really been able to. So an exit out of Deepak Nitrite is understandable. Kirloskar Pneumatic by a very interesting one, and it's purely a coincidence that just this morning on our advisory we've initiated a call on Kirloskar Pneumatic with very short-term targets of 1370 and 1410 with a stop loss around the 1290 mark. So yes, from a technical standpoint, also Kirloskar Pneumatic is looking very interesting. The moves on this one for the recent past have been excellent. 200-day moving average cross. I won't be surprised to see that, like the other Kirloskar group companies have done, this one also builds on the recent momentum and heads much higher. But at least for targets of 1410 and above, Kirloskar Pneumatic does look like a good buy at the current level.
Okay, so that's with regards to where Kirloskar, of course, the question was on Deepak Nitrite, but Kush prefers Kirloskar is the view coming in with respect to where charts are concerned. Our next caller, Ella, is calling in from Pune. A very good morning to you. How can we help you?
Morning to you too. And I wanted to know, I have bought ABB shares, which I have bought some 20 years back.
Okay.
And if I mistake not, it was at the price of say 1,000 rupees per share.
Okay.
And I have 2,000 ABB shares.
Okay.
And plus they gave me, what should I say, a bonus share of Hitachi.
Okay.
So I got 400 Hitachi also.
Understood.
So now I am sitting on 400 Hitachi and 2,000 ABB, and it's a quite substantial profit at this time. Should I book the profit or should I keep them on?
Right. So first of all,
congratulations. Encashing this.
Okay, understood, Era. And congratulations, because you're sitting on a significant profit of 76 lakhs rupees right now. So that's quite significant.
But I have a question for you, Ella. Do you need the funds right now?
Yeah.
No, I don't need the funds, but I should not, because what I saw is in September 2004, I lost 1 crore in ABB.
Wow, yeah.
1 instant.
Yeah.
Yeah.
And that's tough to take.
I was just wondering, what should I be doing with these shares,
So let me ask you.
Because there are 2,000 ABB and 400 Hitachi.
Yes.
And I have not spent anything much on them because I have bought them 20 years back.
No, that's a fair question. So let me ask you this. As a percentage of your overall equity portfolio, is this a very sizable chunk? Is this more than half, for example?
Yes, it would be.
Okay, so there is concentration, right? So therefore, from that perspective, it might be a better idea for you to have a diversification in your stock portfolio. And let me ask Prashant to suggest some options for you. Prashant, she's holding these two stocks. As she said, her capital cost is not very much. Notionally, she's lost money. It's painful, of course, but she can still rectify that. Where should she put the money right now?
I think there should be like a similar business like Siemens that can be a better option for her to diversify. But again, obviously, yes, one should try to book profits and then diversify themselves, and not having a lot of high concentration on the portfolio, where she has experienced recently with respect to the fall in the price of ABB has made her a loss of 1 crore. So I think Siemens can be a better alternative if she books profit at current levels.
All right. We have our next question from Abhishek, who's writing in from Pondicherry. He's bought Ola 500 shares at 49.8 for a piece. Wants to know whether he can continue to hold or sell. Prashant, I'll again come to you on this one. What's your outlook like where Ola Electric is concerned?
See, I am very much bullish on the sector, but again, Ola has a lot of hurdles for the near term at least. So now I think with respect to all the issues which are rising with respect to the earth magnet and all, I think that will create a lot of pressure in the two-wheeler segment, where Ola as well as Ather will have a lot of supply chain issues. So short-term issues will create a lot of volatility, but again, a stock with near to 40-45 can be a good range to have accumulate for long-term. I think long-term there is a good story, at least for a target of 75 to 80.
Yeah, all right. So that's the view on Ola Electric. Headwinds right now being faced. But that brings us to the end of this edition of Ask Profit. Gentlemen, thanks so much for joining in. Prashant as well as Kush, always a pleasure having you. And look forward to the next chat, Prashant. All right, like I said, that's the end of this particular edition of Ask Profit. We've covered quite a bit of ground, and hopefully the stocks that we've discussed today have benefited you. From Mahima and myself and the team that put this show together, thank you so much for watching, and do stay tuned. Up next is KYC.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. You're watching KYC. Now it's a year which will have some of the infra companies in focus, and I'll tell you why. Believe that last year was a little bit difficult with regard to execution on infra as well as new projects coming through because of elections, monsoons, lots of factors, right? And we saw a lot of that play out through FY25. FY26 therefore starts on a note where you have a slightly lower base that you're starting from. There is more traction and wind, and there is also a purpose with which the government is working to ensure that infrastructure companies, and there is a push in the economy through infrastructure again, which has been the case over the 3 years prior to that. So that's why I've picked an infra company, and we've done this company on KYC earlier this year as well. But the numbers that have come through since then have been a little bit iffy, and that's why we've taken it again on KYC. So let's talk about the company first, NCC Limited. Why and what I want to know. First off, I want to also understand that cash flow, which is currently blocked within the working capital requirements of the company, how quickly can it be realized? So the current cash flow is blocked in working capital to a large extent in FY25 versus FY24. Is there a chunky amount which is expected immediately is really what I'm going to try to target first when I'm quizzing management. The second thing is what's the plan with regard to utilizing the excess cash that they have. They have around 1100 crore of cash. Now I understand that there's some amount of debt as well which has gone up. So just understanding the rationale of cash versus debt and what therefore the interplay between those two is going to be, and what's the rationale of keeping both of those on the balance sheet. The third one is what vertical has the best margins. I'm going to try to understand that, because that will also determine, as execution starts to play out, how margins will play out. The guidance is around a 9 to 9.5% margin in FY26, but is there an upside risk or bias to that, is what I'd like to understand. The fourth piece is how competition is shaping up. It's a highly competitive environment where infra is concerned. You have just about a sub double digit margin picture, and therefore if competition heats up, you could well see that eating into margins, which could be a concern. And therefore, what's the outlook with regard to both growth as well as margins? So we'll tie all of this in together, but first off, let's understand NCC Limited. And again, why is this company so special is because Rakesh Jhunjhunwala owns a sub 11% stake in the company, and since a while now, so it's not new, and that makes it even more intriguing and interesting, of course, for all of the viewers. Let's quickly tune in and understand what is it that NCC does. It was incorporated in 1978. It's a core infrastructure company now, but it started off as a construction company. Now it does both construction as well as infra. I'll break up the type of business it does, but currently that's how it's placed. It currently undertakes turnkey EPC contracts. I'll break this one up because sometimes in all of the pace of running markets, we tend to forget what exactly is EPC. EPC is engineering, procurement and construction in the most simplest of terms. It's generally used for large complex infrastructure projects where the contractor is responsible for all aspects of the project: design, procuring materials as well as construction, end to end, right? And that's what EPC is all about. It's not a standalone contract for a small construction. It's a larger construction, something like a road from here, from Bombay to Nashik. Now it would cover all tunneling work, all the beautification of the road as well. Everything will be covered as part of that project. It's end to end, and that's what makes an EPC project special. Let's look at the journey of NCC Limited in particular, now that you understood the business that it does. First, it was incorporated in 1978. I did speak about that. In 1990, it turned a public company. It listed on the BSE in 1992. So it has a very, very large history on the index as well as a traded company. It has a turnover of around 100 crore in 1995, turned into 1000 crore in 2002. Thereafter, journey continued, 5000 crore turnover by 2011, and you'll see how the ramp up is happening. 95 to 2002 was fairly quick, 10x in terms of revenue. Thereafter, things slowed down a little bit, and revenue thereafter again doubled up by 2019 at 12,000 crore. Order book touched around 40,000 crore in 2022. When you're looking at the order book currently, it sits at around 72,000 crore, and the turnover currently is around 22,000 odd crore. The 20,000 crore mark got breached in 2024. So that's largely the shape of it. What kind of projects does it do? Now this is the other piece which becomes important. First is building projects. So building related, it does hospitals, stadiums, educational institutions, residential and commercial property. It does all of that. Then it has water and environment, where it does all of these. Supply lines, including intake works, distribution network, electromechanical work, all of the like, including treatment plants. It literally sets up the entire treatment plant as well. So it has a fairly large range in which it does some work in this area. Now let's look at transport. And this year first we'll focus in on road transport primarily. Expressways, highway realignments, bypass roads, carriageway widening and strengthening, road sections, rehabilitation, upgradation, bridges and flyovers. All of that covered. I did speak about the fact that not only does it have a niche for standalone projects, but larger EPC contracts allow you a lot of these to be coupled together to get executed for that EPC contract to play out. Let's talk about the other piece, which is railways. Earthworks, track linking, railway bridges, overhead electrification, all of that. You're looking at irrigation as well that it covers, of course, along with waterworks. That would be the big one. And it covers all of this, including dams and reservoirs and hydropower. So that's quite large. It does mining as well and helps mine developers. That part of the segment also covered. And then you have electricals, where a large part of it is also about electrification distribution projects in various utilities. It also helps with T&D projects, which is transmission and distribution projects within that power space, which is currently quite big and presents a large opportunity as well. I want to therefore break the order book up. I will talk about the absolute numbers, but this will give you a larger understanding of how the order book is placed, right? Currently 31% is in building projects, 25% in transportation, 23% in electrical T&D. Then you have irrigation, water and mining, which are relatively smaller in size, but 20% combined. So you have 80% of these three, which contributes 80% of the order book mix, and then you have the other three which contribute just about 20%. Therefore, I'd want to understand how that margin number really shapes up for each of those. But yes, so that's how it is. Now let's look at the rating parameters and let's look at what we will be dissecting. First, I'll be looking at the income statement, the balance sheet, the cash flow, the return ratios, shareholding, street cred, valuations and street coverage. Valuations is not something we had done last time around on the KYC episode. So that's the new element that we've tried to bring in. And of course, the updated numbers for FY25. Joining me is Anushi Vakharia, of course, who tracks infrastructure very, very closely and who has helped set this entire discussion up. So thank you, Anushi, for that. Anushi, you want to start with the income statement?
Absolutely. As we do, we'll start off with the income statement numbers. You know, we've talked about the kind of order book that the company has, and it's reflecting in the kind of revenue growth, in fact, in the 3-year revenue growth trajectory that the company has presented. Now, if we see FY24, FY25, compare that and in consolidation take, it's coming up to about 26% of our revenue CAGR. In fact, if you look at the EBITDA also, it's seeing about a 23% of our CAGR growth in terms of how the EBITDA has shaped up. Margins too have majorly remained in the 8 to 9% of range in the last 3-4 year period that we are looking at. This year also the company aims to maintain this in the 9 to 9.5% of range. Net profit about 19% of growth. So overall a consistent sort of a growth story that we are building in for NCC Limited. It's the order book which is an interesting one that we are seeing. In fact, in FY25, they clocked in an order book of 71,568 crore. This is in comparison with the 57,000 crore it had over the last fiscal. So it's a strong set of growth that we've seen compared to the last year. Of course, in Q4, there were large size of orders as well, which were expected to be realized in FY26, which we saw coming in FY25 as well. So overall trends in terms of how the order book, how the order inflows, and subsequently how the revenue has shaped up has remained consistent so far. But it's the trajectory in terms of where the FY26 is concerned, where they're guiding for a 10% of a revenue growth is something that we should be asking the management on why are we looking at this 10% of a revenue growth in comparison with the 26% of a growth that we'd seen in the last 3 years, right, Harsh?
Yeah, absolutely. So what you want to see, Anushi, is whether that slight drag with regard to execution in the last year or so, if I understand correctly, holds up in FY26, or whether we see a sharp increase or a leveling off in FY26, or when does that happen? Because we've not seen that at least over the last 12 to 18 months. Yeah. You want that to kick through. Am I right?
Right.
Yeah, absolutely. So that's how the income statement shapes up. But otherwise, it's looking like a very healthy income statement. Let's look at the balance sheet now, and that's where you'll start to see some concerns, and you might want to tie it up with the way Anushi takes cash flow after this as well. Look at the borrowing number that's gone up. Now, while your absolute borrowing number would have gone up, your net borrowing number has not gone up substantially or doesn't present a big challenge, which is why what you are seeing is not a major concern with regard to where the balance sheet is concerned, but you're seeing a bit of an inch up with regard to the borrowing number. So that absolute number has gone up. Now, I would nonetheless feel that it's a healthy balance sheet. So there's no concern with regard to the balance sheet, but you want to take care of that borrowing number which has gone up. You want to also see how that borrowing number shapes up. Right, Anushi?
Right. In fact, even in cash flows, if you look at cash flow from operations FY23 and 24, we are looking at a 1,000 crore plus of a figure, which has come down to 742 crore this time. Taking that in account with the EBITDA number, which we are looking at, the ratio is now about 39%. Now, what has led to this kind of a number that we are seeing? Firstly, increase in receivables. Now, this is something that we need to address, not just for NCC Limited, for other infra companies also. How are the receivables going to shape up, and if there would be an impact in terms of where the working capital is that we should be seeing? Overall net cash flows, if we see, that has seen an uptick, however, from 16 crores in FY23 to FY25, this number standing at 436 crores.
Now the other piece, Anushi, is with regard to the return ratios, right? They've not inched up like the way I would have wanted it to. We've seen ROC go up to 15% odd, but you would want, and ROEs are in fact still sub 12-13%. I mean, while the growth seems healthy on paper, as you can see, but you would want better return ratios from any Indian company, right, that you're investing in, and therefore that's something that you'll want to wait and watch out for. Also, some of the capital inefficient ways of working, which is large working capital requirements or the increased working capital requirements, which Anushi just pointed out as part of the cash flow, are also the other challenge, which kind of creates a drag with regard to the ROC number. So again, that's the other thing you want to keep your eye out on. Also, the large cash balance that they've kept on their balance sheet, what do they do with it? Because that will also impact your ROE numbers. So those are a couple of factors that I had in mind when I gave this one a neutral, that I'd want better numbers on the return ratios typically if I were looking at NCC as an investment, because you want better return ratios, of course, than a sub 15% in the Indian market. But that's on return ratios. Shareholding, Anushi?
So in terms of where the shareholding is concerned, promoters, there's nothing to complain about here. It has remained, in the last 3 years, it's remained in that 22% of range that we are looking at. Overall, we have given it a neutral rating because of the FII change that has happened over the last 3 fiscals. So if you see 20% of this mix, which was there, has now come down to 14%. However, DIS have picked up stake in the company, which stands at 16%. Public continues to hold about 45 to 48% of a chunk in this company is what we are seeing.
Okay, street cred, let's quickly go to that one. 1 month stock is up 6%, but you look at the 6-month chart, not looking good, down 25%. In fact, the stock fell 33% from its highs at the start of this year, and thereafter has made a decent recovery as well of nearly 30%. So you've seen this kind of flip-flop in terms of the stock price, but nonetheless, there has been some pressure in the near term is how we would assess it. But over the longer term, when I'm looking at the 5-year chart, the stock has done phenomenally well. It's been a 7.5 bagger. So no complaints there. We'll give this one a neutral therefore.
Okay. In terms of where the valuations are headed, in the current PE, if you are looking at that, is 70 times. We took the 1-year forward PEs also, that is around 12 times is what we are seeing. Comparing that to the 5-year average PE, 14 times, nothing majorly out of line that we are seeing, in line sort of a number in terms of where it was before. While if we compare it with the peers, now that is at 12 times of stress, so comparatively higher in terms of where the industry average is concerned. So that's what we are looking for valuations.
Okay, so that's on the valuation count. Mind you, this one makes a profit around 800 odd crores. So I'd want to know where growth goes, where profitability goes, and therefore how the forward price to earnings looks, because price to earnings as such is not looking too expensive. Let's quickly look at also what analysts on the street are saying. Most analysts build in a buy call with a 16% upside, and therefore we're giving this a clear thumbs up, not really discussing that in too much detail. But let's quickly look at the final ratings. How does it look? What rating does an NCC get? Let's quickly have a look. Income statement, thumbs up. When you're looking at balance sheet, also thumbs up. Cash flow is a neutral. Return ratios is a neutral. Look at shareholding is a neutral. Street cred neutral. Valuation neutral. Street coverage thumbs up. So while it gets just about a 5.5 out of 8, what I'd look at as a possible positive is the fact that it's got no thumbs down. So that's the other piece. Let's quickly go across though. We have the management waiting for us. We have Neeraj Sharma, who's the head strategy of NCC Limited, joining us. Sir, talk to us about how FY20. Firstly, a very good morning to you. This is Harsh here. So I want to first start off by asking you what's the outlook like with regard to capital which is blocked in working capital, because that's the key concern. Your profitability has gone up for sure, so no concerns there. Growth will continue to be steady. It seems order book is very healthy. The only concern is with regard to working capital. What happens there?
Very good morning, Harsh.
Good morning.
At the very outset, I take this opportunity to congratulate you on a very good coverage.
Thank you so much.
You have been able to highlight all the important parameters and the performance of the company, not only last year, but in the last 5 years. So I really appreciate that very much.
No, sir. Thank you so much for that.
Coming about the working capital, primarily it is a reflection on two important factors. Number one, this is generally the situation prevailing, across the companies. This is something that has to do with the sector as a whole. I mean, primarily the people who operate in Indian infrastructure market. The second thing that I wish to share with you is the fact that it is also a reflection of the fact, of the unusual nature of FY25, this year, the last year, that year has been unusual in more ways than one. I take this opportunity to list few of them. The last year, FY25, has seen central government elections, The impact has been not only for about 3 months, what we anticipated earlier, but, the impact has been primarily, let's say less than, little 2 quarters. Then followed by, we have had state government elections in few key states like, your state Maharashtra. So whenever you have, these big events, generally they will have some bearing, some reflection on the working capital blockage. And this is not really a statement of NCC only, primarily as I shared with you. This is the situation prevailing, but we are hopeful. We are hopeful that, situation should improve now. I also take this opportunity to share with you the fact that we have received some of the payments in the month of April.
Mr. Sharma, apologies for interrupting, sir. So therefore, will the unwind happen this year? You're saying that there were certain election-related headwinds last year with regard to recovery. Will it happen this year, therefore? And how quickly?
Hopefully, see. Harsh, you and I cannot really, take a call on this. This sector, most of the projects in the infra space is something that is announced and, implemented by the government agencies. So at the end of the day, we are hopeful. Let me first say that we are hopeful. But, it is very difficult to say with, 100% certainty that this is something that things are expected to pan out. We are hopeful. This would be a reflection on the, payment release pattern of our several clients. But as we speak, we are hopeful.
This is Anushi joining in. Now, if you're taking the long term in picture, we've seen about a 26% of our revenue CAGR for the company. This is in the last 3 years that we are looking at. In fact, in FY25, you had originally guided for 15% of a growth, which was narrowed down to 5%, which you outperformed with a 6.5% of a growth. Going forward in FY26, wherein you are seeing about a 10% of a growth, do you see that this is on the lower side comparatively? If yes, what's the reason that we are guiding for a 10% of a growth and not a higher number?
Very good question, Manushi. Good morning.
Good morning.
Firstly, the base itself is, little bit on the higher side. If you just increase any number mathematically, discounting for a moment whether this is, PAT or revenue, by, as you said, upwards of 25% CAGR, the base itself becomes, little bit on the higher side. The second thing that I wish to share with you is the fact that you are right that we are sitting at a very healthy order book. upwards of 71,000 crore. But bulk of these projects, let us say about 60% of the projects that we have been able to bag in FY25 has really come in the last quarter, and not only in the last quarter, in the last month of the last quarter, that is in the month of March, we have been able to bag, about 20,000 odd crore projects. The point that I wish to share with you is, there is a gestation period when the projects are awarded. It is not that these projects have to, cross some very important milestones, For example, we will have to, sign the contract. We need to mobilize. We need to make sure that all the ROWs, what we call right of ways, all the permissions are in place. Then we start the execution. And even if we start the execution, in most of the contracts, you will have some kind of, milestone to recognize, the revenue and margin. So that is the reason the guidance that we have shared with you appears to be a little muted. But if you really dig deep, you understand on what basis, we have decided to share this guidance with you.
Right.
I hope that answers your question.
Yes, absolutely. So, Mr. Sharma, just a follow-up on that, considering, that we've seen a lot of these orders coming in the last quarter itself. These are the high-ticket orders that we are seeing. I just want to understand, what's the kind of inflows that we'll be expecting this year, and from which segments in particularly you're seeing higher orders coming in? If you can give us more clarity on the execution side of the order book and the inflow side.
For the FY26, on the inflows, we have, I am pleased to share a guidance with you, which is already there on your screen, 22,000 to 25,000 crore. So primarily, this should be bagged in 3-4 important business divisions that we have, namely buildings, transportation, electrical, T&D, and water. Primarily from these 4 divisions.
Okay, so talk to us about the capex plan for FY26. I understand that smart metering will take up some amount of capex. I also understand that you're buying a TBM, which is a tunnel boring machine, which is also going to take up some part of the capex. How do you fund this? Debt has gone up. How does the debt shape up therefore?
For FY26, the capex that we have planned is, about 700 to 750 crore. And you are rightly, we have bagged one project, GMLR. It's a tunneling project for which we need to purchase one TBM machine. So for this machine, we have already placed the order, and the machine is expected to come very soon in next couple of months. And this TBM machine would be thoroughly expensed, during the duration or execution of this project. So the point that I'm trying to make is, this debt would not be a conventional debt. The capex that would be incurred on purchasing this TBM machine would be totally expensed during the execution of this, GMLR project.
Okay, so considering the overall debt picture in mind, in the con call, it was mentioned that there would be about a 200 to 300 crore of an increase every year. Just want to get more clarity on the net debt positioning that the company would see. Is the debt to equity ratio expected to see a pickup?
For the FY25, this ratio is 0.2. And, as you rightly highlighted, the company has been growing at a fierce pace, upwards of 25% CAGR in last 3 years, So to fuel this kind of, growth, definitely you need working capital. And in some projects where the payments are not coming on time from our clients, we prefer to continue to, commit some working capital for those projects. So that is also a factor that is at play. But I also take this opportunity to pinpoint that most of the debt that we have is primarily working capital, right? Working capital kind of debt.
Point taken, sir. Mr. Sharma, I want to ask you, give us, okay, so FY26 may not be a year which enthuses you in a significant fashion, at least in terms of commentary. Give us the thought process in the next 3 years, because that's when you'll execute your full 70,000 crore odd of order book. Would be my guess. What is the kind of margin number on that full order book that you look to clock? And therefore, what is the profitability maybe over the next 2 to 3 years? What is the growth looking like in terms of profitability?
The first part of your question is about execution of, more than 71,000 crore order book that we have. You are absolutely right, By and large, we should be able to execute substantial chunk of, this order book in next 3 years. It is very difficult, really, Harsh, to talk about, the revenue and the profitability for the next 3 years. The way we work in our industry, in our company, generally we talk about, 1 year, and I have already shared, the guidance for you for the FY26. What happens, Harsh, is, we are executing a lot of projects, about 150, 160 odd projects. Each of these projects that we have will have some kind of, milestones, some kind of, execution guidelines, the payment guidelines. So it's not always a choice, For example, let me extrapolate that a bit. Let us say that we have a project that, we want to complete the project in 1 year's time, but the client may not be willing, The permissions may not be placed. The client may not have all the budgets, to complete project ahead of the schedule.
Sure.
All the clients, they have, yearly kind of allocation for different schemes, different projects. So at the end of the day, whenever possible, given a choice, everything, being in place, we would prefer really to complete all these projects ahead of the schedule.
Point taken.
It's not always our call. It's a partnership, right?
Point taken, sir. Point taken. Got it, sir. Thank you so much for joining us this morning and giving us that perspective. But that's unfortunately all the time we have. So that's all. In fact, thank you so much, viewers, as well, for joining us and for going through this one. From Anushi, myself, and everyone who puts the show together, thanks so much for watching. More action on the other side.
That's huge. That is a biggie. It's on hit.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. The markets move fast.
benchmarks continue to consolidate with the Nifty and Sensex trading in the green, supported by positive momentum in the small caps, which are outperforming amongst sectoral indices, while the Nifty Realty and Pharma are leading the gains, maintaining their position as the top performers in the market. The Newgen Software slides slightly from the top of 8%, up almost 2% now after bagging an order of $2.5 million for the next 5 years. Deccan Gold rises after the Jawanagiri Gold project receives consent to operate in Andhra Pradesh. Top boss tells NDTV Profit that the company aims to sell over 400 kg of gold in FY27. Tech, auto and defense industries face mounting pressure as Beijing halts supply of key metals critical for magnets and semiconductors, and that's an NDTV Profit exclusive. Hello and welcome to Markets at 12. I am your host Puneet Zaveri. Let's first take a look at how the markets are doing before we move on to a very special conversation on capital goods. Firstly, we've seen the benchmarks trade in a very narrow range over the last few days, but today there's a breakout of over 100 points. We expected to maintain that going forward. Currently at the day's high of about 24,786, we're just shy of by 10 points from the day's high. So it's been a very good day actually. Started off, in a very, very narrow range where, we were just up about 20 to 30 points. In the middle, we did see some dip, but seeing a positive recovery again as visible on your screen. Let's look at the contributors now for the Nifty. We've seen both banking and IT being one of the key ones to watch out for. Again, ICICI Bank as well as HDFC Bank contributing very positively in the gains. We've also seen something like an Eternal, which is also as Zomato, doing very well in trade today with Reliance being one of the key winners and the major contributors on the Nifty. On the loser side, we've hardly seen too much pressure, honestly. Just about a couple of points on a bunch of stocks in the red, but largely in the green and how. Let's look at the sectoral indices now, because we've seen the defense as well, one of the key ones which have been doing well today. Realty has been doing well. The Nifty Pharma and the healthcare are also doing very well today. While we've seen IT being largely positive, up almost a percentage now on that. We've only seen one index which is largely in the red, and that's the Nifty PSU Bank Index, and that actually had a very sharp up move at the start of the week. Last couple of days, we've seen some consolidation. Let's quickly look at mid cap, small caps as well, because that has been outperforming the larger benchmarks today, largely in line, but showing a very positive momentum of 0.7% on the mid cap. Small cap as well, up almost 0.85%. And finally, the BSE 500 as well, because again, we've seen a day where there's been a lot of outperformers on the individual stocks, and for something like a PNC, Infratech is the very interesting one. Yesterday, the company held its conference call. The company has actually sold 10 projects, received a lot of cash as well, almost 1,800 crores, expected to receive another 600 crores. So definitely positive on Sheela Foam and JM Financial as well, doing very well in trade. Some pressure seen in some stocks like Deepak Fertilizers and Sterling & Wilson, but largely doing very positive. Let's also look at one stock, which is Spark, which is the Sun Pharma, research arm essentially. The stock was, almost down 20% yesterday on its psoriasis drug trial failure. We have some exclusive comments coming from the management themselves, talking about what went wrong and how the road ahead looks like. My colleague Hira joins in with the exclusive takeaways. Hira.
Thank you, Puneet. So clearly, Spark management has indicated to NDTV Profit that firstly, the drug that was under development has unmet medical needs, and they are now trying to plug the gaps from here on. To understand more on this as to what had happened is, overall, the experimental drug had failed trials. It did not actually go ahead and meet its goal, and this was being tested for 2 mid-stage clinical trials and was conducted to treat psoriasis and eczema. Now let's understand as to why Spark was the one which was under pressure, because this was something that was going to be in-licensed to Sun Pharma but developed by a Spark. Overall, they were losing in almost a $1 billion opportunity, and that was the question that was being raised. Now, from here on, what they've come out and said is that they've provided for all the costs and impairments that have been related to this development. So they will not see any future impairment that will take place from here on in terms of the coming financials. With regards to where the cash flow from the in-licensing of the current asset is concerned, the loss that they will see, that will be offset in terms of the future opportunities that are in the pipeline as well. In fact, multiple opportunities are in clinical assets and preclinical programs is what the Spark management has indicated, and they're seeing a significant cash flow opportunity to come in as well. In addition to this, in terms of the pipeline that they are talking about, they are not anticipating any further capex for the development on the assets which are under development. Very quickly, they have SCD 153, which is NCE for treatment of alopecia. That has completed phase 1A study in healthy volunteers. It's received approval from DGCI to start phase 1B study in alopecia areata parents. Moving on, if you talk about SCO 150, which is the oncology asset that Spark has, they have a binding LOI for licensing SCO 155, which is executed with Tiller Therapeutics. With regards to PDP 716, which is the Brimodine Onc daily for treatment of glaucoma, that has been licensed to Viziox Pharma, and the plan for resubmission of NDA with US FDA is in FY27. And very lastly, with regards to SDN 037, that has been again licensed to Viziox Pharma, and the plan for resubmission of NDA with US FDA is after the resubmission of PDP 716. So that's the pipeline that Spark is sitting on, and what they are saying is, one, all the benefits and opportunities that they see out of these will clearly offset the kind of loss that they were seeing with regards to the failure that has happened with SCD 044 so far.
Well, thank you for that, Hira, getting us that exclusive on Spark. We've seen the stock up at least almost 4% in trade today, very close to its day's highs as well. But that will be one to watch out for. The other one aspect is that multinational companies might have to brace for tough times with the looming macro uncertainties making them cautious on the way forward. What does that mean for capital good companies? My colleague Anushi joins in with a detailed analysis on them. Anushi.
Well, MNC cap goods, if we are saying that most of the management commentaries have stayed cautious on the outlook for 2026. Now let's start off with what has happened in the first quarter of this year. If you just take Jan to March period for ABB, which was their first quarter, Siemens, they did miss estimates on the number front, which was there. Even if you look at in terms of the revenue growth, that had slowed down. While Cummins also, they had reported a dip in their margins and profit, but they managed to beat expectations on better operating leverage and gross profits. While if we say talk about the order book, which is the most important parametric, most of these MNCs have refrained from disclosing order book growth outlook, considering tariff uncertainties in place, the geopolitical developments, along with what's happening with the private capex side of the business, which brings overall an cautious outlook for the FY26 order inflows for three of these companies which are there. Now, let's take the numbers into account and see how that is shaped up over this quarter. 2.6% of a growth here, which was a miss. Margins have remained more or less flat. Siemens saw 2.5% of growth, like ABB and Cummins, about 6.1% of growth. We did see a dip in terms of where the profitability is for Siemens and Cummins India, but Cummins India did managed to beat where the expectations were concerned on this. But what is the kind of highlights that we are seeing in terms of order inflows? If we just take ABB in context and compare it with the previous 2 years, what we are seeing from a 36% of a growth eventually coming down to 4%. Of course, what ABB management did cite that this is a time period correction that we are seeing after a strong bull run of 5 years. So that is something that we should be keeping an eye out for on what's the kind of order inflows that we'll project forward. Even in terms of order backlog growth that is there, 37% was the kind of growth that we'd seen earlier, which is narrowed down to 11% this quarter. The management does expect that these numbers should remain in this kind of a range. So a cautious outlook is there overall for these companies that are there. Order backlog, however, has stayed more or less in the 0.7 to 0.8x of range. So it's the execution that we should be focusing on. Now, considering some of the key aspects over here in terms of what has happened, process automation, if we see, those inflows have slowed down for the 3 straight quarters. Now, the company has said that delayed decision making for majority of these large ticket orders has impacted the kind of inflow growth that was supposed to come in for these businesses. So that's on ABB India's what's happening over there. But let's also talk about the commentaries which they've come out with. ABB India, we've already talked about how management is cautious in terms of the order inflows coming in, impacted by the decision making for some of these companies that are out there. What Siemens is saying that in terms of the digital industries, that has been a laggard in terms of where the performance is, and they're continuing to see inventory normalization here. Even if we look at the low voltage motors division, that has faced weaker demand in terms of performance, and private sector spending has also remained weak. Coming to Cummins India now, finally, they have remained cautiously optimistic. They've retained the guidance of a double-digit growth for FY26. But if you look at the parent company, the earlier guidance that they had given at the end of the last financial year, they have withdrew that guidance, citing uncertain environment, and have thus said that they will only give an outlook once the macro situation kind of stabilizes. So that is something that we should continue to remain cautious of. But let's see how the valuations have overall shaped up for these businesses out there. So if we just take that in consideration, what was a 3-year average PE multiple of 100 times? Now that is narrowed down to 56 times. But you also have to take this in context with kind of the PAT CAGR growth which was there earlier. 63% was the kind of PAT CAGR which we saw. In fact, even if you look at Siemens and Cummins, they had 30% of a PAT CAGR growth, which is now in the negative is what we are seeing for Siemens India. And for ABB India, we are seeing this number coming down to 11%. So is de-rating in cards for some of these that we would be asking the analysts for majority of these players, but which brings us to our final plate in what brokerage are expecting for these counters that are there. For ABB India, they're seeing about a 2.2% of an upside. This is despite the large extensive coverage that the company has. Similarly, for Siemens India that we are looking at, we are seeing a 1.4% of an upside. The company has about 14 buy calls and 6 to 5 hold and sell calls. And for Cummins India, if you are seeing a 6% of an upside over here with 16 buys and around 12 hold and sell is what we are looking at. So overall, a cautious kind of approach remains for these companies. What's the kind of EPS growth, what's the kind of revenue growth for the year FY26 is something that we should be watching out for.
Well, thank you for that, Anushi, covering in very detail the key aspects about these 3 capital good companies. But let's take this discussion forward and introduce Mr. Amit Anwani, who is the research analyst at Prabhudas Lilladher Capital. Mr. Anwani, a very good afternoon to you, and thanks so much for joining in to NDTV Profit. Just picking it up from where Anushi left off, because we've specifically seen the Q4 commentary being one of the most important ones for capital goods companies in this particular quarter. How would you assess the commentary in Q4 and what was said for them in FY26? What's your assessment on that? Let's start with that before we get into the more granular details as well.
Right. Thanks for having me. I think I heard it. I think there was a detailed explanation. But see, point here is that if we talk about the MNC automation companies, like I would, I think, bifurcate with respect to the kind of momentum each pack is getting. So, for example, ABB Siemens, largely beneficiary also of pent-up demand post-COVID. There was massive operating leverage, and there was much higher price realization, better price realization in few of their segments. So FY22, 23, 24 saw a massive operating profit increase. Margins for ABB went up from 14% to almost 19-20% during this duration, and that is reflective in PAT. So Siemens also, obviously there was improvement post-COVID, pent-up demand, and then a few of their segments like the smart infra did well. So I think this is one aspect. Now, so there were a few companies who were a mix of driving the public-private capex, and few companies were largely dependent on certain mega trends. For example, T&D space where T&D and Hitachi Energies, and now Siemens Energy, which is demerged from Siemens parent, is operating, where the outlook is still very strong. So I think with respect to ABB, Siemens, Cummins, obviously they have been highlighting cautious stance, and definitely that is factoring in. And all these numbers we're talking about also on a much higher base of margin and the kind of revenue CAGR which was there past 3 years. So I think definitely things will normalize in FY26, and that is what I think the street is also factoring in. But having said that, I think with respect to product mix, a lot of changes have happened in particular companies. For example, ABB, where I don't see major margin erosion, but definitely this will be the year of normalization, considering the very high base for key MNC companies in FY25. Yeah.
This is Anushri joining in. Pleasure speaking to you once again. My question to you is about, you spoke about normalization happening on a high base that we've looked at. So considering that, what is the kind of growth outlook that you're building in for these three companies? If you have any favored picks among the three that we were discussing, also your stance on the overall outlook of these compared to what has happened 3 years ago. If you can just talk more about these aspects.
Right. So if you see, as I said, from the current high basis, for example, ABB, we are building in 12% CAGR broadly on PET. For, I think, Siemens, we are building in the adjusted Siemens numbers. We are building in almost 16% on PET, and that too factoring in that there would be more locomotive deliveries as a part of the large order which they got in railways 2 years back. And Cummins, we are building in kind of 14% ballpark CAGR. So if you see, my favored currently is Cummins India, where the CPCB4 transition is already on the verge of completion, and that was something which was hindering the numbers. They were not able to pass on the prices completely. And very strong growth in industrials business, which is more than 20-25% of their business. I think that continues. Despite some cautious stance on exports, whereas the US especially will be the cautious area because of the tariff, but they have done very good in Latin America. And I think basis the commentary and the kind of utilization which they're running at about 65-70% utilization, no capex requirement. I think even if we consider some adjustment to gross margin, I believe they will still be continued to maintain maybe 19% margin for next few quarters. So I think Cummins is something which is sustainable. Now coming to ABB Siemens, I think Siemens has a challenges. So we have taken some margin improvement in our number, maybe 150 bips margin improvement. They did about 12.6, 12.7%. And that we are considering that there would be some improvement in digital industries, some improvement in LV Motors business, which is not happening. So I think despite factoring in improvement, Siemens already trades at about 53x 2-year forward ballpark. So I think they are already, and there's some uncertainty which they have highlighted with respect to the private capex. So I think because of this, the couple of quarters will definitely be monitorable with respect to Siemens performance. So that is something where I am concerned. With respect to ABB, we are long-term positive. If you see ABB, the DNA has changed after the demerger 5-6 years back of ABB Power Grids business. Their product mix has evolved with respect to motors, with respect to all other products in electrification business. The electrification business is penetrating into tier 4-5 cities, and we have seen more than 20% top line growth and margins improving for electrification. And electrification contributes a lot. I think almost more than 40% of the business. So I think ABB with respect to business, maybe this year is something cautious on the high base. But I think considering the kind of T&D spend and distribution-led spend which is happening, and also on the mobility side, the kind of spend which is happening, if we take slightly longer view, I think this should continue. And after this year of normalization, we can see slightly better growth next year. So structurally, I am positive. Current valuations are some bit concerning with respect to ABB. And I think Cummins, I would still prefer because of the kind of growth and multiples they're trading at currently. So I think that is something which is relatively comforting at this point.
So Amit, any other counters that you find comfort in terms of where the valuations are? You said that in ABB valuations continue to remain on more uncomfortable side of the picture. So just want to understand from a valuation standpoint, and even if you take the PAT CAGR in account, which are some of the stocks that you prefer in this space?
See, everything is expensive, honestly, relatively speaking. So obviously there are multiple trends which are happening. As I was highlighting, the T&D related pack where there's a lot of HVDC ordering and all this technology, high power transformer technology companies. We saw massive ordering also coming, whether this Hitachi, GT&D, and now Siemens Energy after the split, when we get the numbers, are also sitting on a very good order book. So see there, I think the growth which is getting factored because of this massive order book which they're getting, they can grow at 25% plus top line, and there could be leverages also. And we have heard about the capacity expansion which Hitachi Energy is doing. They're spending 2,200 crore. GT&D announced 140 crore. So if you see sentimentally and fundamentally, there's a lot of growth. But if we built in 2-year number, I think all the stocks are expensive currently. Then there should be some time correction, and which might happen. For example, GT&D trades at about 58x 2-year forward. After the very impressive numbers, the stock has gone up by 25%. But I believe the numbers will be very strong. Hitachi again sitting on very strong order book. They got 2 HVDC orders. The numbers forward will be very strong. There would be margin improvement and massive PAT growth which can be expected there. But again, we built in the stock is trading at about 75x around. And same is the case for the Siemens Energy. If you see, I think once it gets priced in, again will be similar to 55, 60x. So all these valuations compared to 3 years back when the margins were also keeping low have re-rated massively. But I feel that there should be some time of consolidation on a pricing front, stock pricing front, price to earning front should come. But fundamentally, they are sitting in a sweet spot with respect to especially the power T&D companies with respect to the kind of tendering we are expecting, and they've already received. Yeah.
So Mr. Anwani, you did mention that these 3 stocks, ABB, Hitachi, ABB as well as, something like a Siemens have seen those challenges, and the market is probably seeing that, evaluating it, giving it a time correction. On the other side, where you are actually seeing growth, like Hitachi Energy and Siemens Energy, eventually the market is actually already pricing in that growth currently in the stock price as well. Yeah. So going forward, what should investors actually expect? While, of course, a new position would be difficult to make, but essentially in terms of management commentary as well, because Cummins did surprise us in this particular quarter, which was expected to be in terms of commentary. So for Cummins also specifically in terms of management commentary, I think that if you can have a comment on that, and largely what should investors expect over the next few quarters, largely a medium-term view, what could you feel that it could be a a near-term trigger, something to watch out for that could actually turn the way for these companies?
See, Cummins, if you see, there was no major highlight with respect to cautiousness like Siemens did, and Cummins in fact highlighted that they can grow double-digit still. And the industrial business is keeping very strong. The power gen domestic business, especially the HHP side, and the growth from data centers business is keeping very strong. And also their spares and distribution business continues to grow at 15%. So we are building in, as I said, 13% top line CAGR. Only thing is export, they're cautious. Despite that, Q4 they did very good. They did about 480 crore exports revenue. And we saw that leading to very good margin. They highlighted that the Latin market is doing very good and few other markets are doing very good. Despite US, they're concerned about it. So having said that, I think I found it quite encouraging despite, all other companies are giving cautious outlook. Especially, I think the segments which can benefit Cummins where they're seeing good triggers is I think the real estate commercial space, data center space, where there's a lot of auxiliary power requirement and genset requirement, which is there. So I think domestic market continues to be very strong, and export, once this cautiousness, we have some idea, maybe once the 90-day pause is over, I think that we should get more clarity, but we are not building in too much there also with respect to numbers, but domestic will be very strong. That's why we're positive on Cummins. Siemens, as I said, I'm not expecting too much, and ABB also, I think after Cummins, ABB is something where I'm expecting better numbers, but price is already, things are already priced in. So I would say there's no clear-cut top pick currently there.
Yeah.
But if you see periodically, stocks have given an opportunity. For example, I was discussing GTND, the stock went to 1400 and up, and the same was with ABB also, and Cummins also now. I think from 2800 it started moving after at decent numbers. Yeah.
No, fair point, Mr. Anwani, and thanks so much for joining and actually giving us a whole host of views on the sector as well as what could be something that investors could watch out for. We look forward to our next conversation. But there's one key issue that's been facing the country, and no, the finance minister does not endorse any investment project that can earn you 2 lakh rupees a day. But surely you don't need us to tell you that, right? Well, think again, because the fact is that deepfake scams are on the rise, and we at NDTV Profit have launched a campaign to help you spot these fakes. Let us first tell you what a deepfake video is and how to identify it.
Scamsters have shifted their methods of swindling money from us. They are increasingly moving from traditional phishing to deepfakes. Deepfakes are being leveraged to combine cloned media, synthetic endorsements, and AI-generated deception into a singular scalable threat.
Propagated ads which promote these false cryptocurrencies, and these links are embedded as part of news.
These deepfake scams are using fake videos of national leaders, tech icons, and institutional brands to target unwitting viewers into phishing rackets. So how do you spot a deepfake?
The lip sync, if you look at this video, you can make out there is a lip sync. So the audio narration which is happening versus the lip sync, there is some amount of difference. And you can make out that this video, the content which is being propagated, it is written, the English, the way it is put forward, can give you cues that this is not a genuine link.
Here are some classic red flags. Always be wary of unrealistic returns. Be wary of screenshots that are being used as proof of returns. Lastly, don't give in to urgency tactics. The next time Narayan Murthy asks you to invest your life savings into a get-rich-quick scheme, just know that it's too good to be true. Because the real Murthy would probably ask you to work 80 hours a week before you can even think of getting rich.
Well, that's all the time we have in this edition of Markets at 12. Stay tuned to NDTV Profit for more.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The markets move fast,
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
welcome to Profit Buzzers. This is Hiral Dadia. Let's quickly take a look at how markets are panning at this hour. Interesting day of trade. The gyrations seem to be pretty okay because Nifty 50, we did go to the day's highest levels, but there is some bit of a minor correction that's coming in from there as well, but still gains of around 0.8% in terms of Nifty 50. 24,899, we're just a point away, in fact less than a point away from that 24,900 mark in terms of the day's highest levels, but from there again a downtake that has started. Where we end is going to be interesting to watch out for. Let's quickly look at Bank Nifty and then the sectoral heat map as well to understand what the trends are looking like. Bank Nifty also similar kind of a trend that you're seeing, but underperforming the benchmark indices with gains of around 0.4%. If you talk about the rest of the sectors as well, all of them in the positive. Real estate is the outlier, and it's the rate sensitives probably which are in the limelight today ahead of the policy. Tomorrow, 1.7% up move coming in terms of Nifty. Real estate, pharma also seeing some strong moves, and this is on the back of the partnership that Dr. Reddy has done, and that's the reason why that stock is up in trade. Spark is seeing some bit of a mild recovery as well. Zydus is another stock that is buzzing in trade. Walcott also after the con call is seeing some strong moves as well. So these are a few of the names which are contributing. If you talk about, in terms of the ones which are under pressure on pharma, you just have a Biocon, Ipca Labs, as well as Ajanta Pharma. Let's again just go back to the Nifty 50 heat map so far. No, not the sectoral heat map, the Nifty 50 heat map, because you just have the PSU Bank Index, which is under pressure. But Zomato, 5.5% up move, and that's on the back of the CLSA note that has come up in terms of consumption. But they're clearly giving you a trend as to what could lead to benefits for Zomato as well. Dr. Reddy's, Trent, Power Grid, Shriram Finance, Grasim, a few of the other names which are up in trade. IndusInd Bank trading under pressure, Bajaj Finserv on finance trading under pressure, Tata Consumers, Maruti Asian Paints and Axis Bank are out and about. Let's quickly pull up the broader markets. You have the mid cap and the small cap index, and then we'll look at individual stocks there. At the day's highest levels in terms of mid cap, 158% higher, and the small cap 250 as well will be interesting to watch out for. 0.9% up moves, so strong moves coming in terms of the broader markets, and that's been the trend as well over the last couple of trading sessions. In terms of individual names, if you can have, BSE 500, a heat map of that, because that will tell us the contributors. PNC Infra on the Nuvama note is seeing some smart moves. Sheila Foam, the volumes have been absolutely spectacular, along with the JM Financial as well. Soba, in fact, the target price that the brokerages have had over the last couple of trading sessions is probably what is being indicated in the current market trend as well. And Zomato, Wellspun Corp, Wellspun Living as well on the back of a brokerage note is up in trade. What's under pressure? Imami, Deepak Fertilizers, Chola Holdings, Hutco, IEX, VIP and a PVR that have been trading under pressure. So that's what the market scenario is looking like. But let's also welcome in our guest, Raghvendra Kedia, founder at Prosperity Advisors. Raghvendra, good afternoon and welcome to the show, and a pleasure to speak to you as always at NDTV Profit. My first question coming to you is, what's the texture of the market that you're picking up right now? No major inflows in terms of the global markets. The only thing that you're watching out for is if there are any tariffs or they will go away. And secondly, the next important event is you're watching out for the RBI commentary tomorrow. What would your bets be?
Good afternoon, Hiral. So broadly on the global macro front, definitely the tariff tantrum, or you can say the tariff war across announcements is the biggest dampener to the market, and how it unfolds, that is a concern. But an added concern has come from the escalation or some kind of uptick in COVID reporting cases. So it's like once bitten, twice shy. So we would be very cautious in looking at stocks which are vulnerable to the entire pandemic of 2020. But broadly, coming back to your core question of what is the texture of the market. So it's a pretty range-bound market where we believe 24,000 on the downside and 25,200, 25,300 on the upside are broader levels of Nifty. It will seesaw around those levels. We have a good monsoon report. We have a moderate to positive earnings on the back of it. But most of the positive news have been priced in and factored in. So we believe that market could trade with a negative bias even at current levels and move towards 24,200. And specific to the RBI policy meet scheduled for tomorrow, we believe largely a 25 basis point rate cut is factored in the price, but we still have hopes and that a 50 basis point rate cut is also possible, considering the inflation numbers have been significantly low as levels of pre-COVID. So that could be a very pleasant positive surprise to the market, a 50 basis point rate cut. But apart from that, it's going to be a range bound market with a negative bias.
Right, so that's with regards to markets, but let's shift focus to stock-specific action. You have the Pharma pack, which is absolutely up and about in trade, and you have a NDTV Profit exclusive where the management of Spark spoke to us, and what they have indicated is that in spite of that 20% fall that we saw in terms of yesterday's session on the psoriasis eczema drug trial that failed, what they are indicating from here on is that it has unmet the medical needs. Secondly, what the company is trying to do is fill in the gaps that have been found so far in terms of the trials. So they've not really given up. Also in terms of the costs that has already been provided for, and there will be no further impairments related to the development of this drug, that is SCD-044. Overall, if you're talking about the cash flow loss, what the management has indicated is all the future opportunities that the company is sitting on, it has all the potential to offset the loss that it would see on the back of SCD-044. Overall, the cash flow opportunities also seeming to be absolutely significant from the pipeline that they have, and they're not anticipating any further capex for the current pipeline assets which are under development. So that's the latest that we've been picking up from the management of Spark exclusively to NDTV Profit, and the stock has also seen some smart moves today, gains of around 4.5% coming in there. So that's with regards to where Spark goes. Another stock that is buzzing in trade from the Pharma pack is a Wockhardt. In fact, during the week itself, we did speak to the management of Wockhardt, quickly listen in to what he is watching out for, because heydays probably are back again in the next 2 to 3 years. That's the indication that we've got from Dr. Habil Kholakiwala. Let's listen into that conversation we had on Monday.
See, one of the reasons for our EBITDA performance was our cost reduction significantly across the organization, and that is paid off. But I think equally important and even more important is new drugs progress we have made. We have completed phase 3 clinical trial, and we are filing US FDA sometime in August. In India, we have already filed, and we have launched niftyramycin last month. So collectively, I think one would see a lot of upside coming out of our new drugs. Some will come current year, but mostly dramatic change one would see in 26-27.
So that was the management of Wockhardt as well, looking at 5,000 odd crores that could be coming in the next 3 years. So investors should be watching out as well. Raghvendra, 2 stocks I want to talk to you about. One is Spark. After the kind of correction that we saw in yesterday's session, there is recovery. The Spark management has indicated that the opportunities are way bigger from here on as compared to the loss that they would face on the current one. And secondly, the kind of opportunities that Wockhardt is also sitting on seems to be absolutely big, because the management is pegging upwards of 4,000 to 5,000 odd crores in terms of top line in the next 3 years. What would your view be on both these counters?
So Hiral, let me start with Spark, that is Sun Pharma Advanced Research Company. We believe we look at this as a 5,000 crore plus market cap company, Sun Pharma Group pharmaceutical company. And they have had their share of pain in terms of US FDA observations and delayed in kind of approvals. So this particular pain point is not very new to any pharmaceutical company, especially exporting to the developed markets of US and Europe. But yes, it's a 20% downtick from what it was trading at since last week. And we believe that this could be an opportunity to pick up some Spark stock right now for a trading upside or a trading pop of around 7 to 10% at current levels. So 180 level is highly possible in Spark, even if you can do some kind of entry at current levels. So it's a trading buy at current levels. Moving to Wockhardt, we see that the company has reported negative EPS in the last 2 quarters. So that is a concern. On a full year basis also, for FY24 ending, it was a negative EPS. So we would actually wait and watch and be very cautious at current levels, where we would have like to see Wockhardt reporting positive earnings, profit after tax in the green territory. But till then, it is an avoid. The stock seems to be fairly priced or slightly on the valuation metrics, it seems expensive. So at 1545, we would refrain from taking any fresh buy positions in Wockhardt, and it's a wait and watch until the EPS turns positive and until the company significantly turns into profitability. Till then, it's a avoid.
So that's a Wockhardt. Raghavendra, how are you looking at a Dr. Reddy's? Let's pull up that stock on the screens. And the reason I'm talking about this one is the stock is up 3.5%. It has hit a 4-month high. And they've actually gone ahead and partnered with another company, which is Alvotech. And this is to co-develop Keytruda, which is one of the drugs for global markets. Now, in 2024, the worldwide sales of Keytruda were almost $29.5 billion. And that's a huge opportunity that DRL is probably sitting on. Would you recommend a buy at current levels and taking the current valuations into consideration as well?
In terms of valuation, we are moderately comfortable. In terms of the opportunity with Keytruda collaboration, we believe that there is a fairly big upside. And Dr. Reddy has a track record of doing walk the talk in terms, and they have been very successful in their JVs or collaborations for overseas collaborators. So we believe that this opportunity could unfold and monetize positively in the quarters ahead. So even at levels of 1300, 1295, it's a buy in DRL, and we would actually like to have this stock for a 12-month investment horizon. It's a positive large cap pharma company. We are positively upbeat about it.
So these are the 3 stocks that we are talking about from the pharma pack, which are up and about in trade. I think Zydus is a miss right now, but we will consider that in the subsequent shows. But let's also look at Eternal. That's another one of the Nifty 50 companies which are buzzing in trade. 5.5% up move, and the stock is trading near the day's highest levels. What is causing this up move is the key question. Let me get in my colleague Mahima to tell us more. Mahima, what are you picking up in terms of a Zomato? What's the kind of volumes? Are you seeing strong volumes as compared to the kind of performance? What's happening?
Right, so strong volumes definitely for Eternal today, and the possible trigger could be a CLSA note which mentioned that the kind of weekly active users that are being seen on Blinkit, the gap between the weekly active users on Blinkit versus that of peers, that is of Zepto or something like a Swiggy, Instamart, has been widening, which is a positive trigger for Blinkit. Now, anywhere between August 24 to Jan 25, this weekly active user gap was thinning. It was in fact shrinking, but it has now picked up, and the wide in terms of the gap that has been highest ever that has been observed in May. Now CLSA believes that they've given some statistics as to the gap between the peers. As of Jan 6th, their weekly active users stood at around 1.79 million. That as of 26th May stood at around 7.7 million. So that's a significant amount of gap. They also believe that Blinkit's weekly active users at 30.1 million are touching in fact touching the distance that is there between the Zomato app versus the Blinkit app, and also very well ahead as placed as compared to something like a Swiggy, where the active users, weekly active users in total stand around 24.1 odd million. So this is the positive trigger that is possibly causing the uptick in stock today.
Right. Thank you, Mahima, for getting us the details. So that could be one of the triggers that you're seeing. It's not the number of orders that are increasing for a Zomato or a Swiggy that's causing this kind of an up move. It's mainly what's happening from what CLSA is indicating so far. Raghavendra, how would you look at a Zomato? And to a Zomato, if you have to peg a Swiggy, what would your preference be?
Let me take the easy one first. Between Zomato and Swiggy, we would prefer Zomato, that is Eternal. That they have a variety of businesses in terms of their business verticals. The way they have ramped up Blinkit, it's phenomenally positive. And the same way we believe that the district business of ticketing is significantly picking up. It's a head-on competition 1 year down the line to Book My Show, which is kind of a monopoly right now. But 1 year, same time, next year, we would be talking about district, which is Eternal's, Zomato's ticketing business as a duopoly in the market, where they would gain significant market share. And in this overall quick commerce home delivery sector, we believe that a theme like big gets bigger and the small gets extinct. That will unfold. On a mobile app, you would actually have only one or two apps which does the entire quick commerce, ticketing, and plethora of such similar activities. And Zomato or Eternal's app would be definitely one of that one or two apps you would install in your mobile phone down the line. So we are talking about a pan-India expansion, moving into tier 2, tier 3 cities. There per ticket order of deliveries going up, frequency going up, quantum going up. So we believe for a trading 305, which is the previous highs, is possible. But this is one stock where you can actually keep it in your shopping list, and every dip should be taken as a buying opportunity. So we are bullish on Eternal. We are bullish on the entire sector, and Zomato Eternal remains our top pick in this quick commerce ticketing overall as a stock.
Right, so Zomato Eternal, that comes in as a preference for Raghvendra as compared to a Swiggy. But moving on, one of the key exclusives that NDTV has brought to you is the Indian automakers who have just about 1 month until the stocks of crucial rare earth magnets last. Why is this happening? Because China has actually curbed exports of these magnets. Tushar has the key details. Tushar, number one, how is the impact? What is the kind of timeline that the OEMs are sitting on? What are the details that you're picking up?
Good afternoon, Hiral. So yes, the first impact of this China rare earth magnet export ban would be on electric two-wheeler makers in India. That includes the likes of the pure play EV companies like Ola Electric and the recently listed Ather Energy, as well as traditional two-wheeler makers like Bajaj Auto and TVS, who now command the largest market share in the EV space, in the electric two-wheeler space. That is the major impact that we are seeing, immediate impact, because their electric motors cannot do without rare earth magnets in them actually. A less pronounced impact can be seen for the likes of Tata Motors and Mahindra, which now have a well-defined EV business within their portfolio. Tata Motors makes from 8 to 25 lakhs. Mahindra has two brand new electric cars which are doing really well. Apart from that, yes, magnets do go into, the rare earth magnets do go into normal ICE vehicles, but the companies are actually much evolved or mature enough to have a workaround by actually tweaking their product mix around this particular situation. But let's talk about how does India's auto space tide over this particular challenge that is going to emerge in about a month's time. So like you mentioned, yes, Indian automakers have only 1 month to apply for a fresh license to get access to rare earth magnets from China. That is because when China put in these curbs on the 4th of April, Indian automakers had about 90 days of supply at hand. Now that's reduced. Now 2 months have gone past, and now we have just 30 days left. So a new license process has to be put into place. Now that itself takes about 60 days. So 30 days of supply, 60 days of license approval process, something just doesn't add up immediately. So now what is happening is that a supplier has to initiate a new license process via the DGFT with the Commerce Ministry in India. The DGFT will take this particular application and take it to the Ministry of External Affairs, where it will be vetted again and passed on to the Chinese embassy in New Delhi. From there, the Chinese embassy will contact the rare earth magnet supplier in mainland China. After this supplier looks at this file, it will be moved to the Chinese Commerce Ministry. This process in just China takes about 45 days out of the 60 days in total. So what Indian OEMs as well as industry bodies such as SIAM as well as ACMA are doing is that they want to reduce the India timeline at least. Apart from that, a 50-member delegation was supposed to visit China this week, but that hasn't happened. It may happen in the future, but we don't know the timeline as yet. What we also know that about 30 applications have been submitted so far. Not one approval has come for this particular space. We also know what automakers think about this particular situation. Let's start with actually the electric two-wheeler makers, that is the TVS and Bajaj. TVS in its monthly sales report actually said, while EV sales continue to grow steadily, disruptions in the EV supply chain, particularly concerning magnet availability, are expected to pose challenges in the short to medium term. Mr. Rakesh Sharma, the Executive Director of Bajaj Auto, in its earnings call actually said, the rare earth situation is a difficult one. Supplies and stocks are depleting fast. If there's no relief, production will be seriously impaired in July. That's the current scenario for the automobile industry. Apart from that, Maruti Suzuki, which is India's largest car maker, has actually filed an application for accessing rare earth magnets from China, but there is no movement on it as such. The company has said that whenever it comes to know, we will also know it, as well as the stock exchanges. Tata Motors, which is India's largest EV maker, electric car maker, is watching the situation closely. It says that the dependency on rare earths is for both EV and ICE. As far as we are concerned, there is no image impact, but we are getting all kinds of support and hope this gets resolved fast. So essentially a mixed bag, but immediate impact on electric two-wheeler makers. So we also spoke with Mr. Shailesh Chandra a couple of days ago at the launch of the Harrier EV. Here's what actually he had to say.
You know, there's dependency on the rare earth both in the ICE world as well as EV world. As far as we are concerned, I don't see an immediate impact. But SIAM and ACMA both are very closely working with the government. We are getting all kind of support. We are hoping that this gets resolved fast.
Okay. Will it impact vehicle production? Because we have seen some people saying that yes, July onwards their vehicle production can get affected because of the lack of the magnets. When do you see your production getting impacted or not getting impacted at all?
No, you know, it is not getting impacted at all currently.
Yeah.
But you know, I have reviewed the situation. We have reasonable inventory with us. Beyond that, it will be unnecessarily causing too much of speculation. Let's hope that things get resolved.
So that's the word coming in from Tata Motors as well. But let's also welcome in Somin Mandal, Senior Analyst Automotives at Counterpoint Research. Somin, good afternoon and welcome to the show, and a pleasure to speak to you as always. Somin, my first question coming to you is, majority of the managements actually indicated the scarcity that the companies could face in terms of the rare earth magnet in their fourth quarter earnings call as well. But at that point in time, probably not everyone assumed that this would really go on for so long. But taking into consideration the exclusive details, what my colleague Tushar has gotten, that the companies just have stock to probably go ahead for 30 more days. What would this entire scenario actually entail, according to you, for the sector?
Okay, yeah, thank you. Yeah, as we can see EV adoption accelerating in India, the shortage of rare earth materials poses serious challenges to the industry, right? So these materials are essential for producing battery cells, battery management system, battery cooling systems, and PMDC motors, and as well as other power electronics components. So as India also scales up local manufacturing of motors and battery cells, so this scarcity could significantly hinder production and slow down country's electrification momentum. But as we can also hear from all the automakers, so automakers started like building up inventory months, I think 3 to 6 months before, and we know in future festive season is coming, so that's why I think Indian automakers currently has enough inventory until festive season. Maybe after festive season or at the end of this year we can see a little bit of impact, but I believe at that point of time Indian government and automakers will find a solution.
So, good afternoon, Mr. Mandal. Tushar here, just to step into this conversation. You think Indian automakers have the inventory to last up to the festive season? Because the festive season is very crucial for the Indian auto space at large. What I'm hearing is that they have stock only for the next 30 days, dependent on the curbs that actually first came into effect on the 4th of April. So we know that there was 90 days of stock that was available within automakers, but are you getting the sense that they may have stocked even more so that there will be no pain during at least the festive season?
Yeah, I think so. Normally, automakers started production way before festive season to cope up with increasing demand during festive season. So that's why before production, I think if automakers start production from June, so that means they have procured components even 2-3 months before. So because they know that what can be the demand for festive season. So that's why I think
we can see from June onwards significantly higher dispatches to dealerships, production numbers.
Yes, yeah. I think, yeah, that is the reason you can see also from dealership numbers, we can see higher dispatch numbers because, yeah, dealers will be piling up inventory because that should not impact on sales at the time of festive season.
But Mr. Mandal, what can be a workaround this particular situation? We know that China accounts for 90% of the processing of rare earth magnets globally. But are there any other geographies that India can look at to get the supply of rare earth magnets?
Yeah, we know that China controls nearly 60% of global rare earth material mining and nearly 90% of supply chain of rare earth materials. But if you look at the rarest materials, we know there are 17 rare earth materials, but 7 are rarest earth materials, right? So including few of the materials like dysprosium, gadolinium. So for these minerals, China and Myanmar have very good dominance. Maybe China has nearly more than 95% of dominance in these rarest earth materials. So that's why alternative sources for these minerals outside China remain extremely limited. But yeah, for not only India, all the global automakers and the other regions also look for alternatives. What India can do, I believe Indian OEMs and tier 1 suppliers may step up efforts to diversify sourcing from regions like Australia, Africa, and Myanmar, or develop local rare earth refining capabilities. So we know even like Australia, after procuring rare earth materials, they send it to China for processing. So India can work around those things. If Indian government may also intensify extensions of own rare earth materials reserves, as well as they can invest on processing rare earth materials, right? So that India may not be able to depend only on China for tackle this type of supply chain situation. So we also see, we have seen Europe, so they have also reduced dependency. So similar way India can follow.
So Somin, my question coming to you is, if you have to reduce dependency with regards to rare earth metal, one of the options is you go to alternatives. People are talking about Australia, Brazil, which could be alternatives. Not sure what's the quantum that they have. The second alternative, is there anything where there could be a workaround where companies are looking at manufacturing parts, or I don't know, how would you put it, ancillary, spare parts where rare earth metal may not be used?
Yeah, that can be the other alternatives also automakers are trying. So we know everyone thinks like EVs are reducing pollution. So many environmentalists are raising questions like mining and exploration are raising pollution level, right? So that's why already automakers and governments are putting lots of efforts to find out alternatives for these rare earth materials. Like, yeah, maybe hydrofuel currently where India is focusing, or any other alternative of fuel that will also reduce pollution level and also act as alternative of rare earth material where China has lots of the dominance.
Mr. Mandal, this is the conversation around OEMs that we have seen, the end product, so to speak, that is two-wheeler or four-wheeler. what is the kind of impact that we can see on auto component makers, the local auto component makers? Which companies will be impacted, and which actually these companies we should watch out for in the future as maybe the winners from this, and maybe also the people who will actually also lag in the auto component space?
So yeah, so all the like all types of vehicles will be impacted, including passenger vehicles, commercial, two-wheelers and three-wheelers. But I am starting with passenger vehicles, like as you already talked about.
So,
like
I'm so
Automotive.
sorry to step in. I meant auto component makers, people who make parts. Are there any companies, auto component makers, that will be impacted by this particular ban?
So obviously, auto components maker will be impacted, because what will happen? So this ban is on like rare earth materials, not on the finished goods or products. Maybe China will force the automakers to procure finished components like PMDC motors from China. But we know like all the Indian players, they build like for two-wheeler players, they build motors in-house, and also like passenger vehicles players. So that's why components players, in this case, passenger vehicles player takes help from tier ones or component players. So they may face difficulty because if they don't get supply of rare earth materials, they would not be able to build permanent magnet motors, and as well as battery cells, what components players as well as Indian government is aiming for.
So essentially you mean to say that companies that make electric motors in India and companies that make battery management systems in India will be impacted by this. Do you expect these companies to maybe set up sub-assemblies in China? Is that a likelihood? Is that a possibility?
That will be also this will, then again, geopolitical situation will come, whether China will allow invest the foreign companies there or not, or whether Indian government will be interested our Indian sub-assembly players to put manufacturing unit there or not. But in the short term, maybe Indian automakers will be forced to buy finished goods from the suppliers or components players in China to cope up with increasing demand. Either we will see decrease in sales and also increase also on vehicle price, that will also pass on to the end consumers.
I think lots to watch out for. Thank you, Soumen, so much for joining us on the show and putting that into perspective as well. Thank you, Tushar, as well, to actually get this story to us, because absolutely interesting, which has been developing over the last couple of days. I think 90 days is what we're looking at. We're already passed on 60 days from this period, and I think the way the companies also responded to it in terms of the conference call is not with too much concern. And now suddenly the concern has shot up as well, if you think about it.
It's essentially because you've entered in the last month. So people were expecting, so as I mentioned in my link, that about 30 applications were already made, but not one of them was approved. Yes, Maruti Suzuki has its application still in, but now that you entered the last leg, the last month, some alarm bells have started ringing.
But do you think that the alarm bells have come in late?
I think, yeah, they have. They should have anticipated this bureaucratic round trip that happens in China, the step-by-step, the steps that I mentioned. If they're expecting about 45 days of a process happening only within China, they should have said, okay, only the license will take 45 days. Let's start moving as quickly as possible. And I think perhaps that has not happened, or perhaps there was oversight on the part of the manufacturers.
I think this is going to be interesting. I think, Tushar, the next piece that you should be looking at is to tell all our viewers as to what this rare earth magnet actually looks like.
Yeah.
Where in terms of the auto component it is used, because that's not something that the street is aware about, right?
No.
A lot of things like this just get discovered suddenly, and that is market moving then.
Yeah.
But thank you so much for joining us and getting us this interesting piece in terms of what the OEMs could be facing from here on. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live. Ask.
Markets of day's high, Nifty hovering comfortably above the 24,800 mark. All sectors except Nifty PSU Bank trade in the green. Nifty Realty leads the winners ahead of the RBI policy tomorrow. Spark back in focus. The stock making smart moves today after falling almost 20% yesterday on its psoriasis drug trial failure. We spoke exclusively to the management. The company is plugging the gaps and looking at multiple other opportunities ahead of. Tech, auto and defense industries face mounting pressure as Beijing holds supply of key metals critical for magnets and semiconductors. And that's an NDTV Profit exclusive. Eternal buzzes in trade with gains of over 5%. Morgan Stanley's reaffirmation as the top stock pick enthuses investors. CLSA highlights Blinkit's strong weekly active user growth. Railway stocks on the bullish track after trading under pressure for 6 months. Recent order wins. Strong FY26 aids the rally. And Deccan Gold rises after Jonagiri Gold Project receives consent to operate in Andhra Pradesh. Top boss tells NDTV Profit that the company aims to sell over 400 kgs of gold in FY27. That's 400 crore revenues at the current price. Welcome back. You're watching Profit Buzzers. We've been talking about Deccan Gold. Let's pull up that counter on the screens and see what the stock is doing in trade. A small company, 9% up move, has cooled off slightly. If we can just have a one-year chart as well to understand the kind of movement the stock has seen, because a very small company in size come to notice today after the mine actually has got an approval in terms of India. I think this comes in after almost 80 years, if I'm not mistaken. 12 months, 54 to 55% is the kind of up move that we've seen. Jonagiri Gold Project has received the consent to operate in Andhra Pradesh. The management tells NDTV Profit that the company aims to sell over 400 kgs of gold in FY27. Let's quickly listen in.
After many years, I mean, like almost like 80 years, this is the first gold mine to be established in this country. So in itself, it's a big boost for the gold mining industry in India. And the second point is, yes, we did a lot of surveys last 10, 12 years. We have been doing drilling, exploration, feasibility. So this particular project for the we have completed the feasibility for the first 10 years. And in the 10 years, we will be producing close to around 4.5 tons of gold. So initially it will be low, but then at the peak stage, it will produce around 750 kilos per annum.
Right. In fact, let me also now welcome in Osho Krishnan. We already have Raghvendra with us. Raghvendra, any fundamental view on this company? Because not something that the stock has been widely tracked, but an interesting commentary with a gold mine that is being awarded to them. First time in 80 years in the country. 400 kg of gold is what they're looking to give out as output by FY27.
So, you see, it's a very small company, currently a 10% uptick. Its market cap is of 2,500. This is a very capital intensive business, and there is a long gestation period for this realization to come into the balance sheet. So that's a very long haul wait in terms of how the monetization will happen. Second, at current valuations on the fundamental side, the company Deccan Gold is already trading at 10 to 11 times of book value. That's very expensive. In terms of Promoter holding, we see the management holds around 25%. So that is also not very comforting. So a low promoter holding, very expensive, 11 times book value, and a long gestation in terms of monetization of the mining asset. We believe that this could be taken as a trading bet, but for a long-term investment, we would have to wait and watch and see how the companies do in the next 2 to 3 quarters. Until then, it's only under radar, no fresh entry currently.
Okay, so that's with Deccan Gold. Before I go to Osho on that one, let's just quickly address the flashes at the bottom of the screens right now on Ola Electric. What the news is coming in right now, the stock is trading at the day's lowest levels, but the news that we're picking up is Bhavesh Agarwal has gone ahead and increased the pledge in terms of the shares, and this is because the stock price has tumbled. In fact, he's paid an additional 20 odd crores in cash to go ahead and increase the pledge so far. Let's see if there is any other information that we can pick up as well from the screens. But 0.8% lower. In fact, poor sales data is where the reason why the stock tumbled. Let's just pull up a 1 week or a 1 month chart of Ola Electric to understand the volumes have been pretty high right now as well, 18 to 19 million odd shares that are being traded. But if you can just give me a 1 month, there you go. A pretty volatile chart, has not done anything much, but since the time the numbers have been announced, the pressure has continued with regards to Ola Electric. Again, increase in pledge, 20 odd crores is what Bhavesh Agarwal has paid as well in addition, with regards to the creation of pledge is concerned. Osho, very quickly, 2 stocks I want to talk to you about is Deccan Gold, what are charts indicating, and Ola Electric. I mean, 50 rupees, 49, 50 rupees is where the stock has been hovering at in the last 1 month.
Very good afternoon to both of you. Well, both the chart structure of Deccan Gold and Ola Electric are totally pole apart from each other. Firstly, I'll be talking about Deccan Gold. In this counter, I have seen approximately 60% of gains in the last 30 or 35 trading sessions. So that is already a very strong movement that we have seen, a vertical rally that can be said in the short-term perspective, and the risk reward at current levels definitely is not in the favor of the buyers. But yes, looking at the recent momentum and the kind of a volume that has been built up in the recent period, it is a positive setup, but only for those who have already carrying the position. So it will be advisable to hold the investment with a stop loss of approximately 140. If it breaches the zone of 180, which is the swings of the recent high, then only we can see a continuation in the counter. Else, one should hold with a stop loss of nearly 140 kind of a zone. Now coming to Ola Electric, this is totally an opposite chart structure. It is at near about the lifetime lows level, and it is having a kind of a very weak technical setup. So I'll be advising to stay sidelines for the counter until it surpasses the zone of 60-65 on the higher end. Till that time, it's better to stay sidelines, wait for the counter to gain some kind of a positive momentum on the technical front and even on the back of fundamentals. Then only one can look for buying opportunity in this counter.
Right, that's with Ola. In fact, I have Puneet also, who tracks the sector pretty closely, joining in. Puneet, what would this really mean with Bhavesh Agarwal going and increasing the pledge and the way the performance has been so far?
Well, thank you for that, Hiral. So essentially, it's that the promoter, Mr. Bhavesh Agarwal, had pledges on the current stake that he has in Ola Electric. And the key aspect is that the value of the share price, which has currently deteriorated, fallen before 50%, has now triggered, the pledge to be increased by Bhavesh Agarwal. So essentially, to even maintain the current collateral level, he will have to deploy in some money in, and that sum, according to Bloomberg's sources, are roughly about 20 crores to maintain the current pledge as well. We are trying to find out what is the exact amount of pledge that he has, and we'll be getting back with that number as well. But currently, that's the news flow, which is important to track, because the bad news keeps following the company, and we've been putting that out very regularly, that now the company has actually slipped from the number 1 to the number 3 market position in terms of market share for sales in FY25 and continuing in FY26 as well. So that is one of the key negatives. Promoter holding as a whole is 42%. Now, pledged out of that is roughly 5.78% of promoter holding specifically, or that's roughly 2% of the overall shareholding. So that is some of the key numbers, that 5% of the current promoter holding is already pledged. If the share price deteriorates further, there will be either a cash increase that the promoter will have to do, or maintain that collateral, he will have to find other ways to source funds. So essentially that's the news flow, Hiral. We've seen, brokerages like Kotak actually cut target price to 30 rupees per share as well on something like an Ola Electric. So it is, incoming a lot of news flow and a lot of numbers, but that's the current, takeaway, that the total promoter holding is 42% and 5%, 5.78% it's pledged out of that.
Right, thank you for getting us the details. In fact, let's quickly pull up the stock. It's trading under pressure. In fact, it's down now nearly 1% at the day's lowest levels. You're seeing that marginal impact as we speak. And as Puneet decodes this for us, the stock has continued to crack and trade now 1.2% lower. So that's another NDTV impact that we're picking up so far. But moving on, KYC International is an interesting one. They spoke to us, spoke to NDTV first today on the back of the 2,000 crore order that they won. Let's quickly hear in what the management has to say.
So FY26, what we have said is that we should grow at 15% plus. Okay, 15 would be the minimum if we expect to grow from the 10% what we grew last year. So FY25 we ended around 22,000. So we'll add 15% to that.
And in terms of margins, you had an uptick in margins at 6.88%. You're expecting that to continue. Is the focus going to be on, margins and upping the EBITDA? What is the strategic focus for this financial year?
So our margin calculates to around 7%. What we are expecting against that 7%, we should be doing around 8 to 8.5% next year. For the Q4, we were at 7.8%.
Right, so that's KYC International. Another stock that is in focus is a PNC Infra as well. Let's just quickly pull up that one on the screens. If you talk about PNC Infra as well, the stock is seeing almost 8.5% up move in terms of today's session. Anushi, a quick one in terms of what's making Nuvama positive.
Well, it's the post Q4 management commentary that is making Nuvama positive. Now, what has happened is they've maintained a hold call, and this is the target price of 286 that we are looking at. Now, company is attributing that improving balance sheet and higher other income looks positive for the company. Along with that, if you look at the order book positioning also of 17,800 crore roughly, 3.5 times of a book-to-bill ratio is a positive going forward, considering that it has 15,000 crore of order inflows planned out for next year. Do note that the company has also guided for a 20% of a revenue growth guidance and a 13% of an EBITDA margin. This is after a weak set of numbers that we've seen in FY25. So despite the miss in FY25, FY26 outlook remains positive. So Nuvama has maintained a hold rating on the basis of these factors.
Thank you so much for getting us the details, Anushi. Raghvendra, your view on both of these counters, PNC Infra, and if you have to look at a KYC International, what is the infra space actually telling you? Any topics?
So we like both of them. The top of the two would be KYC International, RP Goenka Group company. And if you have seen, the management commentary was very impressive, very comfortable, and very upbeat, ambitious numbers. And what they are talking about are margins of around 7-8%. But we believe that management has a track record where they have beaten their own expectations. So we are looking at a higher single digit or maybe a 10-11% margin in the next few quarters. Their export orders, especially from the Middle East and CIS nations, have been very upbeat. So the order book comfort also comes in. We believe that even from current levels, we are expecting a 20% uptick for a 12-month investment horizon and a price target of around 1,080, 1,100 on KYC International. Good management, good track record, export growth, and a very healthy order book. Moving to PNC Infra, we like the company for a different set of reasons. The valuation metrics is very cheap, where the peers would be trading in this space around 20-30 P multiples. PNC Infra still is in the P multiples of around 10-12. So there is a huge valuation catch-up in terms of P versus its peers. So we believe that even at this 10% uptick today, where PNC Infra is trading at around 312 levels, there could be a 25% uptick in PNC Infra from a 12-month to 18-month time horizon. And we are looking at a price target of around 380 to 400. So it's a good stock, engineering capital goods construction company. They have been across EPC, BOT, hybrid HAM models. So the overall business is also upbeat. So this is a stock where you can hold for a longer term investment horizon also.
Right.
Bullish on KYC and PNC Infra.
Right, so that's with both these names, Osho, KYC, PNC Infra, and let me add one more to your list. which is a Interarch building products, because you have an Ambit which has gone ahead and initiated a buy on that one as well. What would your view be on these three names?
See, firstly, for KEC, then this counter have seen a very decent movement in the recent period. On the technical front, we are witnessing a double bottom formation. So that is a very positive outlook for the counter. And on the higher end, I'm expecting a target of nearly 1,050 to 1,100 from a short to medium term perspective, looking at the technical setup and technical structure that the counter has made. Now, coming to the other counter of PNC Infra, then this counter also, today there has been some kind of traction, but technically there has been very bleak kind of a structure movement that can be seen. So I will be waiting for the counter to surpass the zone of 335 on a decisive manner, which is the 200, the simple moving average, above which only we can see some kind of positive momentum coming back on the technical front. So both the counters are looking very positive, but comparatively, KEC is looking much more better than PNC Infra at current level.
Right, so that's the technical view coming in there. In fact, let me get in my colleague Harsh as well. Harsh, what is Ambit really positive about with regards to Interarch building? The stock seeing now marginal gains of around 0.8% though.
What they're saying is it's just one of the three big players within the pre-engineered building industry in India, and therefore has a moat already in that sense. What's the edge? It's the track record of execution that Interarch holds at this point. They have long-standing relationships with 80% of the orders that they receive being repeat orders. So customers coming back, definitely a positive. They have been winning larger orders as well. The average size of the order has been growing. In fact, the average order size has gone up by over 2.5 times since pre-COVID levels. So you're seeing that play through. The order book currently is at 1.1 times FY25 revenue, and the near-term growth trajectory therefore and the visibility is therefore quite solid. You're also seeing traction driven by rising penetration, the JSPL tie-up that they have, and solutions across industries that they continue to introduce. Cost competitiveness and industry best margins further add to the comfort that Ambit has. They're expecting FY25 to 28 top line to grow 17% CAGR, EBITDA 23%, PAT 21%. They're also therefore suggesting a 1 year forward price to earnings multiple of around 25 times. So keep your eye out on this one. It's not looking too expensive in that sense.
Not very expensive, that's the word coming in, from Ambit. But moving on, let's understand now what's happening with the monsoons that are arriving early. This is the soonest that we've seen since 2009, and with the rainfall 266% above average, most crops are stable, but rice probably could take a hit. Now, whether is it a boon or a bane for India? Citi has given out a report on the same, where Mahima is analyzing the report as well. Mahima, over to you.
Right, so as you rightly mentioned, it's the earliest monsoon that India has seen since 2009 now, and the rainfall, as you rightly mentioned, is about 266% above the long period average between 16th May to 31st May. Now, what Citi believes is that there is no bearing in terms of inflation when it comes to this, and except for rice, it might not impact a lot of crops. Now, in terms of the headline inflation, they are penciling in a 3% YY number. In terms of 5 episodes where early monsoon was seen in the past 25 years, what Citi has observed is that full season rainfall was deficient, but food inflation rose in 4 out of these 5 episodes. Kharif crop production was down YY only 2 times out of these 5 times, and it's too early to be comfortable about the overall monsoon impact is what Citi believes. In terms of heavy rains in May, there are no concerning signals yet according to them. Higher soil moisture component could lead to earlier sowing of crops and also high productivity according to them, and dry period between 2 crops will regenerate the kind of fertility that the soil will have. So better crop sowing is something that will be beneficial for rural areas as well. They also believe that damage to standing and harvested crops might not be large enough that it might might impact the prices of these crops. Vegetable prices in May broadly in line with what seasonality reports were expecting, so no concerns there as well. Lastly, vegetable CPI, they've given some numbers here. They expect vegetable CPI to rise by about 2.5% month on month in May, and vegetable CPI slightly higher than general trend in May. So this is the overall view of what Citi believes that how monsoons will impact the entire crop season, as well as how rural areas might be impacted. But from what they're saying is that the impact might not be much except for that rice crop.
Right. So this is going to be interesting to watch out for. Raghvendra, your view, and taking the above average monsoon into consideration, which would be the stocks that you would bet big on?
So we would like the pack of fertilizer space play. We would actually avoid FMCG and two-wheelers, which are typically also impacting or positively correlated to the monsoon. But looking at valuations, we still believe fertilizer pack it would be the sector to bet upon, and in that our top pick continues to be BASF, BASF at levels of around 5,100. We believe that with the good management and very good presence across its distribution network, BASF is currently in terms of price beaten down. So a good monsoon would actually augur very well for this price, and 5,800, 6,000 is also possible by the end of 3 quarters from now. So BASF would be the top pick in the entire fertilizer seed pack, and we would avoid two-wheelers or FMCG space based on the valuation discomfort, based on the good monsoon or very above average monsoon so far.
Okay, so that's with regards to where stocks go. Osho, very quickly, your top pick from the monsoon pick.
See, again, overall, looking at the technical perspective, BASF is looking positive to me because it is having a kind of a consolidation zone, and it is expected that in the coming period, there is a possibility for a higher momentum in this counter, followed by the other counter, which is into radar, is Aarti Industry. So Aarti Industry is also looking positive to me. It is also having a fairly valuation on the technical perspective and has emerged above the long-term moving average after a very long period of time. So I'm expecting both these counters are at a very strong support zone, and from here onwards we can see some kind of a positive movement in the coming period.
Right, so that's with regards to where monsoon stocks are concerned. But thank you, Osho, thank you, Raghvendra, so much for joining us on the show and sharing your views. Lots that we've discussed so far, but completely out of time. With that, it's a wrap on this edition of Profit Buzzers. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Hello and welcome to NDTV Profit. You are watching Top Trades. I am your host Puneet Zaveri. Let's first look at how the markets are doing before we address some of the key stocks that are reacting on based on news flow as well as among other reasons. In terms of the Nifty, we've seen a very strong day today. While we've just seen some correction over the last hour or so, because we spoke at 12 o'clock as well, 24,970 is when Nifty was at that time. From the day's high of about 24,899, we've now slipped just about 100 odd points, and it's been that kind of a day where we mentioned the start only that the trading is going to be very choppy and it's going to be in a very narrow range. While we did exceed that to almost 170 points gain on the Nifty 50, we've seen that come down a bit. Let's look at what's the key contributors for the Nifty, because we did see ICICI Bank being one of the key ones. Reliance is also buzzing on the back of a brokerage note from JP Morgan as well. Eternal also in the green today, up almost 16 points in terms of contribution. The other one's coming from Trent as well, putting its weight on some of the key aspects. But on the loser side, we've seen just some pullback from a clutch of stocks, not too much in terms of any individual specific ones, but largely seen that being a drag. Let's look at both in terms of the mid cap as well as the small cap as well. See if it's outperforming the benchmark. A trend has been continuing. Again, today as well, it's up 134 points. Similar to the benchmark, it's just slipped about 30 to 40 points from the day's high, but nothing too much to complain about in terms of the broader markets. Let's look at the BSE 500 as well, because we've seen some of the key stocks in the realty pack buzz very much. We've seen something like, in terms of Sobha being one of the key ones, up 7%. Among others, Brigade is also one, almost up 6% in trade today, while PNC Infrastech has been one of the key ones in terms of winnings for the road pack specifically. Cochin Shipyard has been continuing its bullish momentum. We saw this week that Garden Reach was also one of the key winners, and the shipbuilding pack being largely positive. On the negatives, we've seen some pressure on something like a Chola Holdings, Euroca Forbes also down, but nothing too big or significant on the negatives to largely, in terms of, hit that impact on that aspect. So that's definitely one of the key ones. I just want to pull up very quickly an Ola Electric, because we were flashing this just about a few minutes ago that stocks are currently, at the low point of the day. And that's largely because of the news flow coming from Bloomberg that the promoter, Mr. Bhavesh Agarwal, has had to increase or infuse roughly 20 crores to be able to maintain that current pledge. Essentially, what happens is that promoters generally take any kind of loans or something of that sort or any liability, and that is backstopped essentially with their equity shares. Now, when the value of the shares fall below a certain limit, the promoter has to either give a lot more shares in terms of pledge or actually pay cash. These are the only two ways. Currently, the news flow is that Mr. Agarwal has paid 20 crores to maintain that pledge at the same level. Initially, he's essentially not put in more equity share as the pledge as well. And one of the key aspects is that roughly 42% of the company's current ownership is with the promoter holdings. And Bhavesh Agarwal has currently pledged 5.78% of that holdings. Just in terms of context, out of the 100 now, that's roughly 2.38% stake that's currently pledged out of all shares. But that is definitely dragging the stock down. Let's now welcome in our guest for the show, Mr. Mahesh M. Oja, who's the AVP and Research and Business Development at Hensec Securities. Mr. Oja, very good afternoon to you and thanks so much for joining in. We've spoken to you about Ola Electric in the past as well. How do you see that in the context of dwindling sales? Because now it's been clear that the brand of Ola has now been hampered, and the company has now slipped to a number 3 market position in terms of sales. Both Bajaj and TVS have eclipsed it via mile, and that seems to be the new normal, so as to say. What is the current view on something like an Ola, and what do you think of Ather as well? It's a recent listing, similar business model, but that has been gaining momentum in terms of market share. What's your view?
If you're looking on Ola, I think Ola has all the negative factor has come in Ola. So I think and still it's holding 48, 49 level. That is quite surprising for me. So if you're looking, if any positive trigger come on Ola and above 54, it is sustaining, then we may see some sparkle upside. But till that, it's a very negative side from many point of view. If you're looking on a number specific, if you are looking from a place specific, so on all the parameter we are facing negative side. If you're looking from a result perspective, that is quite very negative from the share price perspective. So I think all the negative are in priced in. So any positive trigger come, and if it is able to sustain or closing above 54, then we may see some more upside till that we are sideways on Ola.
Got the view, Mahesh. Let's look at another stock and pull up Welspun Living now, because it's in focus after Jefferies initiated a buy on the stock. Stock up almost 4% now. My colleague Mahima is joining in with some more details on this. Mahima.
Right, so as you rightly mentioned, Jefferies has initiated a buy rating for Welspun Living with a target price of 185, which is almost over a 40% upside from its yesterday's closing, and the stock, as we are already seeing, is up 4%. What they're saying is that it's a play on India's growing attractiveness for manufacturing. It's a key beneficiary of India's potential trade deals with US as well as the EU and UK. What they're also saying is that it has incubated future growth pillars, including a portfolio of own brands, and has strong manufacturing capability with one of the largest home manufacturing textiles globally. They expect a subdued first half of FY26 for Welspun Living on both top line as well as margin because of lower operating leverage and due to tariff uncertainty as well. But overall, it's well placed to see recovery in second half of FY26 and beyond, and should deliver a 12% EBITDA CAGR and 18% 18% EPS CAGR over FY25 to 28 estimates. So this is the overall view as to why and what makes Jefferies bullish on something like a Welspun Living.
Well, thanks for that, Mahima. But Mahesh, I'm not sure if you track the stock Welspun Living, but we've seen because of the India-UK FTA, a lot of textile stocks are back in focus. If not a direct view on Welspun Living, what do you like in this space?
If you're looking from Welspun perspective, I think valuation is quite reasonable. We can see some more upside up to 160, 174 level. That is our optimistic level. Recent number was not in line, so we have seen some downside in Welspun Living. From earlier, we have seen 220 level buyback for Welspun. So I'm positive on Welspun, but yes, numbers were not come good, so we have seen some downside. I think 160, 174 level is a quite reasonable value for Welspun Living. So I think if anyone holding, then they can hold. If any quarter number are coming good, then we may see some more upside, and definitely they are going to benefit from EU and US tariff deal type of any opportunity. So this is the player in particular sector, so that they can benefit it from the US and EU also.
Got the view, Mahesh. The other stock in focus is Eternal, which is erstwhile Zomato. Its stock has been actually making a lot of smart moves, and today, in fact, CLSA has now come up with a very interesting note on the company's quick commerce arm, Blinkit. Let's get in my colleague Mahima, who's still with us, to get us some key highlights of what these reports are. Mahima.
Right, so I think why the stock is buzzing today probably is because of the CLSA note, which says that the Blinkit's weekly average users have significantly gone up, and the gap between Swiggy versus something like a Zepto or Swiggy Instamart has widened. Now, in terms of the gap between Blinkit versus Swiggy Instamart or Zepto was shrinking between August 24 to Jan 25. but that has widened to highest ever again in May. In terms of the numbers, Jan 6 around had weekly active users of around 1.8 million, which has now significantly gone up to 7.7 million. Blinkit's weekly active users now total stand at around 30.1 million, which is almost nearing to that of Zomato's weekly active users, and the gap between that also is narrowing. So quick commerce is catching up and might even surpass the weekly active users for Zomato as a whole as compared to food delivery. And lastly, even in terms of Swiggy, it's way ahead of weekly active users user base for Swiggy. Swiggy's weekly active user base stands at around 24.1 million versus that of 30.1 million for something like a Blinkit. So I think these are the reasons and factors as to why Zomato is up in trade today. But of course, there is an overhang of the FII block sale happening anytime in June now. So that is one thing that an investor needs to keep an eye on.
Well, thanks for that, Mahima. And Mahima's highlighted one key point, which is the key overhang on something like an Eternal. That selling could trigger in any time now. But Mahesh, between something like a Zomato and an Eternal and a Swiggy, we know that Swiggy is a very late entrant in the quick commerce space. But what do you think will drive the valuations for Zomato going forward? Do you think it's the quick commerce arm? Because while the ambitious target of the dark stores essentially is in the fray, how would you view both of these stocks?
See, if you're looking on a particular sector, we can see some more aggressive type of Indian consumer habit can be increased more and more. So I'm quite bullish on particular sector. On if we are specific talking about Eternal and Swiggy, that is both the counter. We are optimistic for some more upside in coming time. So, habit of Indian consumer are increasing day by day. If you're talking about Swiggy, if you're talking about Zomato, time to time they are giving some schemes. They are giving some type of opportunity to their consumer. So it's a quite optimistic for upside. But near term, I think Zomato could be kept nearby for 275 level. So from nearby, I think 275 could be level. But yes, from a longer term perspective, Zomato could be just 320, 325 level from current perspective. If any surprise come, if any data coming positive trigger, then we may see some more upside. From longer term perspective, I'm bullish on Swiggy and Eternal also both counter.
Got the view, Mahesh. But one other stock that's in focus is actually Deccan Gold. Now, the company is actually into gold mining, and we also spoke to the management today, up almost 9%, sustained that positive move across the day. Now, this stock is rising after the Johanagiry gold project receives consent to operate in Andhra Pradesh. Now, the top boss tells NDTV Profit that the company aims to sell over 400 kgs of gold in FY27. Let's listen in what he had to say.
After many years, almost 80 years, this is the first gold mine to be established in this country. So in itself, it's a big boost for the gold mining industry in India. And the second point is, yes, we did a lot of surveys last 10, 12 years. We have been doing drilling, exploration, feasibility. So this particular project we have completed the feasibility for the first 10 years. And in the 10 years, we'll be producing close to around 4.5 tons of gold. So initially it will be low, but then at the peak stage, it will produce around 750 kilos per annum.
Well, the other one stock I want to pull up is Interarch Building Solutions. Now, the stocks, largely was flat at the start of the trading session. Let's pull that up now slightly in the green. But let's pull up the year-to-date chart, the 6-month chart, because the longer-term, view of the stock has been very positive, has done very well for its investors since listing at roughly about 1,200 rupees, I think, over the last 18 months. In the last 6 months, the stock's up 36%. And today, Ambit has actually initiated coverage on the stock. What are some of the key highlights from this particular report? My colleague Harsh joins in with some of those.
What they're saying is it's just one of the three big players within the pre-engineered building industry in India, and therefore has a moat already in that sense. What's the edge? It's the track record of execution that Interarch holds at this point. They have long-standing relationships with 80% of the orders that they receive being repeat orders. So customers coming back, definitely a positive. They have been winning larger orders as well. The average size of the order has been growing. In fact, the average order size has gone up by over 2.5 times since pre-COVID levels. So you're seeing that play through. The order book currently is at 1.1 times FY25 revenue, and the near-term growth trajectory therefore and the visibility is therefore quite solid. You're also seeing traction driven by rising penetration, the JSPL tie-up that they have, and solutions across industries that they continue to introduce. Cost competitiveness and industry best margins further add to the comfort that Ambit has. They're expecting FY25 to 28 top line to grow 17% CAGR, EBITDA 23%, PAT 21%. They're also therefore suggesting a 1 year forward price to earnings multiple of around 25 times. So keep your eye out on this one. It's not looking too expensive in that sense.
Well, thank you for that, Harsh. Mahesh, the pre-engineered space, building space has been largely gaining a lot of momentum. I'm not sure if you have coverage on this one, but any view on the stock?
See, if you're looking on a stock, the stock has gained a lot from lower side, but it still have some much potential for upside. But I'm not optimistic for 3,000. At least 2,750, 2,800 level could be coming near term, as we are seeing some competitiveness in industry. But yes, this company is quite doing very good. So I think the 2,750, 2,800 level could be a real picture for the stocks. After that, but if any positive surprise come, then we may see some more upside. But yes, from current view, I think 2,750, 2,800 level could be come in the 6 to 9 month horizon.
7 to 2,800 rupees per share could be a good value for Interarch. That's what is the view of Mr. Mahesh Ojha. But I want to also talk about one key stock, that's PNC Infratech today, reacting post this conference call. Let me get my colleague Anushi to talk more on this. Anushi.
Right. So, Puneet, what we are seeing for PNC Infratech, in fact, is a positive management commentary. This is after its Q4 result update that we are seeing now. What the management has guided for is a 20% of a revenue growth for FY26, along with a 13% of an EBITDA margin. Now, what is interesting is the kind of guidance that they've given in terms of where the order inflows are headed. Expectation is for 15,000 crore. This is especially after in November 24, the whole scenario with the MOTIH banning the company for further bid participation for 1 year, that we are looking at this kind of an outlook. Along with that, Nuvama has a hold rating on the stock with a target price of 286. They are banking on the company's improving balance sheet along with higher other income. Also, they are saying that asset monetization going forward remains a key contributor for the business. So that is the overall picture that we are seeing for PNC Infratech. But Mahesh, let me come to you on this counter. What's your view for this?
I think PNC is a good counter for hold from a longer term perspective, I think. So if you're looking from a current perspective, if anyone want to buy, if anyone getting nearby 275, 280, that could be an area where they can add further from a longer term perspective. At that level could be a good buying area. So from current perspective, upside is limited. I think 350, 360 is a upside from a current view. But yes, recently we have seen before some time that they have banned from some contracts. So that was the reason for declining in their revenue and all the other parameters. So from here onwards, I think they can improve further. So 350, 360 level could be keep in mind for upper side.
Okay, so that's the view that we are seeing for PNC Infra. But, let's shift focus to the railway sector. Now, let's pull up stocks like Ircon International, Texmaco Rail, RVNL in trade today. Currently, we are looking at not much of an action in this counter, but recently, in the last 1 week or so, we have seen that this stocks have been in focus, and this is on the back of recent order wins which have taken place. In fact, if you look at the FY26 commentary also, that has been on a stronger side as compared to the overall performance that we've seen in FY25. With most of these counters, investors are also constructive on the rollout of Vande Bharat and metro trains, as pointed out by the management of RVNL and Titagarh Rail as well. So So, but is it too early to kind of cheer these stocks is what we are questioning on, because order execution continues to remain a key for these counters. Even railway companies, they are aiming to diversify beyond the traditional railway business because of margin pressure that has taken place. But it's the outlook for FY26 which has remained constructive in terms of where the revenue growth could be. So that's the overall context that we are seeing for railway stocks in particular. Mahesh, what's your opinion on this sector?
I think railway capex is in line from a government perspective. I think we can see some more aggressive play from government side in the railway sector. So I think from a valuation perspective, we are looking Ircon is a valuation perspective. I think Ircon has a properly valued, fairly valued, and Titagar also fairly valued. So both the counter, if any downside there, anyone getting them, they can be buying opportunity. From Titagar perspective, I think 1,150, 1,200 level could be come in longer term perspective. For Ircon perspective, I think some more upside 250, 260 level, because order book is gaining day by day. So I think our old view was 220, 230 zone, but from order book is gaining in Ircon. So I think 250, 260 level could be coming in. From RVN perspective, if anyone getting nearby 385 410 range, then that is the buying opportunity from RVN perspective. I think 450 level could be 450, 460 level for a capital for a time being for RVN.
Got the view, Mahesh, but one of the key aspects, we also spoke to the management actually of Toyota Kirloskar, where, the crucial rare earth magnets was one of the key issues. Now, there have been a lot of media reports speculating that the supply is still sometime around, July. But let's go across to my colleague Rishabh and see what the management actually had to say about the China rare earth issue.
I'd like to know the process, the update on the R&D center in Bangalore. What's the update on that?
Well, I'm hearing this about from you, the R&D center. So basically what we've been working on till now is capacity enhancement, and we have a third plant coming up at Bidadi with a capacity of 100,000, as well as our greenfield project that is coming up in Chhatrapati Sambhaji Nagar. Of course, we are working towards enhancing the local involvement in developmental activities, but as of now there is no such formal talk about any R&D center.
Right, sir. I think the hottest topic that is currently gripping the automotive sector is, of course, the restrictions from China on the rare earth magnets. What is the sort of situation that is there currently? Are you actively in talks with the government with regards to finding a replacement, perhaps? And what is the sort of stock that is currently there?
Look, there are 2-3 issues here. One, this is a global issue. Second, the government is supporting the industry in a very strong way. We've got excellent support from the government. Third, I think it just throws up, more importantly for us, to realize the message that the Prime Minister, Honorable Prime Minister, has been giving us all, which is to be self-reliant. And towards this, it also points out that the path towards sustainability and path towards cleaner future and energy self-reliance, as far as automotive is concerned, has to be multiple technologies and diversified pathways. Because there are pathways like, let's say, flexi-fuel vehicles using ethanol, wherein we don't have any dependence on any external source for either technology, parts or raw materials. That can be one path. Again, CBG is another. Then increasing efficiencies of our products is another. And of course, this becomes important for battery electric vehicles because motors will have raw materials. But I think this issue goes beyond and also covers ICE. It is a reality that a particular country has 90% of global capacity for magnets, rare earth magnets, and about 85% for the rare earth itself. So this is something the government has been trying to promote and push through its various initiatives, including the PLIs. And I think with collective effort of all, we should be able to manage things.
Right, sir. Like you said, 90% China has decided to flex that clearly with these restrictions that have come in. And you also said that it goes beyond EVs, it also impacts ICE vehicles. What is the sort of impact that you are seeing currently in your personal and in your capacity as the leader at Toyota Kirloskar?
Look, We would just like to say that it's a pan-industry issue. As of now, things are under control, especially with government playing a key role in terms of ensuring that no disruption happens. And I think there is no cause of concern as of now.
Well, that was the management of Toyota Kirloskar talking about the rare earth mineral as well as that key issue to highlight for all automotives. But one of the key aspects and a key NDTV Profit campaign is also on countering the deep fakes. And no, the finance minister does not endorse any investment projects that you can earn 2 lakh rupees in a day. But surely you don't need to hear that from us, right? Well, think again, because the fact is that deepfake scams are on the rise, and we at NDTV Profit have launched a campaign to help you spot these fakes. Let us first tell you what a deepfake video is and how to identify it.
Scamsters have shifted their methods of swindling money from us. They are increasingly moving from traditional phishing to deepfakes. Deepfakes are being leveraged to combine cloned media, synthetic endorsements, and AI-generated deception into a singular scalable threat.
Propagated ads which promote these false cryptocurrencies, and these links are embedded as part of news.
These deepfake scams are using fake videos of national leaders, tech icons, and institutional brands to target unwitting viewers into phishing rackets. So how do you spot a deepfake?
The lip sync, if you look at this video, you can make out there is a lip sync. So the audio narration which is happening versus the lip sync, there is some amount of difference. And you can make out that this video, the content which is being propagated, it is written, the English, the way it is put forward, can give you cues that this is not a genuine link.
Here are some classic red flags. Always be wary of unrealistic returns. Be wary of screenshots that are being used as proof of returns. Lastly, don't give in to urgency tactics. The next time Narayan Murthy asks you to invest your life savings into a get-rich-quick scheme, just know that it's too good to be true. Because the real Murthy would probably ask you to work 80 hours a week before you can even think of getting rich.
Well, but scamsters are dialing it up with AI-powered deepfake messages. How can you avoid falling for such scams? My colleague Alex joins in to spot the fakes and how to get over them. Alex.
Spot the fakes with NDTV Profit. This is an important campaign that we're running, and let's tell you why that is. And you probably come across a few of these videos, but artificial intelligence and deep fakes increasingly are helping scamsters be much more compelling with the messages that they have to send out. Even the Prime Minister has been used, the Finance Minister has been used. In fact, there are top tech icons from the global space that have their deep fake videos circulating. Listen in.
Earn this money in a month, something too. But what about a banker? It's an amount they can make in a day without a problem. It would be a lie to promise you millions without working, like others.
So what are we talking about? We're talking about a situation where these prominent TV personalities are being used to circulate a wrong message. You might even be getting direct messages on your social media accounts. Now, what do you need to do to ensure that you aren't falling prey to this? First of all, understand that equity returns over the course of the last 5 years have been incredible, and that's because of the bull run post-COVID-19. Some people have even experienced returns in the range of 20 to 25%. But over the long term, a return of 20% is absolutely spectacular. Take Warren Buffett, for example, who's seen returns of 20% over the period of 1965 to now. So let's talk about how you can identify a deep fake. What do you need to look for? First of all, the promise to double your money very quickly. It doesn't happen so easily. So that's the first big red flag. The second thing that you should watch out for is the fact that there could be a situation where there is an issue with the lip sync, or there's a person that is speaking in a language that they don't normally speak about. And finally, you can go to the source of the person, where you can go to their social media platform and you can figure out whether they have sent this message out in the first place. And finally, what you need to bear in mind is that there will always be an urge to do things quickly. The scamster will get you to try and click a button very quickly because they'll say that the time is running out for you to make an investment. That is what you should not fall for, because you should always have a considered approach to making an investment. So a few very simple rules for you to follow. Of course, this sounds very simple and very straightforward when we talk about it, but a lot of people fall for these scams on an ongoing basis.
Well, thank you for that, Alex. But that's all the time that we have in this edition of Profit Top Trades. Stay tuned for NDTV Profit. India Market Close comes up next.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The markets move fast,
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
the answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. You're watching India Market Close. I'm Harsh Saita. With me is Dheeraj Shah. And over the next hour and a half, some interesting conversations and talking about some stocks which are really standing out in trade today and have stood out over the last week or so. Let's talk quickly about where the Nifty is at. We're around 0.1% higher odd on the Nifty. So it's a decentish, apologies, 0.4% higher on the Nifty. So 24,700 currently being held. We are around 80 odd points above yesterday's close. Let's also look at how the bank Nifty is faring absolutely flat. I want to look at Nifty contributors as well, because some large caps contributing decently even today. You can see an ICICI Bank, a Reliance and HDFC, but nothing meaningful per se among those. Eternal is one which is standing out among all of those because 17 points with the weightage that it has, clearly reflecting the kind of gains the stock is making today in trade. So fairly decent day and fairly decent week on an Eternal. Stock is perked up 12% as we speak. So very, very strong day for apologies. Stock perked up 5% in trade today at least. So we've got a couple of those names moving around, Neeraj.
Yeah, most certainly. And very quickly, before we get to our guest as well, remember the broader market outperformance has largely stayed true for a better part of the last few days, weeks, and in fact, I could argue months. Some pullback in banking today with the likes of BOB, Federal Bank and the others looking a bit soft in trade. And on the other slide, the flip side, on the broader end of the spectrum, what is doing well? Cochin Shipyard up about 11%, Brainbee is about 9%, some strength in PNC Infra on a brokerage note up about 7%, and the likes of Welspun Corp, Data Patterns, etc. Fairly disparate, if you will. I don't see a particular theme out there in the markets today. It's a clutch of real estate plus defense plus NBFCs, which are doing well for themselves in trade. Now, on to more news and addressing key pieces of news. Sulajja Ferodia Motwani, founder and CEO of Kinetic Green and chairperson of the FICCI Green Mobility Committee, joins in right now on the show. Sulajja, good having you. Thanks so much for joining in. I would just a broad macro, Sulajja. We know that the Chinese rare earth ban or unavailability or low availability in the future is going to cause an issue. How big an issue could this be? Because we've heard comments from multiple stakeholders saying that this is a really big red flag.
Right. Well, good afternoon and happy to be on your show. I think you rightly pointed out that this is going to be a fairly severe crisis for the Indian auto sector very soon. It's important to note that currently China accounts for 70% of the global rare earth metals, but also 90% of the global rare earth magnets, which are supplied all over the world. And these magnets are used by auto industry in various components. For EV sector, for example, it's lifeline because the electric motors use the magnets, e-axles require the magnets, but also in the ICE vehicles as well. There is a use of magnets in sensors, in ignition coils, and many other components. So I think that this issue needs to be resolved, failing which auto industry and EV industry will face major production outages beginning as early as middle of June. And the issue therefore has been flagged off by the sector, by the industry to the government as a serious issue.
Now, Sulajja, the problem with this seems to be that it's almost impossible to predict what can happen, because I would presume it's a G2G conversation, a policy move that needs to happen from China's end for a bunch of economies and not just India. So, one, what is it that the trade body might be doing in order to make representations, if you will? And what is it that you hear could be happening at a G2G level for this to happen?
So what China has done, the Ministry of Commerce, China has issued a notification in the first week of April, which now requires certain export permits for the exporters of China to export their magnets, which was not the case before. And this is based on the end-use certificate that their importer has to obtain. And this process is extremely long. It requires the importer in India to provide, application, get approved by DGFT, then by Ministry of External Affairs, which is then subsequently to be endorsed by Embassy of China here, and then sent to China for the approvals, where also there are multiple layers of approvals. And as of now, not a single end-use certificate has been approved. So I think it's important to note that since April first week, no magnets have been imported in the country. So therefore, the issue has become chronic. I do believe that it's a geopolitical issue, and it would require negotiations and discussions at a G2G level. If you remember, during COVID, we faced similar issues on the semiconductors, and they were resolved by dialogue between the governments. And I'm hopeful that in this situation, also considering that the auto sector is one of the largest employers and a large part of India's GDP, I think that the issue should get resolved through discussions and bilateral talks. The Indian auto sector has also proposed that they would send a delegation to China to meet with the industry bodies there, as well as to meet with the government decision makers and explain the importance and emphasize the need to restore the commercial relationships as well. I think efforts at various levels will yield fruit is our hope. And we are really trying to work at all levels to promote a solution.
Okay. You did mention earlier in this conversation, this is Harsh here, Sulajja. Earlier in the conversation, you suggested that probably starting the 15th, you'll start to see a drag with regard to production. First off, where are some of these rare earths most required? Is it within the EV space, the ICE space, two-wheeler, four-wheeler? Just give us that perspective.
Of course, for EV, as I said earlier, it's a lifeline because EVs require electric motors, especially the two-wheelers and three-wheelers, where the magnets are an important part of the, the motor assembly. And even as per government's localization and PMP guidelines, the government of India has permitted import of magnets within the motor while everything else is pretty much localized. So that shows the importance and reliance on this import supply chain for the magnets. So for EVs, we cannot produce EVs without the magnets which go into the motors and the e-axles required for the electric three-wheelers. But that being said, even for the ICE vehicles, as I mentioned before, magnets are required for many components like speedometers, electric water pump, ignition coil, automatic transmission kits, sensors. So there are many areas where these magnets are required. And depending on the stocks in the supply chain in India, at different levels, different companies or component makers would start facing serious shortages. It's estimated that these would begin by as early as mid-June. And by July, it's expected that it would lead to very severe production hindrances.
And what are the alternatives at this point, therefore? Are there absolutely any, both domestically as well as outside of China, globally?
So, Minister of Heavy Industries had called a meeting of stakeholders on June 3rd, a couple of days ago, and we stressed the importance also to work towards localization of the critical mineral rare earth materials. In fact, FICCI also, under the leadership of its ex-president, Mr. Shubhrakant Panda, has submitted a report on positioning the rare earth materials, both for the magnets and eventually also for the batteries, and their supply chain, as a strategic sector requiring a lot of P2V, P2P kind of effort for collaboration. And I'm sure that these would result in the medium to long term. But given that this will take 3 years or 4 years, I think it is important that we find some kind of a short-term solution. And I think in the short run, resolving the situation with China seems to be the most practical way ahead. There could be certain other countries, from where magnets could be imported. As I said, China controls 90% of the supply chain. So there's a 10% supply chain available. But you can imagine that even vehicles would require to be validated, integrated with these new supply chains, and availability would still be a constraint. So I think we do have to find a solution at a geopolitical level, given that this is an important part of the commercial relationship between the two nations.
Sulaja, just one more question. Is there some moves that Indian companies or India has made in order to start this ecosystem? I hear you. It will take maybe 3 years, 4 years and a lot of planning, but is there something that has started already?
So let me say that the government of India has been emphasizing on Make in India and on what we call the PMP, phase manufacturing roadmap guidelines to localize, of course, not only EV but entire automotive supply chain. And a lot of moves are in the works. So local component industry has been localizing, building the technologies, and now I think, for example, most of the key components are made locally. The battery cells are going to be made locally beginning as early as 2026. But I do believe that we are at least 2 to 3 years away from this particular area, which is the magnets or the other rare earth, material-based products. So while many actions are in the pipeline, but on this particular area, I would say that we are currently vulnerable. And therefore, we would require a short-term and a long-term solution both.
I'm just reiterating, Sulaja, I think I heard you say, if the current impasse were to continue, we are looking at a serious problem in a couple of months, right? I think I heard you say by July or something there could be some serious issues.
I think so, depending on the supply chain stock positions. I think depending OEM to OEM, the problems could start as early as mid-June, but they would probably reach a severe situation by mid-July is the estimate that we have as industry body. So we are hopeful that the issue would get addressed through bilateral discussions between the G2G levels, as well as through whatever efforts we are making as an industry and the industry bodies that are putting all their efforts, to address this issue.
Okay, thank you so much, Sulaja, for coming in and giving us that perspective. Extremely critical perspective at this point, frankly, and Neeraj weigh in, because if at all production were to start taking a hit starting mid-June, early July, that is not too far away. That's point number one. And you could start to see an impact on pricing and on consumers as well. So all of that will start to play out likely.
Yeah, I mean, no, this is, I mean, it's difficult to figure out how this will shape up. It is bad news. How much of a bad news? One remains to be seen. I don't know how much inventory lies, how much of production already done, and therefore that lasts for how long. But yeah, I mean, if it doesn't hit the regular sales in the month of July, and if this impasse continues, and even if the inventory gets depleted in 2-3 months, you're looking at a serious issue 3 months down the line. So yeah, FY26 could be a serious problem for two-wheeler companies and EV-focused four-wheeler companies as well. Maybe Maruti escapes this slightly more. They're slightly better than the others. But I think I heard Suloja Motwani say that even ICE engines have some
quite
requirements.
a few components. She named all of them.
Yeah.
Quite a few components have that. Anyway, so that's of course with regard to auto. No big moves per se on the index. Let's pull up the index. Let's pull up the constituents on the auto index as well. Try and see as to whether there is any skew, the Nifty auto index. And there you go. So of course, tire makers largely insulated. You also have a Samvardhana doing okay. But outside of that, you're seeing some bit of pressure across the board where Indian manufacturing or OEMs are concerned. You're seeing some pressure. But let's bring on board Amit Goel, co-founder and chief global strategist at Pace 360, to talk to us about what he's seeing both domestically in the Indian market as well as globally. Hi Amit, good afternoon. Good having you. Want to start off by first understanding. You did call a rally. When we spoke maybe a month and a half back. That's played out, at least on the Indian market. So congratulations for that. How are you placed now, and what are you anticipating? What are you penciling in?
Hi Harsh, thank you for having me on. My understanding is that the rally has largely played out by now. And Nifty, if you note, for the last 20 odd days has largely been sideways. So it made its rally high around 3 weeks back at 25,100 odd. And it is still about 300-400 points lower than that. But in the meanwhile, the small caps have been absolutely, it's been a slow burn, but it's been a massive rally in the small cap and mid caps over the last few weeks. And in fact, we made a new rally high today in BSE small cap index at about 53,400, 500 odd. My sense is that the rally has largely played out. We are now bearish for the medium term and for the longer term. And we believe that the global recession, which has been much talked about, the probabilities of the global recession went up in April when the tariff wars were at their peak. But many Wall Street banks have taken down those probabilities in the last few weeks. But my sense is that a global recession and a severe slowdown is literally lurking around the corner. So I think we are going to be in one within the next 6 to 9 months. And yesterday's data in US, whether it was the jobs data or the services data, they are all pointing in that direction, that a slowdown is now gradually it's now happening. It has begun to happen, and I think it's going to unfold over the next 2 to 3 quarters.
Okay, and how does India stack up there, Amit? So what's the sense like with regard to India, the index, the benchmark?
So I think Indian market has yet again become very expensive. And so, the comfort which we had in March and then in first half of April, where we thought that the markets have, where we thought that the markets have come down, the valuations were looking comfortable. There was a lot of panic, and we decided to go long, and we decided to increase our allocation to equities very, very meaningfully. We don't feel that confidence at all now. So I think there is euphoria yet again. The valuations are very, very steep. And my sense is that while the last quarter's GDP growth has been pretty good in India, But then there were a lot of factors. The fact that the government opened its purse strings after 2 quarters of relatively tepid spending, then Kumbh, and then of course the last quarter of the financial year. So a lot of factors came together to give us a bounce in the Q4 of 24-25. But I see this growth momentum slowing down, and I see the GDP growth numbers now gradually going down in India. I'm not saying that we are going to go down to a 5% growth within the next 2 to 3 quarters. I think it's going to happen very, very gradually. But in case the global slowdown becomes more serious, which is my base case over the next 2 to 3 quarters, my suspicion is that the Indian numbers would also become more tepid because the global cycles are a lot more synchronous than they used to be. So India is also not looking great from an economic standpoint, from a corporate earnings standpoint, and from a valuation standpoint. We are literally one of the most expensive markets in the world even now. So I don't think things are looking that great for India if you were to look 2 or 3 or 4 quarters out. And my suspicion is that it's going to be a relatively longer recession. It's not going to be a blink it and you miss it kind of recession or a bear market. It's going to be a slow and protracted recession and a bear market. So things look pretty challenging ahead. And in my opinion, it would not be a bad idea to take money off the table, reduce your allocation to equities, and then wait for the next best opportunity to buy into a correction and then again book profits when the market normalizes, similar to what we did between March and May of, last 2 months.
So, are you sitting on a lot of cash right now, Amit? You seem very bearish.
Yes, I am. I am quite bearish at the moment. We have, but I would not say that we have cash. So what we have done is we have taken some calls on long duration in India, and we have put a lot of money into corporate bonds which are maturing in the next 2 to 3 years. So our bond portfolio is giving us a carry of about 10.5 to 11% right now, and we are pretty happy with it. So we don't have cash as such because it's not that we put money into a liquid fund. We are getting a pretty handsome carry of about 10.5 to 11% on our portfolio. We are very happy with it. But of course, we would want to point out that if something goes wrong in the world economy, if the tariff wars were to begin again, or this problem on the rare earths becomes more serious, or any other flashpoint in the geopolitical situation happens, then we would be back in the market in case there is a deep correction. But that is the caveat. We would buy only if there is a deep correction, and that would not be from a long-term standpoint. We would buy it from a short-term to a medium-term standpoint. But yes, as of now, my equity allocation is about 15%, and rest of the money is invested into fixed income.
Okay, Amit. Amit, what do you suggest? Should one move to fixed income at this point as well? Is it still looking as lucrative? Because we've seen a slight bit of tweak on the bond yield.
I agree with you, Harsh, that in the very, very near term, we do not see enough catalysts for the long-term yields to come down drastically. It's probably not going to happen in the next, let's say, a couple of months. But we have invested at a slightly higher yield, so we are sitting on some profits there, and we would want to ride it out because my sense is that in the second half of this calendar year, and particularly in the last 4 months of this calendar year, when this global slowdown becomes more serious, there are going to be a series of rate cuts from in US, and of course, which would open the possibility for the emerging market central banks also to cut interest rates. So my sense is that duration is going to play out over the next 1 to 1.5 years. we can probably ride this. It's not a great entry point as such right now, but we would want to ride this for the next 1 to 1.5 years. And my rest of the money is, of course, in corporate bonds, where we would want to buy equities if they were to correct, or we would also want to buy gold if it were to correct by about 15% or so from the current levels. So we see opportunities outside the fixed income space, but only when a correction happens. Right now, equities and even gold is relatively close to the higher end of the spectrum, in our opinion, and the upsides are much less than the downsides.
Okay, thank you so much, Amit, for coming in, speaking with us. Point taken, view taken, and we'll let you go on that note. Let's quickly zoom back in, straight into Indian markets. Kush Bora joining us. Kush, it's been a bit of a topsy-turvy day. We've fallen nearly 200 points from the day's high. What levels are you looking at? How are you viewing the Indian market?
Hi, Harsha. Very good afternoon.
Good afternoon.
Storm in a teacup kind of a situation. A storm in a teacup. We've been all over the place, but pretty much flat, at least on the bank Nifty. You see, we've not gone anywhere, and in the broader sense of things, on the Nifty also, we've not gone past that 25,000 resistance band. In fact, 24,900 is where we dipped from. I think this is going to continue, perhaps one more day tomorrow, once we have clarity, on the RBI outcome on the tomorrow, correct? So once that happens, maybe Bank Nifty will start to give some traction. In all likelihood, it could be on the upside. Once that happens, the leadership issue that I have been referring to, might get addressed. So which sector takes the lead? IT hasn't done too much. Bank Nifty consolidating. So with that in mind, the bias for the indices remains positive, but I wouldn't really recommend a positional trade just yet, because as I said, they aren't going anywhere. You need a directional breakout for a fresh trade to be initiated. If you have a long position, Nifty, Bank Nifty, both of them, you could continue to hold your long positions on the Nifty. The support zone is 24,400 to 24,500. That remains. On Bank Nifty, that is 55,000 to 54,800. That still remains. So bias still positive, direction not so much, momentum missing. That's why I wouldn't really initiate a fresh trade. But if I were to, then it would be on the long side.
Okay, Kush, your picks therefore?
Both of them on the long side. One of them is Fortis Healthcare, has been doing rather well since the last quarter of the last calendar year. You've seen a steady gradual uptick on this one. Could continue to 770, 799 levels. 710 is your stop loss. Kirloskar Pneumatic is the other one, quite opposite to Fortis. This has seen a good recovery. Underway today, it's above the 200-day moving average. Trading steadily. Volumes also on the rise. So for targets of 1370 and 1410, Kirloskar Pneumatic is a long with the stop loss around the 1290 mark.
Okay, so those are Kush's calls as well. Kush, just stay put. What we're going to do is we're going to go in and listen in to Wakhat's Habil Khorakiwala, who says that cost reduction has actually improved their margins. Stock was perked up, is off the day's highs, but he speaks about the company's expansion plans going forward. Listen in, we'll step into a short break and thereafter take Kush's views on pharma and Wakhat. Stay tuned.
See, one of the reasons for our EBITDA performance was our cost reduction significantly across the organization, and that is paid off. But I think equally important and even more important is new drugs progress we have made. We have completed phase 3 clinical trial and we are filing US FDA sometime in August. In India, we have already filed, and we have launched nifedramycin last month. So collectively, I think one would see a lot of upside coming out of our new drugs. Some will come current year, but mostly dramatic change one would see in 26-27.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need.
Back with India Market Open right here on NDTV Profit. I must say, the capital market pocket is doing very well. It's in fact, along with defense, amongst the most well-traded pockets today in trade. BSE, yes, per se, is up and about in trade. CDSL 4.5%. I wonder if the asset management firms, brokerage firms, Angel One up 4.5%. Nuvama and Motilal maybe sulking a little bit. MK might be higher. So keep an eye out for that bucket. I think the capital market space is doing very well. I thought pharma would be the sector of the day, because if you look at what's turning out to be quite the stock of the day because of the move and because of the news flow is Dr. Reddy's. But no, pharma is kind of a bit below. However, Dr. Reddy's started off the day as the best performing stock on the Nifty, and they signed a deal with Alvotech for a cancer drug. Hiral Johnson with more on that. Hiral.
Thank you so much. And rightly put, it is a sector of the day with the kind of news flow that is coming in as well. We did speak to the management of Spark offline, so that is going to be another one we'll be watching out for. But if you have to look at Dr. Reddy's and Alvotech, their deal overall has made investors absolutely bullish. In fact, they've inked this deal with Alvotech for one of the cancer drugs. The companies will go ahead and co-develop, manufacture and commercialize a biosimilar candidate that is to make Keytruda. Now, Keytruda is a biological name. It is actually a blockbuster drug as well for a cancer immunotherapy treatment. Originally, this was developed by a US pharma major, which is Merck & Company. And if you have to talk about the kind of potential it has, in 2024, clearly for Merck, it generated revenues to the tune of almost $29.5 billion. So that's the kind of opportunity size they are sitting on. Now, overall, if you talk about this licensing deal, it marks a strategic expansion for DRL's biosimilar pipeline, which they've been expanding as well. And now, this is subject to certain exceptions. Each party will have right to commercialize the product globally. Talking about what analysts are making out of it, they're expecting this to be a long-term value driver for Dr. Reddy's, and the commercialization is expected to be several years away though. Apart from that, if you talk about the recent news flow as well, you have semaglutide, that will be a growth driver for 27, and a 25% EBITDA margin growth is what they are looking at in terms of FY26. If you talk about what the CEO of Dr. Reddy's has also said is that they are happy to collaborate with Alvotech for the biosimilar, and it actually demonstrates their ability to develop and manufacture high quality and affordable treatment options for patients worldwide. So that's the commentary coming in from Dr. Reddy's. Simultaneously, if you have to look at what the CEO of Alvotech has also said, they have also indicated that they are also pleased with this kind of a collaboration, and it actually goes ahead and demonstrates that company's ability to leverage its dedicated R&D and manufacturing capacity for biosimilars. So those are the two things we're picking up so far. Apart from this, just let's quickly look at what HSBC has to say in terms of Dr. Reddy's. They've upgraded the stock to a buy. They have a target price of 1,445, which is almost a 15 to 16% upside. With regards to what HSBC is indicating is that the current supply of semaglutide remains highly constrained versus what the demand is, and the opportunity size will expand 2 to 3 times over the next 2 to 4 years, and they're expecting the launch to happen in early FY27 in Canada, Brazil, and India. So that's why HSBC is positive, and you have the partnership which is coming in with Alvotech, a great opportunity for the oncology biosimilar.
So Dr. Reddy is buzzing. You have a clutch of movers this afternoon, and it's looking very, very interesting. Thank you for that, Hiral. Welcoming Pankaj Pandey now to the conversation. He's head research ICICI Direct. Of course, Kush Bora also with us. He's founder kushbora.com. Welcome to both of you, and thank you so much for speaking with us today. Pankaj, just want to ask you about some of the defense plays which are roaring again, and Cochin Shipyard comes to mind. Of course, there's news with Garden Reach as well. So let's take a look at what Garden Reach is doing. But Garden Reach, Cochin Shipyard, these are some of the plays which are back in focus. MTAR Tech is another one which is back in focus. Is there something that you're looking at specifically in this space? Even a Hindustan Aeronautics is surging today. A Paras Defense is up and about. So you have this whole theme coming back in action after days on end of being right up there. Your views on this, Pankaj?
Yeah, hi, good afternoon. Thanks for having me. I think overall defense space structurally looks good because given the defense production target of 3 lakh crore, overall sense is that you could be experiencing about a high teen kind of a growth. You pick any defense stock, order backlog is somewhere about closer to 6 times FY25 revenues. But we've seen a good amount of rally in most of the stocks. For example, even a company like Cochin Shipyard, I think on a forward basis, FY27 basis, it's trading somewhere about 48 times. Especially the shipyards have done very well from a price performance perspective, or you have niche players like, say, Data Patterns, which also is trading somewhere about 64 times. So there's some names which are relatively attractive from a valuation growth perspective. So one of them is obviously HL, where the stock is trading under 40, while it has execution challenges in the past. Overall sense is that things are looking a lot better compared to what we have seen historically. Similarly, a company like Midhani looks good. Management is guiding for about 20% kind of a growth rate. Last few years, they have hardly delivered anything on the growth front. And similarly, I think Bharat Electronics is one of the most stable performers, and it's trading somewhere about 38, 39 times. So one needs to be very selective in the defense as a space. Since this space has already done so well, I wouldn't recommend to sort of chase all the defense stocks at any prices.
Okay, the other stock that I want to pull up is Valor Estate, and this came out in an exchange filing a short while ago. You're seeing realty stocks also buzzing today. So Valor Estate has an LOA from the BMC for development of urban resettlement and housing project in Zone 4. Now, Valor Estate, also known as DB Realty, so keep that in mind. The project has 13,374 affordable housing tenements for persons covered under the scheme, that's the PAP scheme. The GDV, the gross development value of this project is nearly 7,000 crores, so quite a big one. The project is substantially revenue and profit accretive, says the company. They have a 75% economic interest in the company. So this is, in terms of redevelopment, a big bonanza in a sense for Valor Estate. Pankaj, in the realty space, I mean, we had a great conversation with Prestige today on the channel, and he says it's going to be his best quarter ever. Valor is another one which has some news flow coming in. Any favorites here?
In real estate, I think the premium leg of the market is sort of doing well, and being an interest rate sensitive, overall sense is that things will keep getting better. But in real estate, we are very selective because I think promoter pedigree makes a lot of sense to sort of look at. So we are quite conscious of that fact, and accordingly, what we like is something like DLF in NCR region, and Max Estates is another company which we like from an NCR region perspective. From a Mumbai perspective, Aditya Birla Real Estate is something what we like, and Arun Smart Spaces is another company which we like. So real estate as a space is sort of looking good to us, but then again, yes, one needs to be selective again here.
Okay. Now, like we said, one is the capital market plays which have done well. Real estate has done very well, by the way. Nifty Realty is actually the second best performing index. In fact, it just keeps on bobbing between that and defense. But I want to stick to pharma and the kind of moves, Kush Bora, that some of these names have made. Now, maybe you spoke about this briefly over the last 2-3 days, but today, from a Wokhard to a Glenmark to a Laurus, all of them have done well. So, remove the Dr. Reddy's and the large Nifty names, the non-Nifty names, the traction that we've seen today. Is there more in store possible?
And Neeraj, most certainly there is, because a lot of these names have done well. I wouldn't paint the entire sector with the same brush because I don't really find too much comfort in Sun Pharma, Lupin, and Ciplas of the world just yet. But if you look at something like a Glenmark, I think it was on Tamanna's radar this morning. It was our call in the closing show yesterday as well, with the second target of 1575 that's being hit currently. But I think despite that, there is still some traction on the upside. So if anyone has that, you could well continue to hold for targets of 1625 and higher. The other couple of stocks that we've discussed, on the channel as well, are Eris Life Sciences, Sequent Scientific. Some of these names, continue to do well, continue to impress. Consolidation also is with a positive bias. So yes, I would be interested in this sector for sure. And the likes of Glenmark, Eris, Sequent, some of these names definitely on our radar.
Okay. I'm guessing Pankaj may not have a view on Sun Pharma Advanced Research, so I'm going to push on this because it's not a stock that is very heavily tracked per se, right, Pankaj? I'm guessing you wouldn't have a view on Spark.
You're right.
Yeah, okay. Kush Bora, Spark, very, very choppy, very volatile. We got an exclusive conversation with the management as well, but just the kind of moves that it has made in the last 2 days, is there a trade here?
I'm afraid not, Neeraj, because this stock is no stranger to cuts of about anywhere from 25 to 30%, 35% also, when the news is not right. And certainly we've seen those kind of moves play out already to a great degree. While it is showing some spark, pardon the pun, had to put it out there. But while it is showing some spark today, I wouldn't really be a buyer in it. I think for a major support zone, you should look at 145 kind of territories. If it again falls there, holds up, then perhaps the risk reward ratio might become a little attractive. But as of now, there is perhaps some more selling pressure that might come in, over the couple of days. So, and especially just since we've discussed, you've got good momentum trades like Eris and Glenmark going your way. I wouldn't want to take a contra bet on Spark just yet. Maybe let it find its feet in the next couple of sessions and then reconsider.
So Spark, no go, says Kush Bora very, very clearly. Just a few of the rate sensitives I want to talk about, Kush, and I asked this question to Pankaj about realty because realty is what's buzzing today. Look at a Sobha, look at a Brigade, look at a Prestige. We had that conversation with Prestige. Valor as well. Brigade is one of the top gainers, about 6% up. Do you see a further positioning over here? Because the likelihood is that you will see a rate cut tomorrow announced by the Reserve Bank of India. What would be a good buy for a BTST kind of a trade?
So, Tamanna, I think just a couple of sessions ago, Neeraj and I were having this conversation, and he was curious about the southern real estate developers, and Prestige didn't pop up on my list. But I had Valor Estate and Brigade Enterprises, the two shining stars for the day. Both seem to be doing well. And the third one actually on my list was Oberoi Realty. Now, what's happened is that both these stocks have had an excellent run in the last 5 sessions, or maybe about 10 odd sessions. Coming close to overheated territories, now I wouldn't recommend a fresh trade, but with the kind of momentum that you've got going, you want to continue holding on to these. Now, as far as a BTST kind of a trade goes, you should look at an Oberoi Realty. Close to the 200-day moving average at 825, 830 thereabouts. but good traction, good good medium-term uptrend going for it. So if someone wants to consider with a stop loss near the 1760 mark, I think this is still a good positional trade to be made. So Oberoi Realty is something that still has some traction on the upside. Brigade, Valor, DB Realty, as I said, if you have, continue holding on with trailing stop losses.
Okay, very quickly on another pharma company that we've been talking about, and Spark is something that Neeraj asked Khushbu a few minutes ago, but now this is why we're talking about it. They're back in the green after falling 20% yesterday because its psoriasis drug trial failed, and this could be one of the movers. We have exclusive comments from the management talking about what went wrong, but more importantly saying that the road ahead doesn't look that bad. Hiral joining us with those exclusive excerpts.
Thank you so much. Clearly, as we talk about it, Sun Pharma's experiment drug failed trials, and that's the reason why the stock corrected in yesterday's session. Now, we spoke to the management of Spark, and what they have exclusively told NDTV Profit is that, one, the underdevelopment drug has unmet medical needs. But apart from this, what the company is trying to do is plug in the gaps. Now, all the costs and impairment related charges to the development, which was a concerning area as to what will happen, they've said that is something which has already been taken into consideration, and there will be no further charges that the company will have to actually encompass. Moving on, if you talk about the cash flow from licensing of the current assets, that which could have gone down because of this trial failure, that will be offset by the new opportunities that they are sitting on. So all the lost opportunity with this current drug which has been used to treat psoriasis and eczema will be taken care of by the other opportunities. They are looking at multiple opportunities which are under clinical assets and preclinical programs, and they are seeing a significant cash flow that could be coming in from there. One other important aspect that they've indicated is they're not anticipating any further capex for the current pipeline of assets which are under development. Multiple of them, if you'll see on your screens as well, where SBO 154, which has been accepted by US FDA. Apart from that, SCD 153, which is treatment for alopecia, that is also completing phase 1. It's now entered phase 2. SCO 155, which is an oncology asset that has been licensed to Viziox Pharma, and it will go to US FDA in FY27. And very lastly, SDN 037, which is for treatment of pain and inflammation post-cataract, that will be submitted only after probably 27, 28. That's the pipeline that they're looking at so far. But a positive over here where there will be no further costs that will come in, and the lost opportunity will be made up by the ones which are already in their pipeline.
Okay. Thank you for that. So that's the word on Spark, and of course Pharma in focus. But we're talking about rate sensitives. That's because the big driver for the markets tomorrow could definitely be what comes from Governor Malhotra. The Indian Central Bank's Monetary Policy Committee announcement will come tomorrow, and NDTV Profit has done an economist poll which suggests a 25 basis point cut, which will make this the third successive repo rate cut since February. Pallavi Nahata joins us with more. Pallavi, people are throwing out the 50 basis point rate cut possibility out there as well.
Absolutely, Tamanna. So, like you mentioned, according to a poll of economists by NDTV Profit, the consensus expectation remains that of a 25 basis points rate cut, though some economists, and that includes Soumyakanti Ghosh, the Group Chief Economic Advisor at SBI, have not quite entirely ruled out even a 50 basis points rate cut. And the rationale for that is just the current setup. So, we've recently seen GDP growth data come in for Q4 of the last fiscal year as well as all of the last fiscal, and GDP growth rose to a 4-quarter high of 7.4% in Q4, while GVA grew a tad slower at 6.8% in Q4. For the full year, GDP growth had come in at 6.5%, broadly in line with the second advance estimates by the government, and also the slowest pace of growth the Indian economy has seen post the pandemic. This at a time of consistently declining inflation. We've seen retail inflation fall to 3.16% for the month of April. That's actually the lowest since July 2019. And the de-acceleration in that trend continues to be led by food and beverage inflation, and specifically within the contraction in vegetable inflation. Even for the ongoing fiscal year, the RBI projects headline inflation at 4%, with Q1 at 3.6%, and there is a fair chance that we will see some undershooting on the RBI's full year target. What has also changed from the last MPC to this one is, of course, the transfer by the central bank to the government that's come in at 2.69 lakh crore, which means the ample liquidity for now, and possibly pushing out the need for any OMOs by the central bank towards the second half of the year, not so much currently. So, all in all, a perfect setup for yet another rate cut, likely 25 basis points. Some economists not ruling out a larger one as well, especially given that this year, monetary policy is largely expected to do the heavy lifting in terms of continuing global uncertainty and trend GDP growth being below. It's also actually the first RBI monetary policy which will be attended by Poonam Gupta, the new deputy RBI governor in charge of monetary policy. So that's also something we're going to be watching out for.
Okay, Dheeraj Nim joins in. He's economist and forex strategist at ANZ Research. Let's get his view coming in. Dheeraj, are we poised for the possibility of a big bang by the Reserve Bank of India tomorrow? Of course, that's what everyone hopes for, but do we have the fiscal room for it?
Well, I mean, my expectation is a 25 basis point cut, and I think that a 50 basis point is unlikely for several reasons. One, we have just begun with the monsoon season, and we still don't know how it would completely play out. And until the end of season, we will not have that clarity. So delivering a 50 right away, I don't know how prudent it would be unless we really know what the spatial distribution of monsoon and its impact on food prices, etc., is going to be. The second bit is about growth. Look, if anything, I think the economy is doing better than most of us had expected, at least me. And I think the Reserve Bank of India stands very vindicated on their stance on growth. So where is the urgency to do a 50 basis points right away? The third point is that, the Reserve Bank of India and the Monetary Policy Committee, they have to be forward looking. And we've recently written about it. And I think the acceleration of core inflation is something to reckon with. And even excluding gold, we believe that core inflation by the end of this year, that is by Q4 2025 and in Q1 2026, could be above 4% and towards 4.5%. That in a way could be a bit of a tolerance threshold for the Monetary Policy Committee. So I really think that delivering a 50 now may not be a very prudent step, but going at it one at a time could really do the job better.
Dheeraj, what's the sense like with regard to the monsoon? Because a lot of that will weigh on how the RBI or how the RBI views the economy as well. The monsoons have been healthy, but basis your experience and your study, what's the likelihood of that actually playing out all the way through the season till September? And what does this lead to in terms of outcomes on the economy?
Well, a couple of points there. Look, we've had a bit of an early start to the monsoon this year, which is good in a way because it sort of, cancels the impact of potential heat waves that were predicted a couple of months ago. We also went into this cropping season or going into this cropping season with better soil moisture, which improves their ability to withstand adverse weather events in case they occur. But at the same time, we really don't know what will happen. One thing I'm worried about is does an early onset of monsoon also means an early departure, and also the spatial distribution of monsoon is what really matters in terms of, crop productivity across many, many states. So we will have to wait and watch for it. Look, from a historical viewpoint, I think the rainfalls over July, especially late July and early August, are pretty critical for the Kharif crop. And I think we will have to wait and watch what happens there.
Okay. Is your base case is 25, but for the rest of the year, Do you pencil in 50? Do you pencil in more than 50 because of the low inflation that is very likely in the next couple of quarters?
So a 25 basis point tomorrow, a 25 basis point in August, and then I have a tentative 25 basis points in October, which was in my baseline because we had factored in a bit of deceleration in growth due to global growth conditions on account of tariffs. At least there has been some positive news flow on that front, and it seems that global growth recession may not be as hard as we were expecting. So I think the second 25 basis point cut from tomorrow would possibly be tentative on growth. And to be honest, I really don't think we have an absolutely clear direction of where growth is headed. While your Q1 GDP data, even after accounting for net indirect taxes and other factors, was actually better than expected, the high frequency indicators do not seem to be gaining a lot of momentum for me to be convinced that growth is actually headed higher. So it could possibly be below trend. So I do have another 50 basis points after tomorrow's 25 basis points cut in my baseline. But of course, the last cut, I believe, is quite tentative on growth conditions.
Okay. Thank you for that, Dheeraj Nim, their economist and strategist at ANZ Research, and saying that 25 basis points is what he expects. That seems like the sensible call. But there are a couple of strong voices predicting 50. I'm not saying it's going to happen, but a bumper bonanza like that, if ever we were placed in a position to do it, we are, and we have a governor who doesn't seem like he's afraid to pull the punches.
Yeah, or maybe a 35.
A 35, midway mark, better than expected.
Yeah, I mean, it could roll out either way, but, but the only hindrance, if you will, to this might be that the Fed is not cutting. So do you want to go that aggressive or keep it balanced so that in the remote chance that there is something which is not normal happens, you don't have to then scurry back, right? In some sense, Indian inflation is on your side. Global inflation isn't.
But then the counter would be that you were anyway behind the curve in that sense. The Fed started cutting way before you, we took our time, and yes, now this will be the third consecutive cut, but there is room. Do you want to bolster with growth right now or not? Do you need monetary policy and a rate cut to do it? Can you do it outside? So a lot of factors to talk about
also
tomorrow.
Currency.
Yeah. I don't know which way dollar is going. I mean, that's a little, the pain of a very strong dollar has come off a bit.
No, yeah, sure. But for a prolonged period of time, we haven't seen this kind of a movement with regard to the 10-year bond yield in the US and the dollar. We've not seen that kind of a divergence. It's the first time we've seen that divergence. Whether that divergence, which is the dollar weakness, just to kind of clarify, the dollar weakens despite the bond yields holding up. We've not seen that really play out significantly, at least over the last 2 odd decades. So that's an anomaly which is playing out technically. I'm not so sure. If that were to reverse, of course, then there's some bit of comfort. But if that were not to reverse, then I'm not sure how things will play out. So that's the only piece.
We'll take a very short break. On the other side, stocks. What should you buy? What should you sell? And what's the BTST play in terms of even what the monetary policy can do? All of that when we come back.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations? Welcome back. Thanks for staying with us. Now it's time to switch focus to the infra pack. Now, spoke to a couple of interesting infra plays earlier today as well. But Pankaj, let me take in your view. How should you play infra at this point? How are you viewing the sector as a whole? Some bit of a drag last year in terms of government spending. Does that change materially this year and therefore provide fresh tailwind to infra? Talk to us about how do you play it and whether you believe infra is a good play at this point.
So, according to us, so last year, if you look at first half was largely a washout from a government spending perspective. Second half is where the overall infra spend has picked up, and even the month of April numbers have been pretty good. So nearly 7.5 lakh crore worth of infra spending is what has sort of been done by the government in the last 6 odd months, which again means a good outlook for most of the overall associated sectors, be it capital goods, be it cement, be it steel, or infra or EPC players in general. On top of it, I think overall sense is that next, say, 6 to 9 months, our sense is that about 75 bips kind of a rate cut is very much on the horizon, given the fact that inflation is expected to remain below 7%. So we like the entire space. So be it a big player like L&T or even the smaller players like, say, for example, Aruvaria Construction, or other players like, say, Bartek Babag or Techno Electric. So there are a lot of names which we like, including companies on the cement side or including some of the companies even on the steel side. So we feel that probably next 6 months, things are going to become a lot more, or incrementally will become better for a lot of these players. Obviously, some of the factors will definitely play out. So, for example, we still don't know what will happen to the steel prices. While there is a 12% safeguard duty, but still it's a commodity where the price is determined globally. But structurally, we like the entire capex beneficiaries in the next 6 to 12 months.
Okay, so that's the take coming in. Thank you for that view. But let's go on to our bull versus bear segment, where we have Anushi standing by to throw spotlight on PNC Infra, stock buzzing and trade after the management commentary that's come through in Q4, I would presume. Anushi, give us perspective.
Right, so the biggest takeaway for PNC Infratech in today's trade is about its management commentary, and especially after the kind of year it had if you take FY25 in context. So what has happened is the FY26 outlook. Now they've given a 20% of a revenue growth guidance to the company in terms of, and while the margins would be in the range of 13%. Now why this is interesting in particular is because of the kind of order inflows which were expected over the year to be on a weaker side, which continues to remain a concern. We'll talk about that at a later bit, but especially this is after Ministry of Road Transport and Highways had put a ban on the company for a period of 1 year in terms of where the order bidding is concerned. So a 20% growth outlook on that seems promising for the company. However, if you take the whole FY25 in picture, they had reported a revenue downtick of a 22%. Even in terms of where the execution part was, there were delays in couple of in that, because of which we had seen a lower revenue recognition. So that continues to remain as a drag for the company, which brings to our second point. If you take the order book into context, now that stood at 17,790 crore. So despite the in terms of where the bid pipeline is, in terms of where the issue was regarding the ban in November 2024 that we saw, order book continues to remain on the healthier side. 3.2 is the kind of book to bill ratio that we are looking in for the company. But it's the valuations that have mainly derated post the concerns that have emerged for the company, and this is on the ordering concerns that we are seeing. So value, even if you look at the stock performance, that has seen about a 6% of a downtick overall. So investors still remain wary on the performance of the stock going forward in terms of the overall industry as well as the stock outlook going forward. So if you take the third point in consideration as what could be the saving grace is the asset monetization. Now what is remaining is 2 remaining assets are to be closed in H1 FY26, which means about improvement, about 630 crore of cash coming in for the business. Do note that in May 2025 itself that the company had updated in terms of where the highway project and HAM projects were concerned. So the divestment plan remains on track for that as well. That adds roughly to the equity value of 1,830 crore for the business. So improving balance sheet is something that even Nuvama had pointed out for the company, that balance sheet and cash flow is something that could be the saving grace in terms of where the FY26 is concerned. But industry outlook continues to remain subdued. Now, what we've seen for NHAI in the last 3 years, if we take that in context, FY24-25, the awarding has been on the weaker side. PNC Infratech, 63% of the revenues come from the highway sector. So, considering these weak pipeline that we are looking at in terms of where the NHAI awarding is concerned, order inflows coming in for the business for this year still remains as a question, and still arises investor concerns on the same point. So this is the overall bull and the bear case scenario that we are seeing for PNC Infra.
So that's the PNC Infra story, and clearly one of the top movers of this morning. But if I just have to look at the space, I want to talk a bit about Prestige as well. PNC Infra, of course, up nearly 5.5%, but I want to talk about Prestige as well, because this is an important trigger. The conversation that we had today with Irfan Razak this morning on NDTV Profit, he is very, very positive about this quarter. He says this quarter, that is Q1 of FY26, is set to be the largest quarter for Prestige.
I think this quarter will be the largest quarter the company has ever done. And I don't want to say any number just now. And the market will be quite surprised that we've done a large amount of top line sales in this quarter. It will be one of the best quarters we've ever had.
Wow, no, let me reiterate that. This will be the largest quarter we've ever done, one of the best quarters we've ever done. I know you don't want to give us a number, but just give us a flavor of why you think that's happening and the kind of demand that's coming in.
Tamanna, it's because of the spillover. Because you see, there was a sort of pent-up demand. What we wanted to bring to the market in the last quarter, we could not. Now we brought it in, and that's the flavor. And hopefully, this quarter and the next should do extremely well.
Okay, so that's of course on the realty pack as well. That entire pack buzzing. In fact, let's pull out the Nifty Realty Index, 2.6% higher on a Prestige, of course. But outside of that, you look at the Realty Index doing fairly well in trade. In fact, top performing index for the day. It's up nearly 2% as we speak. Some of the big movers being a Sobha, a Brigade, a DLF, all of those. Pankaj, would Realty be something that would interest you at this point? And how should you play Realty? What's the best way in your view?
So like I said, so real estate is something which we like, and I think being an interest rate sensitive sector, the prospects will keep getting better. At this point in time, largely the premium segment of the market is doing well. Our sense is that with rate cuts, probably this growth will become broad-based. What we are liking is something like, say, DLF in NCR region with a target price of 1,000. A small cap player like Max States looks good to us. There is another company which we like. We also like some of the companies like, say, Aditya Birla Real Estate. So there also we see a good amount of potential there with a good value residing in the overall because they own their own land for a good period of time, which is why their margins are expected to be a lot more better. So real estate is one segment which you continue to like. I think the entire premium leg of the market, premium consumption leg of the market is doing well, whether it is hotels, whether it is hospitals, or even real estate, even select autos as well.
Kush, Sobha, Brigade, Prestige, some real buzzers there, a DLF as well. Your view on 3-4 of the names which I've just taken?
So we've already discussed Valor Estate and Brigade, some of these names. We think, Sobha is also looking good, Prestige also. So as Pankaj already mentioned, some of these have already had good moves, but going forward also the kind of setup that you're seeing, key levels taken out, volume attraction also building over the last 2 weeks. I think there are some more upside rooms to be had. However, if they do give you a good up move tomorrow, after a favorable outcome, if at all it's announced, then I think there will be time to book profits and then buy them again on declines from a trading perspective. So tomorrow, if there is a big move on most of these names or some of these names, I would actually be booking profits and then then look to re-enter at lower levels.
Okay, I know we have to thank Kush, but just wondering, I was looking at silver prices being higher. The Edelweiss Silver ETF is higher, Hindustan Zinc is higher, so things related to silver seem to be doing okay for themselves. So keep them in mind. Okay, Kush, we'll let you go on that note. Thanks much for taking the time out. Maybe we'll talk about silver tomorrow. But it certainly hit gold, silver today. What hit gold today is also Deccan Gold Mines because they got the permission to mine gold in Andhra Pradesh, in the Jonagiri mine, after the Andhra Pradesh Pollution Control Board gave them the permission. The other one in focus, of course, is KYC International, which is in focus as well. So let's hear out the management, right? Let's start with KYC International. They bagged a 2,000 crore order. We spoke to Vimal Kejriwal, the managing director and CEO of KYC, about the company's revenue and margin outlook for FY26. Listen in.
So FY26, what we have said is that we should grow at 15% plus. Okay, 15 would be the minimum if we expect to grow from the 10% what we grew last year. So FY25 we ended around 22,000, so we'll add 15% to that.
And in terms of margins, you had an uptick in margins at 6.88%. You're expecting that to continue. Is the focus going to be on, margins and upping the EBITDA? What is the strategic focus for this financial year?
So our margin calculates for around 7%. What we are expecting against that 7%, we should be doing around 8 to 8.5% next year. For the Q4, we were at 7.8%.
Okay, and as I said, Deccan Gold Mines has also risen in trade. Let's hear out what the management had to say about their revenues and profitability post this project.
So after many years, almost 80 years, this is the first gold mine to be established in this country. So in itself, it's a big boost for the gold mining industry in India. And the second point is, yes, we did a lot of surveys last 10, 12 years. We have been doing drilling, exploration, feasibility. So this particular project, we have completed the feasibility for the first 10 years. And in the 10 years, we'll be producing close to around 4.5 tons of gold. So initially it will be low, but then at the peak stage, it will produce around 750 kilos per annum.
Okay. Rajesh Palya is joining our conversation this afternoon. He's SVP Technical and Derivatives Research, Axis Securities. Rajesh, always great to have you on. All right, let's first look at the index. A good up move today, staying steady, in position for a possible boost tomorrow if all goes well and we do see a 25 basis point rate cut.
Yeah, good afternoon, Tamanna. So yes, looking at the data setup, yes, we do believe that there could be another round of rally tomorrow if we have a rate cut of 25 bips also. Because today the major put base is now active at 24,600, 24,700 strikes. So that clearly shows that some base is shifting higher. And we tried to penetrate the major call concentration area during the day itself. 24,800, 850 zone is a major call concentration area, and we tried to Nifty tried to penetrate those level. So we believe that if we close about 24,700, 750 mark for today's session, I think yes, there could be a chance that Nifty may attempt to give breakout about 24,850 and then really can extend to 25,000 level also. Bank Nifty is looking very promising. The way it is holding above 55,500, I think Bank Nifty is ready to move beyond 56,000 level very soon. So here we may see a good traction in the Bank Nifty beyond 56,000, 56,200 would be the target for Bank Nifty with stop loss of 55,500.
Okay, let's hear your picks for this afternoon.
So first stock is from the capital market theme, that is CAMS is looking attractive. The way a stock is now holding about 200-day moving average and stock managed to give breakout of previous swing high on the daily chart. We believe that CAMS can extend its gain. Possible target towards 43.40 would be there. One can buy and accumulate this stock with stop loss of 4,200. Another stock is Heritage Food. It's a mid-cap stock. Looking at the near-term, short-term structure after consolidation of almost 5-6 weeks, now stock managed to give breakout of this consolidation range with the volume action. Now stock is trading about to 50-day, 100-day moving average. Looking at the volume and the breakout, we believe that Heritage Food can extend its gain. Possible target towards 495 to 510 we are projecting. Keep stop loss at around 455.
Rajesh, quick take with regard to Brainbees. Stock is perked up.
Can you come again, Harsh?
Brainbees, Rajesh. First Cry, Brainbees.
Okay, First Cry. Yeah. Okay. So NSE is having a ticker of First Cry. So First Cry is also looking attractive. The way stock managed to give breakout of falling trend line on weekly chart. Though stock was, but looking at the last 5-6 week chart structure, we believe that some bottom formation is taking place in this counter, and the breakout is indicating that now if stocks sustain above 388 kind of zone, so I think next target for the stock would be around 415 to 425 kind of level.
Brainbees still down post listing. Let's pull up the chart again, which we just showed on how First Cry is faring compared to its listing price. Still maybe painful, at least an 8% uptick today. I mean, would you hold on for listing price? Issue price was, issue price was 465, Rajesh. Any hopes of getting there for First Cry / Brainbees?
465 is a little tough in this rally. I think maybe some more consolidation we may see, but at higher level, 428, 425 to 430 would be the area where I think some profit taking would be there in the counter. So I think one needs to watch it around 425 to 430 zone, how the buying action takes place, or whether it's a face some supply pressure around those levels.
Okay, I also want to talk about another stock that has been buzzing today, Welspun Living. In fact, even Welspun Corp is in focus today, but Welspun Living, clear reason is the Jefferies note that has initiated coverage with a buy on the stock. Mahima joins us for more details on it. Mahima, what is Jefferies optimistic about when it comes to Welspun Living?
Right, so as you rightly mentioned, they've initiated coverage and have given a target price of 185, which is still almost a 37 to 38% upside from its current market price. What they're saying is that it's a pure play on India's growing attractiveness for manufacturing. They are the key beneficiary of India's potential trade deals with the US, EU as well as UK. And in terms of the company, it has incubated future growth pillars that includes their portfolio of own brands. Plus, it has strong manufacturing capability with one of the largest home textile facilities globally. In terms of what Jefferies expects right now, they're expecting first half of FY26 to be subdued, both on top line as well as margins. This is on account of operating leverage, lower operating leverage, and of course due to tariff uncertainty. But they're well placed to see recovery in second half of FY26 and beyond. They're expecting that the EBITDA CAGR over FY25 to 28 should be 12%, and the EPS CAGR should be around 18%. So all of these reasons are the reasons as to why Jefferies is bullish on something like a Welspun Living.
Welspun Living, and like I said, Welspun Corp also working on the street today. You're seeing an upside over there as well. Let me come to Rajesh very quickly on the charts on both of these companies.
So Welspun Living is, trying to hold its 50-day moving average support area, and looking at the near-term, short-term structure, I think some consolidation is still going on this counter. On the higher side, the major resistance is placed at around 150 to 155 zone. If stock manages to cross above 155, I think then there would be a confirmation of this, consolidation, and then yes, possible up move can extend towards 165 to 170 zone on the higher side. So at this juncture, I think 150, 155 may act as a supply zone. So one needs to review again once the stock reaches around those levels. Well, Corp is in uptrend. Stock is trading at all-time high trajectory only. Series of higher top, higher bottom formation. So I think here continuation of uptrend is likely to be there, and maybe we can see a target towards 1020, 1040 in this up move only. So I think one can keep trailing the stop loss. At this juncture, we advise to keep stop loss around 930 to hold the positions.
Okay, so that's with regard to a Welspun Corp, but Eternal is the other one in focus. It's got it's done a couple of very, very good days of trade. Let's pull up the 5-day chart on Eternal, and I'm sure that it's clocked at least a double digit in terms of returns over the last 5 trading sessions. So really, really smooth riding here, 14% higher over the last week. And let's in fact, we had a note from CLSA as well today. We had a note on the space coming in from a Morgan Stanley yesterday as well. We discussed this. We have Mahima here with what CLSA has to say on Blinkit. Mahima.
Right, so as you rightly mentioned, the possible up move today could be on the back of this CLSA note where they're saying that the weekly active user gap between Blinkit and its competitors, that is Swiggy, Instamart or Zepto, has widened this particular month. In terms of the gap of weekly active user, that was narrowing and shrinking between October 2024 to around Jan 25, but in May it has widened and it has been the highest ever again. So just to put that into perspective in terms of number, around Jan 6, the weekly active user for Blinkit stood at around 1.8 million, which has seen a record high of weekly active users of 7.7 million on 26th of May. So that gap has really widened. CLSA believes that Blinkit's weekly active user stand around 30.1 million, which is nearing to the weekly active user on Zomato's food delivery platform. So they believe that going forward, it might also cross the number of weekly active users for Zomato as well. In terms of comparison to Swiggy, Swiggy's weekly active users in total stands at around 24.7 million, much lower than that of Zomato's 30.1 million active users. Now, in terms of one more hangover that this stock could possibly see in the near-term future could be a possible block sale because of their recent announcement of bringing down their FI ownership to 49.5%. So that is one of the trigger that is definitely something that investors should watch out for.
Okay, Pankaj, would this space interest you? Firstly, thank you so much, Mahima, for bringing us both of those pieces. But Pankaj, would an Eternal, would a Swiggy interest you from a fundamental perspective?
So, from a new age business perspective, what we like is more of EMS space. So, for example, Dixon Technologies looks good to us. I think with a target price of over 20,000 and overall sense is that this is one of the few high growth companies expected to grow nearly 40%. Another one would be Sirma, what we like. So we are very selective, but I think this is probably a space where the opportunity pie looks quite large, and I think we could be a beneficiary of the tariff arbitrage, which could sort of play out.
A clutch of stocks flying around, and Rajesh, I'll take your view. Firstly, give us a BTST. Then I would want your view on specific movers in the last few minutes of trade. But first, a top closing strategy, Rajesh.
So BTST would be L&T Finance. The stock managed to give breakout of its multiple supply zone on a daily as well as on the weekly chart. The way stock has shown, long built up in today's data, I think we could see a run up in this counter. After a long consolidation, the breakout is happening. So we are projecting target towards 188 for BTST point of view. But yes, for positional trader, this stock has potential to move further higher to 195, even 200 kind of level. So L&T Finance is buy for BTST with stop loss of 179.
Okay, Rajesh, some moves in Edelweiss, in MRF, for example, some sharp up moves there into those stocks from the levels that they were trading at. Mukund is up some 6%. Any thoughts on any of these?
I think Edelweiss is looking promising. The way stock is now trading above 105 level, I think if it's continues to hold above this level, yes, there is a possibility that we could see target towards 115 to 118 kind of level for Edelweiss. Keep stop loss at around 105. MRF is still, in a consolidation range. I think 14,900 to 14,900 is a immediate resistance area. So till stock not crosses this level, some consolidation in range towards 14,000 to 14,900 would be there for MRF.
Pankaj, just completely changing tack. There's one stock which has done fairly well over the last month or so, a Star Health. Now, insurance itself has come back into vogue. So, wanting your quick take with regard to a Star Health, of course, within the standalone health insurers, but also some of the life insurers. Any names?
So, see, insurance in general hasn't done much from a price performance perspective. So, valuation wise, most of the stocks sort of look attractive. But our sense is that overall, there has been no incentive from a new taxation policy perspective. So structurally, we don't really like this space so much. I think asset management companies look a lot better to us from that perspective, given the fact that they'll have a new asset class which is being sort of introduced. So from that perspective, that looks good. Star Health in particular has disappointed for a good period of time. So we used to track, we don't track the stock anymore. But in general, we would prefer asset management companies more from a portfolio perspective than insurance.
Well, thanks for that, Pankaj. Force Motors is the other one. Stock is perked up 3% in trade. It's reported double-digit rise in May sales. Now, it's had a phenomenal run in terms of stock price performance. Puneet joins us to give us perspective both on the May numbers as well as the stock price performance. Puneet.
Well, thank you for that. So definitely it's been a very good month in terms of sales, up 24%. For the second consecutive month in FY26, the sales have been about 20%. It's a clear strategy by the company to increase distribution over the last year, and now that's reflecting in the higher sales performance as well. Now, just for context, Force Motors, makes not only vehicles such as the Urbania, which is like a 8 to 9 seater, but also ambulances amongst others, and that segment is also going at a good click this year. They also make engines for BMW and Mercedes cars in India, so that's definitely a growth aspect. Now for May, sales rose 20%, domestic sales rose 25%, exports saw some dip, but in Q4 earnings also for FY25, the stock price performance, the revenue was up almost 17%, with the margins clocking in over 14%. So both in terms of sales performance and in terms of financials, the company has been able to address both challenges very well in this year, and the growth momentum is expected to grow stronger, both for the passenger carrier space, which is the 8 to 9 seater cars, as well as its SUVs, which is the Gurkha brand, and the commercial fleet segment of ambulances. So there are multiple triggers for sales growth, and that's reflecting in the margins.
Okay, Pankaj, first off, thanks so much for that, Puneet. Pankaj, there are 2-3 overhangs with regard to auto at this point. One is, of course, this Chinese rare earths and the restrictions around that. Do you see that as a concern? That's the first part of my question. Second part, what's leading to this strong outperformance for Force Motors in your opinion?
So auto in general post tax relief hasn't seen much of an uptick in the overall volume. So that is one disappointment which has happened. While it is an interest rate sensitive sector, things are expected to sort of become better, and if 8th commission kicks in, things are going to get even more better. But in auto, if you sort of look at monthly numbers, or you have only selective performance coming in, say for example, M&M is doing well. Similarly, you have something like Eicher, which is sort of doing well. So I think one needs to be very selective in auto. These are the companies what we prefer. Force Motor, we don't have a coverage, but in our sense is that CV as a segment is expected to sort of do well, largely because capex is expected to be better compared to what we have seen, and second half, because of low base, again capex beneficiary will obviously benefit the CV players. So from that perspective, Tata Motors also looks attractive to us from a valuation perspective, and also the fact that they are refreshing their PV portfolio, plus CV can witness some bit of an uptick given they have better capex.
Thank you so much, Pankaj, Rajesh, for joining us this afternoon. Thanks for all of that perspective. Let's quickly look at how the Nifty is closing for the day, around 0.6% higher on the Nifty 50 index. The broader market's also largely in line with that. So that's the other key positive. We're taking the entire market in the same breath. Let's look at how the Nifty has panned out through the day, because there were a few gyrations we did see a spike and thereafter a cool off, and we've somewhere consolidated around those levels at close. So around 140 to 150 points higher on the index today. Let's look at the heat map as well. Eternal is one of those which is standing out and has been standing out since the last few days. There's a Trent as well, a DRL as well. DRL, of course, on the back of news. And then you have a Power Grid and an ICICI Bank, the heavyweight, doing 1.7%. So that's kind of carried the index as well. Some of the other private sector banks, and Axis, IndusInd, languishing in trade. Some consumer stocks under pressure, and Asian Paints, Tata Consumer are among those which have closed in the red. Let's also look at broader markets. First, the advanced decline. Let's get perspective on the breadth, and that's slightly skewed to the advances. But the jaw was quite wide open at the start of trade and has gradually tapered as the day has gone by. We've closed at around 1350 to 900 decline. So it's a positive day nonetheless where the breadth is concerned. I'm going to look at the mid cap and small cap indices as well. 0.7% on the Nifty mid cap. The small cap index also largely in that band of 0.6 to 0.7 odd % at close. We've closed for the day. I want to look at sectors last off. What we're seeing is good traction in realty. Defense has had another fabulous day. 2.5% higher on the Nifty Defense. And the Nifty Realty, 1.8%. And the Nifty Pharma has had a wonderful day as well. 1.2% higher on the Nifty Pharma. So those are some real rank outperformers. Among others is the Nifty Metal, also outperforming 0.7% odd higher. What's not done well is auto and PSU banks. Those are the two pockets of pain. Private banks also largely flat, and therefore the Nifty Bank underperforming the index in trade today. Last off, the BSE 500 top gainers, top losers. That's a list for you to keep in mind. Fabulous move by JM Financial, Privy, data patterns, some big moves on those. Not too many large moves among the losers, but Eureka Forbes and maybe a Sun are among those which are the worst hit, just about 3% odd lower. But with that, completely out of time on this edition of India Market Close. From Tamanna, Neeraj, myself, and everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of
Hello and welcome to Market Express, your power-packed 50 stories from the world of the markets, national buzz, global updates, entertainment beats, and sports action. I'm your host, Himakshi Bahugna. So let's dive straight into the show, viewers. And on the show, viewers, markets end in the green. 35 Nifty 50 stocks end positive. Nifty ends near 24,700 mark. Majority of sectoral indices in green today. Nifty, Defence and Realty end as top sectoral gainers. Nifty, PSU, Bank and Media dragged the most. Hindustan Aeronautics Limited has denied reports that talks with General Electric on the GE414 engine deal have stalled. HAL confirmed negotiations are progressing well and said it was not in discussions with any other engine makers for the LCA Mk2. The company remains committed to finalizing the deal for domestic production of the fighter jet engines. Indian EV makers have just 30 days to secure rare earth magnets before China's export ban on April 4th of 2025. Now, this depletes the current stockpile. Two-wheeler EVs face the biggest disruption due to their motor dependency on these magnets, while car manufacturers expect limited short-term impact by adjusting the product mixes. A lengthy 60-day Chinese licensing process is slowly promoting SIAM and ACMA to push for faster government approvals. A planned 50-member industry delegation to China has been postponed as India's 1,500-ton rare earth production remains insufficient to meet the demand. Despite concerns over supply constraints, Tata Motors Managing Director Shailesh Chandra has stated that production is not currently impacted due to available inventories. According to CLSA viewers, Blinkit's weekly active users have surged to 30.1 million, putting it within the close range of Zomato's 30.7 million. The gap between Blinkit and its closest competitor had been narrowing between August 2024 and January 2025, but has now widened to its highest level ever. Blinkit remains well ahead of Swiggy, which has 24.7 million weekly active users. Ola Electric founder Bhavish Aggarwal has increased his pledged shares after the company's stock tumbled due to poor sales. Aggarwal has paid 20 crore to maintain his pledge, ensuring collateral remains intact despite the declining share value. Investors are closely watching Ola Electric as its stock has fallen 35% since listing at 76 rupees in August. Now, the company has faced setbacks, including Hyundai and Kia reducing their stakes following concerns over regulatory and governance issues. India's gold mining sector is set for a major revival as Deccan Gold Mines secures approval to operate the Jonagiri Gold Project in Andhra Pradesh. Now, this marks the country's first gold mine establishment in 80 years, viewers, a significant milestone for the industry. The company has conducted extensive surveys over the past 10 to 12 years, including drilling exploration and feasibility studies. The project's feasibility is mapped out for the next 10 years with an estimated production of 1,400 tons of gold over the period. Initially, output will be lower, but at peak capacity, that the mine is expected to produce 750 kilograms per annum. Spark back in the green despite falling almost 20% yesterday on its drug trial failure. Spark is developing SCD-044 also to address unmet medical needs, aiming to fill critical gaps in the treatment. Spark has accounted for development costs and impairments, with cash flow from licensing current assets expected to offset the losses. Sansera Engineering wins a 160 crore order from Airbus Defence and Space to manufacture airborne intensive care transport modules for transport aircraft, boosting India's aerospace sector. Devansh Trade Mart has further acquired 12,000 shares of Inox Green Energy through the open market. Now, this move comes amid broader investor activity in the renewable energy sector, with increasing interest in the wind energy operations. Promoters of Diamond Power Infrastructure are set to sell up to 6% stake via an offer for sale, that is the OFS, with a floor price of 95 rupees per share. The price is 11% lower than the previous day's closing. The OFS will be conducted over 2 days, opening for non-retail investors on June 5th and retail investors on June 6th. The move actually comes as part of the efforts to meet public shareholding norms, with Monarch Infra Parks and GSEC, the promoter entities, offloading shares. Despite the stake sale, Diamond Power shares have seen strong trading volumes. Waaree Energies is set to sell 4.76 lakh shares of Indosolar through an offer for sale, representing 1.15% of the company's total stake paid up capital. Now, the floor price for the sale is 10 rupee per share, valuing Indosolar's market cap at approximately 400 crore rupees. Now, following the sale, Waaree Energies' stake in Indosolar will actually decrease from 96.15% to 95%, enabling a 5% free float. Indosolar, a solar photovoltaic cell manufacturer, has been undergoing restructuring, and this move actually aligns with the efforts to meet public shareholding norms. Nuvama maintains a hold rating on PNC Infratech, setting a target price of 286 rupees. The company reported a 31% year-on-year decline in the Q4 revenue, but a strong balance sheet and higher income provide optimism. PNC's order book also stands at 17,800 crore rupees, with a book-to-bill ratio of 3.5 times. Now, road projects also contribute 63% to its total order book. The company actually aims for 20% year-on-year revenue growth in FY26, with EBITDA margins projected at 13%. New orders worth 15,000 crore are expected in FY26, supporting future expansion. Ambit initiates coverage on Interarch building products with a buy rating and a target price of 3,000 rupees. The brokerage highlights Interarch as one of the top 3 players in the pre-engineered building industry, benefiting from the rising PEB penetration and a tie-up with JSPL for heavy structures. Interarch maintains industry best margins, secures 80% repeat orders, and consistently wins large contracts due to cost competitiveness. KYC International expects a 15% revenue growth in FY26, supported by a 40,000 crore rupees order book. Margins are also projected to improve from 7.8% to 8 to 8.5%, driven by better execution and higher margin projects. Jefferies picks HAL, Siemens, L&T and KEI as top stocks, citing strong order flows and operating leverage. ABB, Siemens and Thermax report 21% year-on-year growth in the Q4 orders, while defense firms benefit from the margin expansion. Now, FY25 order flow rises 28% year-on-year, led by HAL and Siemens. Power and defense sectors show high visibility growth, with railways outlook improving. Jefferies expects operating leverage to continue in FY26, reinforcing its bullish stance. Prestige Estates expects Q4 of FY25 to be its best quarter, driven by key project launches and rising demand. Chairman Irfan Razak remains confident in achieving the 24,000 crore sales target, with approvals for major developments nearing completion. Newgen Software secures a $2.5 million international order for its enterprise workflow and content management system. Now, this deal involves supplying its software to an international client, enhancing their operational efficiency through Newgen's advanced digital transformation platform. Automaker Force Motors has seen a rise of over 25% sales for the month of May. Although the export arm of the company saw a dip in the numbers of cars exported, the stock has record was in green, as it was up 20% in the last month. RailTel receives an order of more than 200 crore rupees from Maharashtra government. They will design, implement and maintain the traffic management system of the state. Man Industries has also won a 1,150 crore order for pipe supply, scheduled for delivery within 6 to 12 months. Now, this actually boosts the unexpected order book to 3,500 crore rupees. Yes, viewers, the company actually recently raised 300 crore rupees to fund the expansion in Saudi Arabia and Jammu, reinforcing its global footprint. Confident in manufacturing 75 to 80% export contribution, Man Industries actually projects 25 to 35% growth over the next 3 years. Additionally, it is actively bidding for green hydrogen projects, including pipeline development, with plans to expand in this segment over the next 2 to 3 years. Morgan Stanley maintains an overweight rating on IGI, setting a target price of 533 rupees. The firm reiterates 15 to 20% top-line growth for guidance, with an aim to achieve 20% volume growth. IGI also expects PAT margins to improve year-on-year, ranging between 57 to 64%. The management is actively exploring new opportunities, focusing on niche players struggling to compete globally. Now, to support higher volumes, IGI has also hired 130 new gemologists, reinforcing its expansion strategy. Railway stocks are rebounding after a challenging FY25, driven by recent order wins and a strong FY26 outlook. Companies like Ircon, Texmaco, RVNL, RITES, Titagarh Rail and Jupiter Wagons have gained up to 16% in the past week, recovering from 6-month declines of up to 22%. Investor optimism is also fueled by Vande Bharat and metro train rollouts, supported by healthy order books. The railway sector faces challenges due to a shortage of wheel sets impacting wagon makers, but normalization is also expected by mid-June. Large tenders in the second half of FY26 could actually drive the growth, with RVNL diversifying beyond traditional railway projects. Managements remain optimistic about regaining the momentum. Though margin recovery is expected to be gradual, the sector's outlook is actually shaped by the government investments and evolving business strategies. Defense and railway stocks have posted strong gains over the past 2 months, according to a recent note by MOSL. Now, the defense market cap hit a record high in May 2025, while railway stocks rebounded from the recent lows, driven by improved sentiment in mid and small cap segments, fueling a re-rating. Now, from FY19 to May 2025, defense stocks delivered a 55% CAGR, outpacing railway stocks, which actually grew at 46% CAGR. Gland Pharma subsidiary Cenexi receives a final inspection report from France's ANSM, citing 11 good manufacturing practices issues its Fontenay facility. Now, following the December 2024 inspection, Cenexi submits a corrective and preventive action plan. No disruptions are expected at the facility, which accounts for 40% of Cenexi's revenue, with Cenexi contributing 25% to Gland Pharma's total revenue. India's monsoon arrived earlier than expected, marking the earliest onset since 2009, with rainfall 266% above the long-term average. While most crops remain stable, rice production has been affected. Citi reports that food inflation may drop slightly, but historical trends suggest early monsoon often lead to long-term uncertainties. Experts caution that while high soil moisture may boost productivity, the overall impact on the agriculture remains uncertain. Jefferies initiates a buy on Welspun Living with a target price of 185 rupees, highlighting its strong position in India's growing manufacturing sector. As a key beneficiary of potential US and EU trade deals, Welspun boasts one of the largest home textile facilities. Despite a subdued first half of FY26, Jefferies also expects a robust recovery in the second half and beyond, forecasting a 12% EBITDA and 18% EPS CAGR over FY25 to FY28. India and the US are negotiating agricultural trade-offs as part of the bilateral trade agreement talks. India may also offer concessions on imports like almonds and apples, while the US seeks better market access for soybean and corn. In return, India aims for expanded access to the US market for shrimp, fish, spices, and rubber. Now, the discussions taking place on June 5th to 6th highlight agriculture's sensitivity in India's largely agrarian economy. Now, the Securities and Exchange Board of India issued a warning to the public regarding fraudulent communications falsely claiming to be from its officials. Now, the market regulator urged investors to exercise vigilance when encountering any sort of communication that demands information or money on its behalf. My colleague Agni Dev actually, reported the story. India's coal-fired electricity generation saw its sharpest decline in 5 years in May as overall power demand dropped for the first time since August. Renewable energy output surged to a record high, while hydro and nuclear power generation also increased. This shift led to a significant drop in natural gas-fired power output, marking its steepest fall in nearly 3 years. Experts also suggest that the trend could signal a broader transition toward cleaner energy sources in the country. Procter & Gamble announced plans to cut 7,000 jobs, about 6% of its workforce, over the next 2 years as part of a restructuring effort. The company also aims to address uneven consumer demand and rising costs due to tariff uncertainty. Executives reveal plans to exit certain product categories and brands in select markets. The restructuring may also involve divestitures, though specific details were not disclosed. China's car market is also showing solid growth, with May retail car sales up 13% year-on-year and 10% month-on-month, reflecting strong demand there. The new energy vehicle segment surged 30% year-on-year and 14% month-on-month, highlighting China's continued push for the EV adoption. Government incentives, infrastructure expansion, and competitive pricing are fueling this momentum. The steady rise reinforces China's position as a global leader in the green mobility. Reliance Jio and Bharti Airtel have raised concerns over India's proposed satellite spectrum pricing, arguing that lower fees could actually unfairly benefit Starlink. The Telecom Ministry is reviewing the pricing recommendations as Starlink nears its license approval. Industry leaders insist that spectrum cost should be comparable for both satellite and traditional telecom services. The debate highlights growing competition between established telecom providers and emerging satellite internet firms. The Adani Group has contributed 74,945 crore rupees in taxes in FY25, reflecting a 29% increase from the previous year. This amount covering direct and indirect taxes is comparable to the cost of constructing the Mumbai Metro. Major contributors include Adani Enterprises, Adani Cement, Adani Ports, and Adani Green Energy. The group also emphasizes tax transparency as part of its broader ESG framework. India's long-delayed population census, originally due in 2021, will now start on March 1st of 2027 due to COVID-19 and logistical challenges. The census will be conducted in 2 phases with the reference date set for March 1st of 2027. The process is also expected to begin in April 2026 according to the media reports. Now, the Interior Ministry announced that these details on Wednesday. India's aviation regulator has directed Turkish Airlines to fully comply with the safety regulations after inspections revealed lapses at 4 airports. The Directorate General of Civil Aviation conducted checks between May 29 and June 2nd, identifying issues in the passenger and cargo operations. Violations also included improper handling of dangerous goods and gaps in ground operations. Authorities have warned of further inspections to ensure compliance with international aviation standards. India's services sector continued its strong growth in May, driven by high export demand and record hiring. The HSBC India Services PMI stood at 58.8, marking steady expansion. Businesses reported increased international orders, particularly from Asia, Europe, and North America. However, rising input costs and inflationary pressures remain a concern for the sector. Maharashtra Chief Minister Devendra Fadnavis announced that the state is on a track to become a $1 trillion economy by 2030. He highlighted that Maharashtra has already surpassed the $500 billion mark and outlined a roadmap developed by an Economic Advisory Council. The Viksit Maharashtra 2047 blueprint, set to launch on October 2nd, will redefine the short-term, mid-term, and long-term goals. India's active COVID-19 cases have risen to 4,866, with 564 new infections reported in the past 24 hours. 7 fatalities were recorded, while 674 people recovered from the disease. The government has directed states to ensure the availability of oxygen, ventilators, and essential medicines. Facility-level preparedness, mock drills are being conducted to strengthen the healthcare system. A Karnataka High Court bench led by Justice V. Kameswar Rao and Justice C.M. Joshi hears the tragic Chinnaswamy Stadium stampede case, where 11 lives are lost and 47 injured during Royal Challengers Bengaluru's IPL 2025 victory celebrations. Over 2 lakh fans overwhelmed the venue, causing chaos as a drain, slab collapses. CM Sidramaiah announces 10 lakh rupees compensation and a ministerial probe as RCB and authorities face criticism for poor crowd management. Now, a senior police official states they present only facts. President Donald Trump has signed a proclamation suspending visas for foreign students intending to study at Harvard University. The order also directs the State Department to review and potentially revoke visas of current Harvard students who meet certain criteria. This decision escalates tensions between the administration and the Ivy League institution. The ban prevents new students from entering the US for Harvard courses or exchange programs. Well, viewers, with that, it's a wrap on Market Express. Stay tuned to NDTV Profit, and I'll see you on the other side with Profit 360.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live.
Nifty and Sensex continue buying momentum for the second consecutive day. Nifty, Realty and Pharma closed 1% higher on a day where sectoral indices ended mixed. With just about 30 days left, the existing stock of rare earth magnets is racing against a concerning alarm. But the industry says India has a good control over the situation and that the government is taking appropriate measures to prevent any notable disruption. Sun Pharma Advanced Research tells NDTV Profit that it expects no financial impact or need for fresh capital expenditure following the discontinuation of its SCD-044 trials, with other pipeline assets poised to offset the setback. Ola Electric stocks fall nearly 2% after Bloomberg reports that founder Bhavish Agarwal paid 20 crore rupees to maintain the share pledge. This move was to top up collateral for borrowings against shares. Think the finance minister is endorsing a project promising 2 lakh rupees a day? Think again. These scams are getting more convincing than ever. Deepfake fraud is on the rise, and we at NDTV Profit are launching a campaign to help you spot the fakes. The Karnataka High Court will hear pleas relating to the stampede in Bengaluru that killed at least 11 people while celebrating Royal Challengers Bengalore's 2025 IPL victory on June 4. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. Viewers, Nifty and Sensex continue buying momentum for the second consecutive day. Eternal and Dr. Reddy's were the top gainers in the Nifty. On the sectoral front, Realty and Pharma closed 1% higher on a day where sectoral indices ended mixed. Puneet is joining us with the wrap of all the market action.
Well, it was a decent trading session today for both the Nifty as well as the Sensex, where it's closed in the green for the second consecutive day. We have seen stocks like Eternal and Dr. Reddy's being one of the top gainers in the Nifty. Though for Eternal, it was positive because of the CLSA brokerage note talking about the company's quick commerce venture. There is that overhang of selling pressure coming in sometime in the month of June. We've also seen the mid-cap jump higher for the second consecutive day, and that's the trend of the broader markets also in line with the benchmark indices to trade positively as well. When you look at the small cap, that's actually jumped for the 10th consecutive day. That's the small cap 250. We've seen JM Financial and TV18 Broadcast as being one of the top gainers within the small cap 250, while the Realty and the Pharma index were one of the biggest gainers for today. For tomorrow, there'll be one of the biggest triggers will be the RBI meet, where we could see some stocks in the banking space being very active, but the narrow trading range of 200 points in the Nifty between 24,600 and 24,800 remain as one of the key aspects to watch out for.
China has a serious grip on rare earth magnets, and it's freaking out the whole high-tech motor scene. Think automotive, aerospace, semiconductors, you name it. You know, they basically control over 90% of the global redefined supply of these critical minerals that function as the backbone of motors. When they dropped the bomb on April 4th about limiting rare earth mineral exports, they gave a 90-day heads up. But now, with just a month left, companies are scrambling. And remember that this isn't about China flexing their control over the global supply. It's also a big, bold move in the trade tug-of-war with the US. And now, in order to understand the impact of the curb on supply of rare earth minerals on the Indian auto industry, let's go across to my colleague Tushar.
The first impact of this China rare earth magnet export ban would be on electric two-wheeler makers in India. That includes the likes of the pure play EV companies like Ola Electric and the recently listed Ather Energy, as well as traditional two-wheeler makers like Bajaj Auto and TVS, who now command the largest market share in the EV space, in the electric two-wheeler space. That is the major impact that we are seeing, immediate impact, because their electric motors cannot do without rare earth magnets in them actually. A less pronounced impact can be seen for the likes of Tata Motors and Mahindra, which now have a well-defined EV business within their portfolio. Tata Motors makes from 8 to 25 lakhs. Mahindra has two brand new electric cars which are doing really well. Apart from that, yes, magnets do go into, the rare earth magnets do go into normal ICE vehicles, but the companies are actually much evolved or mature enough to have a workaround by actually tweaking their product mix around this particular situation. But let's talk about how does India's auto space tide over this particular challenge that is going to emerge in about a month's time. So like you mentioned, yes, Indian automakers have only 1 month to apply for a fresh license to get access to rare earth magnets from China. That is because when China put in these curbs on the 4th of April, Indian automakers had about 90 days of supply at hand. Now that's reduced. Now 2 months have gone past, and now we have just 30 days left. So a new license process has to be put into place. Now that itself takes about 60 days. So 30 days of supply, 60 days of license approval process, something just doesn't add up immediately. So now what is happening is that a supplier has to initiate a new license process via the DGFT with the Commerce Ministry in India. The DGFT will take this particular application and take it to the Ministry of External Affairs, where it will be vetted again and passed on to the Chinese Embassy in New Delhi. From there, the Chinese Embassy will contact the rare earth magnet supplier in mainland China. After this supplier looks at this file, it will be moved to the Chinese Commerce Ministry. This process in just China takes about 45 days out of the 60 days in total. So what Indian OEMs as well as industry bodies such as SIAM as well as ACMA are doing is that they want to reduce the India timeline at least. Apart from that, a 50-member delegation was supposed to visit China this week, but that hasn't happened. It may happen in the future, but we don't know the timeline as yet. What we also know that about 30 applications have been submitted so far. Not one approval has come for this particular space. We also know what automakers think about this particular situation. Let's start with actually the electric two-wheeler makers, that is the TVS and Bajaj. TVS in its monthly sales report actually said, while EV sales continue to grow steadily, disruptions in the EV supply chain, particularly concerning magnet availability, are expected to pose challenges in the short to medium term. Mr. Rakesh Sharma, the Executive Director of Bajaj Auto, in its earnings call actually said the rare earth situation is a difficult one. Supplies and stocks are depleting fast. If there's no relief, production will be seriously impaired in July. That's the current scenario for the automobile industry. Apart from that, Maruti Suzuki, which is India's largest car maker, has actually filed an application for accessing rare earth magnets from China, but there is no movement on it as such. The company has said that whenever it comes to know, we will also know it, as well as the stock exchanges. Tata Motors, which is India's largest electric car maker, is watching the situation closely. It says that the dependency on rare earths is for both EV and ICE. As far as we are concerned, there is no image impact, but we are getting all kinds of support and hope this gets resolved fast. So essentially a mixed bag, but immediate impact on electric two-wheeler makers. So we also spoke with Mr. Shailesh Chandra a couple of days ago at the launch of the Harrier EV. Here's what actually he had to say.
Right. Thank you so much, Tushar. But, as expected, with just about 30 days left, the existing stock of rare earth magnets is racing against, a concerning alarm. But the good part is that when we spoke to Vikram Gulati, the chairman of Siam Economic Research Group, he said that as of now, we have good control over the situation and that the government is taking appropriate measures to prevent any notable disruption. Listen in.
I'd like to know the process, the update on the R&D center in Bangalore. What's the update on that?
Well, I'm hearing this about from you, the R&D center. So basically what we've been working on till now is capacity enhancement, and we have a third plant coming up at Bididi with a capacity of 100,000, as well as our greenfield project that is coming up in Chhatrapati Sambhaji Nagar. Of course, we are working towards enhancing the local involvement in developmental activities, but as of now there is no such formal talk about any R&D center.
Right, sir. I think the hottest topic that is currently gripping the automotive sector is, of course, the restrictions from China on the rare earth magnets. What is the sort of situation that is there currently? Are you actively in talks with the government with regards to finding a replacement, perhaps? And what is the sort of stock that is currently there?
Look, there are 2-3 issues here. One, this is a global issue. Second, the government is supporting the industry in a very strong way. We've got excellent support from the government. Third, I think it just throws up, more importantly for us, to realize the message that the Prime Minister, Honorable Prime Minister, has been giving us all, which is to be self-reliant. And towards this, it also points out that the path towards sustainability and path towards cleaner future and energy self-reliance, as far as automotive is concerned, has to be multiple technologies and diversified pathways. Because there are pathways like, let's say, flexi-fuel vehicles using ethanol, wherein we don't have any dependence on any external source for either technology, parts or raw materials. That can be one path. Again, CBG is another. Then increasing efficiencies of our products is another. And of course, this becomes important for battery electric vehicles because motors will have raw materials. But I think this issue goes beyond and also covers ICE. It is a reality that a particular country has 90% of global capacity for magnets, rare earth magnets, and about 85% for the rare earth itself. So this is something the government has been trying to promote and push through its various initiatives, including the PLIs. And I think with collective effort of all, we should be able to manage things.
Right, sir. Like you said, 90% China has decided to flex that clearly with these restrictions that have come in. And you also said that it goes beyond EVs, it also impacts ICE vehicles. What is the sort of impact that you are seeing currently in your personal and in your capacity as the leader at Toyota Kirloskar?
Look, we would just like to say that it's a pan-industry issue. As of now, things are under control, especially with government playing a key role in terms of ensuring that no disruption happens. And I think there is no cause of concern as of now.
The Karnataka High Court has taken suo motu cognizance of the Chinnaswamy Stadium stampede that has begun, and in the court the hearing has begun. The court requested a government report on security failures after the tragic incident claimed 11 lives and left 47 injured during Royal Challengers Bengaluru's IPL victory celebrations. Royal Challengers Bengaluru have now announced a financial support of 10 lakh rupees to each of the 11 families of the deceased. Now, for more on this, my colleague Haripriya is joining us with more details.
Right. Just to give a rundown, after the stampede yesterday, about 11 are dead and more than 40 injured. There are still people in the hospital. This happened because the crowd was more than anticipated. That's what the government has been saying as well. More than 250,000 people showed up, which was uncontrollable and outnumbered by the police that caused. Ahead of the hearing of in the High Court, the parcel of the blame has been going on here. The questions of who takes responsibility for what happened, what were the checks and balances that were initially should be put in place? Was this because RCD pushed to have a celebration and the police force was not prepped already? These are all the questions that are making the rounds, and accountability is something that the people of the state are asking for. As far as the High Court hearing goes, the High Court has asked the Karnataka government to come up, has given the notice to the Karnataka government to come up with a report asking which clearly states what was the cause of this tragedy. Because so far, while everybody is acknowledging what happened, there has been little to less accountability. In addition to the 10 lakh rupees, the Karnataka government has also given a grant of 10 lakh to the kin of the dead. RCD has done the same as well, and RCD also has a RCD Cares vertical now, which will take care of the people that are injured. This is what we have to talk.
Right. Thank you so much, Haripriya, for that. Now, viewers, Bloomberg has reported that founder of Ola Electric, Bhavish Agarwal, has paid 20 crore to maintain the share pledge. Now, this move was to top up the collateral for borrowings against shares, as the share price of the EV player has plunged over 43% so far this year alone. My colleague Puneet is joining us to give us more insights on the story.
Essentially, it's that the promoter, Mr. Bhavish Agarwal, had pledges on the current stake that he has in Ola Electric. And the key aspect is that the value of the share price, which has currently deteriorated, fallen before 50%, has now triggered, the pledge to be increased by Bhavish Agarwal. So essentially, to even maintain the current collateral level, he will have to deploy in some money in, and that sum, according to Bloomberg's sources, are roughly about 20 crores to maintain the current pledge as well. We are trying to find out what is the exact amount of pledge that he has, and we'll be getting back with that number as well. But currently, that's the news flow which is important to track, because the bad news keeps following the company, and we've been putting that out very regularly, that now the company has actually slipped from the number 1 to the number 3 market position in terms of market share for sales in FY25 and continuing in FY26 as well. So that is one of the key negatives. Promoter holding as a whole is 42%. Now, pledged out of that is roughly 5.78% of promoter holding specifically, or that's roughly 2% of the overall shareholding. So that is some of the key numbers, that 5% of the current promoter holding is already pledged. If the share price deteriorates further, there will be either a cash increase that the promoter will have to do, or maintain that collateral, he will have to find other ways to source funds. So essentially, that's the news flow, Hiral. We've seen, brokerages like Kotak actually cut target price to 30 rupees per share as well on something like an Ola Electric. So it is, incoming a lot of news flow and a lot of numbers, but that's the current, takeaway, that the total promoter holding is 42% and 5%, 5.78% it's pledged out of that.
Thank you so much, Puneet, for that. Now, in trade talks set for June 5 and 6, India may offer concessions on the non-sensitive imports like almonds, pistachios, figs and apples from the US as part of a bilateral trade agreement. The US is pushing for better market access for its soybean and corn. In return, India could see greater US market access for its shrimp fish. For more on this, my colleague Rishabh is joining us with more details.
What we're hearing on the US-India bilateral trade agreement is the fact that there could be several agriculture-based trade-offs that will be part of this much anticipated trade deal. What we're hearing is that India could be offering concessions in terms of the non-sensitive imports that India has, basically on imports that India does not compete with the US on, such as these could include almonds, pistachios, figs as well as apples. There are certain types of apples as well as nuts that come in from the US and that actually make up, that India actually uses to fulfill its domestic demand from the US, and India could offer some concessions on that. What we're also seeing is that the US has in return asked for better market access for its corn as well as soybean. That is also something that fits in well with India's import basket, given the fact that US corn comes in much cheaper and soybean could also be of other uses as part of India's oil import basket. What we're also seeing is that India in return could now demand better market access in terms of shrimp, in terms of fish, in terms of spices, coffee as well as rubber. These are some exports that India is a major dealer in, and India could bat for better sort of tariffs in terms of these 4 to 5 commodities. What we're also seeing is that in terms of poultry and dairy, which have also been very sticky points in terms of negotiations, India could ask for better non-tariff measures, which will include sanitary as well as phytosanitary measures. Given that poultry and milk, these are vulnerable segments, these could be impacted by, let's say, disease outbreaks like avian flu. India could ask for easier sort of safeguards from the US on these two as well. All of these developments are also very important given the fact that there is a US trade team in town in New Delhi for negotiations between June 5th and June 6th, and that is something that we are tracking very keenly.
Viewers, a sophisticated deepfake scam has surfaced misusing the identities of prominent national figures, including Prime Minister Narendra Modi and Finance Minister Nirmala Sitharaman, to push fraudulent investment schemes. But no, the Finance Minister does not endorse a project promising 2 lakh rupees a day, but these scams are more convincing than ever. Deepfake fraud is on the rise, and we at NDTV Profit are launching a campaign to help you spot the fakes. Let us first tell you what a deepfake video is and how to identify it.
Spot the fakes with NDTV Profit. This is a message to all of you to alert you to the scams that are currently being perpetrated. Why is this necessary? With the advent of artificial intelligence, deepfakes are being used to make the messages of scamsters much more compelling. In fact, the likes of Sundar Pichai, as well as India's very own Finance Minister and Prime Minister, are having their identities stolen and used by scamsters so that they can steal your money. Take a look.
This money in a mass summing too. But what about a banker? It's an amount they can make in a day without a problem. It would be a lie to promise you millions without working.
A few months ago, a group of young entrepreneurs pitched me an idea. An AI pauper trading assistant called InvestGPT. I'll admit I was skeptical, but within weeks of trying it, I was impressed. This tool doesn't just analyze data, it predicts market moves with insane precision.
Can you even imagine the Finance Minister using the words that she was supposedly using in that fake video? Insane precision with regard to an AI tool? It sounds weird, doesn't it? So how should you watch out for these fakes? First of all, watch out for fantastic claims. if a video or something is promising you a doubling of your money in a very short period of time, that's the first alarm bell, because it's not so easy for you to achieve that. In fact, even seasoned investors cannot do that. Someone like a Warren Buffett, over the course of his lifetime, has achieved something like a 20% return on a year-on-year basis. The second thing, prominent personalities are not going to ask for your money. Sundar Pichai has a job of his own. He runs a company that is world-renowned, Google, and Google doesn't need you to invest in them at all. The third thing, there are a few telltale signs of a deepfake video. Sometimes the lip sync is off, or there are blurred eyes, or if you've heard a person enough, you will know that they don't speak in that manner. Watch out for those, but those things are becoming harder to track. And the fourth thing, the most important thing, don't fall for an urgency trap. Often a scamster will make it sound like you don't have enough time, that the window is closing for a great opportunity, and that makes you panic, that makes you want to click a button that you shouldn't click. That's the most important thing. Even when it comes to a good investment, think about all of the factors that could influence your decision before you decide to invest, and more so when it could be a fake.
As part of NDTV Profit's campaign on curbing deepfakes, today at 6 p.m., we'll expose the many deepfake scams you could fall for, and more importantly, put the big question to our experts: how can India outsmart deepfake scams? Don't miss the big question at 6 p.m. only on NDTV Profit. Now, with markets awaiting a rate decision from India's central bank tomorrow, NDTV Profit actually did an economist poll to gauge the general expectation. The poll suggests that a 25 basis points cut, and this would make this a third successive repo rate cut since February. My colleague Pallavi is joining us with more details on this.
Now, the Monetary Policy Committee is expected to deliver its third straight rate cut of 25 basis points. All economists polled by NDTV Profit expect a rate cut of 25 basis points. That's with the sole exception of State Bank of India, which forecasts the rate cut of 50 basis points. If the rate cut is of 25 basis points, it's expected to bring the benchmark lending rate to 5.75%. Let's quickly look at what's changed from the last policy to this one. We saw GDP growth come in at a 4-quarter high of 7.4% in Q4 FY25, while GVA grew by 6.8%. What we also saw was inflation continue to slip, coming in at the lowest since July 2019. Retail inflation fell to 3.16% for the month of April, and this was largely on the back of continuing deacceleration in food and beverages within that category. The decline continued to be led by the contraction in vegetable prices. Now, CPI for the full year is estimated at 4% by the central bank, with Q1 estimated at 3.6%. And assuming that the monsoons, are above normal as being expected by the IMD, there is a chance that we could see retail inflation undershoot the full year target as well. What's also changed, of course, is the RBI surplus that came in at 2.69 lakh crore rupees. That was the highest ever surplus as dividend to the government for FY25, and this means continuing comfort on the liquidity front for now.
Thank you so much, Pallavi, for that. Now, viewers, that's all the time we had on this edition of Profit 360, but stay tuned to NDTV Profit for more news and updates.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture? Hello and welcome. You're watching KYC. Now it's a year which will have some of the infra companies in focus, and I'll tell you why. Believe that last year was a little bit difficult with regard to execution on infra as well as new projects coming through because of elections, monsoons, lots of factors, right? And we saw a lot of that play out through FY25. FY26 therefore starts on a note where you have a slightly lower base that you're starting from. There is more traction and wind, and there is also a purpose with which the government is working to ensure that infrastructure companies, and there is a push in the economy through infrastructure again, which has been the case over the 3 years prior to that. So that's why I've picked an infra company, and we've done this company on KYC earlier this year as well. But the numbers that have come through since then have been a little bit iffy, and that's why we've taken it again on KYC. So let's talk about the company first, NCC Limited. Why and what I want to know. First off, I want to also understand that cash flow, which is currently blocked within the working capital requirements of the company, how quickly can it be realized? So the current cash flow is blocked in working capital to a large extent in FY25 versus FY24. Is there a chunky amount which is expected immediately is really what I'm going to try to target first when I'm quizzing management. The second thing is what's the plan with regard to utilizing the excess cash that they have. They have around 1100 crore of cash. Now I understand that there's some amount of debt as well which has gone up. So just understanding the rationale of cash versus debt and what therefore the interplay between those two is going to be, and what's the rationale of keeping both of those on the balance sheet. The third one is what vertical has the best margins. I'm going to try to understand that because that will also determine, as execution starts to play out, how margins will play out. The guidance is around a 9 to 9.5% margin in FY26, but is there an upside risk or bias to that is what I'd like to understand. The fourth piece is how competition is shaping up. It's a highly competitive environment where infra is concerned. You have just about a sub double digit margin picture, and therefore if competition heats up, you could well see that eating into margins, which could be a concern. And therefore, what's the outlook with regard to both growth as well as margins? So we'll tie all of this in together. But first off, let's understand NCC Limited. And again, why is this company so special is because Rakesh Jhunjhunwala owns a sub 11% stake in the company, and since a while now, so it's not new, and that makes it even more intriguing and interesting, of course, for all of the viewers. Let's quickly tune in and understand what is it that NCC does. It was incorporated in 1978. It's a core infrastructure company now, but it started off as a construction company. Now it does both construction as well as infra. I'll break up the type of business it does, but currently that's how it's placed. It currently undertakes turnkey EPC contracts. I'll break this one up because sometimes in all of the pace of running markets, we tend to forget what exactly is EPC. EPC is engineering, procurement and construction in the most simplest of terms. It's generally used for large complex infrastructure projects where the contractor is responsible for all aspects of the project: design, procuring materials as well as construction, end to end, right? And that's what EPC is all about. It's not a standalone contract for a small construction. It's a larger construction, something like a road from here, from Bombay to Nashik. Now it would cover all tunneling work, all the beautification of the road as well. Everything will be covered as part of that project. It's end to end, and that's what makes an EPC project special. Let's look at the journey of NCC Limited in particular, now that you understood the business that it does. First, it was incorporated in 1978. I did speak about that. In 1990, it turned a public company. It listed on the BSE in 1992. So it has a very, very large history on the index as well as a traded company. It has a turnover of around 100 crore in 1995, turned into 1000 crore in 2002. Thereafter, journey continued, 5000 crore turnover by 2011, and you'll see how the ramp up is happening. 95 to 2002 was fairly quick, 10x in terms of revenue. Thereafter, things slowed down a little bit, and revenue thereafter again doubled up by 2019 at 12,000 crore. Order book touched around 40,000 crore in 2022. When you're looking at the order book currently, it sits at around 72,000 crore, and the turnover currently is around 22,000 odd crore. The 20,000 crore mark got breached in 2024. So that's largely the shape of it. What kind of projects does it do? Now this is the other piece which becomes important. First is building projects. So building related, it does hospitals, stadiums, educational institutions, residential and commercial property. It does all of that. Then it has water and environment, where it does all of these. Supply lines, including intake works, distribution network, electromechanical work, all of the like, including treatment plants. It literally sets up the entire treatment plant as well. So it has a fairly large range in which it does some work in this area. Now let's look at transport. And this year first we'll focus in on road transport primarily. Expressways, highway realignments, bypass roads, carriageway widening and strengthening, road sections, rehabilitation, upgradation, bridges and flyovers. All of that covered. I did speak about the fact that not only does it have a niche for standalone projects, but larger EPC contracts allow you a lot of these to be coupled together to get executed for that EPC contract to play out. Let's talk about the other piece, which is railways. Earthworks, track linking, railway bridges, overhead electrification, all of that. You're looking at irrigation as well that it covers, of course, along with waterworks. That would be the big one. And it covers all of this, including dams and reservoirs and hydropower. So that's quite large. It does mining as well and helps mine developers. That part of the segment also covered. And then you have electricals, where a large part of it is also about electrification distribution projects in various utilities. It also helps with T&D projects, which is transmission and distribution projects within that power space, which is currently quite big and presents a large opportunity as well. I want to therefore break the order book up. I will talk about the absolute numbers, but this will give you a larger understanding of how the order book is placed, right? Currently 31% is in building projects, 25% in transportation, 23% in electrical T&D. Then you have irrigation, water and mining, which are relatively smaller in size, but 20% combined. So you have 80% of these three, which contributes 80% of the order book mix, and then you have the other three which contribute just about 20%. Therefore, I'd want to understand how that margin number really shapes up for each of those. But yes, so that's how it is. Now let's look at the rating parameters and let's look at what we will be dissecting. First, I'll be looking at the income statement, the balance sheet, the cash flow, the return ratios, shareholding, street cred, valuations and street coverage. Valuations is not something we had done last time around on the KYC episode. So that's the new element that we've tried to bring in. And of course, the updated numbers for FY25. Joining me is Anushi Vakharia, of course, who tracks infrastructure very, very closely and who has helped set this entire discussion up. So thank you, Anushi, for that. Anushi, you want to start with the income statement?
Absolutely. As we do, we'll start off with the income statement numbers. You know, we've talked about the kind of order book that the company has, and it's reflecting in the kind of revenue growth, in fact, in the 3-year revenue growth trajectory that the company has presented. Now, if we see FY24, FY25, compare that and in consolidation take, it's coming up to about 26% of our revenue CAGR. In fact, if you look at the EBITDA also, it's seeing about a 23% of our CAGR growth in terms of how the EBITDA has shaped up. Margins too have majorly remained in the 8 to 9% of range in the last 3-4 year period that we are looking at. This year also the company aims to maintain this in the 9 to 9.5% of range. Net profit about 19% of growth. So overall a consistent sort of a growth story that we are building in for NCC Limited. It's the order book which is an interesting one that we are seeing. In fact, in FY25, they clocked in an order book of 71,568 crore. This is in comparison with the 57,000 crore it had over the last fiscal. So it's a strong set of growth that we've seen compared to the last year. Of course, in Q4, there were large size of orders as well, which were expected to be realized in FY26, which we saw coming in FY25 as well. So overall trends in terms of how the order book, how the order inflows, and subsequently how the revenue has shaped up has remained consistent so far. But it's the trajectory in terms of where the FY26 is concerned, where they're guiding for a 10% of a revenue growth is something that we should be asking the management on why are we looking at this 10% of a revenue growth in comparison with the 26% of a growth that we'd seen in the last 3 years, right Harsh?
Yeah, absolutely. So what you want to see, Anushi, is whether that slight drag with regard to execution in the last year or so, if I understand correctly, holds up in FY26, or whether we see a sharp increase or a leveling off in FY26, or when does that happen? Because we've not seen that at least over the last 12 to 18 months.
Yeah.
You want that to kick through. Am I right?
Right.
Yeah, absolutely. So that's how the income statement shapes up. But otherwise, it's looking like a very healthy income statement. Let's look at the balance sheet now, and that's where you'll start to see some concerns, and you might want to tie it up with the way Anushi takes cash flow after this as well. Look at the borrowing number that's gone up. Now, while your absolute borrowing number would have gone up, your net borrowing number has not gone up substantially or doesn't present a big challenge, which is why what you are seeing is not a major concern with regard to where the balance sheet is concerned, but you're seeing a bit of an inch up with regard to the borrowing number. So that absolute number has gone up. Now, I would nonetheless feel that it's a healthy balance sheet. So there's no concern with regard to the balance sheet, but you want to take care of that borrowing number which has gone up. You want to also see how that borrowing number shapes up. right, Anushi?
Right. In fact, even in cash flows, if you look at cash flow from operations FY23 and 24, we are looking at a 1,000 crore plus of a figure, which has come down to 742 crore this time. Taking that in account with the EBITDA number, which we are looking at, the ratio is now about 39%. Now, what has led to this kind of a number that we are seeing? Firstly, increase in receivables. Now, this is something that we need to address, not just for NCC Limited, for other infra companies also. How are the receivables going to shape up, and if there would be an impact in terms of where the working capital is that we should be seeing? Overall net cash flows, if we see, that has seen an uptick, however, from 16 crores in FY23 to FY25, this number standing at 436 crores.
Now the other piece, Anushi, is with regard to the return ratios, right? They've not inched up like the way I would have wanted it to. We've seen ROC go up to 15% odd, but you would want, and ROEs are in fact still sub 12-13%. I mean, while the growth seems healthy on paper, as you can see, but you would want better return ratios from any Indian company, right, that you're investing in, and therefore that's something that you'll want to wait and watch out for. Also, some of the capital inefficient ways of working, which is large working capital requirements or the increased working capital requirements, which Anushi just pointed out as part of the cash flow, are also the other challenge, which kind of creates a drag with regard to the ROC number. So again, that's the other thing you want to keep your eye out on. Also, the large cash balance that they've kept on their balance sheet, what do they do with it? Because that will also impact your ROE numbers. So those are a couple of factors that I had in mind when I gave this one a neutral, that I'd want better numbers on the return ratios typically if I were looking at NCC as an investment, because you want better return ratios, of course, than a sub 15% in the Indian market. But that's on return ratios. Shareholding, Anushi?
So in terms of where the shareholding is concerned, promoters, there's nothing to complain about here. It has remained, in the last 3 years, it's remained in that 22% of range that we are looking at. Overall, we have given it a neutral rating because of the FII change that has happened over the last 3 fiscals. So if you see 20% of this mix, which was that has now come down to 14%. However, DIS have picked up stake in the company, which stands at 16%. Public continues to hold about 45 to 48% of a chunk in this company is what we are seeing.
Okay, street cred, let's quickly go to that one. 1 month stock is up 6%, but you look at the 6-month chart, not looking good, down 25%. In fact, the stock fell 33% from its highs at the start of this year, and thereafter has made a decent recovery as well of nearly 30%. So you've seen this kind of flip-flop in terms of the stock price, but nonetheless, there has been some pressure in the near term is how we would assess it. But over the longer term, when I'm looking at the 5-year chart, the stock has done phenomenally well. It's been a 7.5 bagger. So no complaints there. We'll give this one a neutral therefore.
Okay. In terms of where the valuations are headed, in the current PE, if you are looking at that, is 70 times. We took the 1-year forward PEs also, that is around 12 times is what we are seeing. Comparing that to the 5-year average PE, 14 times, nothing majorly out of line that we are seeing, in line sort of a number in terms of where it was before. While if we compare it with the peers, now that is at 12 times of trade, so comparatively higher in terms of where the industry average is concerned. So that's what we are looking for valuations.
Okay, so that's on the valuation count. Mind you, this one makes a profit around 800 odd crores. So I'd want to know where growth goes, where profitability goes, and therefore how the forward price to earnings looks, because price to earnings as such is not looking too expensive. Let's quickly look at also what analysts on the street are saying. Most analysts build in a buy call with a 16% upside, and therefore we're giving this a clear thumbs up. Not really discussing that in too much detail. But let's quickly look at the final ratings. How does it look? What rating does an NCC get? Let's quickly have a look. Income statement, thumbs up. When you're looking at balance sheet, also thumbs up. Cash flow is a neutral. Return ratios is a neutral. Look at shareholding is a neutral. Street cred neutral. Valuation neutral. Street coverage thumbs up. So while it gets just about a 5.5 out of 8, what I'd look at as a possible positive is the fact that it's got no thumbs down. So that's the other piece. Let's quickly go across though. We have the management waiting for us. We have Neeraj Sharma, who's the head strategy of NCC Limited, joining us. Sir, talk to us about how FY20. Firstly, a very good morning to you. This is Harsh here. So I want to first start off by asking you what's the outlook like with regard to capital which is blocked in working capital, because that's the key concern. Your profitability has gone up for sure, so no concerns there. Growth will continue to be steady. It seems order book is very healthy. The only concern is with regard to working capital. What happens there?
Very good morning, Harsh.
Good morning.
At the very outset, I take this opportunity to congratulate you on a very good coverage.
Thank you so much.
You have been able to highlight all the important parameters and the performance of the company, not only last year, but in the last 5 years. So I really appreciate that very much.
No, sir. Thank you so much for
that. Coming about the working capital, primarily it is a reflection on two important factors. Number one, this is generally the situation prevailing, across the companies. This is something that has to do with the sector as a whole. I mean, primarily the people who operate in Indian infrastructure market. The second thing that I wish to share with you is the fact that it is also a reflection of the fact, of the unusual nature of FY25, this year, the last year, that year has been unusual in more ways than one. I take this opportunity to list few of them. The last year, FY25, had seen central government elections, The impact has been not only for about 3 months, what we anticipated earlier, but the impact has been primarily, let's say less than little 2 quarters. Then followed by, we have had state government elections in few key states like your state Maharashtra. So whenever you have these big events, generally they will have some bearing, some reflection on the working capital blockage. And this is not really a statement of NCC only, primarily as I shared with you. This is the situation prevailing, but we are hopeful. We are hopeful that, situation should improve now. I also take this opportunity to share with you the fact that we have received some of the payments in the month of April.
Mr. Sharma, apologies for interrupting, sir.
Yeah.
So therefore, will the unwind happen this year? You're saying that there were certain election-related headwinds last year with regard to recovery. Will it happen this year, therefore? And how quickly?
Hopefully, see. Harsh, you and I cannot really, take a call on this. This sector, most of the projects in the infra space is something that is announced and, implemented by the government agencies. So at the end of the day, we are hopeful. Let me first say that we are hopeful. But, it is very difficult to say with, 100% certainty that this is something that things are expected to pan out. We are hopeful. This would be a reflection on the, payment release pattern of our several clients. But as we speak, we are hopeful.
This is Anushi joining in. Now, if you're taking the long term in picture, we've seen about a 26% of our revenue CAGR for the company. This is in the last 3 years that we are looking at. In fact, in FY25, you had originally guided for 15% of a growth, which was narrowed down to 5%, which you outperformed with a 6.5% of a growth. Going forward in FY26, wherein you are seeing about a 10% of a growth, do you see that this is on the lower side comparatively? If yes, what's the reason that we are guiding for a 10% of a growth and not a higher number?
Very good question, Manushi. Good morning.
Good morning.
Firstly, the base itself is, little bit on the higher side. If you just increase any number mathematically, discounting for a moment whether this is, PAT or revenue, by, as you said, upwards of 25% CAGR, the base itself becomes, little bit on the higher side. The second thing that I wish to share with you is the fact that you are right that we are sitting at a very healthy order book, upwards of 71,000 crore. But bulk of these projects, let us say about 60% of the projects that we have been able to bag in FY25 has really come in the last quarter, and not only in the last quarter, in the last month of the last quarter, that is in the month of March, we have been able to bag, about 20,000 odd crore projects. The point that I wish to share with you is, there is a gestation period when the projects are awarded. It is not that these projects have to, cross some very important milestones. For example, we will have to, sign the contract. We need to mobilize. We need to make sure that all the ROWs, what we call right of ways, all the permissions are in place. Then we start the execution. And even if we start the execution, in most of the contracts, you will have some kind of, milestone to recognize, the revenue and margin. So that is the reason the guidance that we have shared with you appears to be a little muted. But if you really dig deep, you understand on what basis, we have decided to share this guidance with you. Right. I hope that answers your question.
Yes, absolutely. So, Mr. Sharma, just a follow-up on that, considering, that we've seen a lot of these orders coming in the last quarter itself. These are the high-ticket orders that we are seeing. I just want to understand, what's the kind of inflows that we'll be expecting this year, and from which segments in particularly you're seeing higher orders coming in? If you can give us more clarity on the execution side of the order book and the inflow side.
For the FY26, on the inflows, we have, I am pleased to share a guidance with you, which is already there on your screen, 22,000 to 25,000 crore. So primarily, this should be bagged in 3-4 important business divisions that we have, namely buildings, transportation, electrical, T&D, and water. Primarily from these 4 divisions.
Okay, sir, talk to us about the capex plan for FY26. I understand that smart metering will take up some amount of capex. I also understand that you're buying a TBM, which is a tunnel boring machine, which is also going to take up some part of the capex. How do you fund this? Debt has gone up. How does the debt shape up therefore?
For FY26, the capex that we have planned is, about 700 to 750 crore. And you are rightly, we have bagged one project, GMLR. It's a tunneling project for which we need to purchase one TBM machine. So for this machine, we have already placed the order, and the machine is expected to come very soon in next couple of months. And this TBM machine would be thoroughly expensed, during the duration or execution of this project. So the point that I'm trying to make is, this debt would not be a conventional debt. The capex that would be incurred on purchasing this TBM machine would be totally expensed during the execution of this, GMLR project.
Okay, so considering the overall debt picture in mind, in the con call, it was mentioned that there would be about a 200 to 300 crore of an increase every year. Just want to get more clarity on the net debt positioning that the company would see. Is the debt to equity ratio expected to see a pickup?
For the FY25, this ratio is 0.2. And, as you rightly highlighted, the company has been growing at a fierce pace, upwards of 25% CAGR in last 3 years, So to fuel this kind of, growth, definitely you need working capital. And in some projects where the payments are not coming on time from our clients, we prefer to continue to, commit some working capital for those projects. So that is also a factor that is at play. But I also take this opportunity to pinpoint that most of the debt that we have is primarily working capital, right? Working capital kind of debt.
Point taken, sir. Mr. Sharma, I want to ask you, okay, so FY26 may not be a year which enthuses you in a significant fashion, at least in terms of commentary. Give us the thought process in the next 3 years, because that's when you'll execute your full 70,000 crore order book, would be my guess. what is the kind of margin number on that full order book that you look to clock? And therefore, what is the profitability maybe over the next 2 to 3 years? What is the growth looking like in terms of profitability?
The first part of your question is about execution of, more than 71,000 crore order book that we have. You are absolutely right, By and large, we should be able to execute substantial chunk of, this order book in next 3 years. It is very difficult, really, Harsh, to talk about, the revenue and the profitability for the next 3 years. The way we work in our industry, in our company, generally we talk about, 1 year, and I have already shared, the guidance for you for the FY26. What happens, Harsh, is, we are executing a lot of projects, about 150, 160 odd projects. Each of these projects that we have will have some kind of, milestones, some kind of, execution, guidelines, the payment guidelines. So it's not always a choice, For example, let me extrapolate that a bit. Let us say that we have a project that, we want to complete the project in 1 year's time, but the client may not be willing, The permissions may not be placed. The client may not have all the budgets, to complete project ahead of the schedule.
Sure.
All the clients, they have, yearly kind of allocation for different schemes, different projects. So at the end of the day, whenever possible, given a choice, everything, being in place, we would prefer really to complete all these projects ahead of the schedule.
Point taken.
It's not always our call. It's a partnership, right?
Point taken, sir. Point taken. Got it, sir. Thank you so much for joining us this morning and giving us that perspective. But that's unfortunately all the time we have. So that's all. In fact, thank you so much, viewers, as well, for joining us and for going through this one. From Anushi, myself, and everyone who puts the show together, thanks so much for watching. More action on the other side.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from
Hi, we're talking about Your Money Matters on NDTV Profit, and today I'd like to talk to you about high risk, high return strategies in the mutual fund space. Why am I talking about this? Well, it struck me when I looked at the riskometers for various mutual fund schemes in the equity category. I found that all of them point to very high risk. So how do you differentiate between them if a Nifty 50 index fund and a small cap fund are both showing you very high risk? You need to understand what the potential for a drawdown could be and also what the potential for return could be. So to tell you about how you should approach that, I'm joined today by Mohit Gang, who is a co-founder and chief executive officer of Moneyfront. Mohit, thanks so much for joining in. Do you think that that's something that can throw an investor off, the fact that everything points to a very high risk?
Oh, absolutely. Look, I think once you are investing in equity, you have to be cognizant of the fact that risk is an inherent part of your life cycle, right? Equities and risk go hand in hand. So the moment you step onto the equity well, you are pretty much sure that drowning and floating both comes along with it. Now, under equity also, Alex, there are multiple categories categories and multiple different variants and formats of doing equity, and each format has its own risk reward ratio. Every format obviously rewards an investor if you have the right bent of mind, right time horizon, right risk appetite, and right capacity to take volatility. But every format can also equally be punishing for investors in wrong times or in market correction cycles, and one has to be extremely aware of that.
So you've shared with me, based on the category, you've talked about standard deviation. And what this means to an average investor should be that if a scheme is giving you returns of, say, 15% in 1 year, and then it's giving you 15% over the next 2 or 3 years, let's say over 5 years, every year is giving you 15%. But if its standard deviation is high, what that means is that over that period, to give you that 15% return, it is actually moved up and down quite significantly. Is that the way to look at it?
Absolutely. So look, let's just take it with an example, Alex. Let's say the standard deviation for the small cap category, I think, is roughly around 27 odd percent, and the mid cap category is around 22 odd percent. Now, what that means is, for let's say if the category mean returns for last 1 year was around 30% or was around 28%, then the standard deviation of 22 means the category returns can swing by plus 22 and minus 22 from the mean returns, which means if the return was 28, it can go to as high as 16 in good times, and it can fall as low as 4 or 6% in bad times, right? So that's how you use standard deviation.
But let's drive this home with the example that you've given, which is the average annual return is 12.2% for a small cap fund, and the standard deviation is close to 28. What that means is that it could go as high as, 40, and it could go into negative territory as well.
Yes, absolutely. It can go to as low as minus 16. So investors have to be totally aware of that. And that's the great part about these numbers. Investing in good times, people typically look at last 1 year, 3 year returns and never pay attention to these numbers, which are extremely important, which is the standard deviation, because it tells you the volatility that category brings in, which tells you that how much that category can swing from the mean returns which you have been observing, right? And one has to totally take it into stride that I might just correct by so much, or I might get in this kind of an upside. Now, will that scenario always play out? Not necessarily, but that's the maximum range. That's the observed standard deviation over last few years, and perhaps there could be a new benchmark which gets set the next year. So you never know about that.
Yeah, and there are a few more ratios that you can look at to drive home that point, and we'll talk about that in future episodes perhaps. But I want to talk about within the equity category, high risk, high return strategies. And if you were to look down the list, and there are quite a few categories here, Mohit, so how do you define which of them have inherently higher risk but also higher potential for reward?
Okay, look, there are multiple ways of looking at it, Alex. Now, one simplistic way is you go by the market cap definition, which is what we've all been doing traditionally, which is a fairly standard way of looking at things. So if you look at the large cap category, the standard deviation is hardly 6 to 7%. You go down the ladder, you go to mid cap category, small cap category, and the standard deviation keeps increasing, which just gives you an indication that the categories are per se more risky. Because as you go down the ladder of market cap, obviously the liquidity constraints comes into play, and the categories become more risky. That's one part of it. The second is there are multiple strategies which have come into the market. With the evolution of market, you now have factor-based index funds, you now have sectoral and thematic funds, you have contrarian funds, you have quant funds, you have international funds, and all of these have different aspects of risks, which typically investors tend to ignore. So let's just pick the first one, which is the factor-based strategies. Now out there, the momentum strategies, or maybe let's say the alpha strategy, these are extremely high risk and very, very volatile, especially the momentum strategies, because they play the market momentum. Once the momentum breaks or the momentum cycle reverses, these stocks can see maximum amount of drawdowns or maximum amount of corrections, right? So one has to be clearly aware of that. So momentum strategies, yes, extremely high risk and very, very volatile. Second is contrarian strategies. Now, these are contra funds, wherein you go on sectors which have not performed well and beaten down companies and out of flavor companies. But in a bad market cycle, if something was really not doing good in the good cycle, then perhaps they might do extremely bad in the bad cycle. Right? So you again can't determine the extent of fall in those kind of scenarios. Then sectoral bets, time in and time out again, we've been calling out that the sectoral bets are not for everyone. The moment you go into specific sectors, let's say if you pick up a metal fund or a power fund or a infra fund or a pharma fund or a PSU fund, and many kind of picked up on the PSU fund, but in the recent correction which we saw from October till March, the PSUs took a heavy beating. In fact, the railways, the PSUs which were too much in flavor, really got a hard hit. Right, so those are all themes which run extremely high standard deviations, which are high beta strategies basically, and out there the chances of losses are extremely high, and these are.
But the potential for gain is absolutely phenomenal. Any year I'm pretty sure that if I go back the last decade or more, I would hazard a guess, I would bet on it, that the top performing fund will be a sectoral fund. So if you get it right, you can get phenomenal returns. So talk about, for example, defense as a category. Mohit, a defense index fund would have given you close to 30% over the last 1 month, right?
Oh yes. Look, the defense fund, the first defense fund came in only 2 years back, Alex. Till then, it wasn't a theme which was like an exclusive theme available in the market. It was a part of infra funds, or some stocks were part of other funds as here and there. The HDFC defense fund came only 2 years back, and the returns on that are phenomenal if you see since inception. Obviously, the fund is now closed for subscriptions. It isn't taking any lump sums anymore. But there are other two defense funds also. And for last 1 month, yes, because of the geopolitical reasons, the stocks have really soared up, though they are quoting at obnoxious valuations. But yes, the fact being, if the world continues the way it is, if geopolitical tensions continue to rise, then perhaps those are the stocks which might just rise. But if you have a peaceful time, and if there is no further escalation anywhere, right, then the corrections post the earnings which gets declared might even be much harsh and very severe. So people who are invested will have to be aware of that.
Yeah. The fourth one that you've highlighted is leveraged investing in the mutual fund space. Can you give me examples of this?
There are many funds, Alex, which use derivative strategies or covered call strategies and to kind of hedge their portfolios. So the proportion of these strategies isn't very high, 5% to 10% to some funds going up to 20%. But it's just about scanning those portfolios and figuring out which are the funds which deploy derivatives to cover or kind of hedge their portfolios. And sometimes there is a chance that the long portfolio and the hedge portfolio might just go the opposite way, right? And that's where your chances of losses can increase.
And there are not many of these schemes out there, I would hazard a guess to say.
Not many with very large proportion, but now maybe with the new schemes, the SIF category which will come in,
the long short funds,
you will have a lot of schemes which will have this. So it's just more a pointer for our viewers to just be cognizant of this.
Yeah, the long short funds that are yet to be announced, of course, that could be in the works. Emerging market focused funds, and here I'm guessing that you're talking about so-called international funds that also have access to certain other geographies. Is that what you're talking about?
Absolutely. So there are funds which are Asia Pacific funds, then you have a China fund, then you have a Nikkei fund, and all those kind of things, right? So one has to be just really aware of, there is an Hang Seng ETF, right? And we have spoken about all these, Alex, previously also. So these are all pretty risky strategies, right? And you never know, one geopolitical news flow can completely change or tilt or twist the equation. And again, these are things which investors have to be aware of. Look, as long as you're investing into a US index fund, that's pretty fine. That's the most stable index in the world, and perhaps it's a very mature index. But the moment you diversify your basket, go into a Brazil fund or go into a China fund or a Nikkei fund, then you have to be really aware of the risks and the geopolitical things which can impact these investments.
So the tendency is to focus on the potential return and not pay enough attention to the potential risk. So the question, of course, you've tried to address this by talking about the standard deviation, which means that if I invest in a small cap fund today, and if the standard deviation is close to 28%, then I should be okay with that fund dropping close to 30%. Is that the right way to look at it?
Absolutely. You have to be mentally aware. There is a chance that this fund might just give you minus 30 from the mean returns.
Yeah, okay. So that's an important point to raise. So therefore, from that perspective, how do you ensure that if you are taking some of these strategies, what is the kind of allocation that you would keep to them? A lot of advisors talk about a core portfolio, a satellite portfolio, and people are not saying, hey, don't invest in these schemes, because it could potentially give you good returns if you plan them well, if your horizon is good enough. And so you need that kicker in your portfolio sometimes. Sometimes people have the risk appetite to take that risk. So even for those people, what is the kind of allocation that you would recommend?
It's always, to my mind, I think it's absolutely prudent, and it's okay if you have the capital and the wherewithal and obviously the time with you, then to have a satellite and a core strategy, which means that you have a strategic portfolio, which is the key part of your portfolio, which is 80% or 70%, and you have a tactical portfolio, which is 20%, 10% or 30% as your risk appetite permits, right? And in that tactical portfolio, you can very well choose and have the liberty to play some of these sectoral themes, some of these high beta themes, some of these momentum plays, and absolutely you must, because these are time tested things. It's not that because last 6 months have gone awry with these schemes or these themes, they have suddenly turned bad, right? A momentum, for that matter, for last 10 years, if you see, the track record is absolutely fantastic, and I have no two doubts in my mind, Alex, that once the market cycle turns and you have momentum back into play or back in vogue, these are the schemes which will again turn up and be the best performing schemes in the market. So be it. So if someone wants to play in the tactical portfolio, he should.
Yeah, okay. How do you balance that on the other side, though? And that really is the question, because ultimately, if you are taking this risk, it's like a seesaw. If you've got too much weight on one side, then you're going to topple over. So how do you balance that?
Look, point number one, I think these are things which have to be carefully taken into portfolio after due consideration, and perhaps with an advice of a full-fledged financial advisor or a planner. If you aren't into the market, or if you're not neck deep into the market, then it's better avoided, right? We've again and again said that flexi cap and multi-cap themes are better suited for investors who handle markets through a distance, basically, and are not completely involved into it, right? And then proper diversification and asset allocation is the key to all these problems. Honestly, if you're well diversified across market caps, across active and passive investment strategies, and across investment styles, which is momentum, quality, value, growth, right? So if you're perhaps well diversified across these investing styles, then you need not fear. And as long as you're running the right balances and the right allocations, then you need not fear.
Okay. Now, you've identified also one more ratio, and we speak about this off and on, but I just want you to drive home the point, because ultimately when you're talking about risk, there are a few ratios that each fund discloses, each scheme discloses. They disclose the standard deviation, they disclose the Sharpe ratio, they disclose the Sortino ratio, and you've spoken about the Sortino ratio with 3 examples. You've talked about the Nippon India Large Cap Fund, the Motilal Oswal Large and Mid Cap Fund, and the Nippon India Small Cap Fund. Can you explain what you're trying to say?
So look, I think we are all aware of the Sharpe ratio and the Sortino ratio, in a sense that Sharpe ratio kind of gives you the risk reward matrix as to how much risk the fund has undertaken to deliver 1 unit of return, or basically, and it captures the returns both on the upside and downside. But when you take only Sortino into consideration, then the ratio is typically taking only the downside risk, which means that frequencies of negative returns, or the returns which are lesser than the mean or benchmark returns, are captured, and they are measured against how much return is the fund producing. So higher the Sortino ratio, the better a fund is better the fund's ability to manage downside risk or to give you downward protection. So it's an important ratio, it's an important number, though you can't just read it standalone and base your investment calls just on this number itself, but it gives you a very good indication. So if you look at a Nippon small cap fund, they run a very high Sortino number, which is a great thing. Which is a great thing for a fund, which shows that the fund is delivering higher and higher returns for the same unit of risk which it is taking. Right? The lesser the number, if you see a number which is lesser than 0.1 or a negative number or lesser than 0.5 kind of a number, then those are the funds where you have to be a little aware of that these are funds which are running higher risk when a downside comes in.
Yeah, okay, that's an interesting point. And also, I take your point entirely where you can't look at this one metric in isolation. It's important to study, for example, an up capture ratio or a down capture ratio, because that will tell you that in a rising market, is the scheme doing better than the market? In a falling market, is it falling less than the market? And so therefore, is it protecting your money? All right, so, and we'll talk about that, of course, over the course of the coming days. I do want to ask you about one more thing, because you had the launch by Motilal Oswal this week of a BSE 1000 index, and this is the same fund house that launched the broader index as well, the Nifty 500. So my question to you, when you're going in a passive strategy, a lot of people tend to gravitate towards the Nifty 50 or even now the Nifty Next 50, but we've seen that increasingly the Nifty Mid-Cap 150 is beating active managers hollow, and so there is an argument to make a passive investment. Should you go broader rather than larger?
Alex, it's a very simple question as to would you want to go inches wide or inches deep, right? And so I think to each one his own on this one. But the moment you buy a 1000 index, a BSE 1000 index, you have to be very well aware that your proportion of holding in the last 500 or 200 stocks is sub 10% of the overall allocation. Because the large cap 100 in itself will take away almost 53, 55 or 57%, if I'm not wrong, of the complete allocation. When you buy pieces, which is when you buy Nifty 50, you're buying top 50 stocks and you are pretty well allocated on that. And when you buy a Nifty small cap stock, small cap index, then you're buying those 250 in very good proportion, right? But when you're buying a Nifty 500 or Nifty 1000, then your allocation into the small cap stocks or the micro cap stocks or the last 100 names is bare minimum. It's minuscule, and it won't just move the needle. Even if the last 100 stocks were to double or triple, it won't just move the index dramatically, right? So if you were to personally ask me, I am more in favor of buying the pieces rather than buying it as whole. But if you really want to just sleep peacefully, have one fund in your portfolio and sleep peacefully for 25 years, then maybe go ahead and buy the 500 or the 1000 index.
Okay, well said. Okay, so just one last question on the Nifty Mid-Cap 150. And of course, I don't have the data handy, but I was looking at several time frames where it seems that active managers have not beaten. And this is interesting because traditionally it was the large cap funds that were struggling to beat the benchmark. But interestingly, over the last 1 year, they've managed to do that. And mid cap funds are now facing that problem. Why do you think that is? And should you opt for a passive strategy?
Look, I've always been a very big proponent of passives, Alex, and you know that. And I've never minced my words on that. I am more a passive guy than an active guy. I like to sleep peacefully, and I don't like to bet on fund managers every year, right? I can bet on good fund managers for next 1 year, 2 years, but then shuffling and betting on a new fund manager who will be the winner every year is honestly a roll of a die. It's not my cup of tea perhaps, and hence I think a very good mix of active versus passive is what is required in every portfolio. Now to each one his own. Again, as I said, you can go 50-50 active passive or 70-30 in favor of either active or passive as to how your outlook is or how your time horizon is. For people who just want to sleep peacefully without bothering for long periods, then I think passive suffices well.
Got it. Mohit, always a pleasure speaking with you. Thanks so much for joining in.
Same here, Alex. Always.
All right, so let us know what you think about how your strategy is with regard to what we've spoken about. Are you taking high-risk strategies? And what has your experience with them been? All right, now, racking up credit card points feels great. Free flights, cashback, that fancy coffee machine that you didn't want to buy with real money. But we were curious about how you spend your reward points, and we wanted to discuss this with you. What is your reward point strategy? Now, the first response, of course, is I hoard them for big redemptions, and seems like most of you decided to tick that option, and I'm not surprised. I do that as well. How do you mostly use your credit card points? The option was cashback, where it's a pretty decent number, 27%. Flights or hotel bookings, a lot of you go for that as well. And I forget to use them, interestingly. Most of you forget to use them, so maybe you should go and check out the offers that are available on your card. And finally, should credit card rewards be taxed? No, they're incentives, of course. 80% of you decided to go with this. 11% said yes, it's basically income and above a certain limit, which is an interesting option. 10% of you said this would be the case. So very, very interesting responses. By the way, if you didn't respond to that poll, let us know in the comment section what your responses would be. Now, besides that, there's an interesting development, of course, with regard to income tax returns. You know, of course, at this point that they've pushed the deadline to the 15th of September to give you more time to file your returns. But which form should you be using? My colleague Mahima Vashajani has this report.
Well, which ITR form are you supposed to file? Let us find out. The first one is ITR 1, commonly known as Sahaj. A resident individual whose total income does not exceed 50 lakh can file this particular ITR. Your income could be from sources like salary, pension, interest or dividend. You can also have income from one house property and capital gain as well, but capital gain should not exceed 1.25 lakhs, and both in house property as well as capital gain, you cannot have any carry forward losses. Lastly, agricultural income up to 5,000 can file this particular income tax return. Moving on to ITR 2, both individual as well as HUF are included here. Your income should be or can be more than 50 lakh rupees here. What should be your sources of income? Well, this could include your salary, pension and income from house property. It should also include income anywhere which arises from winning of lottery or horse racing, etc. It can also include income which arises from unlisted equity shares and capital gains. Here you're allowed to carry forward losses or even allowed to carry forward losses from house property as well. If you have any foreign income, then you're supposed to file this particular ITR. If you're a resident and not ordinary resident or even a non-resident, then you're supposed to file ITR 2. Any agricultural income beyond that 5,000 rupees will be included here. And if you own any asset outside India and any income arises from that, then you're supposed to file ITR 2. In terms of the next ITR, that is ITR 3. Well, here the eligible individuals would be, of course, a resident individual as well as a Hindu undivided family, that is your HUF. And individuals and HUF who are not eligible to file ITR 1, 3 and 4, 1, 2 and 4 will be eligible to file ITR 3. Now, in terms of what sources of income you should have, this should include your proprietary business income and any professional income business, and this could be from presumptive taxation as well, and income from a partner of a firm will also be included in this particular ITR. Moving on to ITR 4, which is also known as Sugam. This is the most common ITR filed by most people because this covers an entire range of income sources that you can include in. This is also for individuals and HUFs. In terms of freelancer, even freelancer can file ITR 4. Your total income should be up to 50 lakh rupees and business and professional income is also included here. In terms of salary and pension, if it's within that 50 lakh limit, you can file your ITR here with one house property, and long-term capital gains up to 1.25 lakhs, but here also you cannot carry forward your losses. Next, ITR 5 is an interesting one because these ITRs are not filed by individual or HUF. These are filed by firms, limited liability partnership, association of persons, body of individuals, plus artificial jurisdictional person, estate of deceit, insolvent as well as business trust an investment fund. Lastly, ITR 6 is filed by companies other than charitable trusts, and in terms of ITR 7, that can be filed by news agency, scientific research association, any colleges, universities, hospitals, business trust, as well as investment fund. So you have to pick and choose as to which ITR you are eligible for, and then go ahead and file your ITR.
All right, so now you know how to file your returns. At NDTV Profit, we're doing a social media campaign called Spot the Fakes with NDTV Profit. And the reason we're doing this is because it's come to light that a lot of scamsters out there are increasingly using artificial intelligence and specifically deepfake to get your money. And there have been instances, for example, of the finance minister being used or Sundar Pichai being used. So how do you spot the fakes? First of all, watch out for fantastic claims. If a scamster is saying that they are going to double your money very quickly, then that's a red flag, certainly. There's even something, man, the whole idea of trying to finish this quickly is, okay, again. So how do you spot the fakes? The first thing to bear in mind is watch out for fantastic claims. Scamsters offer to double your money in a very short period of time. That's something that even veteran investors cannot do. Then prominent personalities are not going to ask for your money. Think about it. Why would the finance minister ask you to invest in one thing or the other? Or Sundar Pichai for that matter. He's got a full-time job. And also, you should check out for lip sync issues where there's a bit of a discordance, or if the eyes are blurred, you will see that it could actually be a fake profile or a fake video. You could also go to the source to find out whether that individual or publication has posted anything. And finally, don't fall for the urgency trap. Scamsters always try to get you to do something quickly. They say, oh, it's a limited time offer, time is running out. Stop and think before you spend your money on anything, even if it's a positive investment. Well, that brings us to the end of this edition of Your Money Matters. Thanks so much for joining in. This is NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. The markets move fast.
The Indian automakers who have just about 1 month until the stocks of crucial rare earth magnets last. Why is this happening? Because China has actually curbed exports of these magnets. Tushar has the key details. Tushar, number one, how is the impact? What is the kind of timeline that the OEMs are sitting on? What are the details that you're picking up?
Good afternoon, Hiral. So yes, the first impact of this China rare earth magnet export ban would be on electric two-wheeler makers in India. That includes the likes of the pure play EV companies like Ola Electric and the recently listed Ather Energy, as well as traditional two-wheeler makers like Bajaj Auto and TVS, who now command the largest market share in the EV space, in the electric two-wheeler space. That is the major impact that we are seeing, immediate impact, because their electric motors cannot do without rare earth magnets in them actually. A less pronounced impact can be seen for the likes of Tata Motors and Mahindra, which now have a well-defined EV business within their portfolio. Tata Motors makes from 8 to 25 lakhs. Mahindra has two brand new electric cars which are doing really well. Apart from that, yes, magnets do go into, the rare earth magnets do go into normal ICE vehicles, but the companies are actually much evolved or mature enough to have a workaround by actually tweaking their product mix around this particular situation. But let's talk about how does India's auto space tide over this particular challenge that is going to emerge in about a month's time. So like you mentioned, yes, Indian automakers have only 1 month to apply for a fresh license to get access to rare earth magnets from China. That is because when China put in these curbs on the 4th of April, Indian automakers had about 90 days of supply at hand. Now that's reduced. Now 2 months have gone past, and now we have just 30 days left. So a new license process has to be put into place. Now that itself takes about 60 days. So 30 days of supply, 60 days of license approval process, something just doesn't add up immediately. So now what is happening is that a supplier has to initiate a new license process via the DGFT with the Commerce Ministry in India. The DGFT will take this particular application and take it to the Ministry of External Affairs, where it will be vetted again and passed on to the Chinese Embassy in New Delhi. From there, the Chinese Embassy will contact the rare earth magnet supplier in mainland China. After this supplier looks at this file, it will be moved to the Chinese Commerce Ministry. This process in just China takes about 45 days out of the 60 days in total. So what Indian OEMs as well as industry bodies such as SIAM as well as ACMA are doing is that they want to reduce the India timeline at least. Apart from that, a 50-member delegation was supposed to visit China this week, but that hasn't happened. It may happen in the future, but we don't know the timeline as yet. What we also know that about 30 applications have been submitted so far. Not one approval has come for this particular space. We also know what automakers think about this particular situation. Let's start with actually the electric two-wheeler makers, that is the TVS and Bajaj. TVS in its monthly sales report actually said, while EV sales continue to grow steadily, disruptions in the EV supply chain, particularly concerning magnet availability, are expected to pose challenges in the short to medium term. Mr. Rakesh Sharma, the Executive Director of Bajaj Auto, in its earnings call actually said, the rare earth situation is a difficult one. Supplies and stocks are depleting fast. If there's no relief, production will be seriously impaired in July. That's the current scenario for the automobile industry. Apart from that, Maruti Suzuki, which is India's largest car maker, has actually filed an application for accessing rare earth magnets from China, but there is no movement on it as such. The company has said that whenever it comes to know, we will also know it, as well as the stock exchanges. Tata Motors, which is India's largest EV maker, electric car maker, is watching the situation closely. It says that the dependency on rare earths is for both EV and ICE. As far as we are concerned, there is no image impact, but we are getting all kinds of support and hope this gets resolved fast. So essentially a mixed bag, but immediate impact on electric two-wheeler makers. So we also spoke with Mr. Shailesh Chandra a couple of days ago at the launch of the Harrier EV. Here's what actually he had to say.
You know, there's dependency on the rare earth both in the ICE world as well as EV world. As far as we are concerned, I don't see an immediate impact. But SIAM and ACMA both are very closely working with the government. We are getting all kind of support. We are hoping that this gets resolved fast.
Okay. Will it impact your vehicle production? Because we have seen some people saying that yes, July onwards their vehicle production can get affected because of the lack of the magnets. When do you see your production getting impacted or not getting impacted at all?
No, it is not getting impacted at all currently.
Yeah.
But I have reviewed the situation. We have reasonable inventory with us. Beyond that, it will be unnecessarily causing too much of speculation. Let's hope that things get resolved.
So that's the word coming in from Tata Motors as well. But let's also welcome in Somin Mandal, Senior Analyst Automotives at Counterpoint Research. Somin, good afternoon and welcome to the show, and a pleasure to speak to you as always. Somin, my first question coming to you is, majority of the managements actually indicated the scarcity that the companies could face in terms of the rare earth magnet in their fourth quarter earnings call as well. But at that point in time, probably not everyone assumed that this would really go on for so long. But taking into consideration the exclusive details, what my colleague Tushar has gotten, that the companies just have stock to probably go ahead for 30 more days, what would this entire scenario actually entail according to you for the sector?
Okay, yeah, thank you. Yeah, as we can see EV adoption accelerating in India, the shortage of rare earth materials poses a serious challenges to the industry, right? So these materials are essential for producing battery cells, battery management system, battery cooling systems, and PMDC motors, and as well as other power electronics components. So as India also scales up local manufacturing of motors and battery cells, so this scarcity could significantly hinder production and slow down country's electrification momentum. But as we can also hear from all the automakers, so automakers started like building up inventory months, I think 3 to 6 months before, and we know in future festive season is coming, so that's why I think Indian automakers currently has enough inventory until festive season. Maybe after festive season or at the end of this year we can see a little bit of impact, but I believe at that point of time Indian government and automakers will find a solution.
So, good afternoon, Mr. Mandal. Tushar here, just to step into this conversation. You think Indian automakers have the inventory to last up to the festive season? Because the festive season is very crucial for the Indian auto space at large. What I'm hearing is that they have stock only for the next 30 days, dependent on the curbs that actually first came into effect on the 4th of April. So we know that there was 90 days of stock that was available within Indian automakers, but are you getting the sense that they may have stocked even more so that there will be no pain during at least the festive season?
Yeah, I think so. Normally, automakers started production way before festive season to cope up with increasing demand during festive season. So that's why before production, I think if automakers start production from June, so that means they have procured components even 2-3 months before. So because they know that what can be the demand for festive season. So that's why I think
yes, we can see from June onwards significantly higher dispatches to dealerships, production numbers.
Yes, yeah. I think, yeah, that is the reason you can see also from dealership numbers, we can see higher dispatch numbers because, yeah, dealers will be piling up inventory because that should not impact on sales at the time of festive season.
But Mr. Mandal, what can be a work around this particular situation? We know that China accounts for 90% of the processing of rare earth magnets globally. But are there any other geographies that India can look at to get the supply of rare earth magnets?
Yeah, we know that China controls nearly 60% of global rare earth material mining and nearly 90% of supply chain of rare earth materials. But if you look at the rarest materials, we know there are 17 rare earth materials, but 7 are rarest earth materials, right? So including few of the materials like dysprosium, gadolinium. So for these minerals, China and Myanmar have very good dominance. Maybe China has nearly more than 95% of dominance in these rarest earth materials. So that's why alternative sources for these minerals outside China remain extremely limited. But yeah, for not only India, all the global automakers and the other regions also look for alternatives. What India can do, I believe Indian OEMs and tier 1 suppliers may step up efforts to diversify sourcing from regions like Australia, Africa, and Myanmar, or develop local rare earth refining capabilities. So we know even like Australia, after procuring rare earth materials, they send it to China for processing. So India can work around those things. If Indian government may also intensify extensions of own rare earth materials reserves, as well as they can invest on processing rare earth materials, right? So that India may not be able to depend only on China for tackle this type of supply chain situation. So we also see, we have seen Europe, so they have also reduced dependency. So similar way India can follow.
So Soumen, my question coming to you is, if you have to reduce dependency with regards to rare earth metal, one of the options is you go to alternatives. People are talking about Australia, Brazil, which could be alternatives. Not sure what's the quantum that they have. The second alternative, is there anything where there could be a workaround where companies are looking at manufacturing parts, or I don't know, how would you put it, ancillary, spare parts where rare earth metal may not be used?
Yeah, that can be the other alternatives also automakers are trying. So we know everyone thinks like EVs are reducing pollution. So many environmentalists are raising questions like mining and exploration are raising pollution level, right? So that's why already automakers and governments are putting lots of efforts to find out alternatives for these rare earth materials. Like, yeah, maybe hydrofuel currently where India is focusing, or any other alternative of fuel that will also reduce pollution level and also act as alternative of rare earth material where China has lots of the dominance.
Mr. Mandal, this is the conversation around OEMs that we have seen, the end product, so to speak, that is two-wheeler or four-wheeler. What is the kind of impact that we can see on auto component makers, the local auto component makers? Which companies will be impacted, and which actually these companies we should watch out for in the future as maybe the winners from this, and maybe also the people who will actually also lag in the auto component space?
So yeah, so all the all types of vehicles will be impacted, including passenger vehicles, commercial, two-wheelers and three-wheelers. But I am starting with passenger vehicles, like as you already talked about.
So,
like
I'm so sorry to step in. I meant auto component makers, people who make parts. Are there any companies, auto component makers, that will be impacted by this particular ban?
So obviously, auto components maker will be impacted, because what will happen, so this ban is on like rare earth materials, not on the finished goods or products. Maybe China will force the automakers to procure finished components like PMDC motors from China. But we know like all the Indian players, they build like for two-wheeler players, they build motors in-house, and also like passenger vehicles players. So that's why components players, in this case, passenger vehicles player takes help from tier 1s or component players. So they may face difficulty because if they don't gain supply of rare earth materials, they would not be able to build permanent magnet motors and as well as battery cells, what components players as well as Indian government is aiming for.
So essentially you mean to say that companies that make electric motors in India and companies that make battery management systems in India will be impacted by this. Do you expect these companies to maybe set up sub-assemblies in China? Is that a likelihood? Is that a possibility?
That will be also this will then again the geopolitical situation will come, whether China will allow invest the foreign companies there or not, or whether Indian government will be interested our Indian sub-assembly players to put manufacturing unit there or not. But in the short term, maybe Indian automakers will be forced to buy finished goods from the suppliers or components players in China to cope up with increasing demand. Either we will see decrease in sales and also increase also on vehicle price that will also pass on to the end consumers.
So I think lots to watch out for. Thank you, Soumen, so much for joining us on the show and putting that into perspective as well. Thank you, Tushar, as well, to actually get this story to us, because absolutely interesting, which has been developing over the last couple of days. I think 90 days is what we're looking at. We're already passed on 60 days from this period, and I think the way the companies also responded to it in terms of the conference call is not with too much concern. And now suddenly the concern has shot up as well, if you think about it.
It's essentially because you've entered in the last month. So people were expecting, so as I mentioned in my link, that about 30 applications were already made, but not one of them was approved. Yes, Maruti Suzuki has its application still in, but now that you entered the last leg, the last month, some alarm bells have started ringing.
But do you think that the alarm bells have come in late?
I think, yeah, they have. They should have anticipated this bureaucratic round trip that happens in China, the step-by-step, the steps that I mentioned. If they're expecting about 45 days of a process happening only within China, they should have said, okay, only the license will take 45 days, let's start moving as quickly as possible. And I think perhaps that has not happened, or perhaps there was oversight on the part of the manufacturers.
I think this is going to be interesting. I think, Tushar, the next piece that you should be looking at is to tell all our viewers as to what this rare earth magnet actually looks like. Where in terms of the auto component it is used, because that's not something that the street is aware about, right?
No.
A lot of things like this just get discovered suddenly, and that is market moving then. But thank you so much for joining us.
On to more news and addressing key pieces of news. Sulajja Ferodia Motwani, founder and CEO of Kinetic Green and chairperson of the FICCI Green Mobility Committee, joins in right now on the show. Sulajja, good having you. Thanks so much for joining in. I would just a broad macro, Sulajja. We know that the Chinese rare earth ban or unavailability or low availability in the future is going to cause an issue. How big an issue could this be? Because we've heard comments from multiple stakeholders saying that this is a really big red flag.
Right. Well, good afternoon and happy to be on your show. I think you rightly pointed out that this is going to be a fairly severe crisis for the Indian auto sector very soon. It's important to note that currently China accounts for 70% of the global rare earth metals, but also 90% of the global rare earth magnets, which are supplied all over the world. And these magnets are used by auto industry in various components. For EV sector, for example, it's lifeline because the electric motors use the magnets, e-axles require the magnets, but also in the ICE vehicles as well. There is a use of magnets in sensors, in ignition coils, and many other components. So I think that this issue needs to be resolved, failing which auto industry and EV industry will face major production outages beginning as early as middle of June. And the issue therefore has been flagged off by the sector, by the industry to the government as a serious issue.
Now, Sulajja, the problem with this seems to be that it's almost impossible to predict what can happen, because I would presume it's a G2G conversation, a policy move that needs to happen from China's end for a bunch of economies and not just India. So one, what is it that the trade body might be doing in order to make representations, if you will? And what is it that you hear could be happening at a G2G level for this to happen?
So what China has done, the Ministry of Commerce, China has issued a notification in the first week of April which now requires certain export permits for the exporters of China to export their magnets, which was not the case before. And this is based on the end-use certificate that their importer has to obtain. And this process is extremely long. It requires the importer in India to provide, application, get approved by DGFT, then by Ministry of External Affairs, which is then subsequently to be endorsed by Embassy of China here, and then sent to China for the approvals, where also there are multiple layers of approvals. And as of now, not a single end-use certificate has been approved. So I think it's important to note that since April 1st week, no magnets have been imported in the country. So therefore, the issue has become chronic. I do believe that it's a geopolitical issue, and it would require negotiations and discussions at the G2G level. If you remember, during COVID, we faced similar issues on the semiconductors, and they were resolved by dialogue between the governments. And I'm hopeful that in this situation, also considering that the auto sector is one of the largest employers and a large part of India's GDP, I think that the issue should get resolved through discussions and bilateral talks. The Indian auto sector has also proposed that they would send a delegation to China to meet with the industry bodies there, as well as to meet with the government decision makers and explain the importance and emphasize the need to restore the commercial relationships as well. I think efforts at various levels will yield fruit is our hope, and we are really trying to work at all levels to promote a solution.
Okay. You did mention earlier in this conversation, this is Harsh here, Sulaja. Earlier in the conversation, you suggested that probably starting the 15th, you'll start to see a drag with regard to production. First off, where are some of these rare earths most required? Is it within the EV space, the ICE space, two-wheeler, four-wheeler? Just give us that perspective.
Of course, for EV, as I said earlier, it's a lifeline because EVs require electric motors, especially the two-wheelers and three-wheelers, where the magnets are an important part of the motor assembly. And even as per government's localization and PMP guidelines, the government of India has permitted import of magnets within the motor while everything else is pretty much localized. So that shows the importance and reliance on this import supply chain for the magnets. So for EVs, we cannot produce EVs without the magnets which go into the motors and the e-axles required for the electric three-wheelers. But that being said, even for the ICE vehicles, as I mentioned before, magnets are required for many components like speedometers, electric water pump, ignition coil, automatic transmission kits, sensors. So there are many areas where these magnets are required. And depending on the stocks in the supply chain in India, at different levels, different companies or component makers would start facing serious shortages. It's estimated that these would begin by as early as mid-June. And by July, it's expected that it would lead to very severe production hindrances.
And what are the alternatives at this point, therefore? Are there absolutely any, both domestically as well as outside of China, globally?
So, Minister of Heavy Industries had called a meeting of stakeholders on June 3rd, a couple of days ago, and we stressed the importance also to work towards localization of the critical mineral rare earth materials. In fact, FICCI also, under the leadership of its ex-president, Mr. Shubhrakant Panda, has submitted a report on positioning the rare earth materials, both for the magnets and eventually also for the batteries, and their supply chain, as a strategic sector requiring a lot of P2V, P2P kind of effort for collaboration. And I'm sure that these would result in the medium to long term. But given that this will take 3 years or 4 years, I think it is important that we find some kind of a short-term solution. And I think in the short run, resolving the situation with China seems to be the most practical way ahead. There could be certain other countries, from where magnets could be imported. As I said, China controls 90% of the supply chain. So there's a 10% supply chain available. But you can imagine that even vehicles would require to be validated, integrated with these new supply chains, and availability would still be a constraint. So I think we do have to find a solution at a geopolitical level, given that this is an important part of the commercial relationship between the two nations.
Sulaja, just one more question. Is there some moves that Indian companies or India has made in order to start this ecosystem? I hear you. It will take maybe 3 years, 4 years and a lot of planning, but is there something that has started already?
So let me say that the government of India has been emphasizing on Make in India and on what we call the PMP, phase manufacturing roadmap guidelines to localize, of course, not only EV but entire automotive supply chain. And a lot of moves are in the works. So local component industry has been localizing, building the technologies, and now I think, for example, most of the key components are made locally. The battery cells are going to be made locally beginning as early as 2026. But I do believe that we are at least 2 to 3 years away from this particular area, which is the magnets or the other rare earth, material-based products. So while many actions are in the pipeline, but on this particular area, I would say that we are currently vulnerable, and therefore, we would require a short-term and a long-term solution both.
I'm just reiterating, Sulabja. I think I heard you say, if the current impasse were to continue, we are looking at a serious problem in a couple of months, right? I think I heard you say by July or something there could be some serious issues.
I think so, depending on the supply chain stock positions. I think depending OEM to OEM, the problems could start as early as mid-June, but they would probably reach a severe situation by mid-July is the estimate that we have as industry body. So we are hopeful that the issue would get addressed through bilateral discussions between the G2G levels, as well as through whatever efforts we are making as an industry and the industry bodies that are putting all their efforts, to address this issue.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
A few months ago, a group of young entrepreneurs pitched me an idea, an AI-powered trading assistant called InvestGPT. I'll admit I was skeptical, but within weeks of trying it, I was impressed. This tool doesn't just analyze data, it predicts market moves with insane precision. I've used dozens of platforms in my life, but nothing comes close. InvestGPT is fast, intuitive, and razor sharp. It's like having a top-tier analyst working for me 24/7. My returns? Let's just say they speak for themselves. Join now and experience the future of trading with InvestGPT.
What you just saw on your screens, viewers, was not real. But what if you had believed it? What would make you doubt this video? After all, the video on your screen looks, talks, and dresses exactly like our Finance Minister Nirmala Sitharaman. And an endorsement deal by your country's finance minister would only solidify your approach to invest and go invest. And that's exactly what the scammer wanted. A scheme called Go Invest used deepfakes of the Prime Minister, the Finance Minister to manipulate and trick thousands of people to promote a fake scheme promising lakhs per month on a 21,000 rupee investment. Now, the scheme systematically exploited figures with authority, institutional branding and public sentiment to make people believe them. And that's what these deepfakes do. They target trusted public figures to create a misleading sense of legitimacy. Now, all of this comes also at a time when SEBI has already warned investors against fake messages which have misused the regulator's logo, letterhead and even the names of its officials. Earlier, SEBI had also highlighted some of the common types of scams, which can be in the form of unregistered investment advisory services or impersonation or SEBI-registered entities. People have already lost lakhs due to the rise in these deepfake scams, and the threat is only rising. But not anymore. Good evening, my name is Sanjana, and this is The Big Question. At NDTV Profit, we have launched a campaign to expose and curb deepfakes to protect you and your money. So stay with us as we ask the big question this evening. How can India outsmart deepfake scams? And to quickly introduce my panelists this evening, I have Saikat Datta, CEO and co-founder DeepStrat, Rakshit Tandon, Cybersecurity Advisor, Law Enforcement Agency, Abhinav Dhal, Associate Professor, Data Science and Artificial Intelligence, Monash University. Abhinav, I have to say thank you so much. I believe you're joining us from Australia, and it is in fact 10:30 in the night there. So thank you so much for joining us, and thank you to all of the gentlemen joining me this evening. I'm going to do something a little bit differently this evening. I'm going to ask one question to all of you, and I'd request if you could keep it concise. One question. Deepfakes are becoming increasingly realistic and accessible. What we just saw on our screens, anybody could have been fooled by it. What in your view, and we'll go around the screen or the room, what in your view is the single greatest risk that they pose to society today? I'm going to come to you, Saikat, first on that.
Hi, thank you, Sanjana, for having me here. Very quickly to answer your question, we would categorize deepfakes in what we would usually call misinformation or malinformation, coupled with cyber fraud. Now, this lies at the intersection of both, and I would first of all treat it as a national security threat because, as we have seen, this can have a debilitating effect and impact not only on your markets, your investments, your economic well-being. It could also have other national security implications. So that is at the level of which I would treat this threat. And as you have seen recently in the concluded Operation Sindoor, we've seen Pakistan actually trying to weaponize a lot of misinformation and malinformation to target us and our well-being. And if you look at the definition of critical information infrastructure, it actually identifies threats like this and defines them as any threat which could have a debilitating impact on our economic and national security. So that's where I would place this.
Excellent. Thank you so much. Abhinav, I'm going to come to you. What do you think is the greatest risk that they pose to society today?
Well, I think the quality of deepfakes is increasing incredibly. So the big threat is the trust in news itself. what if I do not agree to a video? What if I do not agree to an audio message? Can I simply say that it is a fake? So there is this uncanny valley situation now, which is happening with the increasing number of deepfakes which are being created and uploaded online. So I would say the trust essentially in media, that is going to be under question because we don't know who manipulated it. We don't know who changed it.
Excellent. And Rakshit?
I think, Sanjana, the biggest threat, what I feel here is right now, the kind of financial scams we are seeing, where especially in deepfakes, we are seeing they're manipulating people to invest into different platforms. The initial video which you showed, there are similar cases where a gentleman in Bangalore lost 95 lakh rupees in a deepfake of Narayan Murthy and Mukesh Ambani promoting an investment scam. And they are people, their aggressive views on social media. There's so much of audio video content and it can be easily manipulated. There's another threat which I look at it is when I work with young netizens across India, and I see there are cases of extortion, blackmailing, where these deepfakes are being generated from their videos and they have been manipulated into something very inappropriate. And they are easily available. And the sad part is that you just have to Google a keyword and you will find thousands and millions of links and apps promoting it, where one picture can be created into a deep nude. And there has been a lot of cyber stalking and blackmailing incidences being reported where these pictures are being manipulated to harass individuals.
Okay. Thank you so much for that insight. Saikat, I'm going to come to you now. So given all of these risks, what strategic or policy interventions do you believe are most urgently needed to help organizations and governments stay ahead of these kind of deepfake threats? Because let's remember, the videos that are in question are high quality. And, one can't really spot these errors.
Absolutely right, Sanjana. So any solution like this will first we'll have to recognize what is the size and scale of the problem.
Okay.
And solutions will have to be customized to address those particular problems. Like the one you started the program with, where they're trying to leverage the finance minister and a deep fake of hers to try and promote an investment scam. In law enforcement, we call this is one of the things that's become very prevalent right now is what we call investment scams. And we are seeing even CEOs and CMDs of some companies who get become victims of this. So from a solution point of view, first of all, we'll have to have mechanisms. And when I say mechanisms, for example, today the Press Information Bureau does an excellent job of doing fact checking, and they try within their remit to try and prove whatever is false as quickly as possible. But they alone trying to do this will not be enough. So if you see, for example, today SEBI, the case that you mentioned, they have been reaching out and pointing out that any advisory that comes from them has a unique identification number. So how do you couple messaging, which is what the PIB is doing, what your regulators, whether it is the RBI, whether it is SEBI, or whether it is NCIPC or certain, whichever are the major agencies, they themselves have to leverage their communication power and combine it and work as one unit. The third thing, which is very, very critical, is that literacy. When we talk about media literacy, how do we encourage our potential victims to not get swayed by something which could look very believable, but encourage them towards going towards authentic sites? Like if something is coming from SEBI, why don't you do a simple check as a design mechanism on the SEBI website? Or something coming from a bank or an RBI, why don't you look at it from that perspective? These little tweaks is where we will be able to do some bit. But also eventually we'll also have to increase capacity, whether it is law enforcement and other agencies that we have.
Absolutely, and that's where we'll bring in Rakshit and his expertise. Rakshit, building on the policy perspective, so how are then law enforcement agencies adapting their investigative techniques and digital forensics to respond to this evolving challenge of deepfakes and criminal activities, right? Because it's almost like AI and deepfakes is moving and evolving so fast that it is also taking the various systems, and this is across the board. I'm not just saying from a policy or a law enforcement perspective, across the board, to really wake up and be able to take action before it's too late, because we're already seeing so many people being scammed.
So Sanjana, I've been very actively engaged as an eminent faculty to BP R&D in training and law enforcement. Apart from that, government has taken up these measures to train cyber commandos, and they have a target to train 5 lakh. Already, I think 40 to 50 batches have been completed. They have tied up with the biggest academias in the country, where all these selected law enforcement officer, after a written examination, are being trained for 6 months as a cyber commando. So in terms of capacity building, the action is there. I4C, the Indian Cybercrime Coordination Center, with the help of all their social media handles, are being very active in promoting literacy. And especially, as Saigata said, about these investment scams and crypto scams, which are increasing through private groups on WhatsApps and Telegram, where they create that FOMO, they make you a member, they use all the big pictures which you will find on LinkedIn to come and convince you. And initially, they pay you also, and that is their modus operandi. So you won't believe, last year, 9 months, we had a figure of approximately 4,444 complaints per day being recorded. So, and the majority of them were investment scam, crypto scam, and work from home scam. And there were cases of digital arrest as well. So, in all these scams, deepfake and voice cloning has played a major role. So in one of the cases, the victim heard the voice of the CJI, Chief Justice of India. His voice was used as a clone to scam him, and that scam costed him 7 crore rupees when he was cheated. So yes, the law enforcement is in action, and we have seen, and I personally been advising so many states, I have seen a big change. You can see a lot of arrests which are happening, and we are also we have protected a lot of funds which have been frauded. Yes, though the percentage is less, because this online and digital money moves very fast, very, very fast. So they have started this National Cybercrime Portal 1930, where we say that if you report within the golden hours, definitely a good amount of money can be protected. But at the end of the day, the victim has to develop his cognitive thinking and have the zero trust as a factor, which is very important. Zero trust. MNC in Noida, just on a WhatsApp message, got scammed for 3.52 crores. So why there should be a rechecking? There is a lot of work happening in terms of developing APIs to detect these deepfake scams, and they will be in real time. They will be on your browser, and the moment you are watching a video, it will give you with an indicator, green or red. So all these kind of things are happening in place. And yes, it's like a cat and mouse race. It's like Tom and Jerry, but we are trying the best. Yes.
I really like the aspect of zero trust. And just as a follow-up question, what is a golden hour? Is there a certain time frame that one needs to maintain after the incident has happened?
So when this started, we used to say 24 hours, but now I say 30 seconds or 40 seconds.
Okay.
So the moment you realize you are frauded,
right,
please call. Because as soon as you call, this NCRB, it's an automated portal.
Okay.
The 1930. As soon as you feed in your details that this is what has happened with me, it goes and automatically in the system. It goes, and all the bank nodals and their systems are alerted that this is a fraud transaction, and an immediate lien has been marked on it. So once the lien is marked on it, then the hacker himself cannot take out the money. So that is what this golden hour concept is, that as soon as possible you realize, please make a call on 1930 or report on the portal cybercrime.gov.in.
Cybercrime.gov.in and 1930. Viewers, I hope you're taking notes. I definitely am. Abhinav, from a technical standpoint, what are the most promising advances in AI-driven deepfake detection, and how can these tools then be integrated into, say, a law enforcement or organizational workflows to enhance security?
What's really interesting is that the process of creating deepfakes is actually dependent in part on a process called adversarial learning, which is essentially we would like to detect that if something is of high quality or low quality.
Okay.
And this is what results into a deepfake detector. So we see right now that there is a tremendous amount of effort in academia and industry, along with government partners, to create API, easy to understand systems which can be used not just for audio, video deepfake, but also for detecting AI generated data. What I would say is what we from our naked eye perceive as a high quality audio or a high quality video is that is not the same for a computer system. It sort of looks at the data at micro level, and it will look for those artifacts, for example, unnatural lip movement, eye movement is off, the tone of the voice, the pitch that is very robotic. So systems are able to catch up. What is eventually going to happen is that we are going to have deep fake detectors which would work in specific use case scenario. For example, a deep fake detector which works in the KYC authentication platform. Another type of deep fake detector which will be on our mobile phones in the gallery software, and then it can tell that if an audio or image that is actually AI generated. And I would also like to add that there is tremendous amount of work which is happening locally within India and other countries as well. So the startup ecosystem, the larger organizations, they are all coming up with deepfake detectors, because at the end of the day, if we are creating generative AI tools, softwares, methods, they are also automatically enhancing our deepfake detectors as well. The cat and the mouse actually, in this case, walk hand in hand.
So, Rakshit, you spoke about this aspect of cognitive thinking, and I think that it is a fantastic point because, even that very famous show on Netflix, Jamtara, spoke about the lack of cognitive thinking, right? When that phone call happens and it all happens so quickly. And we're seeing a fair bit of pushback coming in from those that, the scammers are trying to ensnare. There was an incident of a young girl who, thought she was receiving a phone call from her father, and she put the person on blind, and then she called her father and all of that, and it was all, discovered. But this is, I still feel like a younger audience, a younger generation. What about the slightly older people that are more susceptible? Our grandparents, older parents that are watching this show, that are more susceptible to things like this, who may live alone, who may not have that kind of support, who may not be as tech savvy. What are the measures that they can take to stay alert?
So Sanjana, you rightly said, when I say cognitive thinking also, I also say what kind of digital diet are we consuming? How it is impacting our mindset? There's so much of overconsumption on, I could say, increase in screen time. And especially there's so much of content on social media, and it plays with your internal emotions. And there are three weaknesses which a human has. One is temptation, or lalach, what we call it. The second is fear, which we have seen a lot of cases of digital arrest. And then third one is called romance and lust. And these are the three major weaknesses on which the hacker plays. So when I see this ad saying that by investing 5,000, I can get a return of 10 lakh, and that too coming from a deepfake, from a celebrity character. And at that time, my cognitive thinking is not seeing to the lip movement, the audio or the robotic. It is only looking at the catch. The catch is 500. And then when I joined that group, there are 250 members saying to me that my money got doubled. So when you talk of age, I would say the younger ones, the very young ones, and the very senior ones, they are the most vulnerable people. Recently, there was a case which was reported to us where this gentleman wanted to go for a religious yatra, and he searched on Google and he could not identify between the right website and the fake website. So I also at times use a word called DQ, that our digital quotient, rakshittandan.com or rakshittondon.com, there is a huge difference. And this gentleman went on the fake website, spoke to the guy, deposited all the money for the rooms and everything in advance to a UPI. So suppose my hotel is called Hotel Rakshit Tandon. How can I take the payment in the name of Bhoop Singh? Where is my cognitive thinking? I should be paying the amount to Hotel Rakshit Tandon. And he got frauded for amount of 75,000 rupees. So we always say that stop think and then take action. Internet, you can't have this impulsive nature of just clicking. You get a call, hi, you're very busy in your work, and suddenly you get a call, hi Sanjana, I'm your dad's friend, and I wanted to pay money to your dad, but he said, I don't know these GPay and all, so he said, give it to my daughter. I just transferred you 20,000, can you just check? And at that time, you see a SMS coming saying that 20,000 rupee is being credited in your account.
Right.
And then the next moment, and this is how they scam you. So now what TRAI has done, that all the SMS you will get, it will have a attachment. The prefix will be there. A -S for a service message, -T for a transaction message, -G for a message coming from a government organization. And if these prefixes are not there in your header of the SMS, that means you don't trust that SMS. You have to think twice. If it's a promotional, it will be P. So all these measures try, and as Saket said, that these all bodies are now merging together to fight the menace of cybercrime, whether it's RBI, whether it's bank, whether it's TRAI, or whether even it is the security agencies.
Absolutely, and doing a great job of that. So PGST minus all of these is something that all viewers, I hope you're watching and I hope you're remembering, need to take note of. Saikat, you know, social media platforms, okay, they now require labeling of AI generated content. So do you believe then that such measures are enough, or do you think that we need more advanced solutions to help users discern fact from fiction?
Sanjana, let me try and answer that question through three fairly successful measures that are currently going on.
Okay.
One comes from the Ministry of Home Affairs, where I4C has done tremendous amount of work, where they have first of all established very clean databases. Now that is very critical, because once you have clean databases, then as a law enforcement or as a government agency, you are far better equipped to actually deal with these kind of issues, whether it is identifying, spotting and taking counteraction against deep fakes or other kinds of online attempts to either do fraud or, you know, seed some kind of dissension among the public, etc. Second is, you look at the states of Telangana and the state of Haryana. Telangana, 2006, they started something which in 2019, they also created a proactively agency to deal with cybersecurity threats. And today they are doing tremendous amount of work as Telangana police to proactively go and look for mules, look for fake URLs, look for, you know, doing all sorts of database management to figure out what are the linkages between scamsters, etc. And based on that, now today Haryana has shown remarkable change, where the current DGP is also looking at some measures wherein just ensuring that the banks and the police can work together very closely. Today, Haryana has already reduced in less than a year on year 50% reduction in cyber crimes, just by ensuring that the information between stakeholders travels very fast. So if you look at these three success stories, and then you look at some private initiatives, like today Airtel has started what they call scam or spam phone calls. That itself is leading to a certain degree of reduction in cyber crimes. Two, DOT is doing tremendous amount of work, whereas they are now signing up with several, like PhonePe, they've signed up with PhonePe to proactively identify phone numbers which are used for doing your scams, etc. But they are now going a step ahead and also putting out messages. So when you place a call, you are constantly getting educated about what kind of potential crimes, as Rakshit rightly pointed out, whether it is digital arrest, etc. What you're also seeing is that today the banks, telecom, DOT, I4C, and the state police are coming together, addressing the senior citizen aspect. In Haryana, at an SHO level, which is at the police station level, they are experimenting with a program where they're proactively reaching out to senior citizens, getting numbers, and a beat constable is in touch with them and trying to see that if you need any help, I am available. And this is happening on a weekly or a monthly basis. Moment you have access to these kind of features at the state level, you are largely addressing these problems, because law and order is a state subject.
Right.
So not only building capacity at the central level, building that capacity at the state level is making a huge impact.
Excellent. Thank you so much. And I'm aware that we are running out of time almost. So I'm just going to wrap up really quickly with my last question to Abhinav. Abhinav, what practical advice would you give to individuals and organizations to protect themselves from the risks posed by deepfakes today and even in the near future?
I think for an organization perspective, the first is training the employees on how to spot, even if it's high quality, but if the content is, making them a millionaire in a day, that's something which, needs to be cross-checked. The second is using technology as much as possible. Similar to how we have antivirus on all the machines in my organization, we need to embed AI-generated content detectors at different levels, from the devices, say phones or laptops of the employees, and to the server level by using the APIs which are already available. So on the Google Workplace, on the marketplaces, there are a lot of these new technologies which are coming up. So I would say train the people and then use the technology which is there and make sure that if a new type of deepfake is observed, people come across that, okay, now it's not just faces or voices, but it's full body deepfake, right? In that case, reach out to the authorities, and that will make those new categories of deepfake famous so that people are able to learn from that. So it has to be sort of a multivariate sort of approach wherein we use technology, but at the same time, we also use our own intelligence to judge if something is fake or something is manipulated.
Use your own intelligence and not so much the artificial one. Sorry, I had to do that there. But my last question, and we're completely out of time, to Rakshit. Looking ahead, what emerging trends in deepfake technology are concerning you the most? What should be the top priorities for researchers, for organizations, and for society and for citizens, for all of us to address these kind of challenges?
So threats are going to increase, and we are also going to see LLMs getting infected. Okay. So till date, we were protecting our websites from hackers, databases from hackers. Now, my concern growing is that even the LLMs and the models on which AIs are working, they also might get infected or hacked or manipulated. So the question here is that, yes, there's a lot of research to be done. And with quantum also coming in, which is going to make it more easy for AI computations, and it might give it a big leap. So for researchers, ethics is very important. We call it ethics by design, secure by design. And for agencies to foresee the coming threats as per the current data and analysis, and also to make new laws which can take care of these and we need immediate changes into the laws where we can also penalize such offenses. And that is, and for general users, stay alert, stay safe. Please control your screen time so that at least your cognitive thinking is there. I've been a victim of AI myself when the AI said that Mr. Rakshit Tandon expired in July 2020 due to a heart attack. And this was on a very popular generative AI, which when I sent a notice, they said it was a technical glitch and they corrected it.
Gosh.
This was... So this is where what we are looking to. So, but yes, I would also like to add where Saikat said about these initiatives. We have a repository now on the website of cybercrime.gov.in.
Okay.
A data repository where you can check a suspect number, a suspect URL, a suspect mobile number, and a suspect UPI ID. So before doing any transaction or any connection with anyone online, because of all the complaints which we have received on the I4C, we have created a suspect repository there.
Okay.
And this button is available on cybercrime.gov.in where you can check before transferring money, and there you will come to know that no, this has been reported by 10 or 15 people. So that means this ID is not safe. So that can also be used as a tool to protect our citizens.
Thank you so much. Wonderful resources and very, very comprehensive information provided by all of the panelists joining me this evening. Saikat Datta, Rakshit Tandon and Abhinav Dhal for sharing their invaluable insights on one of today's most pressing challenges, outsmarting deepfakes. So from understanding the societal risks and policy imperatives to the evolving role of law enforcement and the cutting-edge AI technologies at the forefront of detection, this conversation has shed light on the multifaceted battle against synthetic media. Do take a look at the entire conversation if you missed it today on YouTube. But as deepfakes continue to grow, our viewers, our audience, and as it gets more sophisticated, no single solution will suffice. So stay vigilant, stay alert, informed and proactive. All of that is key. Thank you so much for watching.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome. You're watching the World Report on NDTV. Well, in the escalating war between President Donald Trump and the Harvard University, the US President has suspended international visas for new students seeking to study at the Harvard University. This is for an initial 6 months. Signing a proclamation, the Trump administration has directed the Secretary of State to consider revoking those visas known as F, M and J visas for current Harvard students who meet the proclamation's criteria. The Trump administration cited national security concerns as a justification for barring international students from entering the university. Disha joining us to get us the very latest. Disha, there's no stopping Donald Trump as he pushes to add further restrictions, whether it's to Harvard, the university, or its students.
Absolutely, Divya. When it comes to these restrictions, in fact, the Trump administration has defended this decision, saying that, in fact, foreign students and their admission to these Ivy League institutions is a privilege, not a guarantee, and it also relies on these institutions following the federal law. And now declaring that Harvard University is no longer following the federal law, and that is why they are now banning all foreign students from not just seeking enrollment to the university, but also threatening the current students, international students at Harvard. And of course, Harvard University has reacted to this fresh attack on its students, saying that they will continue to defend their international students and that this is another illegal step. But when it comes to the legality of this move, that remains under question, given the fact that a federal judge had blocked Trump's previous moves against Harvard, especially its international students. So that remains to be seen.
Right, thank you so much, Disha. Raising questions about 788 Indian students studying at Harvard currently. US President Donald Trump has signed a new travel ban targeting 12 countries, including Iran and Afghanistan. But notably, Pakistan is not on the travel ban list of Donald Trump. Now, of course, we have the very latest in regard to the countries that are on that list. Let's get you all the details.
Estados Unidos acaba de sacar algo prohibiendo la entrada de cualquier venezolano a los Estados Unidos. Son como 9 países. No, ni con visa. Prohibida. Están eliminadas las visas para Estados Unidos. En verdad, estar en Estados Unidos es un gran riesgo para cualquier persona, no solo para los venezolanos. Si usted es bien pajugo, vaya para Estados Unidos.
In a sweeping move that's already rattling foreign governments and immigration attorneys, US President Donald Trump has signed a new executive order banning or restricting travel from 19 countries he deems as national security threats. The list? It's wide-ranging, from Afghanistan to Venezuela, from Iran to Sudan, from Myanmar to Haiti. The official reason? Well, Trump says these nations fail to meet US vetting standards, either due to inadequate documentation, terrorism risks, criminal record gaps, or rampant visa overstays. But critics, well, they say this is not about security. It's about profiling entire regions and shutting America's doors to the global south. This isn't Trump campaigning. This is official US policy, signed, sealed, and implemented from the White House. Trump's move follows a disturbing case in Colorado, where an Egyptian national in the US on an expired visa attacked pro-Israel demonstrators with a Molotov cocktail. The White House is holding up this case as proof that visa loopholes equal terror risks. Now, Trump says in the 21st century, we've seen one terror attack after another carried out by foreign visa overstayers. We don't want them. These are the US president's words. So the new order excludes green card holders and valid visa holders and allows exceptions for those deemed to serve US national interest, but it tightens entry pathways for thousands across Africa, Latin America, and Asia. With visa scrutiny already intense and Trump tightening immigration further, this could shape how people across the globe, especially from certain regions or religious backgrounds, are vetted in US consulates. And globally, this reignites the debate. Is America safer when it's closed its doors? Or is this another page out of the playbook of fear wrapped in a presidential seal?
And Congress MP Shashi Tharoor in Washington said that India doesn't need to be persuaded as it doesn't want a war. If there was any persuasion by the American president or his senior officials, it would have been persuasion of Pakistanis. They would have to be persuaded in reference to Trump weighing in to stop the war. All it really meant was retribution against terrorists. If Pakistan had not reacted, we would not have reacted, is what Tharoor has gone on to say. He also said Operation Sindoor was a brilliantly chosen name, the colour of Sindoor not very different from the colour of blood, and explained its significance.
I think the US has understood for some time now that India has a very clear position that there will be no talks with a gun pointed at our head. It's not that we can't talk to Pakistan. I was joking the other day, we can speak all the languages they can speak. And we're very happy to dialogue with them in any of those languages. The problem is we will not dialogue with people who are pointing a gun at our heads. I mean, frankly, if your neighbor unleashes his Rottweilers to bite your children, and in fact to do worse to your children, and then says, let's talk, you think you're going to talk to him until he either unleashes those Rottweilers or locks them up in a kennel or puts them to sleep? It's as simple as that. You're not going to talk to people who are pointing guns at your temples. It's not going to happen.
Message is loud and clear of all the Indian delegations that have spanned across the globe that it is Pakistan who is the aggressor. India only responded to the attacks. India only responded to the various comments, various gimmicks from the Pakistani side, and the delegation was almost copied by the Pakistani side. They also sent a delegation headed by Bilawal Bhutto, which also has been severely criticized. But India's delegation has been warmly welcomed by across the globe, by almost all nations, and in the US, Shashi Tharoor has highlighted why the Operation Sindoor name was chosen. He has given impetus on the word Sindoor as to why this word was important while choosing the name. So that is what the conversation was about, and also the fact that both the parties, BJP and Congress, have now joined hands to spread this message forward.
Well, let's just get you the very latest, and this is in regard to Indian students that are increasingly growing anxious over Trump administration's plans to mandate social media vetting before approving visas for all international students seeking to study in the United States. Social media vetting is a process included by the Trump administration in the visa application courses to assess their suitability to be able to enter the United States or not. The platforms that go through the vetting process includes Facebook, social media site X, as well as LinkedIn and TikTok, amongst others. The United States on Wednesday vetoed a Security Council draft resolution that would have demanded an immediate ceasefire in Gaza and the immediate lifting of all restrictions on humanitarian aid. The draft resolution tabled by the 10 elected members of the Security Council won the support of 14 out of the 15 members of the Council. The United States, which holds veto powers and vetoed against it, the draft resolution would have demanded the immediate and unconditional release of all hostages held by Hamas and other groups, and the immediate and unconditional lifting of all restrictions on the entry of humanitarian aid into Gaza and a safe and unhindered distribution of scale.
美国已多次否决安理会的停火要求，
也正是由于美国对以色列的袒护，安理会通过的数份决议均没有得到有效落实。所谓安理会行动将干扰外交努力的说法完全站不住脚。只要是真正致力于和平的外交努力，安理会的行动只会提供强大助力。
Now, days after exiting Washington as chief of Doge, well, it's Elon Musk who has continued to target. Now, he is targeting President Donald Trump's massive tax and immigration package, better known as his Big Beautiful Bill, escalating his attacks and urging lawmakers to kill the bill. This came hours after several government agencies projected that the bill would add more than $2.4 trillion to the national debt over the next decade. Not just Musk, many other hardliners, these are hardline Republicans who have also ramped up their attacks against the sprawling $4 trillion mega package. And it's Russian President Vladimir Putin who has said that he will have to respond to Ukraine's major drone attacks on Russian air bases. US President Donald Trump has warned this after a phone call that took place between the United States President and the Russian leader. After the over 1 hour long conversation, Trump acknowledged the call would not lead to an immediate end to the war in Ukraine. The conversation between the two leaders marks the first since Ukraine launched a surprise attack using smuggled drones to strike Russian air bases on the 1st of this month, targeting what it said was nuclear-capable long-range bombers. The Kremlin statement also noted that the two leaders discussed the India-Pakistan ceasefire during that conversation. The Department of Education has alleged that Columbia University no longer has, accreditation standards and escalation of the Trump administration scrutiny when it comes to the institution, which it has really gone ahead and accused of violating federal anti-discrimination laws. The U.S. Secretary of Education has said that the decision came after this was, basically what really took place at the protest that the students at the university, they were using the grounds opposing the Israel-Hamas war in Gaza. The move could have massive implications for college and universities, as education experts suggest it eliminates protections for the students on campus. At least 11 people have died and 50 were injured in a stampede outside the Chinnaswamy Stadium in Bengaluru as a huge crowd of fans gathered to greet the RCB team, the Royal Challengers Bengaluru team, after it won the IPL for the first time in 18 long years. Visuals showed several fans fainted outside the stadium and ambulances were not really present. Ambulances were stuck in the crowds and cops were taking the injured away. The Prime Minister has reacted to the stampede in Bengaluru and said the mishap is absolutely heart-rending. Thousands of protesters, including scientists, doctors, disabled people and women right activists, joined Argentina's pensioners on Wednesday in a weekly demonstration against the president's measures. Activists and supporters gathered outside Argentina's Congress building to demand changes to the government's social welfare policy. The protest took place as lawmakers discussed a bill introduced by the opposition that aims to declare an emergency in the country's welfare system.
Hoy estamos acá frente al Congreso porque la discapacidad está en emergencia, tanto para los chicos que necesitan todas sus prestaciones y hoy no las están cubriendo porque se ha liberado todas las obras sociales, hoy se hace lo que quiere, los chicos no tienen ni cómo llegar a las instituciones no tienen cómo solventar todos los gastos que tienen y seguimos dando igualmente todo el servicio de calidad.
2 people died on Wednesday after a giant crane collapsed at the construction site for a new Central Florida hospital, is what officials have gone on to say. The collapse occurred at the site of the new Cape Hospital, which is on the Atlantic coast, about 60 miles or about 90 kilometers east of Orlando. 2 people were transported to a nearby hospital where they later died. This is what the officials really had to say, and they could not even identify the victims at first. Syria's new government has agreed to give inspectors from the United Nations nuclear watchdog access to suspected former nuclear sites immediately. The agency's head has gone on to say that the International Atomic Energy Agency's Director General has spoken in an exclusive interview in Damascus, where he met with the president and other officials as well.
I mean, this visit has a number of reasons, but one very important is the process that we are trying to initiate, or maybe I should say reinitiate, to try to clarify, to bring total clarity over certain activities that took place in the past that were, in the judgment of the agency, probably related to nuclear weapons. So that process was interrupted. Now, with a new government, with a government that is committed to opening up to the world, to international cooperation, I felt that this offered us a good possibility to restart this work and to try to bring to hopefully good conclusion this process. So we are going to be performing some inspection activities even during my visit.
Now, more than 1.5 million foreign pilgrims are in Saudi Arabia for Hajj. People streamed into Mina on Wednesday, which marked the first day of Hajj. Some made the journey on foot, carrying their luggage through temperatures above 40 degrees Celsius. And according to traditional sayings of the Prophet, the day of Arafat is the most sacred day of the year, when God draws near to the faithful and forgives their sins. Now, more than 1.5 million foreign pilgrims who are there. This is what the spokesperson has gone on to say. Hajj is one of the 5 pillars of Islam, a religious obligation involving rituals and acts of worship that every Muslim must fulfill if they have the money and are physically able to do so. Hajj Ministry spokesperson has provided an approximate number for foreigners at this year's pilgrimage. North Korean leader has met with Russian Security Council secretary, and this has taken place on Wednesday. The state media went on to report that in April, the two countries officially confirmed that North Korean troops deployment to Russia for the very first time, saying that soldiers of the two countries were fighting alongside each other to repel a Ukrainian incursion into Russia's Kursk border region. At the time, Russian President Vladimir Putin had thanked North Korea's participation in the war and promised not to forget their sacrifices. Let's get you the latest, and this is in regard to Citigroup Inc., which will cut its technology employee workforce in China by about 3,500 as part of its global simplification efforts, while reiterating its commitment to the world's second largest economy. According to reports, the reduction at its Shanghai and other areas, these are solution centers that are expected to be completed by the start of the fourth quarter. Some positions will be relocated to other centers to support the global network. The shock from trade war brings differential effects for central banks in emerging markets, in contrast with the COVID pandemic, when they could easily ease monetary policy. The International Monetary Fund, that is the IMF, Geeta Gopinath, has gone on to say in an interview with the Financial Times newspaper, the fund's first deputy managing director, saying that the unpredictable impact of tariffs on developing economies and the global markets would make the task of their central bankers even harder. Listen in. The European Central Bank is almost certain to cut interest rates again on Thursday and keep all opinions on the table for subsequent meetings, even as the case grows for a summer pause in its year-long easing cycle. The ECB has cut rates 7 times in 13 months as inflation eased from post-pandemic highs, seeking to prop up a Eurozone economy that was struggling even before erratic US economic and trade policies dealt it further blows. And Djokovic beat Alexander to reach the semi-final of the French Open 2025 on Wednesday in Paris, becoming the oldest man to do so since 1968 at the age of 38, with his 101st victory at the clay court. The 3-time champion Djokovic set a semi-final meeting with the top seed Sinner, who earlier eased past Alexander in straight sets. Djokovic and Sinner are tied at 4-4 in their head-to-head record. However, Sinner has won the last 3 meetings between the two players. And superstar footballer Cristiano Ronaldo scored the winner as Portugal fought back to beat Germany 2-1 on Wednesday, with the 40-year-old bagging his 137th international goal to send them into the Nations League final. It was Portugal's first win over Germany since 2000, with Ronaldo's goal earning them a spot in their second National League final after winning the inaugural edition in 2019. The English pop singer Jessie J revealed that she has been diagnosed with early breast cancer and will undergo surgery after her performance at the London Music Festival. This is the Capital Summertime Ball next weekend. She has shared the news in an Instagram video, saying that she felt compelled to share her diagnosis. The breast cancer that is characterized by 5 major stages from stage 0 to stage 4. While the singer didn't really disclose further details about her diagnosis, an early stage of breast cancer is highly treatable and survivable, according to the National Breast Cancer Foundation.
I was diagnosed with early breast cancer. I'm highlighting the word early. Cancer sucks in any form, but I'm holding on to the word early. I have been in and out of tests throughout this whole period. I just wanted to be open and share it.
And now it's time to get you the first trailer of Wicked for Good that has been released some 5 months before the sequel hit the theatres in November. Now this completes the adaptation of the long-running Broadway musical inspired by The Wizard of Oz. Of course, this is a trailer that is out, but the show will come out only 5 months later in November. 3 years after Atlanta rapper Young Thug and 27 others were indicted on gang and racketeering charges, followed by a long and problem-plagued trial, nobody will be convicted of murder. When this is what was really announced, the indictment in May of 2022, also going on to say that they were really cracking down on the violent street gang responsible for the multiple killings run by Young Thug, whose real name is Jeffrey Williams, but also, the charges that have been dropped, the only remaining murder charge after the defendant pleaded guilty to a lesser charge of aggravated assault. Julianne Moore and Sydney Sweeney attended the New York premiere of their upcoming Apple Original Films thriller called Echo Valley, but her vivacious character has left Sweeney hoping she gets to work more with Moore again, so that she can do all the fun stuff that they got to do during the filming of this. Now Sweeney says she let her character's heartless nature come through like a vessel. Listen.
I felt so bad because it's always been my dream to work with her, and then of course I'm playing a character that is just so cruel and heartless, and it was killing me because Julianne's one of the most kindest human beings I've ever met in my entire life. So I hope that we can work again and I'm not the vicious daughter that I was to her.
And let's also get you the rainbow decorations and pride flags that are appearing all over Washington as more festivities start for World Pride. Hundreds of LGBTQ plus rallies, seminars, parties, after parties and after parties are also happening in the city, and it all culminates in a 2-day closing festival on the 7th and 8th with a parade, a rally and concerts. This is going to be taking place on the Pennsylvania Avenue. The biannual international event typically draws more than 1 million visitors from around the world and across the LGBTQ plus spectrum. But this year's events will carry both a special resonance and a particular sense of community-wide anxiety due to the policies of President Donald Trump's administration.
Yes, it's a celebration of us, but it's also a reminder to the entire world that we are here and we're not going to be quiet about it. We have rhetoric that's trying to silence us, people that would rather us hide and not show ourselves, but this is the time, and hopefully it's a way to encourage everyone to be present for the entire year, not just for the month of June.
And that's all we could pack in on this edition of the World Report. Thank you so much for watching.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
all-time
ICICI
investment
CDSL
पर
for the
क्या
long
रहेगा?
term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Well, which ITR form are you supposed to file? Let us find out. The first one is ITR 1, commonly known as Sahaj. A resident individual whose total income does not exceed 50 lakh can file this particular ITR. Your income could be from sources like salary, pension, interest or dividend. You can also have income from one house property and capital gain as well, but capital gains should not exceed 1.25 lakhs, and both in house property as well as capital gain you cannot have any carry forward losses. Lastly, agricultural income up to 5,000 can file this particular income tax return. Moving on to ITR 2, both individual as well as HUF are included here. Your income should be or can be more than 50 lakh rupees here. What should be your sources of income? Well, this could include your salary, pension and income from house property. It should also include income anywhere which arises from winning of lottery or horse racing, etc. It can also include income which arises from unlisted equity shares and capital gains. Here you're allowed to carry forward losses or even allowed to carry forward losses from house property as well. If you have any foreign income, then you're supposed to file this particular ITR. If you're a resident and not ordinary resident or even a non-resident, then you're supposed to file ITR 2. Any agricultural income beyond that 5,000 rupees will be included here. And if you own any asset outside India and any income arises from that, then you're supposed to file ITR 2. In terms of the next ITR, that is ITR 3. Well, here the eligible individuals would be, of course, a resident individual as well as a Hindu undivided family, that is your HUF. And individuals and HUF who are not eligible to file ITR 1, 3 and 4, 1, 2 and 4 will be eligible to file ITR 3. Now, in terms of what sources of income you should have, this should include your proprietary business income and any professional income business, and this could be from presumptive taxation as well, and income from a partner of a firm will also be included in this particular ITR. Moving on to ITR 4, which is also known as Sugam. This is the most common ITR filed by most people because this covers an entire range of income sources that you can include in. This is also for individuals and HUFs. In terms of freelancer, even freelancer can file ITR 4. Your total income should be up to 50 lakh rupees and business and professional income is also included here. In terms of salary and pension, if it's within that 50 lakh limit, you can file your ITR here with one house property, and long-term capital gains up to 1.25 lakhs, but here also you cannot carry forward your losses. Next, ITR 5 is an interesting one because these ITRs are not filed by individual or HUF. These are filed by firms, limited liability partnership, association of persons, body of individuals, plus artificial jurisdictional person, estate of deceit, insolvent, as well as business trust and investment fund. Lastly, ITR 6 is filed by companies other than charitable trusts, and in terms of ITR 7, that can be filed by news agency, scientific research association, any colleges, universities, hospitals, business trust, as well as investment fund. So you have to pick and choose as to which ITR you are eligible for, and then go ahead and file your ITR.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
all-time
ICICI
investment
CDSL
पर
for
क्या
the long
रहेगा?
term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Good evening, viewers. This is Malika Mishra and you're watching Ask Profit only on NDTV Profit.
And I'm your host, Himakshi Bahugna, and together we'll be taking up all your stock-related queries. So don't forget to WhatsApp us or call us directly. The numbers are there flashing on your screens right now, viewers. And on the show, we are joined by Dinesh Sane, Senior Research Analyst, Invest for Edu on the fundamentals, and Sundar Keva, Technical and Derivatives Analyst, Ashika, Institutional Equity on the technical front. Welcome to the show, gentlemen.
Good evening, Himakshi and Malika.
Good evening. Now let's get started with the show. First query is written to us from Girish. He hails from Bengaluru and he holds 150 shares of All Cargo Gati at 100 apiece. He's looking for a long-term outlook on the counter. So Dinesh, I directly come to you. How does the fundamentals of All Cargo Gati look like to you? Are you optimistic on the counter?
I would suggest to wait for some time. Maybe if they want to invest, I think at least for 1 to 2 quarters before they are not posting good set of numbers. So if I'll see this March quarterly numbers, so I'd only slight increase in sales, but on the margin front, they have not done very well. In fact, from last years and on quarter front, they have not posted good set of numbers. Only I think other income has boosted the overall profits. And so what I would suggest is at least for 1 to 2 quarters, they should wait, and until and unless they don't see any upside in their quarterly revenues, then they can consider it. Otherwise, I would not suggest.
Okay, all right. Thank you so much for that. And now we're being joined by, there's another WhatsApp query. Karan has written to us from Punjab. He currently holds 71 shares of Angel One at 2,630 rupees a piece. He is sitting on a profit of about 45,000 and plus. Angel One was also up in trade today, perhaps also infused by a business update. But speaking of Angel One from a long-term perspective, Sundar, I'd like to take this question to you. Although the fundamentals might reflect to be strong, but technically speaking, what do the charts suggest?
Yeah, so Malika, on daily time frame, the stock has clearly shown a trend reversal kind of structure, creating a higher edge and higher low pattern. Apart from this, if you see the moving averages, it is trading below the price, which is again a positive point for the stock. Now, talking about the current outlook of the stock has halted from say 23 May to till date, and today the stock has given quite a good breakout. Now this kind of sideways movement from 1 to 2 week is very normal for a stock which has risen from 2271 levels to 3065 levels. So I would suggest the viewer to hold the stock, and I could see that the stock could be making its new high in coming few weeks or say a month. And apart from this, this is a purely momentum game, so I would suggest the viewer to place the stop loss at the 20-day moving average, which is currently placed at 2,868.
All right, thank you so much, Sundar, for that. We have another WhatsApp query. Vishwanath holds 30 shares of Tata Motors at 1,008 apiece, and he hasn't mentioned the time horizon. So I'd like to take both the fundamental and technical view on the counter. Firstly, coming to you, Dinesh, how are the fundamentals of Tata Motors looking like? And in the auto space in particular, is Tata Motors one of your top picks?
So I would answer like this. So basically, I would go for those companies which are in premium segment. I know that Tata is also in premium segment, but I think overall in exports front and in EV front, they are not able to do as per the expectations. On the other hand, I know that all the passenger vehicle segment is overall in this month was mixed, you can say. But for Tata Motors, I think I would say that for accumulation front, they can do it for, but not overall, but maybe a little bit for now, because I'm a bit cautious. I am only positive on a two-wheeler side as of now. In passenger vehicles, I would like to see more of monthly updates. Then I would be having a confidence in that segment.
Okay, and Sundar, also coming to you, talking about the technical aspect of the counter. You know, he bought it at 1008. Currently, it's trading at 710, fallen significantly from the levels he has, invested in. So, looking at the charts, are you seeing any sort of upward momentum there, reaching the similar levels he bought at?
Yeah, so Himakshi, I would straight away say no. The reason for this is pretty simple. Now, if you see the stock has beaten left right from 177 level, and it has made a low somewhere around say 535 on 7th April. Now, if you see this kind of upward rally from 7th April to say till date is very normal for a stock which has beaten so much. So I would suggest the viewer to exit this stock because I don't see further upside momentum. And if you see this particular momentum was based on the news-based rally, which was from the auto sector itself. So I would suggest the viewer to exit the stock. Rather, I would go on to the Mahindra and Mahindra stock. The weekly time frame of the stock look attractive. Now on weekly time frame, the stock has made a broadening pattern, and I could see that there is a kind of 50 and 20-day moving average crossover which has happened on 28th April, and the stock is currently into a retesting phase. Once the stock takes out the 1300 the 3200 level, then I would not be surprised, Himakshi, to see the stock trading at 4500 level in coming quarter. So I would rather exit Tata Motor and enter into Mahindra and Mahindra stock.
Okay. So Mahindra and Mahindra is being suggested over Tata Motors. Now we have Rahul joining us on the phone line, our very first caller from Bengaluru. Hi Rahul, good evening.
Hi, good evening.
Please go ahead with your question.
I have around 3,700 shares of Infibeam Avenues.
Okay.
At 26 rupees. It's currently in loss, but I'm hopeful and I want a long-term view on the. Should I, keep holding it? I can hold it for some time, some years. But yeah, should I keep holding it? What's the view on that?
Okay. Rahul, before I pose this question to our experts, I'd like to understand why are you positive about Infibeam Avenues?
I looked at recent events, recent news. It looks promising, and that's why I want to keep. I want to stay invested and see how it goes. Okay,
fair enough. Dinesh, our viewer Rahul from Bengaluru currently holds 3,700 shares of Infibeam at 26 rupees a piece. The stock has fallen down to 22, giving Rahul a loss of about 4 rupees per share. He is sitting on an accumulative loss of about 12,000 rupees. Now, if you speak of how Infibeam has been performing on the charts, especially it has dropped down consistently from December of 2024, and before that it was trading in the upper band, but although in a range-bound manner. How do you see the fundamentals of the stock, because it comes from a very competitive space, and what would your advice for Rahul be in order to tread this path carefully?
All right. So on a year-on-year front, they have done very stable set of numbers, not in terms of top line. So in top line, of course, they have done almost 25-26% growth. But in terms of margins, it's stable. And of course, the profits is also higher. So it would be a long-term market is not giving a multiples. Of course, as you mentioned that it is a competitive play, and almost 95% of revenue comes from the Indian market itself. So it's clearly that its median multiple of almost 45, 40, or 50 multiples, the market is not giving that as of now. So it will take some time, not some time, maybe at least for 18 months or more. If before that we can see the earnings growth, maybe it is suggestible to wait for now. But they have to keenly check whether the fundamentals are increasing or not, and they have to keenly listen to the conference call what management is guiding in next quarters.
Okay, okay. So from that angle, if you are advising our investors to stay put with regards to Infibeam Avenues, Sundar, I'd like to know from you then, because the stock has consistently fallen, as I was mentioning to Dinesh, what would your rough resistance level be for this particular stock? And would you also go ahead and suggest anyone to accumulate at these levels?
Yeah, so Malika, I would not suggest to accumulate now. I'll tell you the reason why. So the stock has been correcting from 40 levels till say 16.5 level. Now again, this kind of fall, and apart from this, some kind of recovery is very much normal in this kind of structure. Now, talking about the roughly resistance, I would say the immediate resistance is it's 200-day DMA, which is currently placed at 2375, and I could see that the RSI level of 14 period on daily time frame is coming to a overbought kind of scenario, which is at 72.94. So we can round it up to 73. So I would, probably say that the stock could resist at 23 level, and it could again fizzle out till 20 and say 18 level in coming few weeks or say few months. But other than this, if you see, the stock doesn't look that attractive to me.
Okay, thank you so much for that, Sundar. Now let's go across to a caller joining us from Ireland. So first international caller on the show today. Hi Arun, good evening.
Good evening, madam.
Yes, how can I help you today?
I have a query regarding Action Construction Equipment.
Okay.
I am holding around 1,200 shares at the rate of 195 rupees.
Yeah.
Bought nearly between 5 to 8 years.
Okay.
I'm a long-term investor.
Yeah.
I want to know if I can accumulate more or this constitutes around 8% of my entire portfolio.
Okay,
so
and firstly, I'd like to congratulate you, Arun, for making such significant profits of almost 13 lakh rupees there. Kudos to you.
Thank you.
Yeah, because you bought it at 195, currently it's trading at 1252. Remarkable. Without wasting much time, Dinesh, talking about Action Construction, strong set of Q4 numbers there. Margin was at 17.6%. Then it's a market leader in mobile and tower cranes as well. Defense vertical is also a key opportunity when we talk about this counter. What's your sense? What's your view on Action Construction? Should Arun stay invested in it?
I think he should. The one thing which I like about most about the company is about its balance sheet. So balance sheet, there is no borrowings at all. So only 0.01% of debt to equity ratio, which is very good. And if I'll talk about as you mentioned, that quarterly numbers were great. So on a year-on-year front, margins were also nice and profit were also nice. And they are doing also great, consistently great, you can say, from last 4 years. So I think I don't see any reason for him to sell it. And overall, the segment is looking attractive as well. So he can keep on holding the stock.
Okay, and Sundar, talking about new investors who want to invest in this counter now. So do you think that the levels are a bit stretched now, or what suggestion do you have for them?
Yeah, Himakshi, I could see that the stock is into a strong uptrend, and from the 1st April 2024, the stock has been into a kind of falling channel of formation. But again, this kind of rally and this kind of sideways is very much normal into uptrend kind of stocks. But if I draw Fibonacci level, I could see that the strong support level is at 1081, and the stock is holding to that level, and it is closing above the 0.23 level of Fibonacci. So I would suggest if anybody wants to accumulate or add the stock, then I would suggest the viewer to hold. I would suggest the viewer to wait till the stock crosses and closes below 1300 level on weekly time frame. And if the stock price closes above 1300 levels in weekly time frame, then I would be bullish on this stock, and I would expect a target. The first target will be at 2095, and the second target will be at 2400. Now the target which I have estimated is because of the Fibonacci extension levels.
Okay. Sundar, would you mind explaining what Fibonacci levels mean? Because I'm sure a lot of us do not understand, because these are very technical terms.
Yeah, so Malika, I would say, say for instance, a stock has given a run up from say 100 to 200 levels. Okay. So if the stock wants to correct, then the first level will be at, say, it's 0.68, which is its golden ratio also. I mean, to be precise, the golden ratio is at 0.618. So the major support has been taken on to that level, and then 0.5 level is a major support. So these kind of levels are plotted by the Fibonacci level, and majorly if you see, if the stock is into an uptrend and we need to find out some kind of support, then this is one of the best tool which I use majorly, and other technical analysts also use a price action, but I majorly have a grip on this kind of indicator. So yeah, I won't much elaborate to this indicator, but this is what it is.
Thank you so much. It definitely helps us because you were using the term a lot more, and therefore I thought it was important for us to address what Fibonacci really means. Now I'm joined by Nilay from Patna. Hi Nilay, good evening.
Good evening.
Good evening, good evening. Please go ahead with your question.
I would like to know about Sharda Motors.
Okay.
I've currently purchased 80 shares at the rate of 1903.
Okay.
For dividend and bonus purpose. And I've been trading daily on the daily basis for the last 8 months in this counter, due to its wide fluctuations on a daily basis.
Okay, okay.
What should I do for this? Should I add more or for long term or what?
Okay, and Nilay, are you an active trader? Do you trade daily?
Yeah, I trade daily in this counter.
Okay, okay, understood. So you're asking whether you should add more shares, or what exactly should your further course of action be? Okay, okay, understood. Nilay from Patna, who is an active trader, currently holds 80 shares of Sharda Motors at 1,903 rupees a piece. The stock is trading around 1,905 rupees. And therefore, Sundar, I think it would be best to advise Nilay with regards to what his further course of action should be, because I see that the stock is trading very close to its 50 and 200 DMA. However, it has shown quite a bit of consolidation and weakness in the last couple of months. What would your suggestion to Nilay be?
Yeah, so firstly, Malik, I would like to correct you. The stock is not trading close to its 50-day moving average, but it is trading close to its 20-day and its 200-day moving average. Now, the 200-day moving average is acting as a strong resistance. If the stock somehow breaks out above the 1980 level, then the stock has the potential to reach till 2,300 level. Apart from this, if the stock fails to give a breakout and it actually breaks its 20-day moving average, which is placed at 1838, then the stock looks bearish to me, and I would not be surprised to see the stock trading at around, say, 1490 levels. So this is a conditional bet. A breakout above 2000 could lead to a positive momentum till 300 or 350 points. A breakout below the 1880 level could lead to a bearish structure, and it could test its 1490 levels.
Okay, thank you so much for that. Now let's go across to a caller joining us from Hyderabad. Hi Amit, good evening.
Hello, good evening.
Yes, how can I help you today, Amit?
Yeah, well, before I start, I want to first congratulate NDTV Profit for such a focused business channel.
Thank you so much. It means a lot to us, Amit.
Ma'am, my query is regarding IIFL Capital. I bought on 7th May 2021 at rate 63, 200 shares. I'm holding it for 4 years. I have I can hold it for another 10 years. Do you think it's a good stock?
Okay, so pretty long-term view on the counter. Dinesh, what do you have to say? Is it advisable for Amit to stay invested in IIFL Capital for another 10 years? Because currently, he has been holding the stock for 4 years, and he has made profits of around 59,000. So what suggestion do you have there?
All right. So first of all, if you have a long-term view of more than 5 to 10 years, volatility will be there in the stock. And if I see the numbers on a year-on-year basis, what I see is that on a top line basis, they are doing pretty decent, and on a bottom line front, they are doing very good because other income is clearly helping them out. And this quarter was, I think, on a margin front, they have not done very well. So these kind of, because that is dependent on how the market will be, because the overall business of the company is like that only. So based on the market trends and etc., if IPOs are coming in etc., so these things will help and will not help as well at the same time for the company to grow. So if he has a more than 5 to 10 years of waiting period, there would be volatility, but yes, he can hold the stock.
Understood. Thank you so much for that, Dinesh. And now we're being joined by Wasim from Gorakhpur. Hi, Wasim. Good evening. Namaste.
Very good evening, ma'am.
Please go ahead.
My query is for Warren Energy.
Okay.
Actually, I bought this share Warren Energy at high price in November, and the price was 3,400. And this share has definitely made a recovery, but is still not reaching at the price which I bought it. And I am very worried because of the high price. I am not even able to averaging it. So kindly suggest what can I do in this situation.
Sure. Dinesh, our viewer from Gorakhpur currently holds 295 shares of Vari Energies at 3,400 rupees a piece, and his concern is that he bought them at a higher price back in the month of November. And although since then the stock price per se has made some recovery, but he is concerned with regards to its future trajectory. And speaking of Vari Energies, although it is a strong solar energy player and also has a good order book in line, but from the perspective of its order book and other financial metrics that you may want to observe and take a look at, do you think it's a longer term play instead of a short one?
All right. So, yes, based on the numbers which I see, I think that is in this Q4, they have done very well because I can see the margins of 23% compared to only 14% last year, and on quarter front as well, it was higher from 21% in December quarter. And from perspective of year-on-year growth, I think from last 3 to 4 years in top line is being growing, and the margins is also consistently growing from 12% in March 23 to almost 19%. However, the debt part of the overall business remains a thing which needs to be observed. So what I would suggest on a quarter-on-quarter basis, they can on a half-yearly basis, of course, they can check the debt portion because it has increased in this year. And in terms of margin, in terms of valuations, median-wise valuation, it used to receive 45 to 50, and it is trading at the same levels. So what I would suggest is be very cautious in this counter, but definitely for now, they can hold.
Okay, thank you so much for that. Now let's go across to a caller joining us from Bengaluru. Hi Kamath, good evening. Kamath, are you there on the phone line?
Short-term and long-term view regard. Hello?
Yes, please go ahead.
Hello?
Yeah, please go ahead. We can hear you.
My query is regarding Deccan Electric, madam. I wanted to have the short-term and long-term view.
Okay.
I wanted to invest about 2 lakh rupees in that.
Okay, and you haven't invested in the counter yet?
Yeah, I have not invested. I wanted to invest.
Okay. So Dinesh, Techno Electric, the counter is in its upward trend since Railtel Corp has selected as the company as managed service data center partner to set up 10 megawatt data centers in Noida. So this is like a positive news coming in for the company. But talking about the fundamental aspect of it and comparing it to its peers, do you think it's an attractive bet and one can invest in this counter for long term?
See, first of all, I'm not keenly tracking this company very closely. So, but if I can just tell you about the numbers based on that, if you can create a view. So, of course, from last 3 years, they have on the margin front, of course, they are doing very well. And absolute EBITDA profit, you can say, it has jumped from 87 crores to almost more than 340 crores now. And their also balance sheet is very nice as well. In terms of recent quarter, if I'll talk about, yes, there was a jump in top line as well in terms of year-on-year, quarter-on-quarter, and in terms of margins, they also done very well, and profits is also very nice. So I think they are doing very well, and as you mentioned that they have also order book of I don't know the exact amount, but since I don't know exactly what is the order book, but based on the numbers, what I can say is they can hold as of now. But if you have a clarity on order books, we can judge based on the recent FY25 sales. So based on that, we can judge whether how much years of order book they have, visibility they have.
Right, Dinesh. And also, Sundar, coming to you on the technical front of it, you can see on the charts it's moving in its upward trend. So, what are the correct levels to enter for somebody who wants to invest in this counter?
Yeah, so I think so. It's a good idea to enter at the current market price itself, because the reason for this is that the stock is holding its long-term moving average. And apart from this, if you see, the stock has created a classical, characteristic of an uptrend that is higher as and higher low, and it is carry forwarding its momentum, and it is not losing, and it is also not fading out. So I would suggest anybody who wants to enter, they can enter at current market price. And my first target will be at 1780, which is the important resistance. And if the stock price closes above that level, then the stock will open its door to 2000 and 2100 level in coming few weeks.
Okay, all right. Thank you so much for that, Sundar. And now we're being joined by Venkat from Tirupati. Hi, Venkat. Good evening.
Yeah, good evening, madam.
Please go ahead with your question, Venkat.
Madam, I have Vishal Megamart shares holding from the time of IPO.
Okay.
So now it is trading at 1 PE.
Right.
Should I hold it for long term? Actually, I am a long term investor.
Okay.
Should I hold it for long term, or should I sell it and go for another one?
Got it. Understood. Dinesh, I'll take this question to you. Venkat from Tirupati holds 190 shares of Vishal Megamart since the time of its, entry on the D Street at 78 rupees a piece, and the stock is now trading around 128. And he's also made a profit of about 10,000 rupees via this investment. He's asking whether he should continue holding his shares in Vishal Megamart. Now, although the financial performance of the company was great in Q4 with net profit jumping about 88% to 115 odd crore, I want to know from you your perspective on how do you see the margins expanding, because that was a bit moderate amongst all the other financial metrics, and do you see more legroom for our investor to make more profits from this investment?
On margin front, you mentioned that. So you mentioned that overall year-on-year basis, I think it was decent. But yes, on a quarter-on-quarter basis, they were not doing very well in this quarter. Plus, their sales were also not better compared to the previous quarter of December quarters. However, if I talk about consistent growth over in the last 3 years, they are maintaining the 14% margins, almost 14% margins, and their overall profit has also increased, I think, from 300 levels to 600 levels. So they are doing pretty good over there. But of course, I think these companies always trade at a higher valuation. So caution is very important. So as we have seen in terms of DMart, right, their margins are impacted because they are not able to do margins at clothes and other segments, apart from groceries, of course. So we have to be very cautious over here. If we see margin declining on a consistent basis, because since on a quarter-on-quarter basis it has declined, one more quarter of something like this can hit the valuations. So it is very important to judge based on the quarters and what management is guiding based on the margins. So what I would suggest is for now, they can hold. If they have higher positions as a percentage of their overall portfolio, they can also consider reducing it.
Okay, understood. Thank you so much for that, Dinesh. And viewers, we will have to slip into a short break, but keep sending in your queries. We will be right back on Ask Profit, only on NDTV Profit.
Markets move fast.
And so should your portfolio. expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live.
Hello and welcome back. You're watching Ask Profit on NDTV Profit and I'm your host Himakshi Bahugada, and along with me is my co-host Malika Mishra, and together we'll be taking up all your stock related queries on the show. So don't forget to WhatsApp us or call us directly. The numbers are there on your screens, and on the show we are joined by Dinesh Sane on the fundamentals and Sundar Kevat on the technicals. And viewers, we are live in the morning as well as in the evening. So this show is especially made for you all to just ask away your queries, whatever investments you're holding. Just this is your chance actually to get all your stock related queries answered. With that, we are joined by a caller from Bengaluru. Hi Neelkant, good evening.
Hi.
Yes.
First of all, I would like to thank NDTV Profit for conducting this series. It's quite insightful as you bring experts' opinion.
Thank you so
Basically,
much.
I have a query. Yeah.
Yes, please go ahead.
Basically, I have a query on CDSL stock.
Okay.
I have 865 quantities
Yeah.
at 1289.
Okay.
I just wanted to understand from the long-term perspective, or should I hold it, or should I book a profit and then re-enter if any corrections are?
And Mr. Neelkant, when did you buy the CDSL shares? I'm just curious.
It's almost about an year.
A year. So in just a year, you've made profits of more than 4 lakh rupees there. Congratulations, Mr. Neelkant. We are actually thrilled to know this. And Dinesh, coming to you, talking about the fundamentals of CDSL, it's a strong company. But still, do you advise Mr. Neelkant to stay invested in it for long term, or do you suggest him to book some partial profits?
The profits are always nice. So if they can, judge based on that, so that is okay. So I would like to say that I can see there are several IPOs lined up in coming quarters, and I can see that one of the beneficiaries is this company. So I think for now they can hold in terms of valuations. Of course, they are always high, but on a median basis, I think from last 10 years, if I just mention, so 60 to 70 is a decent valuation to give this company. But of course, if they can pull it off with a higher earnings per share growth, maybe market is able to give 75 to 80 multiples, right? So based on that, of course, they can hold, but in case if they want to book some profits, it is very easy to do it these days. So I would suggest to do that as well.
Okay, thank you so much for that. And we have Dheeraj on the phone line from Hyderabad. Hi Dheeraj, good evening.
Good evening, ma'am. Today I bought actually Tata Consultancy Services TCS shares at 3376.
Okay.
62 shares.
Okay.
So since last 3 years the stock is not performing actually. Can we expect good returns, like 10 to 15% returns in the next 3 to 6 months frame? Or should I shift to some other counter like Ganesha Ecosphere?
Okay. Okay, and why did you purchase these shares today, Dheeraj?
Actually, since the last 1 week, actually the stock is around 3,500 last week.
Okay.
So I expected a jump within a short span of 1 month.
Okay.
So I purchased these shares. So if TCS is not advisable, should I shift something like Ganesha Ecosphere is my query, ma'am.
Okay, okay, understood. Dinesh, Dheeraj from Hyderabad holds 62 shares of TCS at 3,376 rupees a piece, and he bought them today. His reason for buying was simply the fact that the price had fallen, and he was also expecting a quick upside in a span of 1 month. He's now wanting to know whether you would go ahead and advise him to continue holding his shares, because the stock price per se of this big IT giant has not moved dramatically in the last 3 years. And do you think the same is going to happen in the coming years? Because IT definitely is under pressure, and a lot of frontline companies have not performed that well. What's your take?
Okay, so two things. Firstly, based on, I think what I can see is Q1 would be not so surprising in terms of overall revenue and profits. Everyone has guided almost decent set of growth, but some companies other than TCS, different companies in mid cap, they have not shown given a cautious stance, I can say. This is one thing. Second thing, everything is dependent on how the US economy will do. What can I see is that the big beautiful bill of Trump may or may not be good for economy overall, because what we have seen is there is a huge debt in US market which is continuously growing. So I'm a bit cautious on overall IT front as of now, given the fact that based on the macroeconomics, it is still keep on changing, and Q1 would be very cautious. So I would suggest not to hold, maybe based on after Q1 and management commentary, if it is stable, they can consider buying afterwards.
Okay, this is just a follow-up on not just TCS, but say somebody who holds Infosys or other IT companies. And I've seen this is always like these frontline IT companies somehow become a part of a lot of diversified portfolios. And IT being such an inevitable part of these portfolios across the board. Speaking of TCS alone, Dinesh, the fact that the ROCE is better than its peers, and it is less vulnerable as compared to its peers to macroeconomic factors, don't you think somebody who's already invested in it should continue holding? I'm just trying to understand the reason for your conservative approach.
So everything based on what the market will provide, because as of now, if I see based on the Q1 numbers and overall macroeconomic scenario, everything is dependent on macroeconomics. So everything is also based on what the orders they will get from different companies based in United States. So as you mentioned that yes, comparatively it provides a cushion to the overall portfolio when the market is downwards, as these companies are defensive. So they provide us some kind of a cushion to the overall portfolio in terms of downward trend. So holding it for now, I would not suggest. Why? Because let's see what the management will say, what their overall guidance would be in terms of their growth and their orders which they will receive from United States particularly. So I would like to wait at least for 1 quarter.
Okay, thank you so much for that. Now let's go across to a caller joining us from Vizag. Hi Swami, good evening.
Good evening.
Yes, how can I help you on the show today?
I want to know about Bajaj Auto. Is this right time to enter?
Okay. And are you a long-term investor or a short-term investor?
Long-term investor.
Long-term investor, understood. So Dinesh, talking about Bajaj Auto, so it posted decent Q4 numbers. Even the brokerages are bullish on the counter. But considering China's rare earth magnet curb, these companies like Bajaj Auto or TVS Motors, they are fearing production hit and also a price rise there. So what's your sense on this space in particular? And also if we talk about Bajaj Auto, so what suggestion do you have for our viewers there?
Overall, I'm positive on auto and auto component segment as of now, because what I can see is on a particularly if I talk about the two-wheeler segment, as I mentioned. So in two-wheeler segment, I can see that TVS and Bajaj are taking over in terms of EV sales as well, right? So plus early monsoon season we have seen, and overall expectations that above monsoon would be there of 106%. So what we can see is that overall growth in coming months can be better. Plus, in terms of tractor sale, if I'll talk about, yes, I'm also positive on that, but not in terms of passenger vehicles. So in this segment, I'm positive, particularly in two-wheelers. Yes, Bajaj Auto, the monthly numbers were decent. If I talk about the quarterly numbers, of course, they have taken a hit in terms of margins and year-on-year and quarter-on-quarter front. But given the fact that if there is a growth in monthly numbers because of early monsoon in terms of volumes, we can see a higher multiple market can provide in coming maybe 1 quarter or 2 quarters. So yes, I would suggest that it is a good stock to accumulate.
Dinesh, then we spoke to some leaders of the industry as well this morning, and the interviews are available on the channel for anybody who's interested. And while the industry experts believe that largely, as you said, that the auto sector is insulated, but the EV space remains a pain point because that's where they need, they cannot function without rare earth minerals as a part of their machinery, and the manufacturing requires this element. So if, car makers are fairly insulated, but when you talk about the EV players, they seem to be a little worried and have sort of also reacted in a worried manner. Therefore, would you suggest investors to stay cautious from the EV zone and not the auto space zone?
Sure. In EV zone, particularly in passenger vehicles, as you mentioned, the company called Tata Motors, there would be some cautious, yes, but again, as I mentioned, that you are rightly saying it about the development, right? But still, if this is a growing development, we have to keep check whether how it will be going forward. So for now, based on the developments which I see, it is a decent play overall. But given the fact that if we overall development is, which we are saying, which you just mentioned, is over the head, I think maybe they can sell their stocks after that.
Yeah. Thank you so much for that view, Dinesh. Now let's go across to a caller joining us from Bengaluru. Hi, Setu. Good evening.
Good evening to you, madam.
Yes.
Yeah.
How can I help you?
Yes, thank you for taking my request. And I would like to know about Jubilant Ingravia. I bought 700 shares at the rate of 731 rupees. So it is for a short term, and I would like to advise on that. Maybe for a month I may hold.
Okay, and when did you purchase these shares?
I purchased yesterday, I think. Yeah.
Okay, yesterday. Because in just one day you've made some losses there. So nearly 13,000. So without wasting much time, Sundar, coming straight to you, he plans to hold this counter for 1 month. Currently it's trading at 713, and if we talk about today, it was also down in trade.